Boosting its offer for Sabadell with this €17 billion all-share bid. We mind the European banking space as well.
Okay, here we go. Time for the market open this Monday morning. Got a lot to factor in. There's also a lot of geopolitics that need to be rolled into these markets as well. But it's going to be the auto sector. I think is going to be interesting. Keep an eye on tech to see what happens there. Banks as well, maybe. Right, here we go. Let's talk about what we are seeing this morning. You're going to see some banking stories emerging. You've certainly got the Spanish story to factor into your thinking this morning. It was interesting to hear what HSBC had to say just a moment ago. You've got the airlines that are going to be in focus as well with the travel delays, plus also what is going to be happening with VW. I wonder how long it takes to get the DAX open first thing this morning. The FTSE 100 out of the gate, flat as a pancake, nothing to see here. Similar sort of story over in Spain. We're down by 0.2%, where we're going to fold in that banking story. What's happening with BBVA? CAC 40 actually out reasonably early, nothing to see there. It does look as if the market's fading a little bit this morning. Keep an eye on the defence space there, though. So there's some interesting moves happening around Airbus and what is happening with Dassault on the next generation fighter story. That could be a factor for that market as well. We're going to wait, I suspect, a little while to get the DAX open first thing this morning. Too many stories in that market to get things going early. So we'll see what happens with that space. But at the moment, a cautious start for the European week, Lizzie.
Yeah, so we've got about three-quarters of sectors in negative territory at the open. Media at the bottom of the basket, down 0.5%. Leading the gains, basic resources up 0.75% at the moment. But I promised we'd check in on the airlines for you. And indeed, many of the big names in the red, the likes of IAG down 1.2%. Similar moves for Air France, KLM. EasyJet down 0.8%. Also minding the open for Volkswagen and Porsche, but we wait for that. And we mentioned the banks, Sabadell down 2.2%, BBVA 1.1% down. So misery there after boosting that offer in the latest on that M&A critique.
Yeah, it's fascinating that you are seeing both the target and the acquirer trading lower. So we'll see how that shakes out. We're going to have our Madrid bureau chief join us shortly to walk us through that deal. The underperformer from a weightings perspective, though, Guy, happens to be tech at the end of the day. SAP, Schneider weighing down the index. ASML seems to be the only tech name in the green right now. So I think it's kind of a tale of two tech stories maybe this morning.
I wonder whether, is tech trading on the Visa story this morning, do you think? Or is it something else?
Could be.
It feels like it's a negative, but in some ways you could argue, like companies like SAP employ a lot of people in the United States. This is going to be a cost for them. This is a global business that has a huge footprint there. The banking sector is being affected by this as well, as we were just hearing from HSBC. So I do wonder, is this just a cost story? There you go. We're going to see some effect going through into the United States. More of a software story than maybe a hardware story. That's maybe why you get a bid, maybe a rotation into ASML this morning. Not sure, but that would seem maybe a logical sort of explanation.
Should we ask an expert? Sharon Bell, Senior European Equity Strategist at Goldman Sachs, joins us around the table. Morning, Sharon.
Good morning.
Let's start there. Do you think that this Visa story is an opportunity for European tech?
It's interesting, isn't it? Because I do think it adds an extra layer of uncertainty. Again, cost uncertainty injected into the market, a new policy that was perhaps unexpected. So all of those things, I think, a little bit unhelpful on the cost front. But US tech has been growing very fast, hasn't it? So it may be able to absorb some of these extra costs as well. But yeah, I mean, there's some opportunity maybe for Europe.
And here in Europe, of course, we've been in pretty tight range for most of the year. Do you think that there's much further to climb before the year's out?
Yeah, we have been in a very tight range. I would say Europe did really well in the first quarter, and then since then it's been kind of flat, hasn't it? It's been trading in a range. I do think Europe can continue to make some progress this year, but I think it's going to be relatively modest. Even the European market, after the rally we had earlier this year, doesn't look all that cheap versus its own history.
Is anything cheap right now?
No, not really, I'm afraid. I mean, gold certainly isn't it? It's rallied up very strongly, hasn't it? And the US equity market, obviously, in the 95th percentile of its range. Everything looks quite expensive. Probably the only cheap assets are the ones where, people really haven't liked them in the last year or so. Defensives, some of what we used to call the granolas, which are the kind of big caps in Europe, which have got global exposure, which just haven't done very well in the last year.
How much of the equity story right now hinges on the bond market story?
Yeah, I mean, the two are obviously hugely interlinked. If you saw a very rapid sell-off in bonds because perhaps people were worried about any sovereign risk in Europe, or maybe they were worried about inflation coming back, and that will prevent central banks from easing policy or keeping rates on hold, all of those things would be a danger to equity. Effectively, equity, because it is quite expensive, has a narrow path to tread, one where you don't fall off on the downside in terms of recession, and when you don't fall off on the other downside in terms of higher inflation or higher bond yields.
Let's talk a little bit about currencies. Can't speak this morning. I'm still down as a European investor in the S&P in euros.
Yeah, I mean, look, Europe hasn't done. I think if you look at the chart of the S&P, you think it's been thrilling, which it absolutely has been thrilling. If you're a dollar-based investor, it's done extremely well. But if you're a euro-based investor, or even any other global currency almost, because the dollar has weakened, for you, in your own local currency, the US market hasn't done so well.
Does that trend continue? European markets, despite the fact they've been flat kind of nominally, are they going to continue to outperform because the currency's going to do the lifting?
That is some of what we think. So for this next year, we look at the euro-dollar going to about 125. So I think we're about 118 at the moment. So there's quite a big further rise in the euro. And we think if you invest in the European market, you'll get a little bit of price return, and then you'll also get the euro going up versus the dollar as well. Largely because of dollar weakness rather than euro strength, in our view.
So if there was a dip globally, now, say equity market sold off by 10%, and I was looking to buy the dip, where would I buy the dip? Where would be the best place to buy the dip? And would that depend on whether or not I'm a euro investor or a US investor?
Yeah, it's an interesting question. And it's an interesting question you posed buying the dip, because I think it's one of the reasons you're not getting a dip is because everyone wants to buy the dip as soon as you even discuss a dip. But yeah, look, I think in dollar terms or in constant currency terms, we think Europe will outperform because we have the dollar coming down. If you currency hedge, though, probably the US market with its tech stocks and its better economic growth.
Should I currency hedge?
Looks a bit better. Depends what type of asset allocator you are. Sometimes you should currency hedge, sometimes you shouldn't. Currency hedging is obviously a bit costly as well. It's not zero cost for you. And you can currency hedge by investing in the right markets as well.
Sharon, we're going to be talking a lot about geopolitics this week, UNGA happening in New York. You wouldn't know that there is so much geopolitical news by looking at the equity market. How are you thinking about it in terms of your equity outlook?
No, I agree. I suppose we've had so much uncertainty, and we still have, in our view, the tariff hit still really to come. And that's, to me, the biggest geopolitical risk, as it were, the impact of tariffs and the negotiations that you see globally still going on between the US and various countries. And even though deals have been reached with the EU and a few other places, you're still going to have an economic hit for the US, which takes place at the third or fourth quarter of this year. We do think this will take down US growth. But on the other hand, because the labour market softened, inflation has come down a little bit from its peaks, you can also cut rates into that, and that's helped the market really insure itself, save itself against some of these political risks.
Is stagnation bullish for equities globally?
No, I don't think it's bullish for equities, no. I think if you get stagnation, particularly if it comes with still high bond yields and high inflation, that's not a bullish environment for equities. But the market is not really pricing stagnation. It's pricing a little bit of a dip, followed by improvement in 2026 and 2027.
But where does that improvement come from?
Well, if you look at financial conditions in the US, they're pretty much the easiest they've been in the last 2 years. Why are the easiest they've been in the last 2 years? Well, bond yields have come down modestly. Interest rates have come down as well at the short end, and expectations are coming down. Credit spreads are very, very narrow, and the equity market has done well. All of those things, and the dollar's come down too, all of those things mean easier financial conditions. That helps you get better growth next year.
But Sharon, that's the market pricing in a very dovish Fed that the Fed doesn't agree to.
Yeah, I mean, we also expect 2 rate cuts this year and 2 more next year, largely because we do think there's going to be a tariff impact on growth in the fourth quarter. You'll see a little bit weaker growth as we go through the second half of this year and get the data for that. and then next year with slightly easier policy conditions, you get slightly better growth next year. So there's not zero hit, there's some hit, but also I think the market's looking through it because a lot of the market isn't super exposed to the US domestic economy. It's exposed to tech, AI, and other growth trends.
Where's the overlap between the tech trade and and everything else? If the economy slows down, does tech get affected? Can I invest in tech regardless of the cycle?
Of the economy. Not regardless of the cycle. I think a slowdown in the economy, no recession, tech will shrug that off. If you get a recession, generally speaking, that's a very different thing. Tech and certain elements of it are quite cyclical, not all of them, but I think they would suffer. Final point on tech is that some of the biggest cap stocks, the ones we all know, the Mag 7, for example, excellent balance sheets. Yeah. So you could argue they've got certainly better balance sheets than many governments globally.
Sure.
So they're not
you better off buying the credit.
They're not just US exposed, they're globally exposed. So they're not just dollar earners, they earn other currencies. They've got great balance sheets. As you say, credit spreads for a lot of, borrowing costs for lots of companies globally are actually lower than their own governments.
Yeah. Do I buy tech on a cheap dollar? A weakening dollar?
A weakening dollar is not bad for tech because, again, it's got a global footprint.
Sharon, great to see you. Thanks indeed for stopping by to see you. Not enough time, as ever. Sharon Bell, Senior European Equity Strategist, joining us from Goldman Sachs. Call 6 looked like this morning. What are we watching? We are certainly keeping an eye on what is happening with the defence space, but tech is interesting. The real divergence in tech this morning between some of the software companies and the hardware companies. ASML is up quite nicely. Schneider a little soft. Novo, was it in the FT this morning? I can't remember. It's in the Journal of the FT. I think it's in the Journal, talking about the fact that maybe actually the bottom could be in for some of the GLP-1 companies. Let's talk about that maybe another day, but come back to it. Novo this morning up by around 0.5%. Let's get some more moves with Chloe Mele.
Good morning, guys. So let's start with Porsche and Volkswagen that are down as expected today after slashing their outlook for 2025 and pulling back, hitting the brakes on that electric vehicle strategy. This is now the fourth guidance cut for Porsche this year, which has been dealing with a really low demand for luxury electric vehicles, but also a slowdown in China where there's a lot of competition and also tariffs, of course, weighing there. So that has been really dragging down the shares. We are down 6% for Porsche and almost 5% for Volkswagen, and probably also dragging down the shares of other European car makers. Moving on to the European airline sector, Lufthansa, IAG and EasyJet are also down, and that is on the back of the cyber attack that disrupted airport operations across the weekend, across Europe this weekend, in Brussels, London and Berlin. This is disruption that is likely to continue today as well and is forcing the manual processing of passengers. So this is dragging down those shares this morning. Moving on to Sabadell and BBVA, which are also down this morning. BBVA increased its offer for Sabadell, now valuing it at 17 billion euros instead of a previous offer that valued it at 15.5 billion. This is something that the market is reacting quite negatively to, and Sabadell is down 3.2% and BBVA 1.6% this morning. Moving on to Tate & Lyle, which is a maker of sweeteners for the food and drink industry. It was cut to an underweight rating at Morgan Stanley, and that is dragging down the shares. We are down 4% for Tate & Lyle. And finally, ASML was rated at Morgan Stanley, but it was raised to an overweight rating, and that is driving up the shares this morning. We're up 2.9% for the semiconductor equipment company this morning.
All right, Chloe Mele from our equities team, we thank you so much with those movers. You mentioned Volkswagen and Porsche. Indeed, autos are the worst performing sector in Europe this morning, down 2.25%, and that tracks with what's happening in Germany. It's the underperformer across the continent. The DAX down 0.4%.
Kind of makes sense, isn't it? Let me put my Matt Miller hat on for a moment. Porsches are meant to make a nice noise, and if it's an EV, they don't. And honestly, I think that's where it stops. You can buy any EV, the performance is sensational, and they are very quick, and you get a lot with them. why do I want to buy a Porsche EV? I don't know. That's the question. And clearly people are answering with, we don't.
Yeah.
So Porsche going, you know what? Actually, we need to make cars that make a noise, and we're going back to ICE engines.
What is a midlife crisis without the purr of a Porsche?
Well, precisely. I'd love to go back to the air-cooled ones, but that's a whole different story. But yeah, I think it's about the noise, and they don't make this is a problem.
You're doing an incredible Matt Miller impression. That's all he talks about, the noise that cars make. So
I know. This is why, yeah.
Right on brand, and you've nailed it. I mean, the takeaway, I think, for our audience is basically no one's buying luxury cars anymore.
Well, no, I think they're not buying EV. I think the 911, I try and get hold of one of those. It's really difficult, particularly with tariffs in the States. So trying to get hold of 911s is a different story.
Because the tariffs have made them even more luxurious, right? Because
precisely.
it's harder to get them.
And in some ways, sort of almost, I'm not sure Porsche gets into the Veblen good kind of sort of aura, the arena that Ferrari's in. But again, it's this kind of what does life look like for the luxury car makers in an EV world? Is there an EV world? What is the long-term story? If we're not ready to make the transition to a sports car that doesn't make a noise for most people, to your kind of like, do I want a midlife crisis without that noise? That's the soundtrack to a midlife crisis. I'm not sure midlife crises exist anymore, but I don't know. What is the long-term story for these businesses?
Well, you look at the analyst community this morning, and even the most bullish are saying that they're expecting some profitability deterioration further.
Well, they're going to take a hit because they went down the takeout route, and now they've got to come back sort of onto a different road, and that's clearly going to cost them some money.
Absolutely.
I don't know. A nice little burble, nice little kind of Porsche noise. You kind of need that. Can you fake it? I'm not sure.
Look, you need it. As a cyclist, I need to hear what's behind me when I'm on London's streets. I really can't be doing with these EVs.
So a Porsche sneaking up on you is not ideal.
No.
Well, I've learned so much.
Stumped.
I know. I have nothing to add. You guys have covered it. But I think what you need to take away here is that the shares are down some 5% for Volkswagen. And we're going to continue to monitor the auto sector. Oliver Crook's going to join us later and walk us through some of the stories and details there. In the meantime, one firm eye on the banking sector as well. BBVA boosting the value of its takeover bid for Banco Sabadell. The story gets interesting. Stick with us. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. About 19 minutes into today's session, right across the screen, the underperformer, no surprise, is the DAX. It's the auto sector that's very much in focus, but plenty of others that are driving the trade lower as well. Check out the IBEX. It's also trading lower, and some of that has to do with the banking news that we have gotten in just the last couple of hours. It's the deal that all Europeans are watching. BBVA raising the value of its takeover bid for Banco Sabadell by about 10%. It pushes the value of the deal to about 17 billion euros. Our Madrid bureau chief, Rodrigo Orihuela, is all over this story. Rodrigo, Sabadell management, C-suite, had asked for a 30% increase on the offer. How does this deal fare?
Well, there's two things that we have to bear in mind. One is that with their increase today, BBVA was very clear that they are not going to increase it any further because they said specifically they have waived that right. So this is definitely BBVA's final offer. The CEO of Sabadell is on a local Spanish radio speaking right now. Just before I came on to speak to you, he was saying that this is still a terrible offer. Any premium should be around for any bank about 30–40%. So he says this still falls well short of what they think their bank is worth.
So the offer's bad, the improvement's small, he says. Does that mean this is unlikely to happen?
Well, that is a bit trickier because basically last week, at the start of last week, Sabadell was trading above the offer price at the time by about 10%. As the week went by, that premium or negative premium reduced. It ended the week almost flat, about 5%. So now they are actually effectively offering to buy it for more than it closed on Friday. So the question isn't so much what the management think, which is dead set against it. It's more down to the institutional investors. Many seem to be keen to sell, and to retail investors who, in Sabadell's specific case, are huge. They stand between 25 and 45% of the total shareholders base. So the question there is, will those shareholders say, okay, this is it, I want to take it at this 10% increase, and that has to happen today or tomorrow? To be honest, it seems that this may be a winner for BBVA, but it is far from a done deal.
How long before we know? How quickly could this get wrapped up?
So we won't know for certain till around sometime between the 10 and 15 of October, which is, so the acceptance period ends on October 7, and then the regulator has a few days to do their math and release the information. So that is when we will have the final response. What we will have is indications in between, because certain sources start having access to the information as they compile it. But we won't have a definite answer for another 20 days, 25 days.
Okay, we're on tenterhooks. Rodrigo, thank you very much indeed. Our Spanish bureau chief, Rodrigo Orihuela, joining us on the banking story. What's it like flying out there this morning? And is it going to get better? There's a couple of stories that we need to focus on from the aviation space. The UK government has approved a second runway at London Gatwick Airport in Prime Minister Keir Starmer's latest bid to lift the UK economy through major infrastructure works. This, of course, comes as Heathrow, Brussels, Berlin airports hit over the last few days by a cyber attack, which we still haven't recovered from. Let's bring it all together. Benedict Cameron leads our global aviation team. He's here to update us. Let's talk Gatwick first of all, and what is happening at Gatwick. So Gatwick, in theory, has 2 runways already. The problem is, though, they're too close together. We're now going to put them a little further apart. How easy will this be, and what impact do you think it's going to have at Gatwick?
So Gatwick is fairly confident they can do this in a relatively short amount of time for a relatively minimal amount of money. If you compare it to what's going on at larger Heathrow, we know there that they want to have that additional runway, the third runway, which has been long in the making and long in the planning, and God knows when it will happen. The Heathrow runway, just to give you some perspective, is supposed to cost about just north of £20 billion. The Gatwick Airport runway would only be just north of £2 billion, so a tenth of that. They hope to have that ready by the end of the decade. As we all know, these projects are rarely on time, rarely within budget, but that is the plan at the moment, and really Gatwick trying to position itself as a viable alternative to Heathrow, which still really sucks most of the oxygen out of the UK aviation space, but Gatwick really thinks with that additional runway, they can claim a bigger stake here.
Benny, walk us through some of the updates around the delays that we were expecting. Berlin, Heathrow, Brussels, are they all back to normal?
It seems to be largely back to normal, but this was not a good weekend for travel. As you mentioned, we had disruptions at Heathrow, at Berlin Airport, in Brussels. And here in Berlin, it was a very busy weekend for travel because we had the Berlin Marathon going on, so a lot of people were coming into Berlin over the weekend, people like Harry Styles, who apparently participated in the marathon. We don't know how he got out, but I hope he's back safe. But the disruptions were, it was annoying for people. What happened was there was a cyber attack on some of the equipment. Collins Aerospace is the maker of check-in and baggage handling equipment. That was disrupted, and as a result, a lot of people had to wait. The actual cancellations were not that many. We had about just north of a dozen cancellations from inbound and outbound flights, most of them at Heathrow. So in actual fact, the cancellations not that dramatic, but really the aviation industry in those airports sort of taken back to a very analog space. A lot of check-ins had to be done manually rather than electronically, and lots of long lines. But for now, it seems like the system is almost back to normal.
Benny, you've left us all with the image of Harry Styles on the only acceptable method of transport right now, on your feet, and he had quite an impressive time, I saw. But look, there was another reason for disruption this weekend, Benny, and that was from cyber attacks to typhoons. We're looking at Hong Kong Airport Mull closure. How much disruption could we see there?
So that's going to be a lot more dramatic. We are expecting the Hong Kong airport to probably close sometime tomorrow, and it might close for as much as 36 hours, which would be the longest stretch in recent history. There have been closures in the past because of typhoons. We've had closures, I think, in 2023 of about 20 hours. There have been similar closures, but this is an airport that is obviously a massive hub in the region. Cathay Pacific is the big carrier for that airport. They operate about, several hundred flights a day. There's about 1,000 flights, just north of 1,000 flights every day out of that airport. And for that hub to close for more than 24 hours, that is going to be hugely disruptive.
All right, Benny Camel, our Global Aviation Managing Editor, we thank you so much for that update. We are looking at European airline stocks suffering this morning as a result. The likes of Deutsche Lufthansa down 1.7%.
The producer in my ear just went, chat airports. I'm like...
Well, you can do that all day long. What are you talking about?
Planes, yes. Airports, a little less so. Shocker. Airport has technology issue. Problem lines. I think we're all quite used to that.
Look, coming up, we're going to be covering all things tech and equities with Cathy Wood, founder, CEO and CIO of ARK Invest. That conversation coming up next. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back to the opening trade. 30 minutes into today's session, and it's getting worse. The sell-off continues. We started off the session about 30 minutes ago, seeing a little bit of weakness, not this much. It's certainly accelerated since trading has started. The DAX down about 0.6%. That is your underperformer this morning. It is all about the auto sector. It's worth noting, though, the FTSE 100, which started off as our worst performer in the future session, now only down 0.1%, Guy.
Some of the mining stocks are doing relatively well on the FTSE 100. That's helping that market out. Let's talk about the internals and figure out what is happening in this market. Definitely the balance of the downside, 437 to the downside, only 148 up. Volume's actually reasonably good this morning, which is interesting. There is a tech effect. We're seeing that in the Visa story this morning, coming from the Visa story this morning. We'll come on to that in just a second. Let's talk about some of the 52-week highs and lows. Let's start off with some highs. ASML hitting a high. It's interesting. It is not... You're seeing quite a divergent story in the tech sector this morning. Some of the software companies, SAP, big footprint in the States, exposed to the Visa story, getting hurt this morning. But ASML on the hardware front, the lithography front, up by 3%. The miners are really where the action is, though, this morning. For Neo in the gold space, is up by nearly another 4%. That trade continues. We were hearing from Chris Watling earlier on in the program, though, talking about his concerns about whether or not we're in the fifth wave of the Elliott wave theory of that gold trade. Does that start to get priced back into some of the miners? But Antofagasta also in the similar kind of business, up by 0.7%. Downside, quick look at some of the downside stories. We're obviously keeping a firm eye on what is happening with the autos this morning. Porsche down, VW down. But Haleon in the consumer space, in the consumer pharmaceutical space is down. Diageo is also down. The spirits business continues to be hurt. We talked about this last week. LSEG is down by 0.3%, continuing another 52-week high on that stock story this morning. But it's interesting. It's autos this morning that are one of the biggest stories in the European market. We've also got this Visa story rippling through into the European software space, Lizzie.
That's what's happening in your markets, Guy. Here's what else you need to know this morning. France is set to recognise a Palestinian state later on today. It follows announcements from the UK, Canada, Australia, whose leaders all call it a coordinated push for a two-state solution. The move has drawn criticism from President Trump and from Israeli Prime Minister Benjamin Netanyahu, who both argue that it rewards Hamas and threatens Israel's security. Elsewhere, a group of senior US House representatives is in China for talks with President Xi Jinping's government, the first such official visit in 6 years. The US group is led by Democrat and former House Armed Services Committee Chairman Adam Smith, as the world's largest economies edge closer to a trade deal. And President Trump's $100,000 fee on new H-1B visa applications is triggering confusion for corporate America and for workers as well. The move is aimed at cracking down on what the White House calls abuses of the program, which they say undercuts American workers. So, Guy, you could see more revenues for the Treasury, but you could see a hit to the labour market. But the big question for us, is it an opportunity for European tech?
Will it be an opportunity for Indian tech as well, Chinese tech? Remember, the bulk of these visas come from India. I think 1 in 10 of these visas comes from China. Does some of that talent end up elsewhere? I think is a key question. You've also got the story related to Europe as well. Is there a ripple effect into some of the European names? SAP, for instance, big employer in the United States, big user to a certain extent of these visas, is down by circa 1% this morning. The European markets just beginning to bounce right now, Chrissy.
Absolutely. The H-1B visa story is a fascinating one, not only just from a tariff perspective, from a geopolitics perspective, but a lot of the mega cap tech companies that the world is exposed to relies on this. I'm just looking at some graphics here. Amazon, for example, the leader in that, followed by the likes of Microsoft, Meta, Apple, Alphabet, our favorite tech names. Let's go to one of our favorite tech investors, Kathy Wood, founder, CEO, and CIO of ARK Invest, joins us around the table to talk about this world. Kathy, we want to get into your tech investments, we want to get into your views, but we got to put this question to you around H-1B visas and this new application fee. What do you make of it? What's the impact?
Well, again, this is part of President Trump's negotiating process, and I think he's negotiating quite intensively right now with India. I think India would have the biggest impact here in terms of workers in the United States. So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room, because there's a lot of really good fundamental activity happening in the United States relating to policy.
Well, a lot of that innovation, a lot of that Silicon Valley kind of goodness really comes from the talent and the labor pool. We've been talking about this for quite some time in terms of how do you train your engineers, you train Americans to do a lot of what Silicon Valley depends on foreign workers to do. Does this impact innovation in Silicon Valley, and does it impact mega cap stocks, tech companies that are dependent on this?
Well, from what we know of this administration, they ultimately want to keep students who have been educated in the U.S., foreign students that have been educated in the U.S., in the U.S. So really, I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1B visa program.
But in the short term, is that going to have an impact on tech companies?
I think what it's going to do is force tech companies to do what they're already doing, and that is become more efficient. And the other thing to note is, coding is changing dramatically. The number of coding jobs and openings has dropped dramatically because of AI. All of us can become coders. You've heard of vibe coding.
Look to me there, by the way.
That's a lot of faith in God.
This is natural language programming. Generative AI is prompting ChatGPT to get your programs going. We can all do that. That's simplifying it. But I do think it gives you a sense of the kind of productivity, that possibilities that are possible, that will impact these tech companies longer term.
It kind of takes me on to my next question. Is Chinese tech going to outperform US tech from a stock market point of view over the next year?
Well, the valuations are quite different. They're roughly half of what they are in the United States. We're very impressed at how quickly China is moving here. I think the DeepSeek moment gave us an opportunity to understand that China is very focused on the open source software movement. We forced them into that, the US did, because our companies stopped selling into China out of fear of IP theft. So they've gone the open source route and are moving very quickly. I think competition is a good thing. It's a good thing for the United States. It's a good thing for China. I also think what's good about China recently is it is focused now on the idea that maybe commoditization has gone too far, especially in the electric vehicle space, so-called involution. They are thinking...
Whatever that means,
Whatever that means. So they're thinking that, and it is true, It is expensive to develop these large language models, even though they say it's not. There's a lot of pre-training that takes place before you get a DeepSeek. And if you're not profitable as a company, you're going to have a lot of trouble competing in that space. So I think even that is changing, which is interesting.
When does AI become profitable? When can I assume a margin on AI? And I'm talking about the large language model companies here. Huge amount of investment going in at the moment, Kathy, and everybody's scratching their head wondering, does all of it deliver? Does all of it produce a rate of return? Are we going to have to see some sort of Schumpeterian sort of clearing of the market at some point? What does that look like? What is your sense of kind of where we are at the moment?
Well, I think that the number of companies truly competing in the large language model space has shrunk. These acqui-hires that OpenAI and Meta, that's all about, other companies really not making it. So that...
so the process has already started?
The process has started, but in terms of...
Who do you think is going to win?
I think the big four right now are OpenAI, Anthropic, xAI, and Gemini. Those four. And we don't know if this is going to be a 4-horse race or a 2-horse race. Let's see over time how they leapfrog one another, and they are doing that regularly. It's very interesting. But you ask about profitability. Companies that are not hiring people, the number of new job openings is falling. They are already enjoying huge productivity increases. That's why margins have been sustained even with the tariff hit recently. In fact, tariffs being put in place, the counter to that is, okay, we have to cut costs. And that has been, and they're willing to pay $20 a month. Some are willing to pay $200 a month. And those who are replacing PhDs, they're willing to pay $2,000 a month or more. And so as long as these companies get that signaling that companies are willing to pay, they will continue to invest in this race.
Kathy, you say competition's a good thing. We've talked about the landscape. Let's talk about you. Yes. There's a lot more tech, innovation, robotics, ETFs out there now. How do you plan to compete?
It's a great question, Lizzie. I think our differentiation is our research. We have what I believe is the first sharing economy company in the asset management space when it comes to research. We give our research away. We have given our Tesla model away, for example.
DeepSeek approach.
Yes, the open source from that point of view. I think we have a very loud voice out there when it comes to innovation. And I think some of the calls we've made starting in 2015 with Bitcoin, and at the same time, roughly, Tesla, Palantir, Coinbase, NVIDIA, in the earliest days, we were there when most people thought it was a PC gaming chip company. So I think we've got a loud voice. You're asking about conversion because we have these other companies out there which with huge distribution. Well, thanks to Bloomberg, we are able to share with you our research, and it's research that others aren't doing in quite the same way.
But when you look at the numbers, ARC's up about 40% this year. Flows are absolutely flat. What can you do about that if great performance just isn't drawing people in?
Well, what's interesting about that is most active managers are outflowing today. So the fact that we're flat is very interesting. And what's more interesting to us and very gratifying, having entered UK and Europe, is that we are about to cross $1 billion here in Europe and the UK, which in 2 years' time, we acquired Rise 2 years ago, is very significant, I think. I think here in Europe, a quarter of our reader base, even before we launched, was in Europe. And the question was, when are you coming to Europe? So we are getting the flows here in the UK and Europe, and we're really excited about the momentum behind those flows.
Kathy, I want to get your take on a deal that was preliminarily announced on Friday between the United States and China when it comes to TikTok. Now, I think you're a unique person to have this conversation with, given your early exposure to Chinese tech stocks.
Yes.
TikTok has now been, we're still waiting for all the details, but we understand is being given 7 board seats to Americans. There's a question of a licensing agreement. There's a question of some of the holders, including the Murdochs or Larry Ellison, among others. What kind of precedent does that set for you as someone who is exposed to Chinese tech? Is this the new norm, or is this an idiosyncratic story?
I think this is idiosyncratic. I think during our election, President Trump promised that he would be open-minded to keeping TikTok US. It's so important to the young people and many more people in the United States. So I do think it's a one-off special case. I also think it's a part of a broader negotiation with China. I think if anyone can reenact a Nixon in China moment, it is President Trump. He has been toughest on China. Everyone trusts that he will strike a good deal. Everyone in the U.S. trusts he will strike a good deal with China. And I think we're probably going to get better than expected news longer term. You'll hear a lot of saber rattling in the meantime, but this is one indication of that.
Is TikTok a good investment if the U.S. has more hold over it? And counter to that, is ByteDance a good investment if this is a deal that's being created?
You know, the one question we always have when there is a breakup like that is, does a company lose some of the network effect in some way? Now, they were already supposed to be separate, China and the U.S. We'll see. We'll see. TikTok has been an amazing company, has taught us a lot. This is what I mean about Chinese competition. They taught our companies a lot. I will say that a company called Vine in the U.S. was the precursor, and Twitter at the time bought it, was not able to activate it in the way TikTok has, and TikTok ran away with that ball.
So would you want a piece of it?
You know, we have to do a deeper dive when we get into the data room.
Crypto's down a little bit. Bitcoin's selling off this morning. At these kind of levels, are you a buyer or a seller?
Well, we've been increasing our exposure generally to the digital asset space. I think Bitcoin has been the leader of the pack. The others are following. Ether has followed. Now Solana and Hyperliquid is a new one, the new kid on the block. We think this is 3 revolutions in one: a monetary revolution, a financial services revolution, and really, in a much broader sense, a digital property rights, immutable property rights online. Never happened before, only possible because of blockchain technology.
Okay. Down by around, crypto's down, the Bitcoin's down around 2% this morning. Kathy, great to see you. Thank you very much indeed. Kathy Wood, founder and CEO of ARK Invest. Coming up, what are we going to be talking about? We're going to take you back to the car story. Volkswagen under pressure, Porsche taking a hit on what is happening with the rollout of EVs and maybe a retrenchment back to ICE engines. We'll talk about that story next. This is Bloomberg.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's beige book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Welcome back to the opening trade. We're 49 minutes into today's session, and it's read across the screen. Particular underperformance out of Spain, and that comes down to the Spanish banking story, but also for the DAX in Frankfurt, down 0.7%. The worst performing sector is, in fact, autos, and that comes down to the Porsche VW story. You've got Porsche shares currently down about 7.4%, Volkswagen down 6.4% as things stand. So let's get some details on that. They have cited a €1.8 billion hit to operating profit linked to delayed EV rollouts. We could bring in Bloomberg's Oliver Crook for more now. Ollie, just break down what's actually happening here at Porsche.
Yeah, I mean, it bears sort of lingering a little bit on some of these numbers. You mentioned a profit hit of 1.8 billion euros, which is obviously mammoth. What that is going to hit are the margins. And of course, the margins are the all sort of important metric that we look like when we evaluate luxury car companies like Porsche. They're seeing now for this year a margin of 2%. Now, if you're getting 2% margins on selling basically a race car, there is certainly a massive problem. We should put for comparison, just 2 years ago, those margins were at 18%. The year before that, they were at 18%, and those have come steadily down, steadily down, steadily down. Now cutting it, they were originally going to get 5 to 7% on their margins. They're now seeing 2%. They've also reduced their medium-term target, so that was supposed to be 15 to 17%. That is now 10 to 15%, and that is the fourth profit guidance cut of this year. So really coming at a very poor time for Porsche. In terms of what this is down to is basically this idea of you don't change horses in the middle of the stream. There is a back and forth on basically what the EV strategy is going to be for Porsche. As we know from the very beginning of the EV revolution, it's been kind of a black box to figure out what demand for electric vehicles is going to be, and now basically having to change your entire plan. And these are massive manufacturing supply chains and massive operations to basically figure out whether you're doing EVs, hybrids, or combustion engines. That is the big question. The question, I think, for investors today is, where is the bottom for this? I mean, we're seeing now shares coming down, 5, 6, 7%. There's already a lot of bad news priced into these stocks. The question is going to be, how much further is this going to go? Certainly today, investors do not have confidence that it's over.
And that's the problem, is that the shift to EV, certainly at the upper end of the market, is a struggle. And you look at residuals on take-hands and how much the cars are worth kind of a year, 2 years, 3 years down the road. It's a huge problem. What does this tell us about what is happening in the wider auto sector? What is the message from VW for everybody else this morning?
Well, listen, it's dragging the rest of the sector down with it. But if you just take a step back and you just look year to date for what is going on in the European car sector, and I think we've got the chart here for you, you look at what we've seen so far. Stellantis down 34%, Porsche down 30%, Renault down 25%, Mercedes-Benz down 7%. And really the only winner in Europe has been BMW, and they're up only 2.5%. And we give credit where credit is due. And I think for the question for investors is, what is going to be the compelling story here? What is going to be the sort of viable viable story from Volkswagen in order to turn this around. Remember, Volkswagen, had sort of prepared investors for some very rough times ahead. Volkswagen had committed to spending 180 billion euros in terms of R&D to develop their EVs and their digitalization. Just for sort of context, that is more than twice the German military budget this year. That's what VW is going to spend over into 2028. So now I think there are two big questions here that opens for the auto sector more broadly within Europe. One, we are still staring down the barrel of this 2035 EU combustion engine ban. That is still in place. Massive debate about what this is, whether or not this industry is prepared for that. You're going to have that debate much more going on in Brussels. And then the question, of course, is cost cuts at Volkswagen. There was that massive push to cut costs last year. A lot of analysts and people that I spoke to said they had not gone far enough. Now that we're seeing, margins come out at 2% for Porsche, I think there's also going to be a conversation about more job cuts possibly, and certainly finding ways to reduce costs at Volkswagen.
All right, Bloomberg's Oliver Crook walking us through the auto story and teaching me a new phrase. Don't change horses in the middle of a stream. Didn't know that one. Thank you so much. Let's go into the week book here. Plenty going on this week ahead. The BOE's Bailey speaking at a fireside chat at the London School of Economics. So monetary policy very much at the forefront today and throughout the week, I should say. We're awaiting Chairman Powell's comments, I believe tomorrow, PCE data later in the week, and then, of course, UNGA throughout the week as well. So really setting the stage for quite a bit of geopolitics.
Absolutely. I'm quite interested in the IFO number. Just come back to that kind of story around what's happening with Germany. I think it's IFO Wednesday. And it's going to be interesting to see, on the one hand, you've got the fiscal story, what's happening with the defense spend, but also just the chaos that is happening in the auto sector and the chemical sector right now. What's Valerie Teitel watching this week? Powell tomorrow? Is that going to be exciting?
Look, we not only hear from Powell tomorrow, we also hear from Michelle Bowman, who was at dissenter 2 meetings ago and failed to join Myron this time around, voting for a bigger a 50 basis point cut rather than the 25 they went with. But Powell's comments might be key here with the background of what's going on with this H-1B move by the Trump administration, whether that complicates the view on the labor market, or perhaps in his mind, is he just thinking this is a negative impact on GDP growth and maybe another reason to continue cutting. It's going to be very interesting to see whether his gut reaction is whether this is going to hurt growth or if this is going to tighten the labor market, because that's policy in two different ways. Perhaps, but one is going to have a more lasting effect. One is going to have more lasting effect. Whether that's growth or on the labor market is a good question to ask. But it's interesting also to see, we have, the Mag 7 stocks might be weighing on the NASDAQ this morning on the back of this H-1B. Remember, they're heavy users of the H-1B visas, and that's probably the reason why we're seeing the NASDAQ, be so heavy this morning. But again, is that really going to change the dial for some of these companies? It'd be interesting to hear from them if we do this week on their thoughts on H-1B. Kathy Woods, though, she was just on set. She's reading into it more of a negotiation with India rather than maybe a move by the Trump administration to tighten immigration policy.
Yeah, it's fascinating. At the very end of that conversation with Kathy, we also got her take on crypto. It's weakening today. Just walk us through that.
Weakening today, there is some chatter about a heavy liquidation when it comes to Ether. Ether was actually the crypto coin that was moving most of the market this morning. It was down over 6%, which has led XBT, Bitcoin, to drop 2% in a straight line. Maybe that's adding some weakness onto tech stocks rather than the H-1B narrative. But interesting to watch that story, because it's happening alongside gold hitting a fresh record high.
Are you suggesting that there's a correlation between crypto and tech stocks?
Perhaps this morning, or is it the H-1B? We don't know. But, you can add gold into all of this, right? There might be a clear reason why someone wants to be buying gold rather than crypto this morning.
You know what's slightly stronger? The dollar. Just a little bit, just for a minute. Bloomberg's Valerie Teitel walking us through some of those market moves. We thank you so much. I think what you need to know here is that there's weakness across the board. You're seeing it on both sides of the Atlantic. Certainly the auto sector and the banking sector very much in focus. That does it for the opening trade. Pulse is up next. Stick with us. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
President Trump hikes visa fees for skilled workers to $100,000, sparking chaos for corporate America. Companies urge staff to return to the U.S. and halt overseas travel. U.S. lawmakers arrive in China on a rare visit, days after Presidents Trump and Xi finalize a deal for TikTok. Plus, the UK, Canada and Australia formally recognize a Palestinian state in a break with Washington. France is set to follow suit. Let's get to the markets then. There is a bit of a wobble across these risk assets. You saw US equities ending Friday on a fresh record high in the S&P 500 today. European stocks dragged lower. Autos is an area of concern, certainly downgrades from VW and Porsche by the end of play on Friday, and that is certainly dragging on the European picture. Across the US futures story, a little softer then after that record high on Friday. Down 0.3% is the picture on the S&P E-minis. The US 10-year at 112, currently close to 413, I should say. 413 is the level that you're at on the benchmark US 10-year, largely unmoved across the Treasury curve today. We count down, of course, to that key PCE data, the inflation gauge that we know the Fed scrutinizes on Friday. And on gold, fresh record highs for the yellow metal on bets that there will be further rate cuts from the Fed. 3,712 right now per troy ounce. Bitcoin selling off, crypto under pressure, down 2.4%, 112,600 on Bitcoin. Let's check on the European map then and see how things are shaping up. I talk about the pain in the auto sector on those downgrades. So you look at the DAX down 0.5%. Over in France, softness as well, down 0.3%. And over in Spain, the IBEX under pressure, falling 0.8%. Here in the UK, the FTSE 100 just holding on above the positive line, and we'll see to what extent that continues. But these do seem to be markets that are looking for the next catalyst. We'll start the conversations, the analysis right now across all of these stories. The Pulse starts now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. President Trump's $100,000 fee on new H-1B visa applications is triggering confusion for corporate America and for workers. The move is aimed at cracking down on what the White House calls abuses of the program, which they say undercuts American workers.
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
The restrictions and fees came into effect on Sunday. Let's bring in Bloomberg's chief Asia correspondent, Ros Matheson, with some of the context and the details. Why, Ros? Let's start with the question of why this has been implemented, what the rationale is from the White House, from President Trump, to make this change.
Well, as you're saying, this was a really abrupt announcement and very quickly coming into effect, hence all the confusion. But this is part of these very major abrupt policy changes we're seeing coming under the Trump White House. And a big part of it, as you were saying, is about preserving jobs for Americans, bringing jobs back to America. I mean, obviously, these companies argue that they are creating jobs either way in America. But the rationale, at least from the White House, is that they see this as a program that has been open to abuse because there are many, many, many more applications every year than there are spots. And so you've got a lottery system, and they say that some companies tend to try and game that lottery system by filing multiple applications for their workers because currently the fees are not that big to do so. So the companies can afford to really spam the lottery in a way with multiple applications for individual workers to get a better shot of that worker getting one of those prized visas because, again, many more people wanting those visas than there are visas available. That's the rationale, at least, from the White House in doing this. But as you're saying, because it came so quickly, because it's such a big increase in the visa fee, and really it does impact India companies above all, there's big questions about what it means for these workers and what it also means going forward for the US-India relationship.
Well, indeed, as to whether or not this is another leverage or at least pressure point that President Trump is using in that rift with India. Ros, when it comes to the question as to who is impacted, do we have clarity? Is it current visa holders? Is it future visa holders? What do we know in terms of who is in the spotlight at this point?
Well, this happened so quickly. There was a lot of confusion initially, whether this was a policy that Donald Trump just conjured on the fly in the minute, because it wasn't clear initially, does it impact people who are existing visa holders or those who are hoping to come in the next round of the lottery? It took a day for the White House to clarify that, in fact, if you do already have one of these visas, you shouldn't be impacted. But because of some of these abrupt changes, the way that we've seen also visa changes for people coming in to study as international students, confusion around that, you're seeing companies say, well, just to be on the safe side to their workers, if you're in the US, stay where you are. Do not travel overseas at all. If you need to come back to the US, do so quickly to avoid any chance of inadvertently being caught up in the confusion around this. But technically, they're saying it doesn't apply to workers who already have these visas, but it will impact a lot of people who are getting ready to go into the lottery to hopefully come into the US, especially, again, those workers from India, because the vast majority of these visas go to workers from India, these big outsourcing companies coming into the tech sector in the US. And that's, again, where you're going to see impact on those workers. Do people still try and apply? Do those workers now stay back in India going forward? That's going to be the big question.
Okay, Ros Matheson in Singapore with an important update on the visa changes coming out of the US and the potential impacts. Ros, thank you. Now to what is happening in terms of relations between China and the US, because a group of senior US House representatives is in China right now for talks with President Xi Jinping's government, the first such official visit in 6 years. The US group is led by Democrat and former House Armed Services Committee Chairman Adam Smith, as the world's largest economies edge closer to a potential trade deal. Bloomberg's Jill Desus is in Hong Kong with some of the details on this visit. Jill, just give us the context in terms of how significant politically but also economically this meeting is.
Sure, Tom. Yeah, this is a really interesting one. I think, as you mentioned, obviously meeting with some of these Chinese leaders. This is a group that met earlier with the Premier Li Qiang, so he's really China's #2 in command. They've discussed apparently fentanyl. Obviously, that's been at issue in some trade issues with the United States. We've also have some conversations about nuclear proliferation and also artificial intelligence. So you have a pretty wide remit there of issues that have come up during these chats. I do think that, one thing that continues to be interesting, is this idea of, this following the Trump-Xi call. You also have this continued prospect of an in-person meeting that could be taking place between Donald Trump and Xi Jinping in Asia, in a month or so. So I think that idea of that delegation, as you mentioned the first time, they've really had this kind of a visit in 6 years, coming to China, really does kind of speak a lot for the ways in which the U.S. and China, despite a lot of the tensions that they have going on, still trying to maintain some of those really close political and economic ties there. So, this group is going to continue to have some meetings. We'll see kind of how those goes. But yeah, I think some really interesting developments there.
Yeah, and clearly one sticking point has been the fate of TikTok, hasn't it? And President Trump has suggested that Fox Corp chairman Lachlan Murdoch and his father, Rupert, of course, are involved in this US takeover, at least potential takeover of TikTok from its Chinese owners. Let's take a listen to what the president had to say.
We're going to have a very tight control. And look, it's an amazing thing that's been created. There's tremendous value with TikTok. And I'm a little prejudiced because I frankly did so well on it. It got me numbers that nobody's ever even heard of before. So a lot of people want it. The young people of this country want it badly. The parents of those young people want it badly. And so we were able to work out a deal with China. And it's a very good deal for us. I hope it's a good deal for them.
Well, Jill, where are we in terms of actually locking this deal down, finally, for TikTok? And what is the time frame that we're looking at?
Yeah, well, Tom, I think, we're still waiting on some more details on what exactly this deal looks like. I think at this time, in addition to what we just heard from Trump there, this idea that the Murdochs could ultimately be involved, we've also heard that there's, potential investment stakes here from Oracle, Andreessen Horowitz, the investment from Silver Lake. I think the idea would be to sort of minimize the amount of investment stake that ByteDance, the Chinese parent company, ultimately has pretty significantly. So that's really what's under discussion here. Perhaps we'll get some more details just kind of as this continues to crystallize, because this has been such a big sticking point in trying to get that Xi-Trump meeting together within sometime over the next 6 weeks or so. But I would just point out, Tom, it kind of reminds me of back during Trump's first term in office when we were looking at actually not that dissimilar ideas behind some kind of a tie-up with American companies such as Oracle or some such. So it's really interesting to watch all of this just come around again, a good 6 or 7 years later, but obviously with some of those new names in the mix, including the Murdochs. So we'll have to see. I'm still waiting for those really, really fine details on how exactly this thing is going to work.
Yeah, there's still some granularity that we need to hammer out before we know that this deal has actually crossed that line. Bloomberg's Jill Desis, thank you very much indeed for that update with the US lawmakers continuing their conversations, of course, on the ground in China. At this point, let's bring Christian Keller, Head of Economics Research at Barclays. Christian, thank you for joining us. I was going to start on the Fed, but actually I'll start on China and the US. If we get some kind of deal, and we don't know what that deal will look like, but if we get some kind of at least formal ratcheting down of trade tensions between the US and China, it looks like they're on a path that could lead to that this year. What would that mean for your outlook for the global economy?
I think the outlook is already quite good, and I think markets already no longer worry that much about the U.S.-China relations. I mean, I think if you think in April, at some point we were at mutual tariffs of over 100%. That came down quite quickly. Now people see that there's some negotiations back and forth, but it seems it came through quite early that there was no escalation superiority by the U.S. that could really corner China. And since then, it's kind of a game between equals, really, when it comes to it. The rare earth superiority by the Chinese, and now they're going to find a way. My feeling is not that markets are expecting a big fallout. So it would be positive if there comes a deal, but I don't think it has been on markets' minds anymore that much.
So it may not materially change your view on the outlook for the global economy because it's already to some extent kind of factored in.
I think so. If there's not something grand where suddenly, really tariffs will be reduced much further, because we do see it in Chinese exports. The Chinese are suffering from it. They were able to divert a lot of their exports away from the U.S. to other parts of Asia. If you look at the recent numbers, the reduction in exports to the U.S. is hurting the Chinese economy. Now, if that was taken away, that would be another positive, so to say, in already quite an optimistic environment, I would say.
To the Fed, then, with your expectation that there's a further 2 cuts this year, that's your view at this point. To what extent is a resurgence in inflation a risk to that view?
I think that there's a risk. I don't think it's imminent. I think those 2 cuts to the rest of the year are more or less baked in if there's not really a massive surprise on CPI. I think it's more about 26, whether they continue. We have 2 more cuts for 26. I think markets is even more aggressive. But whether they can continue that journey really towards neutral, or depending where you see neutral, maybe even below, I think that is a question. Probably not for October, but beyond October, December for 26.
How concerned are you about the labour market in the US? I mean, clearly that has become more of a concern for this Federal Reserve, and that is part of the rationale for moving lower on rates. And to what extent does that adjustment in rates actually materially impact the labour market? Do we have clarity in terms of the lag, the time frame on?
We clearly don't, exactly. I mean, first of all, we have a lot of contradicting data, right? We know that the labour market is weaker than we thought earlier from these revisions. You saw last week, by the way, very strong retail numbers. So somehow the consumer is not seeing the labour market as weak as one would expect, because you would think they'd hold back consumption and start saving more. That's not the case yet. Now, there are lags. Monetary policy in the labour market, we'll have to see. I mean, there is a very strong supply side argument, and there is less migration. We have the news about the HB1 visas, right? That's another sign that there is a reduction in the inflow of labor, which was a very, very strong factor in the last few years, where you had a lot of labor supply. Now, if you reduce this, your break-even number, the number you monthly need in a way to keep the unemployment rate steady, will be much lower than it was in recent years. And so you could end up having a relatively low job growth, but unemployment staying at 4.3, 4.2, 4.4, but in a range which is pretty close to what we call the NAIRU, the equilibrium unemployment rate.
And possibly in that scenario, wage growth remains sticky.
Exactly. It's not clear. I mean, take the H-1B visas. Now, if you really cut off the foreign supply, and I'm not even denying that there's abuse or so, but the fact is that if there were these hundreds of thousands of Americans just ready to take on these jobs, right, and then you one-on-one just switch to them, that's one thing. If you suddenly no longer have the inflow and you have to pay Americans more to take those jobs, to substitute the inflow of foreigners, that tends to add to wage pressures, right?
I want to switch to the BOE, because you've got a view. We saw this interesting split, the 7-2 split, and you've noted that in your note and how that kind of factors into your view going forward. But you still hold, and you've got some caveats around that, but you still hold the view that November is live for the BOE. That in fact they go again in November. Why?
Yeah, well, I mean, clearly the committee has remained quite conservative or gradual and very, very careful in their language. That's why we say it's a very fine line now. What we are hopeful for is that September, that inflation print you saw last week, was the peak. And so if we have one more print and you realize that it was the peak, inflation is coming down, we think the committee may become more willing to look forward, see that inflation is moving towards targets, and implement that cut in November. That's a tight call.
Okay, that's a tight call. And November as well is also the month when we get the budget. Is there a path in this budget, this November budget for this UK government, towards growth preservation, but also addressing fiscal stability? Is there a path that they can factor into that budget that would both assuage the markets, but also keep growth on a modest upward trajectory?
I think there is. I think there's a lot, though, how it's about perception, right?
Yeah.
I mean, if you take the UK fiscal position, you compare to some of the ones in Europe or elsewhere, it's challenging. But maybe not as challenging as when we look at the media, look at some of the market reactions, as they make it to be. And so it's really, I think, a lot about this government now, convincing markets, convincing business, that they are, trying to promote growth, be careful on what taxes they increase if they do this. And so I think if there's the right communication on this and they can convince markets, there should be a path.
Okay, it comes down to communication, and there's an argument that this government hasn't always been on top form when it comes to communicating around certain policy decisions. So we'll see if they thread that needle. And you touch on Europe, and so I bring in what happened on Friday with another downgrade for France and an upgrade, interestingly, for Italy. And there's a Bloomberg report today on how France is replacing Italy as the kind of problem child of Europe. Do you kind of, is that a reasonable way of framing it? How problematic is France for the Eurozone right now?
Yeah. I And first of all, what you see a week earlier, there was a downgrade for France, and you saw an upgrade simultaneously for Spain. So what you see is now France, which is considered core, and Italy and Spain more the periphery, now moving towards the core, and France, relatively speaking, losing out. Look, there's no doubt that France is extremely important for the Eurozone. It is a core country in the sense of the size of it being a founding member. In principle, you speak to people and we look at the numbers, it should be possible for them to cut on expenditure and putting the debt on the fiscal on a sustainable path. The question is it politically feasible? And then sometimes people say it's not a fiscal crisis, it's a political crisis. Well, politics is fiscal and fiscal is politics. So, and that, frankly, we don't see it how France will address this and resolve it.
How do we think about that factor then, and the political crisis that's linked, as you say, to the fiscal situation in France, playing into ECB decision-making in 2026, at a time when we get that fiscal impulse really coming through from Germany? At least that is the view from many. Is this an ECB that is caught in that conundrum? They've steered down to 2%. Are we looking at a central bank in Europe that's going to have to raise rates next year on that fiscal impulse from Germany?
Well, what we see is at the moment still an economy that is relatively weak. We're going to get PMIs today, or tomorrow. Yep. I think that's going to be very important. The Germans have to first implement the fiscal stimulus. They're going to take some time. We think, the growth rates in Germany should be picking up on a quarterly basis, but it probably reach until the fourth quarter next year, so they really feel that impact. And look, the ECB will look at both. They will look at growth, but in particular, they look at inflation. They don't have the double mandate or the dual mandate as the Fed has. And, so far, it's a nice, stable 2% inflation. They're forecasted actually to come in slightly below 2% on average. So we see them on hold. We think they do one more cut in December, which is, by now out of consensus. But then we think they stay on hold rather than starting to hike again.
The ECB does one more cut in December?
We have it for December. It's, again, a fine call, but we expect. You saw the problems with Porsche. You see, there's a lot of things coming in, we think, in the fourth quarter that may make them decide in December, look, why don't we ease a little bit more?
Christian Keller, always smart with your insights. Thank you so much for joining us around the desk, of course, this Monday morning. Christian Keller, Head of Economics Research at Barclays. Coming up, France, set to follow the UK, Canada and Australia by formally recognising the state of Palestine. We bring you the details on that story next. This is Bloomberg.
Week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
French President Emmanuel Macron is set to recognise the state of Palestine during his address at the United Nations General Assembly later today. Denmark is working on a plan for recognition, according to its foreign minister, and on Sunday, the UK, Canada and Australia announced their support for a two-state solution. UK Prime Minister Keir Starmer says both Israelis and Palestinians deserve to live in peace.
In the face of the growing horror in the Middle East, we are acting to keep alive the possibility of peace and a two-state solution. That means a safe and secure Israel alongside a viable Palestinian state.
US President Donald Trump and Israeli Prime Minister Benjamin Netanyahu criticised the move, arguing it would incentivize Hamas and prolong the war with Israel. Bloomberg's Jemana Pasechi is in Dubai. What are we expecting then, Jemana, to hear from France and the other states? To what extent they're going to be fully aligning with the UK, Australia and Canada? And what is that US response likely to be?
Yeah, so in many ways, this was an international coordinated move. Many of these Western nations had hinted early in the summer that they would move to recognize Palestinian statehood at the UN General Assembly. Yesterday, we had 3 countries in rapid succession, starting off with Canada, shortly afterwards Australia, and then the UK announced that they were formally recognizing Palestine as a state. Later in the evening, Portugal followed suit as well. That would take the total number of UN member countries that have actually acknowledged a Palestinian state to just over 150. And of course, very significant that in terms of G7, you would have what is expected to be France later today, Canada and the UK, the first G7 states to do so. Now, of course, this is largely symbolic. There are no internationally agreed boundaries for a Palestinian state. There's no army, but very significant because it does just add to this growing international cry from many Western nations for the Palestinians' right to self-determination. And you just heard there with UK Prime Minister Keir Starmer saying that also it is because they want to keep the prospects of a two-state solution alive. Now, the Israeli Prime Minister was very quick to respond. The Prime Minister Netanyahu saying that this is categorically rejected by Israel. It is essentially being perceived to be a reward for Hamas, a reward for terrorists from their perspective, and that the response from Israel, particularly in response to the nations that have moved to make this announcement, would come after he returns back from the UN General Assembly. He will be addressing the UN General Assembly on Friday of this week. Afterwards, we'll be meeting with President Trump. So the response should be coming after that. Now, in terms of the US and their own response, so far, nothing official on back of the various announcements that came yesterday. But what we do know is the U.S. have been very much opposed to any unilateral declaration of a Palestinian state. Earlier in the year, France and Saudi Arabia held a summit to work towards a two-state solution at the UN. This was back in early summer. The US boycotted that summit. Last week, the UN also passed a declaration by majority moving towards a two-state solution that was categorically opposed by the US. Morgan Ortagus, a deputy senior envoy to the Middle East, saying that this was nothing but a publicity stunt and would be a reward for Hamas. So essentially what you have here is a growing split between the US and its Western allies when it comes to the Palestinian ultimate solution and working towards a two-state framework. The U.S. have not been in favor of unilateral declarations, but at the same time, they do say that time is running out in terms of securing a ceasefire. And of course, President Trump has reiterated time and time again that he wants to see Hamas release the hostages.
Yeah, and it's a reminder, isn't it, of how far things have moved from having a two-state solution as being the primary framework for the international community when thinking about how to solve this crisis. Horizons Middle East and Africa anchor Jemana Pasechi, thank you with that important update, of course, out of the region. Meanwhile, President Trump has described Charlie Kirk as a martyr for American freedom. He was speaking at a memorial service for the conservative activist who was shot dead at an event in Utah earlier this month. Kirk's widow, Erica, also spoke, saying she forgives her husband's killer. Coming up, the United Nations Security Council set to discuss Russia's latest violation of Estonian airspace. That is next. This is Bloomberg.
looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Good morning. Welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. President Trump hikes visa fees for skilled workers to $100,000, sparking chaos for corporate America. Companies urge staff to return to the US and halt overseas travel. US lawmakers arrive in China on a rare visit days after Presidents Trump and Xi finalized a deal for TikTok. Plus, the UK, Canada and Australia formally recognize a Palestinian state in a break with Washington. France is set to follow suit. To the United Nations now, Security Council meeting today at Estonia's request to discuss a violation of the country's airspace by Russian fighter jets. Bloomberg's Oliver Crook is in Berlin, has been following all of this for us. Ollie, to what extent is Estonia taking a hard line on this? What has their response been so far to this violation of their airspace?
So they've responded in a few different ways. One, they wanted to convene the United Nations Security Council, which will be happening in New York in about 5.5 hours' time. That meeting will begin to discuss the the occurrences over the last few days. They've also triggered Article 4 of NATO, which is a consultations for NATO allies to discuss any sort of event that has in some way jeopardized or threatened territorial boundaries, which is what happened on Friday, according to the Estonian authorities, when 3 MiG-31 Russian fighter jets entered Estonian airspace for a total of 12 minutes time, which obviously is something that the Estonians have been extremely concerned about from the very beginning of the war, their own sort of sovereignty and the possibility of the Russian threat. And just to say a couple of things to why this sort of incident is different. You have had a number of airspace violations by the Russians for Estonia since that they joined NATO, dozens and dozens of these. They really quieted down quite a bit when the war in Ukraine started. This is the 4th air incursion that we have had this year for Estonia. And just to add a few couple of things, the longest one that happened this year so far was only 4 minutes. Now we're talking about a 12-minute violation. We should say that Estonia is a very small country, so 12 minutes of air, flight time is quite a bit of distance to cross. We should also say that these were very modern aircraft. There were 3 of them. They were armed. These are the kind of advanced fighting crafts that can carry nuclear payloads. So these are all of the things. Not to say that they were sort of actively hostile or looking to target anything, but these are the kind of pushing up against the elements of the NATO border that the Russians have been doing and that NATO is extremely concerned about. We are, of course, waiting for a reaction from Donald Trump, a full reaction. On Friday, he said he didn't love what he saw on Friday, or yesterday he said he didn't like it. He also was asked in a press conference whether or not he would defend the Baltic countries and Poland, to which he said he would. But again, we're watching forward to that meeting of the UN Security Council in just a few hours' time in New York.
What about the economic response, Ollie? What measures can Europe pursue to put further economic pressure on Russia?
And this is sort of obvious, Tom, but it is cutting basically the fossil fuels that come into Europe. Again, as we have been discussing, now the EU has put forward a proposal to basically cut all LNG from coming into the European Union. That is something that originally the European Union was planning to do by the end of 2027. The proposal came on Friday from Ursula von der Leyen. They want to push that up a year earlier, i.e. by the end of next year, there will be no LNG that crosses into the European Union. That being said, Tom, last year, 19% of all the gas that went into the EU was still coming from Russia, a state of affairs that Donald Trump is obviously not very pleased by. We spoke to the European Energy Commissioner about the move and what the impact could be economically on Europe. Have a listen.
So what we're doing now is that we are banning import of Russian LNG. We're also doing other measures that maybe we can get into later, but I think that this is definitely the most important thing that we are announcing today. This will have big effects on the revenue in Moscow. And of course, it is totally unacceptable that we are in a situation where we are still in Europe, although we've brought our imports down quite significantly, we are still importing Russian LNG, and this has to stop, and that is why these sanctions are now being put forward.
And Commissioner, I think that potentially one of the signals that people will take from what we've seen in terms of the action today, we should say that last year 19% of all the gas that came into Europe was still coming from Russia. The signal many may take from this that it takes Donald Trump to get the Europeans to do basically what they've known that they've had to do for a long time, to which you reply what?
To which I reply that we have actually, since the war started, brought down significantly our consumption of Russian gas. It used to be 45% a couple of years ago. Now it's 13%. But I do acknowledge that that 13% is still far too much, and it is totally unacceptable. So I also welcome that the U.S. And the American president is now leaning into this debate. We need to put as much pressure on Putin as possible. We need to do our part in Europe for sure, and we appreciate that the U.S. is also doing their part.
And so, Tom, that action would target LNG that is coming from Russia. A couple of final points here. There is still pipeline gas that is coming from Russia into the European Union that is not covered by this. There is still crude oil coming directly into the European Union. That is down to carve-outs that exist for Slovakia and Hungary. If Trump is really upset about it, maybe he can bring some of the pressure to bear on those countries that the Europeans have failed on. And, of course, the last major step here for the Europeans is the discussions around the frozen Russian assets, of which there's more than 150 billion euros worth of it that are still sitting there. They're trying to find different sort of creative ways to monetize, and that is a conversation that really kicked off in earnest on Friday. And we heard a little bit about Christine Lagarde and from Valdis Dombrovskis about how they would go about doing that, but the details really are not yet fleshed out at this point.
Bloomberg's Oliver Crook, thank you very much indeed. Some progress, but more work to be done then on that front. Thank you for the update. Meanwhile, the European Union is making progress with plans to provide loans to Ukraine using Russia's frozen assets. It is part of efforts to meet Kyiv's financial needs as the 3.5-year war grinds on. Kinga Rodlowska, Europe head of the Centre for Finance and Security at the think tank RUSI, joins me now from Brussels. Kinga, thank you for your time. Talk to us then about what the options are when it comes to these frozen assets, whether or not Europe can do more than just lend on them.
Well, to start with, Europe should still consider confiscation, but I guess this is out of the question now after Ursula von der Leyen address earlier this month, when she clearly stated that the assets themselves will not be touched. This certainly sends a very wrong signal to Kremlin and undermines Ukraine negotiating positions. What Europe is looking into now is indeed putting those assets that has been frozen into more risky investment programs. And this is something we at the Center for Finance and Security at RUSI have been calling for a long time now.
What has held them back? What have the arguments been for not making greater use of these assets that currently sit in Belgium?
Well, some point to legal arguments, but those have been clearly resolved. A number of renowned professors of international law offered their expertise and confirmed that confiscation would be a legal countermeasure. Some argue that confiscation would undermine the stability of the Eurozone. But frankly, Tom, we've seen that when those assets were immobilized, there was nothing really dramatic happening here in Europe, in European markets. So there are no grounds to think a seismic reaction can happen when we move forward with more aggressive approach towards those assets. And to put it frankly, if there are countries that are planning to wage an illegal war of aggression and they view Europe as a safe haven to deposit their reserves, maybe we are better off without them, because fundamentally Eurozone offers the most stable and reliable investment space.
And of these assets, Kinga, you're also warning that there is a risk that in the next 12 to 18 months or so, they could end up back in Moscow's hands. Why is that?
Well, it's because in the EU, sanctions, they need to be reimposed every 6 months. And for this, you need a consensus across the bloc. You need the vote from all 27 member states. And if, as we have seen over and over again, when every new sanctions package is being negotiated, there are countries that raise concerns and threat to block the new package and the reimposition of sanctions. But when it comes to Russian frozen assets, we also need to look into the stance of countries that are not so vocal about blocking other sorts of sanctions, namely Belgium and Euroclear, because obviously the stance of Belgium is effectively blocking moving forward with the assets.
This is all happening at a time when you put out a recent report, you and the team at RUSI, called Alternative Financial Systems, a Desire for Autonomy, Necessity and Opportunity. You're talking about the splintering of the Western-built financial infrastructure. What is going on? What are the risks? What are the opportunities?
Well, so alternative financial systems are instruments, institutions and infrastructures that operate outside of the traditional international financial system, especially Western-based networks such as SWIFT. So these could be new messaging and settlement systems such as Chinese SWIFTs or Russian SPFS, but also innovative products such as stablecoins, cryptocurrencies or CBDCs. And finally, this group also incorporates old systems such as Hawala or gold. But what unites them is that they provide pathways around or alternatives to the traditional established channel of global finance.
Where are we in this journey then, Kinga? How to what extent is this a watershed moment, and are regulators, the authorities responding?
Well, so it's a process. We need to look into the motivation of countries that are embracing those systems to offer tailored responses. And there are three key drivers that push those countries into developing those systems. First, it's the autonomy. So countries such as China and Iran want to insulate themselves from Western leverage, specifically sanctions. Then we have countries that embrace those systems out of necessity. They are excluded from the global financial system due to de-risking, and so they need to seek alternatives. And finally, there is a group of countries and actors that are looking for advantage. New products, they are high speed, they are low cost, they offer new features, and to put it simply, they are attractive regardless of the geopolitical context.
I'm just thinking of the fairly long-run hand-wringing, Kinga, when it comes to de-dollarization, and yet the dollar is still used in, what, a little over 50% of international transactions, well above the euro, well above the pound, certainly well above the yuan. there may be a response to this where people turn around and say, look, the dollar remains central.
Well, certainly it's a process, it's a marathon, it will take time, but we've seen acceleration of those developments. In terms of de-dollarization, how we call it at RUSI in our paper, we clearly highlight that this is a move not from one to another system, but from one to many. So we are witnessing multipolarization and diversification of the system. And so, dollar still remains the most reliable currency, and along with international framework established by Financial Action Task Force, it still offers the most popular financial framework. And recently, the President Trump administration embraced stablecoins, which will generate a massive demand for US dollar. So the dollar is here to stay, but as we move on, we will see those alternatives being developed.
Before we let you go, Kinga, I just want you to expand on those changes that are being pushed through by the Trump administration, because they do seem to be significant. That embrace of crypto, changes around stablecoin infrastructure. Does that position the US to be in a stronger place when it comes to the changes of some of this financial infrastructure?
In my opinion, yes, it does. And it's because one of the responses to the development of those alternative financial systems should be the response from both the regulators and the private sector. And especially if we are talking about addressing those that are looking for advantage, that are looking for more sophisticated mechanisms that provide low cost and high speed. The US certainly has made a step forward, while Europe is still considering and lagging behind in terms of regulation, but also what the private sector and private financial institutions based in Europe can offer to its clients.
Kinga, thank you very much indeed. Really interesting insights. Kinga Relowska, Europe head of the Centre for Finance and Security at RUSI, with that report in terms of the changes around some of the Western-built financial architecture, but also with a view on what Europe and Ukraine can do in terms of tapping some of those Russian assets that currently sit in Belgium. Now, the UK government has approved a second runway at London Gatwick Airport in Prime Minister Keir Starmer's latest bid to lift the UK economy through major infrastructure works. The news comes as Heathrow, Brussels and Berlin airports were hit with flight delays over the weekend due to cyber attacks. For more, let's bring in Bloomberg's managing editor for space and aviation, Benedict Carmel. Benny, what do we know? Let's start with the Gatwick runway. Were we expecting this? How significant is it? What do we know about when shovels will be in the ground, and to what extent is going to expand Gatwick in a significant way?
So the Gatwick Airport runway had been in the works, and the planning had been going on for a couple of months. So this didn't come out of the blue, but now it seems like, yes, this is sort of the sounding bell, and it's going ahead. When this will actually mean planes can take off from the new runway, nobody quite knows. The loose target is sort of towards the end of the decade, but if there's one thing that we all know with major infrastructure programs, in particular anything that has to do with airports, these things are typically delayed, so we shall see whether that is indeed at the end of the decade. The thinking going that, if Heathrow can have an extra runway, then so can we. That's what Gatwick seems to be thinking, or the UK government. It's something that sort of evens out the flows of traffic a little bit between those two airports. Heathrow itself hoping to get its third runway at a cost of more than £20 billion. The Gatwick one, looking positively frugal by comparison, is only about just a little bit more than £2 billion. So that would really help that particular airport. It's popular with some of the low costers and sort of as a secondary airport for overflow from Heathrow. So that would really help that airport to attract additional traffic.
Okay, well, let's think about whether or not, if they put cement in the ground, they can also put in place some infrastructure to stop these cyber attacks. Because, Benny, we had some significant cyber attacks again, or at least the impact was there when it comes to Berlin, Heathrow and Brussels airports over the weekend. Are things back to normal? What do we know about what happened?
So it's largely back to normal. This sort of started on Saturday and then rolled into Sunday. Any disruption usually takes a day at least to get back to normal. The actual sort of disruption in terms of cancellations was not that large. We had about just a few more than a dozen aircraft that couldn't take off at these airports. Most of them were affected at Heathrow. But for people on the ground, this was massively disruptive. We heard of massive lines, people waiting, essentially a very analog process that had to be reinstated to check in people manually rather than electronically. So that took a lot of time. Berlin was hit on a very busy weekend. It was the Berlin Marathon this weekend, so a lot of people were coming into the city to participate in this very popular race. So that was a very unfortunate timing. We don't know at this point who's behind it, but we do know it was a cyber attack, and we do know it hit one particular company, Collins Aerospace, that does all these sort of electronic check-ins. So again, the question will be, how could this happen? What was the kind of redundancy that was built in? We've seen a number of disruptions at airports like Heathrow, like Berlin, and across the continent, really. So it seems to be something else every time. But every time it does happen, these disruptions take at least a day, if not longer, to sort themselves out again.
And a very different type of disruption, Benny, facing Hong Kong airport, this time weather-related.
Yes, something that is really beyond anyone's control. So this is at Hong Kong Airport, and we hear now that the airport might actually have to close down for 36 hours starting tomorrow, which would really be unprecedented. There have been closures at the Hong Kong Airport in the past. 2023, there was a closure for about 20 hours, but 36 hours, that really would be a record. And it's a precautionary measure just because that hurricane, that typhoon is barreling down towards the region. Cathay Pacific, the big player at that hub, more than 500 flights a day, north of 1,000 flights in total at the airport. So you can imagine what a stoppage of more than a day might mean. That'll take time to sort itself out again, but that's the latest that we hear, that is indeed happening as soon as tomorrow.
Okay, Benedict Carmel, thank you very much indeed for that update. So from airlines and the airline space to the auto space right now, one of the biggest laggards across your equity story, Porsche shares slumping after the luxury car maker cut its annual profit forecast and shelved a future battery-powered luxury SUV. The 911 maker said it would add more combustion engine and hybrid models to bolster its portfolio. The pivot is causing a €1.8 billion hit to operating profit. Parent company VW, Volkswagen, also slashing its annual forecast. It is yet another setback for Germany's auto industry, which is contending with high costs, of course, and muted sales. And you can see the share price reaction in the session today. Both of those car makers down over 7%. Porsche and its parent company, VW. To banks now, BBVA has raised the value of its takeover bid for Banco Sabadell by about 10%, pushing the value of the deal to about €17 billion. The improved proposal marks a shift after months in which BBVA's top executives insisted there was no need or intention to sweeten the offer. And you can see the moves there, a little lower on Banco Sabadell by 3%. Coming up, Cathy Wood, founder, CEO and CIO of ARK Invest, gives her thoughts on President Trump's changes to the H-1B visa program. That is next. This is Bloomberg. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
I thought the Fed's decision was a good one. This looks like a sequence of 3 moves in a row through the end of the year.
Would you have voted for 50 this week?
No, I don't think so.
Former St. Louis Fed President Jim Bullard there saying he would not have voted for 50 basis points. Fed Chair Jay Powell will be speaking tomorrow, going to deliver a speech on the outlook for the U.S. economy. It comes as corporate America grapples with the potential impact of President Trump's move to curtail H-1B visas. Let's get more with Bloomberg's Valerie Val. Can we expect will Jay Powell touch on this as part of maybe a broader question about the labor market, about immigration? This is another move from the Trump administration that could cause ruptures.
Could cause ruptures and just could complicate the read on the labor market at the moment. He did mention in the press conference last week, he was asked whether is it tariffs or is it immigration that is affecting the labor market, and his clear answer was that it's immigration that's been steering the labor market at the moment. So this could add just a bit more unknowns to the muddle. You have to add to that the confusion even over the validity of the BLS data as well. But I think he will get asked on it. There is Q&A after his speech by the moderator. It'd be very interesting whether his gut reaction is whether this is going to be negative for U.S. economic growth or whether this is going to tighten the labor market in the near term. Because those are two different policy paths, essentially, that Jerome Powell could I guess, harp on after this move by the Trump administration to add that $100K fee onto H-1B visas. Now, he has mentioned multiple times and in his press conference last week that college grads are having a harder time finding jobs. He's mentioned the unemployment rate for those unemployed longer than 27 weeks has really moved to almost a 10-year high if you take out the blip around COVID. And that could be something maybe he could hang his hat on to think that the tightening of the visa program could perhaps tighten the labor market in the near term.
Is there a tech stock reaction to this news?
I think we woke up this morning thinking that we might see one, given the fact that Amazon is the heaviest users of these H-1B. You also add in Microsoft, Meta, even Apple into that top 10 list of heavy users. But it's really not knocked tech stocks that much this morning. And that comes after the fact that they all hit the Mag 7 and the NASDAQ hit an all-time high on Friday. So maybe not totally surprising we see them in the red this morning.
Valerie Tatel, thank you very much indeed. And the Fed's newest governor, meanwhile, Stephen Myron, is speaking at the Economic Club of New York. You can catch that live on Bloomberg Television from 5 p.m. London time. Up next, it's Bloomberg Brief. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Fresh records. Futures are pointed lower after indices closed at more all-time highs Friday. The dollar having its worst year on record, though, through mid-September. Visa shock. President Trump's six-figure H-1B requirement hits tech firms and international students alike. And the Trump administration said to be planning to link Tylenol to autism. So let's have a look at those futures as we start out Monday morning. They are pointed lower, perhaps a little bit of rate optimism fading, or just maybe a little profit taking. Don't forget, we were up 1.2% on the S&P last week and 2.2% apiece for the NASDAQ 100 and the Russell 2000. Let's take a look at yields, because we did back up and we continue to stay where we were towards the end of Friday, just under 475 for the 30-year yield, the 2-year yield at 356.72. We have CPI, of course, in focus later on in the week. That's what traders will be watching. And then plenty of Fed speak back on the table, or as Mark Chandler is saying today, lots of yakety yak. We also want to point to gold, because it did hit a record again this morning, so that speaks to rate optimism continuing, perhaps rate cut optimism. We're up another 1% now, well above 37.20. On the other side of the coin, literally though, is cryptocurrencies. We saw a massive liquidation today. Bitcoin was trading at one point below $112,000, having traded above $117,000 Friday, so we'll keep an eye on that environment as well. Now let's get to some individual stocks to watch. Over to London and Valerie Titel. Valerie.
Good morning, Avani. Let's start with the maker of Tylenol. That's Kenvue, down nearly 3% so far in pre-market trade. This comes after the FT reporting that the Trump administration is likely to link Tylenol to one of the causes of autism later today. Now, the report did mention that the president could officially warn pregnant women not to use Tylenol during pregnancy. And since the Trump administration has floated this autism link around 2 weeks ago, Vani, shares of Kenvue are down around 15%. Let's move over to M&A activity. This is from the FT reporting that Pfizer is looking at an acquisition of Metsera, around a $7 billion acquisition. Now, this would be a move by Pfizer to beef up its obesity chain. They had their own own drug that failed tests back in April and has since then looking for an acquisition to beef up its own pipeline. Metsera has a key obesity drug in development that is a monthly shot, and they are looking to compete with Novo Nordisk and Eli Lilly on that ground. Lastly, let's end with a check on the Mag 7. They are known to be heavy users of the H-1B visa after Trump mentioned he is putting a $100K fee on the visa. We're seeing shares of Amazon, Microsoft, and Meta in the red this morning. But Vonnie, we had those tech stocks reaching record highs on Friday. It was a positive session on Friday. So whether this is just a pullback from record highs or if this is a negative read-through from the H-1B situation is really up to investors' decisions. Vonnie.
Very small declines for sure at this hour, Valerie. Thank you. And later this hour, a conversation with Lucy Baldwin, Global Head of Research at Citi. Well, as Valerie was mentioning, President Trump's H-1B visa hike to $100,000 a fee triggered some confusion for corporate America and workers over the weekend. Bloomberg's Kasia Kimishinska is with us now from Washington. Kasia, do we have more clarity this Monday morning?
Good morning. Indeed, this was a surprising announcement that the White House made on Friday. President Trump introduced this huge new fee of $100,000 on visas that were fairly popular among the tech companies, and as you have mentioned, but not only. Universities also use them, hospitals, and Walmart, for example, financial companies. And this fee took effect on Sunday, so yesterday, which triggered some announcements, some warnings from companies asking people who have those visas to not travel out of the U.S. And then the White House later on Sunday clarified that the fee applies only to people who have yet to obtain the visa. The ones that already have it will not have to pay it, so they are good to travel and move around. But of course, there's a lot of confusion, a lot of concern. This visa is crucial to the economy of the U.S., but also of India, for example, because a lot of those workers come from India.
Yeah, for sure. Well, separately, the Washington Post reporting that the Trump administration is set to link Tylenol to autism.
This announcement is coming today. The White House has an event scheduled for 4 p.m., and President Trump previewed it a little bit yesterday, saying that he expects the biggest announcement in the medical field. He has promised before that the U.S. will look into those high and rising rates of autism among U.S. children. There was long a suspicion that there are some reasons perhaps tied to the American lifestyle. So today, the White House is expected to say that it's the Tylenol, the use of Tylenol early in pregnancy, that could contribute to this higher risk of autism.
And as we've been seeing, that's been hurting the shares of its parent company. A group of senior U.S. House representatives, meanwhile, arrived in China Sunday for talks with President Xi's government. What do we know?
This is perhaps the most important relationship for the U.S. and maybe even globally between the two largest economies. And so we had this delegation of U.S. lawmakers, the first one in 6 years that went to China. They met yesterday with high-level officials, and the two sides discussed basically trying to coexist without major conflicts. The U.S. raised the issue of fentanyl, of nuclear weapons, but also AI, looking to safely develop AI and basically coexist. This visit comes after a call between President Trump and President Xi on Friday. That call focused mostly on TikTok, the U.S. operations of the popular social media app, but also on trade and tariffs. And President Trump also said that he will meet Xi later this year at an APEC summit in Asia, and the two will visit each other next year.
All right, Kasia, thank you so much. That is Kasia Kimishinska there for us in Washington, D.C. And returning to the issue of visas, the companies said to be most affected by the policy tweak include maybe most of U.S. big tech, among others. Let's bring in Bloomberg Intelligence's Matthew Bloxham for more on that impact. Matt, how concerning is this policy to America's tech industry? Will there be some recalibration?
Yeah, I think it is a concern, and as you said, that most likely there will be some recalibration over time. If you look at the kind of intersection, as we've mentioned a few times already, the tech sector is really affected by this, but also India, and there's been a kind of decades-long evolution with kind of the Indian education system to kind of prepare people for being developers in the US tech space. So I think it's going to need quite a bit of rethink from a lot of companies. They have time, particularly now it's been clarified that it only applies to new applicants, and it's not an annual fee. So there is a bit of passage of time here for companies to figure this out, but for sure, US tech companies are going to have to think about where they hire their kind of more junior ranks, because I think really this kind of 100K figure for an H-1B visa for entry-level coders probably isn't going to be sustainable, and maybe shifts people more towards kind of looking for local talent to fill those spots.
Separately, Matt, Trump said he would meet President Xi as the US and China are progressing towards that TikTok deal. The president told Fox some of the names involved in the deal.
Yeah, that's right. That list included the Murdochs, and I think we know already that Oracle's going to play quite an important role in this business too. I mean, I guess it's going to be interesting how that evolves and kind of the exact terms of the deal.
Yeah, he was telling Fox, the Murdochs, as you mentioned, Lachlan Murdoch, also Larry Ellison was also involved, and Michael Dell. I mean, how significant an asset could the TikTok US operations be to some of those names, the algorithm, for example?
Yeah, I mean, it could be very significant because the US is by far the biggest ads market in the world, and TikTok makes its money from adverts. I think the big question is how much they're going to have to pay for this, and what happens with the algorithm, and whether they can kind of really move TikTok on and sustain its success. I mean, obviously we've seen what's happened to Twitter since Elon Musk took it over, and I guess there's question marks about how successful that's been. So I think there's a lot of unanswered questions about how this is going to work in practice, and whether it's going to enhance or tarnish the TikTok appeal with consumers.
Matt, just a broad question as we kick off the trading week, having reached records, this potential small sell-off that we're seeing in tech, is it to do with this H-1B visa issue? Is it just a bit of profit taking, a bit of, recalibration after weeks of records?
I think it's probably more the latter, but we continue to live in very unpredictable times. Given that we've reached all-time highs, and that there are a lot of different issues in play right now, not just the visas, but the whole kind of US-China semiconductor situation. It was not so long ago that we heard China clamping down on companies' use of NVIDIA chips. So a lot of things out there that people are still trying to figure out. So not surprised we're seeing a little bit of profit taking, to be honest.
Yeah, absolutely. And we'll keep an eye throughout the day. That is Matt Bloxham there. Thank you so much. The medical field also getting a hit this morning. Shares in Kenvue falling pre-market following a report in the Washington Post that the Trump administration is planning to link Tylenol to autism. For more, Bloomberg healthcare reporter Sonia Wind joins me now. Sonia, what about Tylenol exactly is causing the thinking in the administration? What could be the consequences for consumers?
Hi. Yes, so the Trump administration plans to announce today that it advises against the use of Tylenol in pregnant women because it links the active ingredient in that drug to autism. So what is the evidence behind that? So there was a 2019 Johns Hopkins study that showed that there is an association between the use of the drug and an increased risk for autism and ADHD. But subsequent studies haven't shown such a link. So there was a Swedish study published last year which looked at more than 2 million twins and found that there is no evidence in that. And also many medical experts push back against that link, and they're quite concerned that this move could, increase confusion and fear around that product, which is one of the most widely used over-the-counter medications and generally viewed as a safe treatment. And it could also stigmatize parents of autistic children, indicating, that they have done something wrong, when in fact most medical experts say that autism is a result of genetics and birth complications such as a lack of oxygen.
Yeah, I mean, I think there's probably a bottle of Tylenol in every single household in the United States, I would imagine. Maybe not so much anymore. The Financial Times also, Sonia, reporting that Pfizer is closing in on a $7 billion deal for Metsera. What are the details here?
Yes, so Pfizer is really looking to buy its way back into one of the hottest areas in the pharmaceutical industry, the obesity drug market. And the move comes after its own obesity drug failed over safety concerns. So according to the reports, Pfizer would be looking to pay over $7 billion for that startup. And the key drug that the startup has is an obesity shot, which has shown an 8.4% weight loss of body weight in patients. And the main advantage here, really, over its rivals Novo Nordisk and Eli Lilly, is that it would be a monthly injection rather than weekly use. So that would be a big convenience aspect. And it's also an amylin analog, which is a different kind of obesity treatment, and that could also potentially help to, have fewer side effects, because as we know, like the obesity drugs, they don't come without side effects. So that could be a potential win for Pfizer if it ends up doing the deal. The CEO has also said that it's looking to buy as much as 2 to 3 companies worth $15 billion. So that could be the first step of that strategy.
For Pfizer, so many patents rolling off. Just a brief question on the technology that Metsera's obesity drug delivers. Are there other companies that have that kind of technology?
Yes, there are other companies that are also looking into that technology with amylin. It's also like an interesting area that I believe Zealand Pharma has looked into. Roche is interested in it. So it's definitely, it could become the best-in-class treatment for obesity drugs.
Fascinating. Sonia, thank you so much. That is Bloomberg healthcare reporter Sonia Wind. Now to other top stories trending on the terminal this morning. Cryptocurrencies are sinking as traders liquidate $1.5 billion worth of bullish bets. Ether slumped as much as 9%. Demand drove Bitcoin and Ether to all-time highs in August, but there are now signs that the momentum driven by digital asset treasury companies is beginning to fade. Shares of BYD are falling after a report Berkshire Hathaway offloaded its entire stake in the Chinese EV maker. Warren Buffett's firm held the stock for more than 15 years. BYD's shares have tumbled about 30% from the all-time high reached 4 months ago due to growing concerns over its ability to fend off competition. Porsche is pulling back on its EV push. It's shelving plans for a battery-powered luxury SUV and is adding more combustion engine and hybrid models. It's yet another setback for Germany's auto industry, which is contending with high costs and muted sales. Coming up, we'll bring you our interview with ARK Invest's Cathy Wood on the impact of H-1B visa fees next. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
is Bloomberg Brief. I'm Bonnie Quinn in New York. President Trump's move to curtail H-1B visas threatens to rewrite the rules for the tech industry. ARK Invest CEO Cathie Wood spoke to Bloomberg earlier on the impact of the decision.
This is part of President Trump's negotiating process, and I think he's negotiating quite intensively right now with India. I think India would have the biggest impact here in terms of workers in the United States. So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room, because there's a lot of really good fundamental activity happening in the United States relating to policy.
Well, a lot of that innovation, a lot of that Silicon Valley kind of goodness really comes from the talent and the labor pool. We've been talking about this for quite some time in terms of how do you train your engineers, you train Americans to do a lot of what Silicon Valley depends on foreign workers to do. Does this impact innovation in Silicon Valley, and does it impact mega cap stocks, tech companies that are dependent on this?
Well, from what we know of this administration, they ultimately want to keep students who have been educated in the U.S., foreign students that have been educated in the U.S., in the U.S. So really, I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1 visa program.
But in the short term, is that going to have an impact on tech companies?
I think what it's going to do is force tech companies to do what they're already doing, and that is become more efficient. And the other thing to note is, coding is changing dramatically. The number of coding jobs and openings has dropped dramatically because of AI. All of us can become coders. This is natural language programming. Generative AI is prompting ChatGPT to get your programs going. We can all do that. That's simplifying it. But I do think it gives you a sense of the kind of productivity, that possibilities that are possible, that will impact these tech companies longer term.
That was ARK Invest CEO Cathie Wood speaking to Bloomberg earlier. Let's take a look now at where markets stand just a few hours before the U.S. Open. So we do have futures pointed lower. Markets maybe just taking a little breather after many weeks of volatility and even a little bit of enthusiasm with those records hit for all the major indices again on Friday. The 10-year yield, where it was just at the end of last week, backing up a little bit after the FOMC decision to 412.35. The whole curve up a little bit. The 30-year yield just below 475 today. Take a look at the dollar index. Another little bit of weakness today. It's had its worst year, the dollar index, DXY that is, through the middle of September on record. So going back as far as records start, this has been the worst year for DXY. It's down more than 10% versus a basket of major currencies. Coming up, Saks Fifth Avenue looking to sell a stake in Bergdorf. And a look at what else is making headlines in your front page news. This is Bloomberg.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting the parent company of Saks Fifth Avenue is in talks to sell 49% of Bergdorf Goodman for about $1 billion. A buyer would receive a stake in the operating company, not its valuable real estate, which is owned by the founding Goodman family. Sources say there are 4 potential bidders, including Middle Eastern sovereign wealth funds. Next up, on the FT, the UK exploring proposals to abolish visa fees for global top talent. The reforms were being discussed before the Trump administration announced it would increase application fees for H-1B visas to $100,000. And on the New York Times front page, Britain, Canada and Australia confirming that they now formally recognize Palestinian statehood. The move coming just before the annual UN General Assembly. The flurry of announcements drew praise from Palestinian leaders and condemnation from Israel's government. Let's take a look at these markets now as we ride in off a record-setting week for the major indices. As you can see, NASDAQ 100 futures are pointing to a lower open. We do, though, have gold really at a record today, well above $3,700, in a sign that perhaps there's a little bit of hedging going on, also interest rate cutting cycle having begun. That, of course, is good for gold. But if you look at the risk-on asset, Bitcoin, major liquidation in cryptocurrencies today, dragging Bitcoin lower. We're down another 2.5%. We were trading below $112,000 earlier. Ether, perhaps the worst performing coin, it was down about 9% at one point today. I do want to point out that we have lots of economic data, not just today, but also later on in the week with PCE, personal spending, and all sorts of inflation data, including UMISH expectations. Coming up, brace for some volatility in stocks. That's the view from Citi's Lucy Baldwin. She'll be joining us next. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Fresh records. Futures, though, pointed lower after indices closed at more all-time highs Friday. The dollar index having its worst year on record through mid-September. Visa shock. President Trump's six-figure H-1B requirement hits tech firms and international students alike. And the Trump administration is said to be planning to link Tylenol to autism. So let's have a look at those markets now. As I said, futures on major indices pointed lower, but not by a huge amount. S&P futures, NASDAQ 100 futures, Russell 2000 futures, they're all just in the red. But don't forget, we did see those records Friday and nice gains, particularly for the NASDAQ 100 and Russell last week. They were up 2.2% apiece for the week. Maybe rate optimism is fading ever so slightly, just a little profit taking potentially, because we do see gold at a record today as well. More easing, quite the catalyst for gold. And of course, we have a lot of Fed speak starting today and a lot of data this week as well, culminating with CPI Friday, and of course, University of Michigan sentiment data too. And we shouldn't forget the Japan leadership race kicking off today too. If we look at yields, they've backed up thanks to the FOMC. Still where they were at the end of last week, but this Japan leadership race could have an impact on yields globally, depending on how it pairs out and what kind of momentum there is there. And of course, there's another U.S. government shutdown looming too, unless that gets resolved. So lots to watch for, but let's get to some stocks now. Individual stocks moving in the pre-market. Here's Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with the Tylenol maker, Kenvue. The shares are in the red in the pre-market, down just over 2%. And this comes after a Washington Post report that the Trump administration is likely to link the risk to autism to taking Tylenol while pregnant. The report said that they could officially warn pregnant women not to take Tylenol or its active ingredient while pregnant. Now, this is something that was floated around 2 weeks ago by RFK. And since then, the shares of Kenvue are down around 15%. Next, let's move on to some merger speculation. This is an FT report that Pfizer is looking at Metsera, a possible $7 billion acquisition for the drug company, sending shares of Metsera up almost 50%. Now, this would widely be seen as Pfizer attempting to get its foot back into the weight loss drug industry after its own drug failed some tests back in April. Metsera has a drug in contention that is a monthly shot as they're looking to compete with Novo Nordisk and Eli Lilly in this market. Lastly, let's end in the auto space over in Germany. We're seeing some decent declines when it comes to Porsche and VW shares, down over 7% for each of them. This comes after Porsche delivered a fourth profit warning of the year, citing also a €2 billion impairment fee as well. Now, this comes alongside Porsche and its parent company Volkswagen dealing with delays with EVs. But Vonnie, Porsche has really marked down where it sees its return on sales to no more than 2%. 2 years ago, that number was 18%. So a really stark turnaround for Porsche and when it comes to its profitability in the EV market. Vonnie.
And a stark reaction in the market as well. Valerie, thank you so much. That's Valerie Teitel in London. Stock futures pulling back today after closing at fresh record highs for the major indices as prospects for more rate cuts bolsters the outlook for corporate earnings. The team over at Citi looking at a fair value on the S&P 500 at about roughly 6,600 right now. Their bull case for the end of the year, though, 7,200. Lucy Baldwin, Citi's Global Head of Research, joins us now. Lucy, happy to have you. So one of the questions you ask in your research is what exactly is priced in? And, you know, I'm curious, maybe it's easier to ask what is not priced in at these elevated levels.
Hello, good morning. Thanks for having me. Yes, absolutely. As you say, a lot is priced into markets at the moment, pretty much a Goldilocks scenario. And I think when you think about the importance of the Fed, it's important to understand what we've just learned, right? So we've obviously come through the latest set of discussions from the Fed. We believe that you're going to see 125 basis points of cuts from here, which essentially includes obviously the 25 we've just seen. But we also learned from the Fed that they're expecting to see slightly better growth, slightly higher inflation. They've actually revised their unemployment rate lower, so essentially a cyclical upswing relative to where we were before. And cutting into that kind of strength historically has always been good for equity markets. So although we see limited upside to the end of the year, if you extend it out to, say, mid-next year, we would have a target for the S&P of 6,900, so a little bit more space from here. But we are definitely going to see some volatility because a bit like this year, you've seen pretty good performances from all the major equity markets around the world this year. Not huge amounts between most of the major markets at the surface, but when you look under the hood, massive dispersion across sectors and across themes, and that sort of volatility and dispersion is what we'd expect to see from here going into the back end of this year and into next year.
Well, as you said, Lucy, we're essentially at your year-end base case target already now on the S&P 500. Does that mean that you're not particularly looking for anything surprising out of earnings season or anything maybe even optimistic?
Well, look, I think, you know, we've obviously seen very strong earnings seasons this year from the US. Obviously, it's a slightly different story in Europe, where we started with a lot of expectation and now most people are expecting no growth in Europe. For the US, we're obviously still expecting double-digit growth, something like 12% earnings growth for this year, similar for next year. So really, it's all about whether those stocks in the US can continue to beat and generally raise. And again, I think we'd have to point to the broader tech AI thematic, which has obviously driven much of the market this year. And obviously, it will need to probably continue to deliver the market from here. So we would still be pretty bullish and pretty positive on a lot of those big cap tech names. But what we would also point to is that many people will be looking for that broadening to start, not just in the US, but beyond the US market, as you see this rate cutting cycle gain momentum, because that typically is what you see. Although I don't think, you know, from our perch, we would get overly excited in the US about small and mid-cap stocks. We would say marry that growth dynamic that we would continue to hold in the US with some cyclicality out of the US. So markets like Europe is how we would think about playing it into the end of the year and into next year.
Well, you're overweight US stocks for sure, but one concern that's really running through your research, from the economics research through fixed income, you know, everywhere, is Fed independence. Has some of that concern been put to rest since this FOMC and that one dissent?
Well, I think we're going to have to monitor that incredibly closely, you know, for the rest of this year and into next year, because of course the impact of that in terms of that bear steepening of the curve has big implications across markets, whether that's equities or whether that's fixed income. So I think it's probably too early to say that's been put to bed. But of course, the key thing to watch there isn't just whether or not we're cutting, but it's the cutting relative to expectations that we would be looking to see. So if you were to see more cutting over and above what is expected by markets, so as I say, we're expecting that 125 basis points of cuts, including the one we've just had. Unless you start to see materially more than that, then I think we can have some comfort that we're not straying into that territory at the stage that we're at now. But we will obviously be watching to see who is appointed to the Fed as we head into next year, and the narrative that we're going to hear from them.
Your fixed income story says a lot. You're neutral US, you're short Japan and long EM, particularly Mexico and Brazil. But what I want to concentrate on is that you're underweight US IG and also EU IG. Why, if you're pretty bullish on the US, I would have said, and you're expecting rate cuts, are you underweight IG?
Yeah, so the way our asset allocation team think about their credit exposure is in that context of the overall portfolio, and that is with the context of being still bullish equities because of the cutting into essentially a cyclical upswing and a reasonably strong economic environment. And obviously that's notwithstanding seeing a recession. Clearly that would change many things. But the way we've thought about it is having the credit hedge there, and hence, given you've basically got 20, 30-year tights in US IG, we would suggest that that is a great hedge against that long equity. So we'd be much more cautious there within that market.
Lucy, a question about private companies, because you started up covering private companies in the summertime, about 100 of them. I'm just curious, what should we be watching most closely when it comes to private companies, and how would that impact public markets?
Yeah, so what we're doing is we're looking at particularly the tech space, particularly AI, and we've taken the view that you can't have so many hugely important companies from a disruptive perspective, which are currently in the private domain, not being looked at by our analysts. So we've started with the hire of Heath Terry into our tech team to cover not just the private companies in the AI space, but everything that surrounds that. And I think increasingly we take the view that you really need to be able to cover these private companies to understand the disruption that's coming ultimately in the listed market, but also it's really, really important to understand these businesses a long time before many of them would ever look to go public. And who knows, some may not ever want to go public, and now companies don't have to do that, and they tend to stay private a lot longer. But to really understand what's happening within some of these really important revenue pools and profit pools, we think is really critical for investors today. And you see many, many more of our institutional clients having crossover funds, having private investment capabilities.
Yes.
Obviously, there's a shift to having more private companies in more savings accounts, 401ks, etc.
Lucy, thank you so much. That is Lucy Baldwin there of Citi. Much appreciated. Now to other top stories trending on the terminal this morning. Shares of BYD slump after a report that Berkshire Hathaway offloaded its entire stake in the Chinese EV maker. Warren Buffett's firm held the stock for more than 15 years. BYD's shares have tumbled about 30% from the all-time high reached 4 months ago due to growing concerns over its ability to fend off competition. Porsche is pulling back on its EV push. It's shelving plans for a battery-powered luxury SUV and is adding more combustion engine and hybrid models. It's yet another setback for Germany's auto industry, which is contending with high costs and muted sales. Canada, the UK and Australia have formally recognised a Palestinian state, pushing ahead with a policy that has drawn criticism from President Trump. The recognition is part of a coordinated international effort towards a two-state solution, according to the Canadian and Australian governments. Coming up, the Washington Post reporting that the Trump administration plans to link Tylenol to autism. Your DC update next. This is Bloomberg.
David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Nasseri, and Los Angeles royalty Will Obey. We're going to talk about sports and eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
President Trump speaking Friday there about his planned policy for an H-1B visa fee hike to $100,000 apiece. The news triggering some confusion for workers and corporate America over the weekend. Bloomberg's Kasia Klimashinska is with us now from Washington, D.C. Kasia, do we have more clarity this Monday morning?
Good morning, Vani. Indeed, so over the weekend, some companies issued warnings to their employees that have the H-1B visas, asking them to stay in the country or return to the U.S. if they were overseas. But the White House also on Sunday clarified that the new $100,000 fee will not apply to people who already have the visa or have won it in the recent lottery. And also those people are free to travel in and out of the U.S. But of course, a lot of confusion there. This is a very expensive program now. Probably most of the companies will give it up. And it was used not only by the tech companies, but also by the colleges, hospitals. Walmart used a lot of it, financial institutions that will now have to look for talent here or outsource those companies, those services out of the U.S.
Yeah, it's certainly not just the tech industry. Well, separately, the Washington Post reporting that the Trump administration is set to link Tylenol to autism. Why Tylenol? What do we know?
So for one day today, President Trump will turn his attention away from perhaps economic and international issues, and focus on health. He previewed it yesterday a little bit. He said that the biggest announcement in the medical field here in the U.S. is coming today. This announcement will be at 4 p.m. here at the White House, and the administration is indeed likely to say that pregnant women, especially early in the pregnancy, should not take Tylenol unless they have fever, because there is some connection between Tylenol, its active ingredient, and those higher rates of autism here in the U.S. But we have yet to see what is the research, what is the science that the White House will cite. They will also likely discuss some medication that can be taken to mitigate some of the conditions that come with autism. There is apparently a way to help children speak and also listen to others, even if they're already diagnosed with this condition.
Kasia, as you said, a big international week as well. Some U.S. House representatives meeting with Chinese officials, and also the president is set to meet with Arab leaders, and also Javier Milei of Argentina. What do we know?
Let's talk about China first. China is still in focus, especially with the TikTok deal. So President Trump talked to his Chinese counterpart on Friday. He then thanked President Xi for approving the TikTok deal. This is to bring the U.S. operations of this popular social media up to the hands of American investors. And later over the weekend, the White House gave some more details. The White House said that indeed the algorithm will be controlled here in the U.S. and also 6 out of 7 seats on the board for the U.S. operation will belong to Americans. We also had, as you mentioned, a visit from U.S. lawmakers in China. Those talks focused more on national security and fentanyl.
Kasia, thank you so much. We'll be monitoring it all. That's Kasia Klimaszinska in Washington. Well, returning to the issue of visas, the companies said to be most affected by the policy change include Amazon, Alphabet, Apple, Meta, Microsoft, most of U.S. big tech, in fact. Let's bring in Matthew Bloxham of Bloomberg Intelligence. Matt, how concerning is this new policy now to America's tech industry?
Yeah, it is a concern because, for a number of years now, big tech's been using this program to bring in talent at all levels, but particularly at the lower level. And if you kind of look at the cross-section, as you mentioned there, the likes of Amazon, Meta, Microsoft, Google are big users of this, but also India has been a big user of it. So Indian citizens in 2024 accounted for some like almost 300,000 members of the program. And so that affects these kind of junior software engineers that the big tech companies have been heavily reliant on. But it's also an important factor for some of the big India-based tech consulting firms like Tata Consulting, who will use this program to have Indian developers on site in the US as part of their offshoring program. So I think this is going to be quite a far-reaching change, and it's going to need some head-scratching and some new solutions. And as our colleague just mentioned a few minutes ago, going to push companies to look more to their local US talent to fill these gaps going forward.
Matt, also in your universe, President Trump saying he would meet President Xi as the US and China progress towards that TikTok deal. Let's have a listen, because the president told Fox some of the names involved in the deal, in fact.
Hate to tell you this, but a man named Lachlan is involved. You know who Lachlan is? That's a very unusual name, Lachlan Murdoch.
Mr. Murdoch.
I believe, and you call him, and Rupert is probably going to be in the group. I think they're going to be in the group. A couple of others, really great people, very prominent people. And they're also American patriots. They love this country. So I think they're going to do a really good job.
Larry Ellison and Michael Dell, also names that have been mentioned. What else do we know about the deal and the potential meeting?
Yeah, I mean, certainly on the deal, President Trump mentioned specific names, but I think that the broader consensus is that it's really the companies that those individuals are affiliated with that are going to play a major role in a deal if it happens. So, for example, Oracle and Dell very much involved in the technology platform for this business. And, an important part about this deal, if it goes ahead, is that the TikTok algorithm for the US will be controlled in the US by US companies. And so I think that's to a large degree why the tech firms are involved there. So still lots of unknowns, but we'll see what happens.
Absolutely. Matt, thank you so much. Bloomberg Intelligence's Matt Bloxham there. M&A Monday kicking off with the Wall Street Journal reporting the parent of Saks Fifth Avenue is in talks to sell 49% of Bergdorf Goodman, the ultra-luxury department store, for about $1 billion. Joining us now is Bloomberg opinion columnist Andrea Felsted. So, Andrea, there have been so much carving out of U.S. high-end department stores that it's almost difficult to know who owns what at this point. Was Bergdorf fully owned by the U.S. shareholders, or how did it work?
Yes, it is owned by Saks Global, the company that bought Neiman last year, and they are looking to sell a minority stake, obviously to raise funds, because when they did the deal just over a year ago, they took on a lot of borrowing, and since then the luxury market has really gone against them.
Now, will there be a lot of bidders for this? Will there be high interest in having 49% of Bergdorf?
Well, according to the Wall Street Journal story, it says this will be a stake in the operating company, not the real estate. So I would have thought that narrows down the field. considerably, because the draw of these department stores isn't always the department store business, which is under pressure. It's really the valuable real estate.
Yeah, and it's obviously high-end, elite real estate, and it's all going to still remain in the Goodman family. What happens if the parent company doesn't find a buyer or doesn't get the price it wants? Is it then in trouble?
Well, it is really facing a lot of challenges with the debt, with overdue payment to suppliers, and the timing is interesting. Obviously, this won't be completed anytime soon, but the timing is interesting in that we're just getting close to the crucial time for these businesses, which is the fourth quarter. That not only are they stocking up with handbags and shoes, it's really their key selling season. So it's notable that it's come about now.
Yeah, this is traditionally when they get into the black, right? Andrea, thank you so much. Looking forward to reading your columns on all of this. That's Andrea Felstead of Bloomberg Opinion. Coming up, more traffic expected in New York City with the UN General Assembly kicking off this week. We'll get you set up for your trading week next. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Now a look at what's ahead this week. President Trump speaks at the first day of the United Nations General Assembly on Tuesday. U.S. PMI data also out Tuesday. Then we round out the week with PCE, personal income and spending, and UMich sentiment data on Friday. Let's have a quick look at some micro movers. Metsera surging on an FT report that the obesity drug startup is nearing a potential deal with Pfizer. Kenvue down on a Washington Post report that the Trump administration is planning to link Tylenol to autism. The president also scheduled to make an announcement related to the medical field today at 4 p.m. Eastern. And Coinbase, along with all of cryptocurrency, tumbling.
cidade estava sitiada.
Isso ao começo eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
There's no sign of that mass liquidation that people were talking about in the second quarter.
There is this hopefulness in equity markets that we are going to get through all the risks.
There is a huge amount of good news that's been priced in.
Small cap has had a few head fakes. We're finally seeing that all-time high.
We've actually seen a broadening of the S&P rally.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday on a 3-week winning streak, equity futures pulling back from freshly minted all-time highs as the US and China are working to finalize a deal over TikTok. President Trump is making a move to shake up the H-1B visa program. That visa coming with a big price tag.
Yeah, $100,000 per H-1B visa, not ones that have already been issued, but ones that will be issued going forward. And a real question for how much this affects, in particular, big U.S. tech companies, as well as all of the other companies that use consultancies, largely from India, to get cheaper engineers. How quickly can they plug this gap, and how much are they going to continue to rely on the H-1B program rather than just look for domestic talent?
Or will some of these multinationals just decide, actually, we're going to set up shop somewhere else? Also, the legal concerns around this, usually what happens with visas is it's set up by Congress, it goes through regulations, and there is a public period of comment. None of that is happening. This took place yesterday. It came into effect. So I think there's going to be a lot of pushback potentially in the courts and maybe even from individuals in Congress.
There is an obvious challenge for anyone trying to put this policy together. Balance is really important. You want to address any potential or real abuse of the program, but balance that with maintaining access for really highly skilled workers. And if you go hard on the former, you can compromise the latter.
This was so confusing. It was rolled out in a hasty fashion. People were brought back from overseas to figure out whether or not they could get back to the United States. A real question here about how much this is permanent policy, how much this is trying to get leverage ahead of an Indian delegation coming to Washington, D.C. for meetings this week. A lot of question marks around this policy and exactly how it will get rolled out in the next couple of weeks and months.
It's your favorite week, isn't it? It's mine too. It's the end of summer.
You're going to put that on me?
The UN General Assembly comes together in Midtown
grumpy.
Manhattan.
Yes, we're grumpy.
Things get busy.
You guys are being facetious. I actually like UNGA besides the traffic. I think it's a great time to go out, meet people, get some dialogue going.
Did anyone think we were being authentic in any way, shape or form? I'm not sure they did. Equity futures on the S&P 500, negative here by 0.3%. We're a little bit softer. Coming up this hour, Andrew Sheets of Morgan Stanley as stocks look to add to record highs. Angela Zeno of CFRA as big tech braces for President Trump's visa crackdown. Plus, Krishnan Guha of Evercore on a divided Federal Reserve. We begin this out with some breaking news, and it's on TikTok. With the latest, let's cross over to Tyler Kendall for more. Morning, Tyler.
Hey, John, good morning. Well, a White House official says that Oracle will recreate and provide the security for a new version of TikTok's algorithm. Under the deal, owners of the U.S.-based version of TikTok will lease a copy of the algorithm from ByteDance. And then Oracle is essentially going to serve as the gatekeeper here, continuously monitoring and operating that algorithm. The official said that data will be kept in a secure cloud and that ByteDance will not have any access to U.S.-based users' information on the platform. The algorithm, of course, has long been a sticking point in these negotiations, and we should add at this point it's unclear if this will satisfy the national security law passed by Congress, though the White House is certainly hoping it will. An official tells us that President Trump is planning to sign an executive order later this week cementing his approval of the deal, though worth mentioning also that we heard from China's foreign ministry on Friday, and they fell short of a full endorsement. As we've been reporting, the structure of a likely TikTok deal is going to take the shape, with ByteDance leaving with a less than 20% stake, and then the outside U.S. investors holding a greater majority, including companies like Oracle. The White House had announced over the weekend some additional details, too, that 6 out of 7 of the board seats will be held by Americans. That final seat will be held by ByteDance. John, as you all know, the backdrop to all of this are the ongoing trade negotiations with Beijing. But as our analysts at Bloomberg Economics point out, while this deal, this movement on TikTok perhaps helped to secure that face-to-face meeting that we're expecting between President Trump and Chinese President Xi Jinping next month, we're still well away from a fuller, broader trade deal.
Tyler, good to have you here in New York. Stay close, won't you? Bloomberg's Tyler Kendall breaking down that breaking news for us just moments ago. Anne-Marie, the pieces of the puzzle coming together. What's less clear at this point? What is ByteDance actually getting? What do they get in return?
Well, this is a great question because I think the Chinese have been obfuscating exactly what they're going to get out of this. Tyler mentioned, we heard from the foreign ministry on Friday. Part of what they said is that what needs to be done, they want to see a productive commercial negotiations with the United States, but it says that it needs to comply with China's law and regulations. Does a less than 20% stake actually comply with China's laws and regulations? Potentially, China's going to get something else they want in a bigger way that has nothing to do with TikTok in order for this deal to go through.
Has the U.S.-China relationship really gotten boiled down to TikTok dances? Is that what we're talking about? That the entirety of the U.S.-China trade relationship now has to do with people in the street going like, get ready with me?
Is that the dance? Is that your TikTok dance?
I'm just saying, this is amazingly how much we've lowered the bar for what could actually get accomplished.
It's amazing how successive administrations have not been able to deal with this head on. We've seen this going back to the president's first term, at the very end of it, granted. And the Biden administration couldn't deal with it, and now this is the third attempt to address this issue.
Yeah, and it's about the kids, evidently. That's what President Trump has talked about. But on a larger level, how does this fit into a larger U.S.-China trade deal? Or is this really just TikTok? And that is what we accomplished last week, and that's what we can accomplish going forward.
Oracle this morning up by about 1% in the pre-market. Angelo Zeno of CFRA is going to join us in about 25 minutes' time on this story. For the broader market, here's the view on Wall Street this morning. Andrew Sheets of Morgan Stanley writing, lowering interest rates into easy financial conditions raises the odds of a more speculative boom if growth does not weaken. Andrew joins us now for more. Andrew, let's talk about what that means for credit. Multi-decade tights on investment grade, high yield near the tights of the year. Andrew, are we starting to see that speculative move start to build?
Yeah, thanks. Good morning. So look, I think you are starting to see early signs of it. And again, the Fed has a difficult job. The Fed's in a difficult position, but it's certainly taking a risk by lowering interest rates and saying it's still going to lower them further, despite inflation being above its target, other measures of growth holding up, large government deficits. And I think importantly, some very easy financial conditions. As you mentioned, spreads are near multi-decade tights, equity valuations are near multi-decade highs. And I think importantly, we're starting to see M&A activity really pick up. We're seeing IPO activity pick up. We're seeing more signs of corporate confidence. So while those levels are still low by historical standards, they're certainly moving towards more activity, and that's a trend we think continues.
How does that square, Andrew, with the idea that we've gotten some negative economic news in terms of the non-farm payrolls report, some of the jobless claims data, albeit somewhat noisy? Does bad news equals bad news when you start seeing a deteriorating labor market?
Yeah, so I think this is what's so fascinating about the data at the moment is that you do see in labor market data and some other kind of traditional early cycle indicators, you really do see some weakness, everything from the jobs market to heavy truck sales. But you also see some other data that looks a lot better. You know, GDP tracking measures are holding up. Retail sales have held up. And I think a really interesting one is if you look at commercial bank loan growth in the U.S., which is, you know, kind of one of our favorite credit cycle indicators to follow, it's accelerating higher. And that's before we get, you know, the expected deregulation of the banking sector, which we think is coming. So, you know, I think the Fed is taking the view that, look, usually the labor market is the most important cycle indicators, the most important driver of recessions. It's part of the Fed's mandate. That's what we're going to focus on. But the data is generally mixed. And with changes to immigration and other policy, there are a variety of factors that could be distorting the labor market in unusual ways.
When you put this together, it sounds like, Andrew, there's a greater risk of upside to the economy, the idea of a reacceleration, than there is some sort of downside, the idea that you could see a real further deterioration in the labor market. What's the implication of how far that can go? People have talked about bubbles. People have talked about already tight levels in credit. People have talked about the idea of a steepening yield curve. Where do you see the potential mispricing of such a reacceleration?
Yeah, so I think there are a couple of factors. So first, I think certainly for the credit market, the market that myself and my team follow most closely, you know, of those two tails, the weaker growth scenario is, I think, the much worse tail than the more speculative boom scenario. That boom can take some time. And I think importantly, you know, we're still, I think, in the very early innings of the type of M&A activity that we would expect if things really pick up. I mean, you're still below average in terms of levels of M&A adjusted for the size of the economy or adjusted for trend. So there's a lot further that can go. And I think for as much as we rightfully focus on higher levels of optimism, say, among retail investors, corporate optimism, corporate activity levels have not been elevated. And I think there's more room to go there. So companies that benefit from M&A transactions, some of those advisors, those are stocks that my colleagues on the equity side are more positive on. And, you know, I also think kind of importantly, there are, you know, this is a market that is still providing a discount to things that are smaller, more cyclical on the equity side in a way that's not true on the credit side. So again, I think this dilemma that the credit market has is that if you believe that things could get a lot better, there are lots of small, cyclical, more levered stocks you can buy at large discounts. But in credit, we're often already pricing those things at 20-year, 30-year lows.
So, Andrew, are we at a space right now where the Fed is cutting into what you view as a reacceleration of growth?
So I think that there's a number of data that's suggesting that's a real possibility. And again, that it might not even be a reacceleration of growth, but just if growth holds up, you know, just if growth is kind of stable, then the Fed cutting into still above average inflation and rising inflation, the Fed cutting into these already easy financial conditions. And then I think also really importantly, the Fed cutting into what looks like a really historic boom in CapEx. You know, the amount of spending that we at Morgan Stanley are expecting from the AI data center revival growth is just enormous. You know, it's in the neighborhood of $3 trillion, we think, between now and the end of 2028. So again, these things might not be, you know, 3% GDP type of numbers, but if the cycle can hold up for longer and extend for longer, there is this kind of dry tinder of potential for M&A, potential for more strategic activity, potential for more CapEx that could kind of heat up conditions in our view.
Andrew Sheets of Morgan Stanley. Andrew, thank you, sir. Appreciate your time. Andrew mentioned the equity side of the research team over at Morgan Stanley. Mike Wilson this morning saying pent-up demand, inflecting EPS revisions suggests the recession that some are now fearing is already behind us. Here's his question on the Fed. The question now is whether the Fed transitions fast enough, given what markets expect and or need for this new bull market to continue.
Right now, you've got a 92% chance of a Fed funds rate cut come October, in the Fed meeting in October. Then there's another one later this year. Is 3 enough? How many more is needed for next year? And what does that imply in terms of how much weakness there is in the underlying economy and whether Fed funds rate really is the tool to really address it?
A ton of Fed speak this week. You'll hear from the New York Fed President, John Williams, the chairman himself as well. Jay Powell speaking later this week too. If you are just joining us, welcome to the program. Equity futures on the S&P just a little bit softer. We're down by 0.25% with an update on news worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, good morning.
Revisiting the TikTok news we brought you just a few minutes ago, Oracle will recreate and provide security for the new US version of TikTok's algorithm. According to a White House official, ByteDance would lease a copy of the algorithm to Oracle, which would then retrain from the ground up. ByteDance would not have access to information on TikTok's US subscribers. President Donald Trump proclaimed Charlie Kirk a martyr for American freedom as he spoke at a memorial ceremony for the murdered conservative activist. Tens of thousands of people gathered for the event in a stadium in Arizona yesterday. Kirk's widow, Erica, also spoke, saying she forgives the man who killed her husband and saying she will work to continue Kirk's legacy. Australia, Canada and the United Kingdom have now formally recognized a Palestinian state. This ahead of the UN General Assembly meetings this week. Leaders of the three countries call it a coordinated push for a two-state solution. The move has drawn criticism from President Trump and Israeli Prime Minister Benjamin Netanyahu, who argue that it rewards Hamas and threatens Israel's security. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, Sticker Shock.
$100,000 a year for H-1B visas, and all of the big companies are on board.
We need workers, we need great workers, and this pretty much ensures that that's what's going to happen.
Up next, Harry Haynes of Pangea, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Brace yourself for Fed speak over the next 24 hours. Monday, Tuesday, Williams, Musalem, Hammock, Barkin, Myron, Bowman, Bostic, Powell. Just ridiculous the next day or so.
I love the way you frame that. Brace yourself. It's going to be exciting. So do you think everyone gets up and just says, this is my dot, and let me explain it? Or do you think they get up and they try to put some distance between themselves and the idea of a dovish or hawkish interpretation? At what point does this Fed speak matter, given the fact that people are already looking at 2026 and what could be, not what already is?
Things already seem incredibly divided on the committee. I imagine you'll see some of that through the next 24 hours. It might be more helpful if we knew whose dot was who, wouldn't it?
Yeah, the idea of who actually is going to be a voting member, who actually is going to still be there, how much they could potentially have clout on the committee. And then, of course, we get Fed Chair Jay Powell himself speaking tomorrow, and how much does he try to reclaim the helm of control over a committee that's divided?
Find out what he thinks, personally, in a personal speech. Let's see if there's any daylight between what he says over the next 24 hours and what we heard just last week. Going into that, equity futures on the S&P negative by 0.25% on the S&P 500. Another change at Goldman. And I say another change at Goldman because we've had so many in 2025. Before Friday, Goldman has changed their equity call for 2025 4 times. We've got a new 3-month price target, 6-month and 12-month price target. 3-month 6,800, 12-month is going to be 7,200, 6-month is 7K.
Everyone's struggled to keep up with a market that's hit record high after record high. How much is it marking to market as the market goes up and as you see resilient economic data, albeit with some softness, and a Fed clearly underwriting risk? And I think that was the big shift for a lot of people.
More on those calls from Goldman Sachs and David Costin later on in the program. Under surveillance this morning, down in D.C., sticker shock.
Train Americans, stop bringing in people to take our jobs. That's the policy here. $100,000 a year for H-1B visas, and all of the big companies are on board. No more will these big tech companies or other big companies train foreign workers.
We need workers, we need great workers, and this pretty much ensures that that's what's going to happen.
So here's the latest this morning. President Donald Trump overhauling the H-1B visa program, requiring a $100,000 fee for applications to limit overuse. Bloomberg's Tyler Kendall is back with us now for more. Now, Tyler, how is this actually going to work, one? And two, are they allowed to do exactly what they described over the weekend?
Yeah, hey, John, good morning. Well, you're alluding to two of the big questions here. One, how is this actually going to work? And two, the legal challenges that we're already seeing take place, including that many critics of this policy have pointed to the fact that the H-1B visa program was established by Congress, not the executive branch. So I would expect some legal challenges ahead. Now, this policy is really putting the mounting pressure on corporations because we heard the U.S. Commerce Secretary go on in his remarks the other day in the Oval Office to say that this is going to be a decision that companies are forced to make, since they are typically the ones paying the fees associated with sponsoring applicants, though of course at a much lower price. The H-1B program makes 85,000 new visas available each year, and they go to workers with at least a college degree that go into these highly skilled professions. And we know that the majority of H-1B employers are those big tech companies like Microsoft and Amazon, which are already sounding the alarm over this policy and saying that it could hurt the U.S.'s competitive edge. But it really has been an issue that has long divided the Republican Party since President Trump took office. We've seen many in his base allege that these workers are taking American jobs, and they have pushed the president to change the process in a bid to try to help U.S. workers, and this idea that it's going to go into the U.S.'s push to help elevate them. Now, of course, important to keep in mind here that ultimately this policy did go into effect last night. So at the moment, John, it is on the books, though the White House did clarify to reporters that it does not impact those existing visa holders.
Tyler Kendall with the latest. Tyler, thank you. Appreciate it. To build on the story, Terry Haynes of Pangea Policy joins us now for more. Terry, welcome to the program. This is a quote from the president on the campaign trail last summer. What I want to do, what I will do, is you graduate from a college, I think you should get automatically as part of your diploma a green card to be able to stay in this country. How much daylight is there between what we were told on the campaign trail and how this is playing out in Washington?
I think there's a lot of improvisation going on here, John, frankly. Few people would dispute that the H-1B program is in need of serious overhauling. The president's action will be treated as a proposal by Congress, and I think probably gets stayed by the courts. The reason I say that comes down to what Tyler and Anne Marie earlier had said about exactly how this program came to be anyway. My take for markets yesterday was that simply that there will be months of wrangling about this before a revised process will be decided upon, but this is not going to be an easy or quick path, number one. Number two, I don't know what companies Secretary Lutnick's been talking to, I assume just tech companies, but the fighter jets of lobbying got metaphorically scrambled over the weekend in Washington, and there's going to be a much longer fight over this than I think most people, maybe even people in the White House, imagine.
Well, when it comes to those tech companies, do you think behind the scenes they were given acknowledgement from the White House that they may be part of what the White House is calling in their fact sheet case-by-case exemptions for some companies and some workers?
Oh, I imagine so. Yeah, there's lots of signals going on here, but to me, this is all from a very familiar White House playbook. You kind of overreach and you just kind of set your mark out very cleanly, and then you cut back based on the kind of pushback you get. And so the case by case stuff was a clear signal to the tech folks that they're going to have the ability to kind of massage the system, if you will.
I was with the president months ago when he was on board Air Force One, came back to the press pool and showed us the gold card, was holding it up, saying it's going to be called the gold card, the Trump card. Why then announce in this abrupt fashion if they had months to then work with Congress to actually change the program and the law?
I'm on Team Lisa this morning on the timing, which I think has everything to do with the restart of U.S.-India trade negotiations and hopefully a successful conclusion from both sides' perspective, and very little else to do with anything else.
I'm just wondering, Terry, what do you think the U.S. wants from India during these trade negotiations? How do you think this is actually going to evolve in a way that could be palatable for both sides?
The bottom lines change over months. I mean, let's remember this process has been going on for some 6 months or so. The bottom lines change on exactly what the United States wants, but what the United States has wanted consistently is a much more incremental sort of deal, the kind of phase 1, phase 2, phase 3 sorts of deals we're seeing elsewhere than India wanted. India's original timeline was something on the order of, we'll get a very large tranche of issues resolved in July, second tranche in October. Obviously, that timetable's out the window. But fundamentally, what the United States wants here is what they want everywhere else, which is they want lower tariffs and they want greater trade access. And India, for a variety of reasons, agriculture, business, lots of other things, has not been willing to kind of take the chunks that the United States offers, and that's been the substantive barriers that have prevented a broader trade deal.
Terry, appreciate your time, sir, as always. Thanks for weighing in. Terry Haynes of Pangea Policy. I wonder also if there's some countries out there looking to make moves of their own to try and attract some of the talent that would otherwise have moved across the border to the United States.
Yeah, we've already seen that in academia with the likes of Oxford and Cambridge saying, okay, if you're a disgruntled professor over in the United States, guess what? We're hiring. And you wonder how much this really feeds into making a push for technological prowess. Again, this idea of competition. How much is it competition for talent as much as it's competition for technology?
I think you'd be very upset if you were an engineer looking at the difference between Silicon Valley salaries and the salary that you could get in the United Kingdom. If I was going to take a stab at things, I would say it'd probably be 50% less in the UK. That would just be a guess, but I imagine I'm pretty close.
Which is the reason why so many people come to the United States, and that's the reason why people have been enrolled in school to try to get that H-1B visa when they graduate after being trained in this country. And now there's a real question of how much those plans truly are disrupted.
Let's see. Let's see how this actually plays out in Washington. This one's slowly coming together over the weekend, and we'll see how quickly things get slapped back down. Coming up on the program, we'll catch up with Angelo Zeno of CFRA as Oracle lands TikTok's US algorithm. Plus, Danny Berger joins us with your morning movers, the maker of Tylenol, taking a hit on news out of Washington. The stock is down by more than 3%.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
This from Max Kettner of HSBC this morning. The title of his note, Up, Up, and Up More. Goes on to say this: there's more to come that should drive risk assets higher still. Re-accelerating data and Fed rate cuts make for a powerful mix and argue for a more cyclical stance in equities.
Look, they're not alone, right? This is what everyone believes, which is the reason why I saw another upgrade from Goldman Sachs. The idea that we are talking about a K-shaped recovery, a K-shaped economy. He said they don't view it as a risk. It's something that makes us even more bullish. So there you go from Max Kettner over at HSBC.
Treasury yields have a long way to rise until they will hit risk asset valuations. Okay, equities right now down by about 1/4% on the S&P. We're down by 1/4 also on the Nasdaq, off the back of a 3-week run of gains on both the S&P 500 and the Nasdaq 100. In the bond market, Treasury yields look like this. Yields just about unchanged. 2s around 360, 10s around 413. With the latest morning movers with your single names, here's Danny Berger for more. Hey, Danny.
Hey, John, starting with that breaking news we got about 30 minutes ago, and that is more on the contours of this TikTok deal. Part of it is about the role that Oracle will be playing, that they will be recreating the TikTok algorithm and providing the security. We also learned from President Trump speaking on Fox News that the Murdochs, specifically Robert and Lachlan, would be playing some sort of role in this TikTok deal. So as part of that, you can also see Fox shares are rising about 2.7% this morning. In other news coming out of Washington, D.C., the Washington Post reporting that the White House plans to link one of the key ingredients of Tylenol to autism, a highly controversial thing to do. And the maker of Kenvue, the maker of Tylenol, I should say, Kenvue, highly disputes that, but telling Bloomberg News that there's no evidence of that. Even so, those shares falling some 4%. Finally, elsewhere in pharma, Pfizer buying Metsera for a $7.3 billion deal. It is the maker of an obesity drug. Pfizer, for its part, has tried to produce its own obesity drug, and it has not gone to plan. The key for this drug, though, is it would allow users to only take a once-monthly shot instead of weekly, so it's more attractive because of that. So the takeover target goes up nearly 50%, while Pfizer rises 1.7%. John.
Danny, thanks for the update. Appreciate it. More from Danny in the next hour. On our radar this morning, the White House says Oracle will recreate and provide security for a new US version of TikTok's algorithm, a key step in a deal to sell the app to American investors. Elsewhere, President Donald Trump upping the price for an H-1B visa application, now requiring a $100,000 fee. The move rattling companies, particularly in tech, that depend on the program to recruit employees. And finally, South Korea's president is warning that accepting US trade demands could trigger a financial crisis. The two nations have stalled on a deal where South Korea would invest $350 billion in exchange for lower tariffs.
It only has foreign currency reserves of about $416 billion. So this is almost the entirety of their foreign currency reserves. They've talked about some sort of foreign exchange swap to get the swap line with the United States in order to be able to effectuate this. But it highlights the details, and it's something that you've talked a lot about, John, the details of all of these investment plans and how little is actually known about how easily it'll be for some of these companies to, for some of these countries to execute.
South Korea wants a safeguard, and in order to do this, they want to make sure that they agree on this currency swap and able to ensure that they could then withdraw the $350 billion. I thought this part of the interview was really interesting. When asked if they would walk away from the deal, this was the quote: "I believe that between blood allies, we will be able to maintain the minimum amount of rationality. It's UN General Assembly week. We do know that top South Korea diplomat will be meeting with the Japanese diplomat, and of course the U.S. diplomat. So potentially the story will move forward this week in New York."
There's been some complications around these deals, particularly the working arrangements of some of the individuals that need to come over here and have them build out some of these investments. And South Korea is at the epicenter of that, not just Japan.
Absolutely, especially when what happened as of recently at the Hyundai plant. And the president of South Korea was saying, I think this was an error. And right now they want to move past that episode and they really want to get to a trade framework. And it sounds like when it comes to trade framework, they really need to make sure they have safeguards when it comes to the currency swap.
Watch this space. There's going to be a lot of diplomacy carried out this week here in New York City. Let's turn to our top story. Oracle securing a deal to recreate TikTok's algorithm for a US version of the app in a White House-backed deal. President Donald Trump name-dropping reported investors.
I hate to tell you this, but a man named Lachlan is involved. It's a very unusual name, Lachlan Murdoch. And Rupert is probably going to be in the group, a couple of others. So I think they're going to do a really good job.
Angelo Zeno of CFRA writing, concerns remain, execution issues tied to moving all users to a new app. And then will TikTok America have the ability to run the platform the same way? Angelo joins us now for more. Angelo, we've got a few more details since we last spoke. Have you got a clearer picture of just how this is going to work?
Yeah, I mean, John, I'd say to your point, we have gotten more details, and I mean, we have a better understanding at this point. I mean, the fact that I think there was some debate out there whether or not this was going to be kind of this duplicated algorithm out there that's going to be run by, Oracle and this, new group of investors, or was it going to be some sort of licensing deal with ByteDance? We now know it's going to be, this U.S. consortium, this new TikTok America essentially owning the actual algorithm. And that's kind of what we expected was going to happen in order to actually kind of lift this actual TikTok ban that we've seen here. So, the way it's playing out is the way we thought it was playing out. You've also got details in the sense that there's going to be 6 out of 7 board members that are going to be Americans. Who exactly that's going to be at this point in time also remains unknown. But ultimately, it's playing out the way we thought, and we continue to have our concerns. But nonetheless, TikTok remains a great asset, and I think ultimately, the individuals or the consortium of investors that are acquiring, the asset, will probably benefit here long term.
Angelo, based on how the market's trading, how certain is this deal to get through, at least in the eyes of equity investors?
I mean, listen, the administration says that it's a done deal over the weekend, right? I mean, we don't necessarily believe that until, everything's kind of signed and done. I wouldn't necessarily say this is a done deal. So, I think it continues to be highly contingent upon how trade negotiations go here over the next couple of months. I think, I feel fairly confident that, hopefully the December pushed out timeframe will be the last time we have to push this thing out. But nonetheless, I mean, this is one of those situations where, it's never a done deal until it's done.
Does this help the likes of Meta or Facebook as well as Google and YouTube, or does this hurt them? The idea that you do have a definitive presence of TikTok, but with the algorithm run from someone else?
I think it helps them personally. So I think it actually, I think it potentially, puts, if you think about how much the social media landscape has changed over the last 5 years, I mean, just take a look at, Meta themselves. I mean, Reels popped up only 5 years ago. It actually didn't, on Instagram, didn't show up on Facebook, I think, until, mid-late 2021, and didn't actually go worldwide until early 2022. So when you kind of think about how much the world has just changed over the last couple of years, how much the competitive landscape has changed over the last couple of years, and now we're kind of, embarking into a new AI environment. Who has control of these algorithms and how they handle this algorithm and the platform, over the next couple of years is going to mean so much. And I have a lot more confidence in a guy like Zuckerberg, who's going to be able to maybe potentially take advantage of a situation where, whoever is running TikTok America may not be as sophisticated as those ByteDance engineers out there.
Well, will it be successful without ByteDance engineers?
Well, it depends on who is coming in to kind of help this consortium or TikTok America to really kind of run this whole thing up. I mean, if you were to ask me, does Oracle have the ability to do it themselves? I couldn't necessarily give you an answer on that. Again, it would all be dependent on who exactly they bring in to really kind of help progress TikTok America in the future. But again, it all remains unknown at this time point in time. And at least in the near to intermediate term, it is a risk, right? Especially when you start thinking about the fact that, hey, listen, you do need to bring all these users onto a new app. So again, there's a lot of moving parts involved with all this, which is again why we have more confidence in a Zuckerberg, in a Meta, to potentially, take advantage of a situation like this.
Are you basically saying that Meta is on par with ByteDance's engineering expertise?
I would say they're probably on par or even ahead of potentially a new TikTok America that would be run by, that wouldn't be run by, these ByteDance engineers.
Angela, just a final question. The White House has got a taste for intervention, clearly playing a major role in the brokering of any potential deal between the US and China and every individual that's involved in this agreement. How keen an interest are they going to take in this company after things have closed? How much of a role will they play on what is playing out on that platform?
Yeah, I mean, and maybe one thing that is different than what maybe I previously thought. I thought maybe they would have taken a stake in this. Maybe it looks like at this point in time, the administration is more looking to take a multi-billion-dollar fee from this transaction. But nonetheless, I think they're definitely going to have their eyes set on how TikTok America does and make sure that it does perform well here in the foreseeable future. But if they're not necessarily taking an ownership stake, maybe it's not as imperative as kind of what we're seeing from potentially an Intel stake at this moment in time, but remains to be seen.
Angelo, thank you, sir. Appreciate it. Angela Zena of CFRA. A few more details, still a lot of unanswered questions.
Your question's a good one, not just with respect to the monetary influence of TikTok going forward, but the actual algorithm going forward and just how some of the stories are ranked and the posts really get distributed. That remains an open question. What is a more American version of that algorithm?
I think they're going to have an ongoing interest in the content. Let's put it that way. I don't think that's going away.
We've seen this consistently, that the person who controls the algorithm controls the way people get their news, period, full stop.
As we get more details on that story, we'll bring them to you. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's bring in Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump says a U.S. government shutdown is likely, citing a stalemate between his party and the Democrats. Senate Democrats and Republicans each blocked the other party's rival plans to provide temporary funding, moving closer to a shutdown October 1st. Senate Democratic leader Chuck Schumer is urging President Trump to negotiate. Kim Jong-un says he'd be open to talks with President Trump when he travels to South Korea next month. North Korea's leader says he has, quote, good memories of President Trump and sees no reason not to meet him again as long as the U.S. stops insisting on the dismantling of his country's nuclear arsenal. The Trump administration is getting ready to announce a link between Tylenol and autism. The Washington Post is reporting that officials have been reviewing research that suggests a possible link between the use of Tylenol early in pregnancy and an increased risk of autism in children. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. Up next on the program, a divided Fed.
The committee's also spooked a little bit by last year, because last year the data looked weak but then turned around abruptly. It's hard to say exactly how high the bar is. That's a judgment call that'll have to be made by members of the committee.
Up next, Krishna Gua of Evercore ISI, live from New York City. You're watching Bloomberg TV.
in case you missed it on The Close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What do you see?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Live from New York City, welcome to the program. Equity futures just a little bit softer. We're down by 0.3% on the S&P. Likewise on the NASDAQ, the Russell, coming off the back of the longest weekly run, going back to 2020. It's been some 5 years that we've had a stretch of gains like this on a weekly basis for the Russell 2000, 7 consecutive. In the bond market, 2-year, 10-year, 30-year bond yield shaping up as follows. The 2s and 10s pretty much unchanged so far this morning. Bond yields at the front end of the curve at 357, on 10s around 413. A little bit light on data through the week. Look out for PMIs to see if we see any sign of a re-acceleration in economic activity coming into September. This came from Mike Schumacher of Wells Fargo. Markets appear to have priced the cutting cycle to perfection. The Fed's unchanged outlook on growth and labor, alongside an upward revision to core inflation, creates tension with current pricing.
So this, to me, is the biggest question. Can we see the ongoing flattening in the yield curve that we've seen? Or, say, on Thursday, when we get $44 billion of 7-year notes that are being sold, do you get some sort of pushback of this idea that you can perfectly situate a Fed policy with a re-accelerating economy without getting the commensurate inflation that would cause long-term yields to rise?
At least over the last few weeks, we've rejected that story, haven't we? That doom and gloom about the supply side stuff. We've rejected that, and I wonder if it comes back on the table too.
I think that to me is the big test of this week, considering that it is light in data. We're going to be trying to dodge traffic for UNGA, and I'm going to be watching the $44 billion of 7-year note auctions.
We're going to be walking a lot,
yeah.
I think is what's going to be happening
John.
this week. Yeah, that too, and walking. Yields right now on a 2-year, 357, on 10s, around 413. Under surveillance this morning, a divided Fed.
The committee's also spooked a little bit by last year, because last year the data looked weak but then turned around abruptly. It's hard to say exactly how high the bar is. That's a judgment call that'll have to be made by members of the committee. You've got markets pricing probably 75 by the end of the year. That would be a significant move by the end of the year, and they have a little bit of optionality.
So here's the latest this morning. Divisions on the Federal Reserve clouding the Fed's communication as Fed Chair Jay Powell is set to speak tomorrow. Krishna Gua of Evercore ISI writing, the active debate for policy going forward will be predominantly within the 12 who see more cuts in 25, not the 7 who do not. Krishna joins us now for more. Krishna, welcome to the program. Let's just start with that division of the Federal Reserve. Just how material is it, and how different is it to what we've seen in years gone by?
So I think we learned 2 things at the meeting just gone. First, that this is still Powell's committee. He can still muster majority support, particularly, although not disclosed, among the voting members, if you guesstimate whose dots are whose, for the policy path that he prefers. And that's market risk friendly because Powell is on the more dovish side of the committee, the more preemptive risk management side. But there is this large block, 7 Fed officials, who don't see any further cuts after the September cut this year. So the question is, what influence will that 7 have on the debate? My sense is not that much. I think the debate will mostly be among those who see the need likely to cut rates further, but will be debating exactly the economic conditionality and cadence rather than that block of hawks. But you can't completely dismiss the 7 no-cutters.
Christian, when you started talking about the Federal Reserve, you pointed out that this was Chairman Powell's Federal Reserve, almost like it was his committee. Is it too early to begin pricing a post-Powell Fed?
So I think the market, sensibly in my view, is looking at 2 different time horizons in a different way, right? Through the end of this year, indeed even through really at the end of Q1, early Q2 to the very end of Powell's term, I think Chair Powell will continue to drive the committee. I think there is a lot of loyalty to Powell, and I think that the divisions among the central group, while they're there for sure and amplified by these political strains, I don't think they're very, very deep. I think most of that core group would agree with Powell that you want to be stepping rates back to a more neutral setting, and that if the labor side continues to look quite weak, you want to do that in a timely manner. So that's the successive September, October, December cuts versus perhaps if the data were to pick up, then you might slow down that process. Separately, the market needs to look forward through the end of next year and beyond and ask what might change under new leadership. And I think when you look at the market pricing through the end of next year, you very clearly put some weight on the prospect of a more dovish shift in the Fed reaction function as new leadership takes over.
Krishna, has this market adequately appreciated just how dovish this central bank already has been? The idea that they're cutting at the most aggressive pace going back to the 1980s when we weren't in recession. I mean, this is really an unusual type of paradigm given that inflation has remained above the 2% target for more than 4 years and is expected to remain above that for the remaining upcoming 2 years. I mean, at what point is this market not appreciating how hot this Fed is already running the economy?
So I certainly agree with you that this is a quite unusual set of circumstances. I think it's important to caveat that in 2 ways. First, the Fed is not cutting rates to, at least under Powell, is not contemplating cutting rates to what the Fed at least would consider stimulative territory. What they're talking about is removing what they estimate to be the remaining restraint in the economy. That's the roughly 75 basis points of restraint between where we were on the eve of the September meeting and a spot neutral setting that might be in the zip code of 3.5, 3 3/4, separate from where the long-term neutral rate might lie when things settle down to equilibrium, which many still see at the Fed as more like 3%. So you're talking about removing restraint, not providing stimulus. The other thing is, of course, you're seeing, I think, under Powell's leadership, and of course with pressure, intellectual pressure from Waller and 1 or 2 others, the Fed's taking a view that maybe they should be, at least to some significant degree, looking through that current elevated inflation because it's, to a large extent, reflecting the pass-through of tariffs into prices. And of course, from a textbook sense, at least, you want to look through that first-round mechanical tax impact, if you like. It's a bit like a sales tax in that regard. And you want to be focused on where you think the underlying inflation dynamics are going, what risk there is of inflation persistence. And, you know, if you look at wages minus productivity, if you look at a lot of the services, particularly the more market-based services, you look at expectations, the news on that second round inflation dynamic is reasonably constructive. But I certainly still take your point that the Fed is cutting on risk management grounds into what may be the early stages of a cyclical reacceleration. I think the market is going to want to see more evidence on that firming in activity, and if it's passing on to a firming in the labor side too, before it really starts to trade that. But if you were to see that, then I think at a minimum, people would start to pay more attention, not just to these 3 cuts, but the prospect that when the next chair picks up the cutting baton, we might well be in danger of overdoing it.
Let's say the Fed cuts rates and long-term rates also decline. Will that help housing affordability? Will that help with this sort of declining trend in inflation that is hinged to the housing market, frankly, which has kind of gotten slack?
Well, so certainly I think if longer term rates were to come down from here in an appreciable way, then obviously that would lower, you know, the classic 30-year fixed type financing costs. And that would certainly help buyers at the margin. It might actually work a little bit more on price than on quantity in a number of cases, but certainly it would be good for housing stocks. I think in the absence of that, what we're likely to see is more people moving to fund at the front end through ARMs, because of course as the front end rates, the Fed sensitive rates do come down, there's an opportunity potentially to finance at the front end rather than finance through the classic 30-year. I don't think that there is a huge amount of scope for 10-year yields to come down further from here if we are indeed in the early stages of at least cyclical stabilization and possibly even cyclical reacceleration. My hunch is if that's the path we're on, then the 10-year yield will be higher 6 to 12 months from now, not lower, and with it, of course, then those conforming loan rates. With respect to housing and inflation, I get the point you make, and it's a subtle one about the relationship between, you know, home construction and ultimately, you know, OER, rent, and those other housing services related components on inflation. I think that's right. I still think overall, though, higher longer-term interest rates will tend to restrict the economy in aggregate across all the sectors and put downward pressure on inflation, and vice versa if the 10-year goes down.
Krishna, appreciate your time. Giving us a lot to think about. Thank you, sir. Krishna Goa there of Evercore ISI. 2 different time horizons. This until the end of, say, Powell's term, then everything after that. Peter Shea of Academy, just moments ago. We still believe the market is underpricing the number of cuts, the speed of cuts, and the efforts the administration will take to keep yields lower across the curve. We'll pick up on that note in just a moment. Up next, Waitlist of BlackRock, Henrietta Trey's of Veda Partners, the former White House trade official Kate Kalukowicz, and Kelsey Barrow of JP Morgan Asset Management. The second hour of Bloomberg Surveillance is just around the corner.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I am never doing that again.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. we go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The Fed's outlook has really shifted.
They're going to look through temporary tariff effects.
Cutting rates is not going to help on the inflation side.
The uncertainty, rather than the level of tariffs, is going to be a challenge.
There's a little bit of push-pull in almost everything you look at.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this on the S&P 500, pulling back from all-time highs by about 1/3 on the S&P, and the Nasdaq 100 down by 0.4. In the bond market, some stability across the curve. Twos down by almost a basis point, just about unchanged on 10s at 412. If you're confused by the Fed speak of the last week or so, prepare to be even more confused. There is a ton of Fed speak coming up over the next few days, including Chairman Powell himself tomorrow morning.
Yeah, today we've got Fed's John Williams, Musalem, Hammock, Myron, and Barkin. Myron will be giving his first speech at the New York Economic Club today as the governor on the Federal Reserve. Powell, Bowman, Bostic, I mean, all of these lining up. And a real question here, what insight will they actually give us? We know that this is a divided Fed. How do you take signal from noise at a time where this is incredibly noisy? And this might be Jay Powell's Fed now, but come next year, whose Federal Reserve is this going to be, and exactly how will that get manipulated?
Well, it might be Stephen Myron's, given the fact that we know that he wanted a deeper rate cut for September. I think he might struggle with why you should have a deeper rate cut if he actually thinks the economy is booming, what the president wants to hear. And when it comes to current Fed Chair Jay Powell, we know that his chairmanship is over next year. We still are waiting for clarity from Jay Powell whether or not he's going to stick around as a governor for 2028 and what that could mean potentially if he lingers around when it comes to the FOMC.
Fed Governor Stephen Myron might be a taste of things to come, which is why it's important to look out for what he's got to say later on this afternoon. I mentioned this note from Peter Chia of Academy in the previous hour. Worth picking it up again. We believe the market is underpricing the number of cuts, the speed of cuts, and the efforts the administration will take to keep yields lower across the curve.
How do you say yield curve control without saying yield curve control, and that is the way that you do it? This is what a lot of people have been speculating with respect to why you have seen such a controlled long end of the yield curve, why you haven't seen a steepening in the yield curve on the heels of a pretty dovish Federal Reserve. Yes, maybe not as dovish as people expected, but nobody's listening to what they actually said and just looking at what they think they'll probably do. So this raises a question. Can this Fed meet the moment, and what will it take for them to do so, given some pretty high expectations already baked into the market?
I have to say, I would have thought that by now we'd have a decent idea over who the next Fed chair would be. This has taken a little bit longer, this process, than I thought it would.
It is taking a little bit longer. We know the Treasury Secretary is sitting down. He's having these meetings, but I think they need to decide with Stephen Myron first. Does he stay on or not? And then do they elevate someone from within, or do they really want someone from the outside?
The longer this takes, the better it is, because they can just keep talking about too late Fed Chair Jay Powell, and he's a great scapegoat. So I think this is actually by design.
And he's cutting rates anyway.
Exactly.
So you get the best of both worlds, at the moment at least. Coming up this hour, we'll catch up with Waitlist of BlackRock. With Wall Street riding high, we'll speak to Henrietta Trays of Vader Partners on a big shake-up for the H-1B visa program. And we'll speak to the former White House Trade trade official Kate Kalukowicz with US lawmakers taking a rare trip to China. We begin this hour with stocks holding near all-time highs, driven by big tech and AI. Waitlist of BlackRock writing, the AI theme keeps driving US equity performance. We think elevated valuations can be justified if they keep delivering on expected 15 to 20% future earnings growth. Wade joins us now for more. Waitlist, good morning. Good to see you. You've been risk on with the team since, I believe, April. Is that right? What's anchored that view?
What's
anchored that view?
What's anchored that view? Well, it's a strange time to go risk on back in April, if you remember, because back then the big questions that people are asking themselves is this the end of U.S. exceptionalism? Is this the time that the dollar may lose its reserve currency status? So to lean against prevalent market questions and really go risk on despite peak policy uncertainty was hard. But what really anchored that view is really our appreciation for the fact that there are certain things that are so fundamental to the working of the economy and markets that they cannot change quickly. Markets were pricing for them to change quickly, so we would lean against that. So in BlackRock, we call these fundamental things the immutable laws. I don't know if that has caught on outside of BlackRock, but the idea that certain things, markets may price them to change quickly, but in reality, the facts on the ground are that they cannot, is really what is behind our risk on view since April.
In the middle of September, the market's in a different place compared to where we were in April. You were leaning against where the market was at the time. Now equities are at all-time highs. Credit spreads are super tight. Now, it's not payrolls. That hasn't driven a reduction in your risk posture. What would lead to a change in your risk posture at the moment?
Well, right now we're in a bit of a sweet spot right now because the Fed has macro cover to start the series of rate cuts. And because payroll is so weak to justify that, it doesn't have to be a big political debate right now. And this is really a sweet spot because the cuts have been priced in. U.S. growth is not really that bad, right? We're looking at 1.5% for this year growth. It's not, shooting the lights out, but it's still very far away from recession. You look at earnings, it's very strong, especially in the U.S. equity market, especially in the tech and AI plus complex. So when you bring all of this together, you kind of have the benefits of Fed cuts without the penalty at this juncture, and on top of that, fundamental picture is holding up, which is why we continue to like equity market at this juncture. And then our study shows that 15 to 20% earnings for U.S. tech will be enough to support current multiples of U.S. tech 30 times plus. And we look back in history, the last 30 years or so, a quarter of those periods actually has seen U.S. tech growing earnings in that range. So, it's doable, and it's happening right now.
So do you just ignore H-1B, ignore the idea of U.S.-China trade discussions, ignore all the geopolitics that directly affect all of these tech companies? Is it all sort of negligible because of the immutable laws that essentially these two economies cannot decouple that quickly? And so essentially there will be a level of status quo that will just continue?
I think ignore is a big word. I don't think we can ever ignore big headlines like that, but we do want to kind of understand the market dislocations driven by such headlines and try to understand how much of them can actually play out over the near term versus how much of them cannot change over the near term. So you talked about U.S.-China trade relationship, like back in April, we're talking about closing trade deficits, but the facts on the ground is that the global supply chain is so intertwined that you cannot change things very quickly. So I think that very much speaks to how markets are making new highs, both in the US, but also in China's sphere of influence. You look at Hang Seng Tech, it's up 40% on the year. You look at Hang Seng Healthcare, it's up more than 100% on the year. So really selective opportunities across the board against the backdrop of a somewhat weaker dollar.
How do you know if we're creating a bubble? And I ask this because Dan Greenhouse said, every new high in the bull market should be bought except the last one, and all that you need to know as an investor is why it's the last one. And that's essentially where people are at, which is if it's a bubble, that's not a bad thing, keep buying. But it just means you probably are going up until it goes down. Do you feel like that's the case?
Well, I don't think we can say that we know we're not creating a bubble. I think what we are seeing right now is that we're seeing companies really spending and overspending in the AI race to really stay on the table to really stay in the race. So I think it's possible that we're going to see more overspend in the near term because it is really existential. So one of the things that we're keeping a very close eye on, specifically with regards to the AI build-out and tech, is return on investment for the capex that is being spent, especially as you think about companies kind of outside tech spending more in AI. You know, we're going from capital light to capital intensive sectors kind of being very integrated and really thinking about it, and that has significant implication on return on equities too. So this is one signal that we pay close attention to understand if there is further momentum. Another signal is credit spread. It's very tight right now, but typically credit spread tends to kind of increase quite a bit before major equity market corrections. So right now we're paying close attention to both the credit spread, but also specifically the relative credit spread of tech space versus broader IG. They are very tight right now, so not showing significant stress, but that's something that I monitor daily.
When you look at the AI overspend, and this was really on display last week when I was with the president, tens of billions of dollars allocated to the United Kingdom. A lot of that has been also allocated to the US. How long can that persist, the overspend?
Well, if we look at the percentage of spend over free cash flow, it's higher than before, but it's not super stretched. So companies can still spend for now, hyperscalers can still spend for now, and also they can go into funding market, private market, for example, to get additional cash to spend. So there has been an increase, but in our view, is not getting to a point where this is too much and we gotta kind of think about putting a stop to it. So we're paying very close attention to free cash flow to understand if they actually have the wallet to do so. But right now, it's all hands go.
Are you monitoring potential energy constraints off the back of these investments? Do we have the power? Do we have the energy infrastructure?
It's that's a very big question because energy constraint may well be some of the kind of not bottlenecks, but certainly factors that can slow down the AI build out, because it's also happening in the context of the low carbon transition. So far this year, if you look at electricity inflation in the retail space in the US, we're talking about 6% year on year. So we're definitely seeing greater pricing pressure coming through because of the energy demand and versus the supply picture. So that's something that we monitor, and it actually may impact the broader inflationary mix that the Fed is going to have to respond to. So whilst right now we think that there is room to lean into duration, to lock in attractive yields at these levels, real yields in particular, over the longer term, we still think that the inflationary pressure hasn't gone away. The trade-off between inflation and fiscal spend and debt servicing costs, that tough tension hasn't gone away. So over the longer term, steepening view is still our core view. But for now, given the Fed cycle, we want to lean into that.
Okay. Look, there's a great market story here. Fantastic for the economy. But I think we should detail the political fallback that we could see and what it could mean for society. The energy intensiveness of that growth that we could see over the next several years off the back of this story is potentially going to cause problems politically and societally over the next several years or so. And I think you're already seeing signs of it. The energy price pickup, that story's already starting to build.
Yeah, especially in the United Kingdom and in other places as well. But this idea of if people are paying their Con Ed bills every month and it's getting to be bigger and bigger and bigger, suddenly people are going to start to say, wait a second, why is this not rebounding onto us? But everything's turning into a political story.
Well, it's good to see you. Thanks for dropping by. Waitlist of BlackRock, thank you very much. If you're just joining us, equities down by about 1/3 of 1% on the S&P with an update on stories worldwide. With your Bloomberg Brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. T-Mobile is announcing a shake-up in its leadership. CEO Mike Sievert is stepping down from the role and will move to vice chairman, with current COO Srini Gopalan setting to become the next chief executive. Those changes are set to go into effect November 1st. Both Sievert and Gopalan will join Bloomberg Tech tomorrow at 11 Eastern. A final deal on TikTok is expected to be signed in the coming days. U.S. operations of the app's algorithm will be secured by Oracle once it's spun off from its Chinese ownership. According to the White House, Americans will hold 6 out of 7 board seats for TikTok. Hong Kong International Airport expects to cut flights starting Tuesday as it braces for one of its strongest typhoons in years. Sources telling us here at Bloomberg, All flights will be stopped from 6 p.m. local time through 6 a.m. on Thursday as Super Typhoon Regasa bears down. Hong Kong was last battered by a super typhoon in September of 2023. That halted flights for 20 hours. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate the update. More from Vonnie in about 30 minutes' time. Next on the programme, upping the barrier to entry.
$100,000 a year for H-1B visas, and all of the big companies are on board.
We need workers, we need great workers, and this pretty much ensures that that's what's going to happen.
A conversation up next with Henrietta Trays of Veda Partners, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a bullish feel in the air, let's put it that way. This from Julian Emanuel of Evercore just last week. He said, nowhere to go but up. And then we had this from Max Kettner of HSBC a little bit earlier this morning. The title of his note, up and up more.
Essentially, if you have an economy that's doing okay, even with rates where they are, and you have this super cycle of investment overlaid on top of it, and then you get rate cuts, well, everyone gets bullish. What is the potential stop to that? If everyone is bullish, at what point do some people start getting nervous?
We've set a series of all-time highs. If this is nervousness, this ain't much. We're down 1/3 on the S&P. On the NASDAQ, we're down by 0.35. Under surveillance this morning, upping the barrier to entry.
Train Americans, stop bringing in people to take our jobs. That's the policy here. $100,000 a year for H-1B visas, and all of the big companies are on board. No more will these big tech companies or other big companies train foreign workers.
We need workers, we need great workers, and this pretty much ensures that that's what's going to happen.
So here's the latest this morning. President Donald Trump signing a proclamation requiring a $100,000 fee for H-1B visa applications to curb overuse. Joining us now to discuss is Bloomberg's Tyler Kendall. Tyler, the Commerce Secretary, Howard Lutnick, said $100,000 a year. Have we clarified that now? Is it a year or per application?
So, John, as of now, our understanding is it is per application. This was part of the White House's bid to clarify the policy, also making sure to say that this does not extend to existing visa holders, appearing to be a bid to calm some of these anxieties that we heard immediately from these companies after Howard Lutnick said that it's ultimately going to be up to corporations to make these decisions, considering they're the ones that typically front the fees associated with sponsoring applicants, though, of course, at a much lower rate. Now, the H-1B visa program opens up 85,000 new visas per year for those workers that are highly skilled, have at least a college degree, and go into these in high-demand professions. And we know that the bulk of H-1B employers are those big tech companies like Amazon and Microsoft, who are already sounding the alarm that this could hurt U.S. competitiveness, not to mention that we heard from critics of this policy to expect legal challenges since the U.S. Congress has set clear requirements for how U.S. businesses petition for foreign workers, really setting us up. We're expecting for another legal test here when it comes to how the administration is using executive power. And John, while this issue has really long divided the Republican Party, we saw some pressure mounting from President Trump's own base that alleged that this policy takes away jobs from American workers. It's also worth pointing out the timing here that we know that the bulk of H-1B visa holders come from India, and the trading partner has long seen their negotiations for a trade deal stalled. But today there is a delegation arriving from India to Washington to continue those negotiations, and this no doubt was unwelcome news.
Tyler Kendall with the latest. Tyler, thank you. To extend the conversation, Henrietta Trace of Vader Partners. Henrietta, welcome to the program. Many people have long talked about the problems with this program and the abuse of it. This is a problem. What do you make of the remedy?
Well, I think it's very interesting as a former tax staffer and somebody who has worked in both the House and the Senate. What's happening here is that the president is yet again taking away the power of decision-making over taxation, just like happened with tariffs, and is putting it squarely in the administration's hands. So as Tyler was just pointing out, this is absolutely going to run into lawsuits and it's going to be a problem for lawmakers who are going to have to assess whether or not this is something that they want to carry forward. But in the absence of immigration policy, which we are plainly not able to get out of the House and Senate, I think it really shines a spotlight on how dysfunctional they've become, which obviously we'll see if we shut the government down as well.
Well, what Trump is doing on the executive branch, will it force his colleagues in Congress, the Republican Party, to take up some new legislation about these visa fees?
That's an interesting question. I doubt it in the near term. I mean, they're nowhere on being able to legislate immigration policy, which is invariably what this becomes a part of. But it has had, as you pointed out, bipartisan opposition over, decades. I remember the 2013 debate had a big, huge fraction of it was about H-1B visas. So the president is basically saying, if Congress is not going to act, I'm going to. And that's what we're seeing. What's interesting here is that the president is obviously prioritizing tech, whether that's bringing all the tech titans to England to be at Windsor Castle, or whether it's to tackle H-1B visas, to talk about the oracles of the world with TikTok. And what's interesting to me is that we are not seeing a similar rollout on the rest of the U.S. economy, and in particular, the industries that are being most harmed by tariffs. So whether it's the manufacturing sector, which has lost almost exactly the same number of jobs as this H-1B visa issue will imperil, as well as the agriculture sector. So I think there's a whole segment of the U.S. economy that's being left out of these discussions. And the tariffs with India, which I think you can basically add this on to, is going to be a big part of the debate.
Well, Henrietta, if Congress is not going to want to take up the visa fees, and they're the ones that have jurisdiction over it, is this basically null and void? Is this even going to happen, these $100,000 visa fees?
I mean, certainly not if they go to the courts, and it's really just a matter of time before we see how long this is going to be into effect. Obviously, there's a lot of confusion, as John just pointed out, between, how is this going to be applied? Is it an annual thing, which Secretary Lutnick reiterated repeatedly in the White House, in the Oval Office, and then has since walked back. There are going to be licenses, I would imagine, and exclusions. And so that's going to be something that those closest to the administration are able to finagle. And we'll see if JP Morgan does it better than Oracle.
Right now, Henrietta, it seems like the market's numb to pretty much all of the very loud headlines that everyone shrugs off as being initial opening arguments, and then will get watered down. I just wonder, in the roulette of topics in Washington, D.C., how much the people you speak to are aware of the fact that the government is going to shut down, almost certainly that everyone's talking about this, and that there could be potentially market ramifications?
Yeah, it takes a while to get to the market ramifications, but you make a really good point here, which is that the main topic of discussion in the streets of the United States, as well as on Capitol Hill, is really the cost of living. And when you have 83% of Americans saying that high prices are their #1 priority, which is the poll that just came out over the weekend, you're seeing a material disconnect. This H-1B visa thing is not going to do anything for them. Keeping tariffs on India at 50% rates is not helping. So there's actually these bubblings of working groups that are happening on the House and the Senate side to take down the Brazil tariffs that are at 50%, to start a working group to talk about the president's authority to randomly impose these IEEPA tariffs across all nations and all kinds of goods, to have them rein in some of their power again. It's very much at the beginning stages, and I wouldn't take any of this seriously yet. But as we get into the midterm election cycle, members are going to have to talk about this, because the tariffs are the #1 concern of a lot of Americans who are dealing with higher prices at the grocery store and at Walmart.
This is an important point, Henrietta, the idea of how to view the lens of the just incredible funnel of news that keeps getting funneled at us every single day from Washington, D.C. How much is the incoming midterm elections shaping some of what we're hearing about? The idea of what initiatives are making it to the front lines, the idea of a government shutdown. I mean, essentially, are we playing the blame game here? Are there going to be tangible ways to bring down the cost of living heading into the midterm elections, or is this essentially a jostling for the upper hand in the media sphere?
I mean, man, you take the tariffs off, that's what, $2,600 per family, per household annually? So, I mean, you could do this pretty quickly if you wanted to. I think the tariffs are going to be a major topic of the midterms, and the members are, pushing that as far away as they possibly can right now, and it's being driven by the administration. And when President Trump makes a speech in front of thousands of people at a memorial service and touts tariffs as the best thing since sliced bread, and the average American hates tariffs, you've got a big disconnect. And members of the House have been protected by the Speaker from holding votes on these tariffs now through January of next year. So there's not even going to be a check or a balance on the president and his tariff authority from the House until January. They just passed that rule last week. And that's going to be something that they have to decide. Are they going to go on record saying that they do support the collection of $4 trillion in tariffs over a decade that is a tax on the U.S. consumer and is making all of our prices higher? Or do you want another option? Fortunately for the Republican Party, the Democrats don't have a message, but that's basically where we are.
Henrietta, appreciate it. And the brutal honesty at the end, which most people would agree with. Henrietta Trays there of Vader Partners, thank you very much. The Republicans need what a lot of people in this market are pricing. It's the re-acceleration in the economy. These big companies with big spending plans, we want to see that early next year and see the results from it.
The problem here, and this is something that we've talked about extensively, is it consistent to see companies making bigger and bigger profits, that you also see commensurate job growth and also salary growth? Because what we've seen is companies continuing to beat expectations, and yet the job market remaining really slack. And that, I think, is something people struggle with.
There's a huge disconnect between earnings growth and payrolls growth for 2025, which if it spills into 26 could have its own problems. Coming up on this program, the former White House trade official Kate Kalukowicz with US lawmakers on a rare trip to China, plus Danny has your morning movers and single names rising on gold's record rally. From New York City, this is Bloomberg. the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Two-day winning streak on the S&P 500. Slight pullback this Monday morning. We're down a third of 1% on the S&P. Down a third also on the NASDAQ 100. If we switch up the board and get to the bond market, 2s, 10s and 30s. 2s essentially unchanged through last week. Anchored between 350 to 360 as the story and rate pricing stabilizes. Look out for the Fed speak through the week. Very intrigued to find out Chairman Powell's personal view of things and whether there's any daylight between what he offers with us in a speech this week and what we heard from him in the news conference just last week.
Yeah, does he lean even more hawkish, essentially, to push back, or does he really lean into the idea that this is a labor market that is at risk of turning over? Does it matter? I think that that's the interesting question also. How much does he really hold a disproportionate amount of clout over this committee, given the fact that his term is up early next year?
There is an expiration, and it's May, and once you get past that, arguably once you get somewhere close to it, we're going to stop listening to what the chairman's got to say on the outlook. I think that date is closer to December than it is to May. And once we get closer to year end and they start putting out their outlook, I'm going to be far more interested in whoever has been nominated and appointed to be the next Federal Reserve chair as they go around the media and tell the world what they think.
But this is the reason why I actually think it's not just Fed Chair Powell, it's also Williams, it's also Waller, it's also Musalem, it's all of the other members of the Federal Reserve who are going to be speaking this week. How much are they prepared to push back against a Fed chair, potentially, who is willing to run an economy very hot and look through inflation? What are the parameters at which they start to get more concerned and are willing to say, hold on a second, not so fast?
If you're keen to hear from one of them, you will almost certainly hear from them in the next 24 hours, because pretty much everyone's speaking Monday through Tuesday. As we count you down to that and the opening bell. The opening bell about 2 hours away. Let's get you some morning movers. Here's Danny Berger with more. Hey, Danny.
Hey, John, we're learning more about the contours of this TikTok deal. Some movers off the back of that. For one, early this morning, learning that Oracle would be replicating the TikTok algorithm and providing the security for it. So those shares up about 0.75%. It's had a huge run up, so not totally surprising. It's not moving more. But what is new is a rally in Fox shares, with President Trump going on Fox News saying that both Lachlan and Robert Murdoch are likely to have some sort of role in this TikTok deal. So those shares up about 4.2%. Elsewhere, some deal news this morning. Pfizer pushing into obesity drugs. It had tried to go at it alone unsuccessfully, so to announce that it will be buying Metsera. It's a $7.3 billion deal. They make an obesity shot that key, unlike other ones that you have to take weekly, you only need to take it once monthly, so that makes it more attractive. So those shares up 60%, Pfizer up 1.5%. Meanwhile, that record run in gold shows no signs of stopping, trading about $3,700 this morning at a new record. You're seeing the gold miners play along this morning. The likes of Newmont, Anglo Gold, those are both up at least 1.8% this morning, John.
What a run we've seen for gold. Danny, appreciate it. Danny, thank you very much. More from Danny in the next hour. Gold year to date up 42%. What a move.
And if you want to see any real dollar depreciation, check it out versus gold. And how much are these stories related, given the fact that the likes of the Chinese Central Bank and many others are increasing marginally, and then not so marginally, they're increasing their holdings of the precious metals.
All-time highs, record highs, up again this morning by more than 1%. That's the price action cross-asset and across the single names this morning. On our radar this morning, Oracle landing a deal to recreate and provide security for a new US version of the TikTok algorithm. President Donald Trump saying the Murdoch family will be part of the impending deal to buy the app from its Chinese owners. Elsewhere, President Trump raising the annual fee for H-1B visas from $215 to $100,000. The change is expected to have the biggest impact on the tech sector. The White House clarifying the new fee will not impact existing holders of the visa. And finally, the UN Security Council meeting today for talks after Russian fighter jets flew into Estonian airspace just last week. Earlier this month, NATO fighter jets shot down Russian drones that violated Polish airspace.
So once again, you have Estonia, another NATO member, on top of Poland, requesting this Article 4 consultation in recent days. I think a big question is, this continues to happen, even though the Russians say that it's not happening. This continues to happen. What are going to be the repercussions? Is these types of incursions, is this the line in the sand for the President of the United States to do more when it comes to really going after Vladimir Putin?
How many lines in the sand can there possibly be? I mean, there's been line after line after line about the idea of negotiating a deal by this deadline, 2 weeks, 2 weeks, 2 weeks. And so now you have the Europeans actually trying to curtail some of the purchases of Russian gas, natural gas in particular. At what point does the president act, and how much does President Trump's being here in New York City remove him from Washington, D.C., where there's a group of Republican senators trying to force his hand? I mean, this is sort of this interesting moment. At what point does the U.S. get more involved?
Well, I think the president set out the way he thinks about things. He'll get involved, more involved, and lean in, double down, triple down, put all the sanctions in the world on the Russians and others if the Europeans move first. They want the Europeans to do more about the consumption of Russian energy. Both oil and a much bigger issue is Russian gas. And the fact that we're still sitting here several years later into this war, one of the biggest contradictions of this war, the very fact that the Europeans are still consuming Russian energy and funding, which is an uncomfortable way of framing it, I know, but it's an accurate one. Essentially, to some extent, funding the Russian war effort by buying Russian energy is incredibly problematic and something that needs addressing.
Including countries like France. There are countries in Europe that continuously import Russian fossil fuels, and they're just having these discussions about trying to wean themselves off natural gas. That could happen as early as 2027. We're not even talking about next year, 2026, and this war is years in. So the president's going to go after all of these countries, because his point is, why should the U.S. do more to protect you when you, to your point, it's uncomfortable, but it's the truth. If you are buying Russian fossil fuels, you are funding this war. And by and large, it's mostly China and India as the top. But at the same time, there's a war on European soil, and the Europeans continue to buy your product.
Yeah, about a fifth of all natural gas, I believe, in Europe still comes from Russia. So it's a significant amount. I will just say that this is what Vladimir Putin was betting on, that the political divisions were enough to keep everyone apart. And the idea is you can't really wrangle some sort of political high ground if you've got your constituents screaming about energy costs. And so that really creates a difficulty getting Europeans on board to execute what President Trump is asking.
I imagine Beijing is super happy with where things are at right now, that's for sure.
I think a lot of the countries are that are looking at the divisions being a benefit to them.
Let's focus on China. A group of senior U.S. House representatives meeting with President Xi's government in a rare trip to China. The visit seen as another step towards a planned meeting between Trump and Xi at the end of October. The former White House trade official Kate Kalukowicz joins us now for more. Kate, welcome back to the program. Let's just talk about this planned meeting between Xi and Trump by the end of October and the different approach. The president likes to negotiate in real time. He's a deal maker. President Xi takes the more traditional approach to diplomacy, where everyone else does the hard work. You get 98, 99% of the way there, and then you have a meeting. What's going to be the approach from both of these leaders?
Well, I think first, to take a step back, I think we have to recognize that we are a bit delayed in this face-to-face meeting. You know, early on in Trump's administration, we had signaling that the president would travel to Beijing in the fall, and instead we have this sideline meeting in Korea, of all places, for the two leaders to meet. So I think already we're a bit delayed on this trajectory. So that does color whether or not we can see any real outcomes. But I think you've described the negotiating dynamic perfectly. I mean, in this case, they'll be on neutral ground, and that means something. Neither of them will have the upper hand by hosting the other. So I suspect the meeting in Korea will be just another delaying tactic as we inch towards some real meaningful deal.
But China wanted the president to come to Beijing before he went to APAC. It seemed like the White House was more interested in a sideline deal in APAC. Why?
Well, I think originally President Trump was very interested in traveling to China. That always seemed to be something he was willing to consider. You'll remember he had a very successful meeting, from his perspective, of course, during his first administration to Beijing. And I think he's anxious to do that again. The fact that the first meeting now will take place on the sidelines of APEC means to me that there is not enough substance yet for the president to go to Beijing. Remember, when leaders get together in these huge events, they want something very flashy to announce, and the fact that they're not going straight to Beijing signals that they're not ready.
So potentially we have this TikTok deal playing in with the trade agreement. Do you have an understanding of whether or not Beijing is going to fully relinquish control of the algorithm of TikTok?
It's very hard to predict, but I think that China really has no intention of severing its hold on TikTok. I mean, I think what we continue to see, much like with the tariffs and the rest of the subjects under discussion, is both sides indicating that they're getting what they want as we continue to delay. Now, remember, the TikTok deal, was supposed to come sooner. Congress passed a law banning TikTok, gave the administration 90 days, and they said one time you can delay. So TikTok is already supposed to be banned in the United States, and now we have another delay. So neither side, I think, seems to feel any pressure to continue to move. Certainly the Chinese are getting the signal from the Trump administration that they'll keep delaying, even though Congress has passed this law. So I suspect we're not that much closer, despite the protestations from both sides, that we're going to have a deal.
Kate, this actually is fascinating to me, especially because a lot of people who we spoke to on this show earlier this morning said that they see this pretty much as a done deal. And it seems like this deal is almost certainly going to go through. If this is the state of things, that both sides are saying they have a deal, both sides are saying, sure, it sounds good, and essentially it's just a huge can-kicking exercise, what does that mean about the state of the discussions currently between China and the U.S. on broader issues?
Well, I mean, look, it signals to me that both sides are looking to say things are going well. That's a good thing. And if at the end of the day we have a TikTok deal next week or in 6 months, this still shows that we're talking, and that's important. Neither side wants to escalate. And that's what I take away from this TikTok discussion. That's what I take away from the tariff discussion, and the fact that both leaders signaled in their own ways that they are going to meet. So at the end of the day, again, it's very difficult to predict the minutes, the days, the hours, but the overall posture here is one that neither side wants to provoke. Neither side wants things to change dramatically. They're comfortable in this sort of detente, and I think we'll keep moving that forward. Now, I think the bigger issue here is that neither side knows at the end of the day what they hope to achieve in the broader economic and security relationship. So as long as we're talking, as long as we're delaying, I think that's probably the best we can hope for right now.
Kate, before you go, I would love your thoughts on the H-1B visa issue, especially ahead of the Indian delegation coming to Washington, D.C. to discuss trade relations. How do you view the recent announcement, the announcement over the weekend about the $100,000 cost for H-1B visas right ahead of some of these discussions?
Yeah, it's really odd signaling, frankly, in the sense that the president and the Commerce Secretary, Howard Lutnick, are constantly talking about the need for foreign investment in the United States, particularly in the types of sectors that need highly skilled workers, that the ones that benefit from H-1B visas. So it's a strange signal, to be sure. I have to wonder if there isn't some deal to be made potentially for companies that are willing to make very high investments. Perhaps they could get some sort of, deal on the H-1B visas, because it's very hard to see how these things actually support one another.
Kate, appreciate your take. Thank you. The former White House trade official, Kate Kalukowicz there. We heard that from Henrietta Trace of Ada Partners. It's going to be interesting to track who gets the exemptions and who doesn't, and what kind of different approach we'll see down in Washington, D.C.
Right now, the market is not treating this as a done deal. The market is not saying, okay, this is the new reality. Everyone has to pay the $100,000 fee. So the question is, who essentially gets a leg up as a corporate actor in the United States as a result of an exemption and who doesn't.
What did Terry Haynes say? The lobbyists were scrambling the jets over the weekend.
Yes.
Found that one.
Yeah, exactly. And that they will get back in order and they will start to lobby in hard order.
If you're just joining us, welcome to the programme. Equity's doing OK. We're down about 1/3 here on the S&P 500. Let's get you some top stories, some news worldwide with your Bloomberg Brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. New details on the deal to save TikTok in the US, as you've been speaking about. Oracle will recreate and provide security for the new US version of TikTok's algorithm. According to a White House official, ByteDance would lease a copy of the algorithm to Oracle, which would then retrain from the ground up. ByteDance would not have access to information on TikTok's US subscribers. Saks Global, the owner of storied retailer Saks Fifth Avenue, is reportedly exploring selling 49% of Bergdorf Goodman for about $1 billion. The Wall Street Journal is reporting there are at least 4 potential bidders, including unnamed Middle Eastern sovereign wealth funds. In sports, baseball's home run race is heating up after LA Dodgers phenom Shohei Ohtani hit his 53rd of the season against the San Francisco Giants. He now ties the Phillies' Kyle Schwarber for 2nd place in the MLB, but Mariners catcher Cal Raleigh still leads the league after hitting his 58th blast of the season as Seattle completed a sweep of the Houston Astros. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next on the programme, counting on cuts.
I thought the Fed's decision was a good one. This looks like a sequence of 3 moves in a row through the end of the year.
That conversation up next with Kelsey Barrow of JP Morgan Asset Management, live from New York City. You're watching Bloomberg TV.
Climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are gonna kill everybody. So we gotta figure this out. And we're not gonna do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing
bring you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Getting tons of research this morning. This from the head of the Bank of America Institute, Liz Everett-Chrisberg. We're trading airfare for fire pits. Check this out for a headline. Camping is booming, Bramo. Spending at campgrounds rose 15.1% year over year, the strongest growth since early 2022.
Some people might say this is a counter indicator, so if people are skipping the hotel room and going camping, that might be something bad. But I personally think that it's just because we're really enjoying nature and we're getting back to our roots. And John, I think we should go on a surveillance camping trip.
Is it camping or glamping? I will definitely not go camping, but
I'm not going camping.
Well, we go glamping.
Look,
maybe.
I'll
Not a
drive.
chance.
I'll get the different
Nope.
lanterns. You'll each have
You're gonna put up the tent?
I'll put the tent up. It'll be great.
Bank of America is saying people are drawn by affordability and the wellness-focused vibe. I think the affordability piece of this, trading the airfare for the fire pit, is the potential story here.
Right, the idea that you're downshifting, so it's sort of like going to Dollar Tree or camping. But I would just say the wellness component is a real one, and I recommend it.
There was a reason I brought this up, and it obviously wasn't to arrange a camping trip for Bloomberg Surveillance, all right? Equity futures on the S&P, down by about 1/3 of 1%. On the Nasdaq 100, down by 1/3 of 1% also. In the bond market, bond yields at the front end. If you haven't guessed, it's a quiet morning. The 2-year, 357. Under surveillance this morning, counting on cuts.
I thought the Fed's decision was a good one. This looks like a sequence of 3 moves in a row through the end of the year. Non-farm payrolls is kind of the key number for the Fed, so I think that made them a little bit nervous. I think that tilted things toward a little bit more dovish policy.
So here's the latest this morning. U.S. Treasuries delivering their biggest annual gain since the pandemic as traders bet on the Fed's easing cycle. Kelsey Barrow of JP Morgan Asset Management writing, the low-hire, low-fire labour market is keeping wage growth moderate, allowing the Fed to ease policy in 25 basis point increments over the next 2 to 3 meetings. Kelsey joins us now for more. Kelsey, good morning.
Good morning.
It's kind of the easy piece of this, potentially, the next 2 to 3 meetings. Then it gets hard.
Yes.
What's the call for 26?
Yeah, I think we're in a critical juncture right now as it relates to the direction for the U.S. economy beyond the next 3 months. So there's kind of 2 ways that this could break. On one hand, you have the labor market, which is clearly weakening. I think it's not just supply, I do think it's a demand. But you have growth data that remains fairly robust and guidance from corporate America that suggests a lot of optimism. So you have kind of 2 ways that can resolve. One way is that the growth data starts to catch down to the labor market data, and the labor market data is the signal. The other scenario is that the labor market data is about to stabilize. The Fed is going to cut rates. Easy financial conditions are already there in the background. And in 3 to 6 months, are you looking at companies that actually want to restart their hiring plans, continue their CapEx, and we could be looking at a Fed that doesn't need to cut rates anymore and an economy that is operating above trend. So right now we're sub-trend. I feel pretty comfortable with where we are now and the carry and credit we have in our portfolios, but there's still a lot of uncertainty about which way the economy breaks in the next 6 to 12 months.
What's the market pricing? Which way does the market believe that this economy is going to break?
I think the market is pricing that the economy is going to break more towards continued expansion and companies that after a period of pause start to reinvigorate their activities and start and that labor market weakness that we're seeing is temporary. And the way that I see that is I like to look at what the market is priced in terms of the Fed. And I think the way to look at it is you look at the median and you also look at the most hawkish and the most dovish. Right now, for the next 6 to 12 months, the market is priced somewhere between the median dot and the most dovish dot. So still reflecting the fact that the balance of risk for the Fed is more likely that they cut faster than they don't cut at all. But then, if you look at the longer-term trajectory for the Fed funds rate, it kind of looks like, well, we sometimes call it the Nike swoosh, because the policy path starts to turn up. And if you look at what the market is pricing for the long term, the market is actually slightly above the most hawkish
expectation for the Fed funds rate in the long term. And that reflects some of that longer term optimism around growth prospects that has kept yields structurally higher in this environment.
So what you're saying is actually really interesting. The idea that long-term rates potentially could go higher in a reacceleration trend. What you're saying suggests maybe that's not the case. Maybe that long-end rates right now, as they are, even with yield curve flattening, are already pricing in that reacceleration. And actually, if you get some sort of real deceleration in the labor market, you get a bigger rally. Is that what you're basically leveraged to?
Yeah, I mean, I think that speaks to the asymmetry in the value and owning duration. So I would say that the path that the market is priced for the Fed in the short term is, priced fairly to the trailing data. But where we still see that there is valuation opportunities is in those long-dated forwards where they are very elevated. They are pricing in a lot of optimism. And then on the other hand, a lot of people have been concerned about the structural supply-demand dynamics in the Treasury market. Are there going to be foreign buyers coming in? So far, we've seen that the demand for fixed income is there. The other concern has been around the mix of Treasury supply, and that's not even just a trend in the U.S. The long end has had question marks around it across most developed government bond markets. And what we're seeing there is signs that debt management offices and the Treasury in the U.S. are actually probably going to be more active in terms of shifting their issuance to where the demand is, which we see still in the 5 to 10 year belly of the curve.
Kelsey, can you give us some more detail on that? What has the Treasury been doing more recently that's enabled this market to reject the supply fears? What have they changed?
Well, they haven't actually changed anything. It's about market sentiment around those things. So one is that you've seen very strong auctions generally. There's been a few exceptions. There was a pretty poor TIPS auction last week, but generally the nominal auctions for the long end have gone very well. The other thing that has shifted in terms of perception is now we have the roadmap for fiscal. We have the one big beautiful bill. We kind of know what we're going to be collecting in terms of tariffs on an annualized run rate. And we can kind of feel at least more comfortable. The deficit trajectory isn't great, but at least, we know where it's headed. And then, while the Treasury hasn't done anything dramatic, they are doing buybacks on the long end. And we do think that over time, they will be able to keep the long end supply stable, if not maybe shrink it as a share of issuance. And you'll see the bill issuance as a share is going to actually be able to rise a little bit.
That together with $350 billion of tariff revenue, and I think we're doing okay, right?
Well, that's the key, right? So if Henrietta Trace is right and they roll that back, does that potential? Yes, but yes, a lot of people are saying, look, this isn't actually that much of a risk, so maybe we were overstating it earlier this year.
We're still waiting on a court decision on whether or not IEEPA is legal or not. I think a lot of people come to the conclusion that they will enact the tariffs in another way, but that'll be a huge hurdle for this administration.
It's so funny how much this year's changed. April 2nd, bond negative. Overwhelmingly, in the week after that, it was bond negative. And here we are at the end of 25, or at least approaching the end of 25, talking about how bond positive the tariff revenue is.
Yeah, my takeaway so far from the year, ignore everything. Just buy stocks. I mean, that's essentially what people in the market have been doing.
Kelsey, it's good to see you. Thanks for dropping by. Kelsey Berra there of JP Morgan Asset Management. Stocks a little bit lower this morning, down by about 1/3 of 1%. Up next, we'll catch up with Venu Krishna of Barclays, Inga Group CEO Jesper Brodin, and we'll speak to Jens Nordvig of Exante Data.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
There's no sign of that mass liquidation that people were talking about in the second quarter.
There is this hopefulness in equity markets that we are going to get through all the risks.
There is a huge amount of good news that's been priced in.
Small cap has had a few head fakes. We're finally seeing that all-time high.
We've actually seen a broadening of the S&P rally.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. You're opening bell about 90 minutes away with equities pulling back by just 1/3% on the S&P. Coming into Monday, at record highs on the S&P and on the Nasdaq too. The Nasdaq 100 down by 1/3%. In the bond market, the scores look like this across the yield curve. 2s, 10s and 30s pretty much unchanged. Yields down at the front end of the curve by a basis point, 356.51. Some data to look out for. Look out for the PMIs. We're looking for signs of a re-acceleration in this economy going into September, but also look out for the Fed speak. Chairman Powell, a few days away.
Yeah, tomorrow Fed Chair Jay Powell is going to be speaking, but everyone's going to be speaking this week. So if you're worried about Fed Chair Jay Powell and his relevancy, well, you've got Stephen Myron later today. And if you're worried about him maybe not going to be there early next year, well, John Williams is speaking today as well as almost everybody else. So here's the question. How much will this matter? How much will people be looking at all of the Fed speak to understand just how dovish they are willing to be, just how much they are willing to look through any kind of inflation?
Already this week, aren't more people interested in what Steve Myron has to say this afternoon than what Jay Powell has to say from Rhode Island tomorrow? He said last week he would offer a detailed rationale for his view at the meeting at last week for the FOMC. Well, we're going to get that detailed rationale today, and this is someone who is the future of the Fed, whether it's him or not. It's that thinking that's the future of the Fed rather than Jay Powell, who's up in May.
How persuasive is that thinking for the rest of the committee for 2026 and beyond? We've all got to continue to ask that question. How credible is that thinking with financial markets? How persuasive is it on the committee?
Fed Chair Jay Powell said not very. That's essentially what he said in the press conference. He said, ultimately, this is a committee, and if a member disagrees and dissents, they have to convince everybody else, and ultimately, that is going to either sway the committee or not. That said, how much has this market already moved on and priced in that this is going to be a Fed that's going to look through any inflation because Stephen Myron is more of the mainstream rather than the outlier? And that, I think, is going to be an increasing question, especially as people start to get worried about bubblicious types of trends.
Yeah, look, Chairman Powell's talking about two-sided risk. There is no risk-free path, and the market's focused on one risk, upside risk, and we've seen that in note after note, just this morning alone.
Yeah, up, and up. And the idea of upgrading further. A question of what could potentially stymie this. And yes, people are going to say you're a negative Nelly because you're coming out record high, and you say, this makes me nervous. But at a certain point, it has to start making people nervous when you wonder how much in valuations have gotten ahead of themselves given how predicated it is on this type of response function from the Federal Reserve.
Equity futures this morning down by just 0.3%. If you're just joining us, coming into a new trading week once again at all-time highs. Coming up this hour, we'll speak to Vinu Krishna of Barclays as stocks trade near record highs, the CEO of Inca Group, Jesper Brodin, as consumers are remaining resilient, and Jens Nordvig of Exante Data as investors await a fresh round of Fed speak this week. We begin this hour with stocks steady to kick off the trading week. Vinu Krishna of Barclays writing, we've increased our year-end 26 price target to 7K from 6,700. We expect US tech valuations to continue reflecting constructive investor views. Vinu joins us now for more. Vinu, good morning. It's good to see you, sir.
Good morning, John.
So an upgrade to the outlook. Let's start there. What's underpinning that view at the moment for you and the team?
A couple of things. First, the first half has been much stronger than what we expected from an earnings standpoint. Two, if you dig in and see what's driving that, it's tech and financials, which is over 50% weight of the market. And the revisions for that actually are improving. And now we're on the cusp of rate cuts, which incrementally are, of course, positive for the market, right? So I think when you put, and then don't forget that global growth, if anything, is stabilizing. And US will exit this year, economic growth, by our economists' estimates, closer to around 1.8%, 1.9% range, which is pretty healthy. So I think while there's a lot of talk about, valuations being extended, which I don't necessarily agree with, but right now, if you see what is holding the market, it's three things. One is the AI narrative is still very much intact. Two, we are in the cusp of, Fed cuts. 2, 3, let's see what happens. And 3, we are entering a period of strong seasonality. Now, that's more of a technical sort of phenomenon. But that said, we do believe that all that is priced in, and I have a hard time seeing how the market can keep grinding higher. But then if you look past this year into next year, we do see earnings improving 10%, and we do see, the market going in the range of 7,000 to 7,800. That's an upside and base case rate.
Let's break it down.
Yeah.
Earnings and valuations.
Yeah.
Just want to sit on valuations just for a moment. You said I disagree, they're extended.
Yeah.
So tell me the source of that disagreement.
Yeah, so I think the tendency is to look at the aggregate multiple, which by historical standards looks high. One is, we've done work and it shows that over the last 15 years, there's a structural increase in multiples for S&P, and this is primarily a function of the domination of tech, which has been faster growing, higher quality earnings, better margins, and higher multiples. So that's one. But the other thing we do is you got to unpack the market, and we take a sum of the parts approach. In other words, we look at big tech, rest of tech, and rest of S&P. So if you look at big tech, it's trading right now at about 29 times, right? Looks high, fine, it is true. But it started the year at 31 times. They posted earnings of about 28%. They increased their their net margins by over 200 basis points. They beat numbers by 11 to 12 percentage points. That's one. Rest of tech is trading around 28 times. Now, that's a tad high for rest of tech, but if you remove some extreme names like your Palantir, those sort of highly valued names, it's more reasonable. And in fact, the software part of it has got sold off because of a lot of concern about AI disrupting the business model. So we, in fact, think there's an opportunity there. And then last portion, the rest of S&P, which is called broadly 60% of the market, we really see it as a function. We have a good model for that, which is a function of where rates are, where inflation is heading, economic growth. Based on that, it's trading around 20 times. That's fair value. Remember, just a few months ago, the 10-year was at 4.5%. Now we're struggling to hover around the 4% range. So I think that's the reality. So in other words, I'm not suggesting it's cheap, but I'm saying it's not a rich market. It's a fully valued market.
How predicated is this call on further rate cuts by the Federal Reserve, on the idea that yields have peaked and are headed downward?
It's not predicated on that, but it's supported by that, right? Because earnings are also improving. So we do see earnings actually improving next year. Not a lot from this year, but call it around 10-ish%. But where the 10-year absolutely happens, that fair value I talked about, that definitely gets impacted by the way the 10-year is. You're always concerned about the correlation of rates and equities. And I think what we have found is that we get worried when the 10s breach 4.5% and start heading towards 5%, but there's a very distinct negative correlation we've observed over a very long period of time. On the flip side, when rates are already low, then you're concerned because of the destabilizing impact of deflation. Right now, we're in a sweet spot where we have some amount of inflation, which is not necessarily bad, which actually strengthens the ability to do some pricing on the pricing power front. We have economic growth, which is moderating compared to 23 and 24, but still relatively robust. And you have corporate earnings which are very strong. And most importantly, what has happened is the tariff effect, which even we estimated, has proved to be a little less worse than what we thought. It probably got pushed out a little bit, but companies are figuring out, and most importantly, based on the transcript work we have done, it appears that in their guidance, they are already taking into consideration the mitigation steps. And so the guidance is relatively safe at this point.
This is so much optimism, I can't even stand it. I will just take one issue. This idea of seasonality. Yeah. Everyone said that September was a bad season. It's always a bad month. Well, we're up more than 3%, and it's poised to be the best September going back to 2010. Has seasonality broken?
Well, in the recent years, it has. Even last year was the same story. August and September was pretty good. Historically, it's bad. But I would argue that why just seasonality now? Everything is long-term relationships have broken quite significantly post-COVID. You have a negative yield curve for a long time, inverted curve. Did we have a recession? No. We had PMIs in the negative territory. Did we have industrial recession? No. Did earnings collapse for industrials? No, right? But it doesn't mean they're not risks. So a lot of relationships which we thought existed are simply not true, right? And it doesn't mean that you shouldn't worry. It just means that, if you say this time is different, you got to take it in blocks and see, what next. And so right now, at least for the next 12 to 18 months, we don't see significant catalysts for destabilizing where we are right now.
So do you find policies like H-1B visas, the tariffs, they're still being legislated in courts when it comes to IEEPA? Do you find DC policy supportive, or are they headwinds next year?
No, I mean, one of the biggest concerns this year has been the level of policy uncertainty. But what is amazing is that the market has learned to look past it and to see, the extent of rhetoric, how long it lasts and goes on. I mean, you saw even the H-1B thing. We had data shifting over the weekend, right? First, the news was more draconian, and then they came back and clarified that it's one time and it's not for renewals and things like that. So I think policy uncertainty is something we have to learn to live with. What we have to watch out for, where it oversteps acceptable boundaries of the market, right? And so that's where I would actually watch the rates market more for that, to see if and when the discomfort is there. I mean, to talk about deficits is the biggest concern right now, right? And what is your 10-year doing? It's down. It's not up, right? So term premium has actually come down. So I think you start looking at those things and say that to what extent is the magnitude of policy uncertainty going to hurt the market? And so far, I think it's a risk, but it's not an overwhelming risk thus far.
Vinu, what's amazing is what you said about earnings for next year, EPS revisions. It's been a huge focus of this program for quite a while now, that we've had this step down in payrolls growth, massive step down in payrolls growth. And maybe it's been building for a whole lot longer than people realized. And yet you're still seeing this step up in earnings revisions, which makes me wonder just how relevant this is, which is an uncomfortable conversation for anyone following this right now, sitting at home saying, well, it's relevant to me, it's relevant to everyone. Everyone needs a job. But at the moment we're seeing that tension just grow, get bigger and bigger. How relevant is the payrolls number to the broader market and to earnings.
It is relevant. And that's why talking about, this market is highly bifurcated. That's why I said if you look at where the earnings strength came from, it came from just two sectors, tech and financials. And that's where the divisions have been. If you looked at the rest of the 8 or 9 sectors, 90% of them had negative operating leverage, in which their cost growth was faster than the sales growth. So we should not lull ourselves into thinking that everything is hunky-dory across markets. It's not, right? And that's where we're paying attention. That's why even in our outlook, when I take the sum of the parts approach, we're a lot more bullish on the tech front, and we are very positive on financials. But compared to consensus in the street, we're a lot lower on the rest of the economy. So, how does the rest of the economy get impacted by all this is important. And to your point about the labor market being, your tech companies are laying off people by the thousands, but their net margins have improved by 200 basis points. And their earnings are off the charts. And on a PEG ratio basis, when you say things are rich, it's kind of 1. And the range is 1 to 1.6. So what are we talking about?
Do you think the tech sector can continue just to trade on an island? It can just be its own beast, this big secular theme that's detached from the cyclical story? Or do you think when they do finally face a cyclical test, people might be surprised by just how resilient they might not be?
Well, they will face a cyclical test. It's not happening in the next 18 months, and we're doing more work. Look out for that.
Sure.
We're doing some excellent work on that. But the interesting thing is the tech's impact now is spreading across a wider cross-section of the economy. So, for example, when you talk about even big tech and all the CapEx spending, it is not just the big hyperscalers right now. It's gone into utilities. It's gone into component manufacturers. It's gone to industrials. So it's spread. So to the extent that tech is negatively impacted in terms of the scale of the business, it'll percolate to some extent. So yeah, it's a mixed bag, but look out. I think probably we should come back and talk again.
Well, I'll look out for your research piece. Before you go, we really wanted to squeeze in your view on small caps.
Yeah.
We've had this massive rally. You've talked about the lack of broadening out for earnings revisions. Small caps have rallied almost exclusively on a re-rating of the rate cycle, the rate cuts, a repricing of that over the last, let's say, 2 months, since early August when we first had that really weak July payrolls report. Are you seeing anything beyond the rate cut story to justify the rally we've had over the last 7 consecutive weeks?
For the first time, we are. And let me paraphrase that we've been negative on small caps for the longest period of time, right? And it's not worked for the last 2 decades. I still am very skeptical. I think it's more of a rental trade or a tactical trade rather than a long-term strategic trade. The reason I say that is, yes, rate cuts have been one of the huge booster for them. But if you start looking at the SML, which is the more profitable portion, 400-odd companies from the Russell universe, we were surprised to see that they actually had some modest sales decline, but managed to post pretty solid earnings on top of that. And their revisions have improved, and actually, their revisions have gotten slightly better than the S&P outside of tech, that portion. So I think there is some fundamental strength, which is going consistent with the recent rally. I just worry how long it's going to last, especially for things like tariffs, which have not fully shown yet. I think it's going to percolate over the next few quarters. Business-wise, there's less flexibility. The other thing is, with the 10-year coming down and front-end rates coming down with a lot of floating rate debt, they do benefit in the short term.
Vinu, it's good to see you.
Thank you.
Thank you, sir. Appreciate your time. Vinu Krishna there of Barclays on a better outlook for 2026, and maybe small caps, certain parts of small caps can do okay. If you're just joining us, welcome to the program. Coming into Monday, close to all-time highs and just pulling back a touch by 0.25% on the S&P 500 to 1/3 of 1% through most of this morning. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Oracle is announcing big changes to its leadership. Clay McGurk and Mike Cecilia have been named as co-CEOs, replacing Safra Katz, who had been in the role since 2019. McGurk previously served as president of the company's cloud infrastructure, and Cecilia was the president of Oracle Industries. In a statement, Oracle chair Larry Ellison said the men are both proven leaders. New rules are now in effect for those seeking high-skilled U.S. visas. On Friday, the Trump administration imposed a new $100,000 application fee for the widely used H-1B program. The new rules are expected to have a significant impact on Indian nationals who account for more than 70% of all H-1B visas. Airports in Berlin, London and Brussels face continued delays after a cyber attack on a key airline check-in system. The outage stemmed from a cyber incident at Collins Aerospace. Passengers at several airports had to be processed manually. Brussels Airport asked carriers to cancel some scheduled departures. And that is your Bloomberg Brief. John.
Bonnie, thank you. Appreciate it. Up next, the morning calls as we count you down to the opening bell. 1 hour and 13 minutes away. Equities just a little bit softer. Live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The opening bell 1 hour and 10 minutes away. Equity futures a little bit softer here. We're down by 1/3 of 1% on the S&P 500. That's the price action. Let's get you some morning calls. First up, Dan Ives of Wedbush raising his price target on Apple to 310, seeing early signs of strong demand for the iPhone 17. That stock is up by 0.6%. Your second call from Piper Sandler raising its price target on Tesla to 500, saying the company is its top idea for investing on autonomous vehicles. And finally, Citi raising its price target on GM to 75, citing the company's leverage to positive trade agreements. That stock just about unchanged so far this morning. Let's stick with trade. The furniture industry facing global headwinds, yet consumers are remaining resilient. Jesper Brodin is the CEO of Inca Group, the largest IKEA franchisee operating most of the brand stores. Jesper joins us now for more. Jesper, welcome to New York. It's good to see you.
Wonderful to be here.
How are things going? Because we heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
Well, to be honest, when it comes to our customer and clientele, these are people with thin wallets out there, the many people, and normally tough times is when more people come our way. At the same time, people have less money. We see this for a year at least globally. So many things going on. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on. So business is okay. It's growing. We're growing customers and sales of pieces, but it's not easy.
Well, people want the $149 bunk bed for their kids, which they can then disassemble when the kids hate each other. I'm just wondering, from your perspective, how hard it is to pass along the extra costs that are getting incurred currently from different tariffs, different regulatory regimes, et cetera. Are you able to pass that along in a way where consumers are okay with it?
I see your point. To be honest, the last 8 years, as I've been CEO, has been chaotic from a cost and inflationary point of view. Nothing compares to the impact of the inflation, to be honest, where we have like the most incredible unbalances in trade and prices. We had to, for a certain while, actually recover some of the inflationary damage that we had. Since then, we in IKEA have actually been able to lower our prices and compensate back to an inflation-adjusted level. And last year, we did a record investment in lowering prices with $2.2 billion. So we actually, the strategy of IKEA has always been about bundle volume, make sure we make things better, take out waste, which is also, I think, one of the reasons I'm here, being here for the Climate Week, but actually lowering the prices.
When you say invest $2.2 billion, does that mean take it on the margin?
So actually, when we say invest, you're right, actually, people wonder what we mean. So for us, we're actually here to serve people within Waitlist. So investing in lower prices means we grow our business and make more people able to actually access IKEA. So actually, we've always been about low margins and reaching more people.
You're here during the UN General Assembly Week. How have tariffs, geopolitical tensions, how has that changed the landscape for where you actually source the material?
So companies like IKEA, I think, well, it's interesting because it used to be, when I grew up in business, it used to be so that companies were fast and governments were slow. This is no longer a reality.
So
when IKEA, basically, when we build our strategies, we are too large to adapt over a few months or to new situations. So we are slow builders. When it comes to the US, our strategy is actually to go denser in US. A decision was taken about 3-4 years ago to invest heavily into. We're actually investing over $2 billion in US since 2023. And the reason is that we need to be in more places. We need to be closer to customers. And we need to build production in this country in order to actually leverage our business model. That is over a 10-year period. So it's difficult for us to adjust our strategies short term.
Being here earlier than we see some of the waves of some companies, have you been able to blunt some of the tariff impact?
So we are actually always striving to lower our prices in IKEA. When we look at the tariffs, is obviously one of the factors right now that is impacting our business in this market, but also in other markets. But it's not the only one that we are addressing at the moment. The most, I would say, challenging but also interesting dimension of our value chain is actually climate. So when you look at IKEA's work to actually adapt to the Paris Agreement and make sure we deliver, the interesting thing, which I find still, I think, a bit lost in the dialogue when it comes to rooms like we are sitting here and in other places, is that climate smart means that you take out cost from your value chain. So IKEA is today actually lowering our prices and improving our P&L by being climate smart.
Anne-Marie had one final question. As soon as you walked into the room, what was your question?
How are the meatballs?
And you're lowering the cost of meatballs, so I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We're actually running today about 40% of our sales is actually veggie balls and plant balls. And personally, I don't love the veggie balls, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty. Yes, we appreciate your time.
Thank you so much.
Thanks for being here. Thank you, sir. It's great to catch up with you. Yes, abroad in there, the Inca Group CEO.
I gotta say, plant balls don't have the same ring as meatballs. I'm just saying, I mean, would you, if I said to my kids, I'm making spaghetti and plant balls.
That's not going to work.
That wouldn't
work with me either.
Yeah, I mean, just, you know, I'm just wondering.
We've got a little bit left, 10 seconds. You want to squeeze something in or you're done? Okay, you're done. All right. Jens Nordvik of Exante Data joins us next, live from New York City. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The opening bow is about 60 minutes away. Equity futures going into the cash open on the first trading day of a brand new trading week. Slightly negative. We're down by a third of 1% across the board here on the S&P. Likewise on the Nasdaq 100. The Russell a little bit softer by 0.2%. As we count you down to that opening bow, let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John, some breaking news from Oracle at the top of the hour, changing up their leadership structure amid all that they have going on with AI to TikTok. Two new co-CEOs will be taking over, McGoyrick and Cecilia. One has a cloud infrastructure background, the other one an AI background. So really marrying the two together, it shows you where the concentration and future bets of this company. The prior CEO stepping down is Katz, so shares slightly lower off the back of that, down about 1.1%. Elsewhere, Fox shares to the upside this morning, up by more than 4% after President Trump took to Fox News saying that Lachlan and Rupert Murdoch would have some role in the new TikTok, the new U.S. version of TikTok. So again, shares higher off the back of that. Finally, some deal news this morning. Pfizer, in a $7.3 billion deal, will be buying Metsera. They are the maker of an anti-obesity shot. Key to why this one's attractive, you only need to take it once a month. Most of them you need to take it once weekly. So those shares up 60%. Pfizer, now that it gets to participate in the obesity market rally, those shares up 1.7%, John.
Danny, thank you. Appreciate the update. More from Danny alongside Matt Miller. Bloomberg Open Interest about 30 minutes away. Look out for that as we count you down to the opening bell. A busy week of Fed speak coming up. It kicks off today. Mike McKee joins us now for more. Mike, it might be easier if I ask you who isn't speaking this week.
Yeah, it's kind of that way. It is perhaps a world record. We'll let the Guinness people know. 17 Fed speeches this week. Not about the data, but it's about what the Fed thinks about the data. Everybody rushing to get their opinions on the record, it appears. We kick off today with 4. There were supposed to be 5 today, but John Williams is under the weather, so he is not speaking. But you can see every day. Wednesday, we just get the 1, but Thursday is a really, really busy day, and hopefully John Williams will be feeling better by then. Income and spending, the one indicator that we're going to care about this week. On Friday, we kind of already know what the inflation numbers are going to tell us. The Fed chair told us during the Fed news conference last week, but beyond that, not a lot of data to move the needle. It's really going to be what people think. Everybody's focused on Stephen Myron today, but he did an interview last week, and he doesn't say anything different from what he said in the past and what he said at his confirmation hearing. So while it'll get a lot of attention, it's probably not going to be very meaningful. What I want to point you to is Jay Powell tomorrow, because what he managed to do in getting everybody on board with just a quarter point and having only the 1 dissent at the last meeting tells you, at least for now, he's still in charge.
Mike, how do you approach that speech from Chairman Powell tomorrow? I want to understand from your perspective whether this is a chairman who will continue to try and reflect a consensus on the committee that may or may not exist right now, or whether we'll be able to begin to tease out his personal views on where he's at personally right now.
Well, I think you get a little bit of both. And the hard part is separating out what the rest of the committee thinks from what the chairman thinks, because he does lean towards getting consensus from everybody. So we will listen to see if he talks about divisions at all on the Fed and how there may be some people who are waiting for data, some people who are waiting for other data. But at the moment, I think he's speaking generally for the center. Now, the center is equally divided almost between 2 more cuts and 1 more cut this year. So he may not take a firm position, but that also tells you something.
Michael McKee, enjoyed the update. Mike, thank you, sir. Looking forward to a week full of Fed Speak. Jens Nordvig, the founder and CEO of Exante Data, joins us around the table here in New York. Jens, good morning. Good to see you.
Good morning.
It's been a number of months. It's been too long. So let's recap the year so far. You track flows, and flows at the start of the year, particularly through April and May, became a really, really important story. Some might say dominant for foreign exchange. Can we start there? What did you start to see develop, and how important is that story now compared to then?
I would say we've gone through kind of 3 phases where we came into this year where U.S. exceptionalism was still what equity investors globally were doing. So we have a metric where we say, okay, what's all the capital that's moving cross-border and where is it heading? And in that phase, essentially all of it went to the United States. There was no appetite to buy Chinese equities, European equities, or anything, right? And then in March, it started to change. Policy uncertainty in the U.S. was picking up, fiscal stimulus in Europe and so forth. And we had a period, I would say, from March to June where actually it really flipped. Not that much foreign demand for U.S. equities and much more internationally. And then since then, I think we're more in a gray zone. We're not back to U.S. exceptionalism, but also U.S. equity markets have rallied, and there is some demand coming back. So we certainly still focus on that. It's important, but it's not as dominant as it was in the second quarter, right, where the dollar was going down dramatically, first against Europe, then we had the Taiwan move and so forth. So it's more of a nuanced story now.
A lot of people are saying that they want exposure to the United States equity story, but not the dollar. So it's this FX hedging story that's driven the dollar weaker in a significant way. Can that continue, or is that fully priced? Is that something that has been maybe overstated as a long-term trend?
Yeah, I think it's a very important question, right? Because when we analyze what is happening with hedging, right, we can dig out, one data point that shows something very specific. There's been a lot of focus on what's happening in the ETF space in the last couple of months, but the ETF space is a pretty small part of what's happening with hedging. If you think about a big pension fund that is going to change their dollar allocation, are they going to use ETFs? No, they're going to use FX forwards or options, right? So all the data we look at, I think, has a very consistent message, and that is we had a huge shock. Like what happened in April was just very unusual price action. People got scared, and a lot of big institutions took big action. They changed their allocations, and we can see it from many. We look at it fund by fund, literally what did that pension fund do and so forth, right? And there were material changes around April, May. And then most of the indicators show that there's been a degree of stabilization, right? So when you think about hedging, it's not, oh, now they're starting to hedge and they're going to hedge more and more and more for the next 10 years. It's like, I think it's more of a one-off shift. And then really what we're looking at on a forward-looking basis is just this relative demand. Like, is the relative demand for the U.S. slightly less? It is slightly less, right? Because we had a period where it felt like there was almost no competition for the U.S., like tech story was the only thing people cared about, and now you have financials in Europe, defense stocks around the world, and so forth. There are other narratives that people are buying into, but I think the big hedging shock, we probably had the most of the adjustment already take place, and from here it's about the actual new flow that is coming in that's driving it.
So what's the pain trade here? And this is something that we've talked about with people, that if you see some sort of dollar strengthening, that could be a real pain trade for all the different investment funds that have been hedging the dollar exposure. Do you see that as being a sort of setup and a potential catalyst heading into year end?
I think that's something that we have learned to worry about for a while, but that's also why what has happened this year is really a bit of regime shift, right? Because what happened in April was that you had, equity market weakness, but the dollar did not benefit, right? So the correlations between the traditional periods of pain where you have, risk assets are trading very poorly and the dollar does well. That is less so, right? So I think the pain is probably come in a different way, but I think what's really important here is what's happening with the long end of the bond market. In April, you had equities down, long end bonds down, right, and the dollar down together, right? If the U.S. bond market is trading more stable, that's part of the equation that's different from Q2.
So is that like the litmus test of geopolitical issues that individuals are willing to dump U.S. assets across the board for?
That's what we saw for a couple of weeks in April, right? And now I think you're seeing that the bond market is trading better, as we heard from your previous guest, right? Like the equity guys are looking at what the 10-year is doing, and the 10-year has been doing all right. And I think even in the last couple of weeks where we've had a lot of focus on central bank independence, we've not really seen the long end trade disastrously badly, right? We had a couple of days where the Cook news was very much in the headlines, and we had a couple of basis points here and there, but it was not a big trend, right? So there's some resilience in the bond market that I think is a part of the picture, and that removes some of the extreme tail risk for the dollar. Doesn't mean that the dollar is going to be on a bull run, but it removes some tail risk.
At least potentially at the very long end, the leakage, the softness we've seen in the summer wasn't a US story. It was arguably coming from elsewhere, Europe, the UK, France. And I want to finish on Asia, Japan. Japan for a long, long time was the anchor around the global bond market. And when I say a long time, I mean decades, our careers. And I want to understand how the changes there are going to change things elsewhere. The foreign exchange, the demand for foreign assets, whether this money is going to be repatriated, go back to Japan. What all those things mean and how we should rethink this asset class.
So I have this discussion all the time with our institutional clients around the world, right? Because you look at what's happening in Japan, the Japanese yield curve is sitting now at a totally different level, right, that we've been used to for decades. Nevertheless, when we track the flows in Japan, we cannot see any evidence that Japanese investors are really repatriating funds back into Japan. It's almost like the opposite. If you look at the equity flows, a lot of regions around the world had a period where they withdrew back into their own market. But in the Japanese, it's almost every single week they're still putting money into the U.S. equity market. So until that changes, I don't think the yen is going to have a significant benefit from what's happening in the JGB market.
It's that great repatriation people are worried about, still waiting for.
Yeah, they're not happening. It's not happening. Although what it is interesting is every private investment fund in the world is going after Japan right now and buying up their assets because they have more faith in their assets than evidently Japanese investors do.
Jens, it's good to see you. Thanks for dropping by. Appreciate your time. Thoughtful stuff, as always. Backed by data. Jens Nordvik there of Exante Data. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John. Thank you. Australia, Canada and the United Kingdom have formally recognised a Palestinian state. This ahead of the UN General Assembly meetings this week. Leaders of the three countries call it a coordinated push for a two-state solution. The move has drawn criticism from President Trump and also from Israeli Prime Minister Benjamin Netanyahu. They argue that it rewards Hamas and threatens Israel's security. New rules are now in effect for those seeking high-skilled U.S. visas. On Friday, the Trump administration imposed a new $100,000 application fee for the widely used H-1B program. The new rules are expected to have a significant impact on Indian nationals, who account for more than 70% of all H-1B visas. T-Mobile is announcing a shake-up in its leadership. CEO Mike Sievert is stepping down from the role and will move to vice chairman. Current COO Srini Gopalan will become the company's next chief executive. The changes are set to go into effect November 1st. Both Sievert and Gopalan will join Bloomberg Tech tomorrow at 11 Eastern. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Bill Campbell of Double Line from New York City. You're watching Bloomberg TV.
have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Just if growth holds up, the Fed cutting into these already easy financial conditions, and then I think also really importantly, the Fed cutting into what looks like a really historic boom in CapEx. These things might not be, 3% GDP type of numbers, but if the cycle can hold up for longer, and it could kind of heat up conditions in our view.
That was Andrew Sheets of Morgan Stanley, bullish on the future. A lot of people are right now, overwhelmingly so. Bullish coming into this trading week. Equity futures pulling back from all-time highs this morning, at least. We're down by 0.3% on the S&P. On the Nasdaq, we're down by about a quarter. That's the equity setup going into the opening bell about 44 minutes away. As we count you down, here's the trading diary. Happening today, a White House press briefing later on this afternoon, plus a slew of Fed speak, including Barkin and Myron. On Tuesday, PMI data, followed by comments from Fed Chair Jay Powell and President Donald Trump speaking at the UN General Assembly. On Thursday, another round of jobless claims, plus results from Costco. Finally, looking ahead to Friday, PCE data. In between, look out for the PMIs too. Talked about that a few times. It's an early reading on September. Are we starting to see a pickup, Ramo, in economic activity?
And this is something that we've heard about from a number of CEOs, that they actually saw the weakness earlier this year, and now they're seeing a reacceleration. Is that confined to the services? Is that confined to manufacturing? I think the PMIs is going to be really important.
For the US dollar and for global fixed income, let's look at that right now. Bill Campbell of Double Line writing the following. The Fed meeting sets up more curve steepening and a weaker US dollar. Interest rates will continue to be cut with inflation under control. Bill joins us now for more. Bill, welcome to the program, sir. Let's talk about that curve steepening. So the front end story is dominated by interest rates and what the Fed does. Want your view on what's driving the long end right now, and whether you and the team believe that the fiscal concerns will return?
Oh, absolutely. I don't think the fiscal concerns have gone anywhere. I think the fiscal concerns are both U.S. focused and international focused. Let's start in the U.S. We're watching for a continuing resolution to pass, but the Senate is going to need 7 Democrat votes to pass just a short-term funding resolution, and we're already seeing difficulties getting that passed. When we look, at the outlook, for the fiscal trajectory for the U.S., yes, we're going to have decent growth and hopefully, pick up further in revenues due to higher growth and tariffs. But next year's an election year, and spending, in our opinion, is likely to remain elevated. I don't think we can discount the international aspect either. We're seeing large fiscal deficits across the developed markets, from Europe, in the UK and France, to Japan, who's going into a leadership election where the candidates are focused on additional fiscal spending. One item that, well, several items caught my eye, but one item that caught my eye last week was in the UK's, the Bank of England's decision to keep interest rates on hold. They made an adjustment to their balance sheet policy. They decided that they needed to slow the pace of quantitative tightening, and they're going to be adjusting their sales of longer-term assets more to shorter-term assets due to the pressures on the long end of the curve. I think those fiscal pressures across developed markets can bleed through back to the U.S., but are going to be with us across the developed markets well into next year, leading to further steepening of the curve.
Bill, there's so much to unpack there. I just want to start with what's happened over the past few weeks, which has actually been flattening. How do you understand that, given the backdrop that you just laid out?
Absolutely. I think the flattening that we've seen is a bit of a buy the rumor, sell the news on the back of the Fed. Going into the Fed meeting, there was a lot of front running, trying to think. I think a lot of investors were trying to position on how quickly the rate cutting path would come, given the downgrade in the labor market. Jay Powell, although giving us the cut, still seems to be more finely balanced. And I was actually surprised that the only dissent for an additional cut was Steve Myron. I was looking to see what Waller and Bowman were going to do, and it does not look like they dissented for a cut this time around. So I think on the back of that, the shorter term, faster trading segment of the market took some profits on the steepener. We also excuse me, went through, a couple of key levels. So I think that dragged CTAs, into reducing steepener positions just a little bit. But I think as investors, what we need to do is separate out what is the medium-term trend from the short-term cyclical trading trend. If you just look very microscopically in the past couple of days, we've started to see the creeping come back into the back end of the curve, especially on the 2s, 30s, where I believe it got down to a low of 114, and now we're back up to about 117. I think that this is probably an interesting place to enter back into steepeners, as it's my opinion that fiscal concerns are going to come back to the top of the headlines, not only with the U.S. continuing resolution, but let's look at what happened in France. We are seeing protests, extremely large protests all around the expectation of their future budget that needs to be passed in a draft format in the next week or two.
Yeah.
I think there's lessons to be learned when we look at the international markets. One of the biggest ones is this rising social unrest or rising social tensions around less fiscal space. And I believe that's going to be with developed market economies over the next, at least through 2026, if not longer. So I think we're setting up for longer term steepening of the yield curve because, one, we're going to have central banks trying to ease where they can. The Fed will be leading the way in this. But then the longer end is going to face not only fiscal pressures, but as central banks cut, trying to keep interest expense under control, that's also going to raise questions. One, about inflation expectations. What is the uncertainty around those? I think that's got to come with an increased term premium. And then we're going to have the questions about Fed credibility and Fed independence as the board, the mix of the board and potentially new members to the Fed are put in place next year.
Yeah, but Bill, some people would argue all of this does sound scary, and it sounds like it's been percolating for a while, and this was the argument earlier this year when you saw a sell-off in the long end of the yield curve. But there's more than $7 trillion in money market migrate into other assets that can provide that same kind of income. Why is that wall of cash not enough of an argument to really dampen some of the steepening argument?
Well, I think the wall of cash is likely to go more into where we're focusing on, in the belly or front end of the curve, into credit markets and into international markets as well. There are other places besides the long end of the yield curve to put your money. And when we look at what happened post-Liberation Day with the correlations between equities and risk assets and the long end of the curve, I think that is something that a lot of institutions and institutional investors have taken note of. So I think that the fact that the Fed is continuing to lower interest rates, we're probably extending the path of a continued, let's call it positive economic outlook with, a backdrop that is probably good for risk. And that, I think, in my opinion, should support the trade for emerging market local currencies and local bonds. I think when we look at DoubleLine across all of the different sectors, we notice that valuations are tight pretty much everywhere except for that area of the market. And we're finding tremendous opportunities to pick up yield and to participate in uncorrelated returns by allocating to the larger, higher real yielding emerging market local currencies and local bonds.
Bill, you're giving us tons to talk about. Let's do it again soon. Bill Campbell there of DoubleLine talked a little bit about some of the DM concerns in the debt market. Let's talk about the EM concerns in the debt market. These headlines just crossing from the Treasury Secretary, Scott Bessent, on Argentina.
Yeah, the Treasury Secretary coming out and basically saying all tools are in the toolbox. They will come out and use them. They're going to be meeting Milei tomorrow. He's going to be alongside the president. And this is really the key quote here when it comes to what they potentially could do with the stabilization fund. They include, not limited to, swap lines, direct currency purchases, purchase of U.S. dollar-denominated government debt from the Treasury's Exchange Stabilization Fund. And this grows on something that the Treasury Secretary spoke with Argentina's Milei in April when I was there, and it looks like potentially they're going to have to come to the rescue once again.
Yeah, because once again, Argentina is having a fiscal crisis, and as a result of Milei actually losing a number of elections, so it raises questions about his ability to keep going with some of the initiatives. Argentina is like the perpetual story. I mean, if you want an argument not to invest in an emerging market, I mean, Argentina is basically case study number one.
But I'm pleased you framed things in the way you did. They're not because of his policies. It's because of the very threat that we might not have them anymore.
Correct.
And that someone else might win these elections.
Right, and that could undermine the credibility. I mean, it just shows how unstable things are in that region.
Without a doubt. We'll have more on that region tomorrow ahead of that meeting. Coming up tomorrow, Keith Lerner of Truist, Kristen Bidley of Citi, Liz Ann Saunders of Charles Schwab, and Stephen Stanley of Santander. From New York City this morning, good morning to you all. Have a wonderful trading week. This was Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
In
case you missed it on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
All right, futures off a little bit to kick off the week. 30 minutes until the start of trading. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, visa chaos. President Trump moves to curtail H-1B visas. It sends tech companies and their employees scrambling.
A C-suite shakeup. Oracle appoints 2 insiders to be co-CEOs as a TikTok deal nears.
And Pfizer is finally entering the obesity drug race on this M&A Monday. It's scooping up the startup Metsera for about $5 billion.
It's finally there, Matt, and the shares of Metsera are surging on that deal. Let's take a look at it because it is up a whopping 62%. As you said, this is a startup. It's developing a weight loss shot. It would be taken less often. I think it's once monthly instead of the market-leading drugs from Eli Lilly and Novo Nordisk, where you need to take once weekly. So a coup from Pfizer to be able to get it part of this.
Yeah, very interesting story. We're going to continue to follow that, as well as the Oracle story. It's going to provide security for a new version of TikTok's algorithm to keep the social platform in the U.S. But the company also announced the promotion of Clay Magoric and Mike Sicilia as co-CEOs while naming outgoing CEO Safra Catz as vice chair. So a C-suite shakeup at Oracle. The shares in the pre-market down 0.8%. Danny?
Which is nothing for them considering how much they have gained in recent weeks. Matt, we begin with our top story, though. President Trump slapping a hefty fee on H-1B applications. It's a move that threatens to upend the recruiting model used by outsourcing giants. Investor Kathy Wood weighed in earlier on Bloomberg.
So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room because there's a lot of really good fundamental activity happening in the United States. I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1 visa program.
Joining us now is Bloomberg senior editor Mike Shepard. Mike, after this announcement, what kind of confusion was there among the biggest, specifically tech companies that require the H-1B visa program to really get their lion's share of workers?
Well, Danny, it was really a weekend of chaos. The announcement on Friday, not long after our scoop, that this new $100,000 fee on the H-1B visa would be coming really rattled them. And there were some reports that Microsoft had even told workers not to travel, to refrain from leaving the country if they had any plans to do so, out of fear that maybe this would complicate their ability to either renew or their permits to stay here and work here, or somehow complicate reapplication. The U.S. later followed up to say, no, this only applies to new visas, but it gives you an indication of what they're up against. And U.S. tech companies, including Microsoft, Meta, Amazon, Google, and Apple, all lean heavily on the H-1B program to bring talent in from abroad. And a lot of it, of course, comes from India. And separately, we are having the U.S. with a very intense trade negotiation lately with India over not only its tariffs, but the heavy tariffs that the U.S. is imposing on products from India, and this is over India's purchases of Russian oil. So there's a lot wrapped up in it, and the tech companies are trying to digest how
Mike, look at this chart.
What is going to happen next.
I mean, I don't think many Americans knew that the vast majority of these visas were going to people out of India, right? 72%. And the other thing that we haven't really been talking about much is that a massive amount of these H-1B visas are gotten through what the federal government calls fraud. You could call it cheating. Bloomberg's Eric Fan and Zach Miter wrote a great story on it last summer. And that half of these visas are going to outsourcing firms. So yeah, maybe they're getting to Amazon, maybe they're getting to Meta, but they're going through IT staffing firms or outsourcing firms. And presidents and the Congress have been trying to deal with this cheating issue and figure out how to deal with this visa issue since the 90s. Is this maybe President Trump's way of dealing with it?
Well, they are certainly casting abuse as part of the justification for making these changes. And we've reported on these abuses last year, Matt, or this year in March, 470,000 applications for 85,000 slots, and that's a lot. But a number of the applications were submitted multiple times, our reporting has found. You cited the great work by our colleagues, Eric and Zach, and it really does point to how this program has been really fraught with issues. And there is the question of, are they going to all the right people? Are they going to people who maybe can help in other sectors? There's a lot of demand for this. Are they getting the people that they need, for instance, for the next generation of investment in the U.S.? And one thing, and this is something that Kathy Wood just alluded to, the idea that maybe they need to bring in workers for different high-tech jobs, and that would include expanding in the semiconductor manufacturing sector, for instance. Where would they stand in line, Matt, when it comes to trying to get access to those visas? Is India the right source for that? Would they rather get more people and maybe a different distribution geographically, say more from Taiwan and other locations? So this is something that the administration is going to be looking at, and they may be looking at other means outside the H-1B visa program to keep that talent pipeline full, Matt.
Right. I mean, or if it costs $100,000 more to bring these people in, maybe you train up Americans to do that job is probably the idea, at least, that the Trump administration is pushing right now. Mike Shepard in Washington, we're going to hear a lot more from you about this throughout the day, and surely the story will last longer than that. Switching gears to Big Pharma, though, there's another huge story today. Pfizer is finally getting into the obesity drug game. It's going to pay $5 billion for a startup that makes an obesity pill, catching up a little bit to Eli Lilly and Novo Nordisk. It's massively underperformed those two stocks over the past 5 years. We are joined now by Bloomberg health reporter Madison Mueller. And Madison, you've been covering this amazingly for the last year or so as it's been picking up. Did you expect Pfizer to be getting in like this?
Kind of. So Albert Bourla had signaled a couple of months ago that they were eyeing, and Albert Bourla is the CEO of Pfizer, for those that don't know. Pfizer has been eyeing some of the smaller obesity startups in this space to potentially get in and do some type of deal. He had said that they were looking at potentially up to $15 billion, maybe doing a couple of different deals. So this sort of fits into the strategy that they had laid out a couple of months ago. Metsera is one of the newcomers in this obesity race. They have what's called a long-acting amylin drug, which is thought to potentially be a gentler option than drugs like Wegovy and Zepbound, which are known to have high rates of side effects, nausea, stomach discomfort. And so amylin's thought to maybe be a little bit of a better option for some people. However, Metsera is in early stages of development still. So in terms of catching up to Eli Lilly and Novo Nordisk, Pfizer is still probably a couple of years away from actually having a drug on the market.
And maybe we're all taking obesity pills by that point and not even shots. So those shares are higher this morning, but Kenvue, elsewhere in pharma, really getting hit hard. There was that Washington Post report that the Trump administration is planning to link the active ingredient in Tylenol to autism. What exactly would that report look like? What would the impact be on Kenvue?
Yeah, I mean, we're still trying to figure out the details of that. This is something that HHS and the Trump administration has been talking about for a couple months, saying that they are going to know the cause of autism by September. They had since walked that back a little bit and maybe extended the timeline, but we are seeing now it's coming. This report's coming in September, and so they've talked about this a lot. We are still not super clear on what the details will be, whether it will also contain information about vaccines, which is something that HHS has been, and the Health Secretary Robert F. Kennedy Jr. has sort of been talking about the link between the debunked link between vaccines and autism for quite some time. So we're not exactly sure if there will be some more information about potential other causes or if it's just going to be focused on Tylenol. But that announcement is expected to come later today around 4 p.m.
All right, we'll see what that brings. Madison, thank you so much. That is Bloomberg's Madison Moeller. Now, elsewhere, Oracle is taking over the algorithm for TikTok's U.S. business. Also, roughly about an hour ago, the firm announced a CEO change. Bloomberg Tech co-host Caroline Hyde has been all over the Oracle saga. Caroline, it's such an insane time for Oracle, be it for TikTok, be it for the AI infrastructure build out. Why now announce a CEO change?
Well, Safra Katz has been there since, 26 years, working hand in hand with Larry Ellison. She's still going to as a vice chair of the overall business. It's interesting that in our Bloomberg reporting, we once showed that Safra Katz herself had actually been a little bit, questioning, cautious on the AI focus of Oracle more broadly and the infrastructure, the cloud focus. But these two CEOs, co-CEOs coming to the fore are people who know that and have driven that particularly. Like since 2014, we've seen Clay Magoric at the business. He came in from Amazon and he really has been pushing the AI infrastructure side of the equation. He's someone who therefore knows cloud deeply. And this is where the monumental market capitalization increase has gone to Oracle because of their play on serving for cloud, for AI infrastructure, for data center, the compute that is needed for Meta, for Microsoft, for OpenAI, and the more. We're also seeing, though, that the co-CEO that's coming on as well, Mike Cecilia, he's someone who knows AI applications deeply. So this is what they're going to be signaling. We are all in. We are all in on this particular part of the growth story. And these co-CEOs have been there for a while, in fact. I mean, since 2014 that Clay has been there. Many feel that actually he's kind of the guy in waiting who's going to take over from Larry, who still, of course, is the chair, but also the CTO of the business as well as being its co-founder.
I have to ask you about the Fox News story. Well, it's not a Fox News story. Fox chairs are moving on the idea that the Murdochs are going to have something to do with TikTok, right? President Trump calling out Lachlan by name, also saying that Rupert will be involved. So how do they fit into this whole TikTok empire?
The assumptions have been, and the reporting in other outlets has been, that Fox, through its parent company, is likely to be one of those involved in the consortium. There have been names that have been linked and that President Trump spoke of in that Sunday interview that haven't been made public in the White House statements, for example. At the moment, we know the consortium is more around Silver Lake, around Oracle, around Andreessen and Horowitz, but there have been some other names that have been thrown in the loop by the president. But we still really need the details of what on earth this looks like. Initially, we were sat here on Friday saying that maybe we'll have a separate new app that we'll all have to migrate to. Well, me and Danny, I know you're not a big TikTok fan, Matt, but it's interesting that now they're saying, no, actually, Oracle would somehow own the algorithm. They'd lease it from them, and then they'd rebuild it from the ground up, and therefore this would be deemed safe. Then you seem to have a lot of US government participation in all of this and your own data. So it's going to be really interesting how they start to signal that this is A, safe, A, going to be as fun and as great an algorithm as it has been under ByteDance, and what on earth this detail of the deal looks like, because we still don't know how much ByteDance is really going to have. We know that about 6 out of 7 of the board helms are going to be US companies.
It's this feeling that we've learned so much, but still know so little about what this is actually going to look like. Caroline, thank you so much. Bloomberg Tech, Caroline Hyde. A quick check on futures this morning. As Matt pointed out, we are moving lower this morning after Friday hitting the 27th record high, lower by about 1/3% for most of those indexes. Matt, it's a pretty quiet week when it comes to data, but there are so many Fed speakers, 5 alone today, I think 18 events in total this week. So if we get something more hawkish, does that push futures even deeper or stocks even further deeper into the red?
Yeah, I mean, if people start to pay more attention to inflation, Torsten Slok was out this morning saying 72% of the goods in the CPI basket are running above the Fed's target. But I mean, for that to matter, you have to believe that the Fed wants to get to its target, which it doesn't look like they're that bothered
Like Wilson
about.
say, they're going to run it hot. Stocks are about.
They're going to keep running it hot. All right, coming up, Porsche shares drop by the most on record. The company's stock underperforms that of BMW, Mercedes-Benz, Ferrari, obviously, but even Aston Martin. Will explain why next. This is Bloomberg Open Interest.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows, up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hardern in Alberta, Canada, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. Crypto is getting slammed as more than $1.5 billion in bullish bets are wiped out, sparking the biggest wave of liquidations since March. Bitcoin is falling, and digital asset firms like Strategy are retreating. Meanwhile, old school havens like gold are hitting record highs, and precious metal stocks are rising thanks in part to the Fed's rate cut last week. U.S. Treasury Secretary Scott Bessent pledged to provide all options for stabilization to the Argentine President Javier Milei as the South American country faces a market sell-off. Bessent and President Trump will meet with Milei in New York tomorrow at the UN General Assembly, and they said all options are on the table for stabilizing the currency. And T-Mobile is shaking up the corner office. Its COO, Srini Gopalan, will take over as CEO on November 1st, succeeding Mike Sievert after nearly 6 years. Sievert will move to a vice chair role, just like Software Cat, staying on as a strategy advisor. Gopalan is a veteran of Deutsche Telekom and steps in as T-Mobile pushes deeper into fiber and 5G expansion. Sievert and Gopalan will join Bloomberg Technology today at 11. Actually, I'm sorry, we've shortened the name. It's just Bloomberg Tech, not Technology. Porsche is scaling back on its EV dreams, shelving a future electric SUV and pivoting back to gas and hybrid powertrains. The pivot will cause, a $2.1 billion profit hit, and it sent Porsche shares down the most on record. The share price has fallen so low that it's going to be dropped off of the benchmark DAX index, or it's really, apparently, according to JP Barnard, a free float issue that's very complicated. The luxury icon, though, has now cut guidance for the 4th time this year. And as I said earlier, the shares, since they've been trading in Germany, are even underperforming Aston Martin, which is bad.
I know, and I remember when they debuted, Matt, and everyone was so pumped. Like, we were going to get a separate Porsche listing, and to your point, it's disappointed. With that latest disappointment, let's discuss it with Bloomberg's Craig Trudell, who leads our global autos coverage. Craig, I'm sure there was a lot of thought behind this because they have sunk so much into building out their EV business. Why make this change?
I mean, they sort of had their hand forced here, right? Where they had an initial electric vehicle that they brought to market, the Taycan, that in the early goings actually was doing okay, maybe not quite living up to expectations, but I think they came to the realization more and more that as they were bringing these electric vehicles out, the market was not as firm as they thought it might be. There were real concerns about also software issues within the Volkswagen Group that have been an absolute mess and sort of pushed back rollouts. I think all the while you also have just real issues in terms of trade, where this is a brand that is right up there in terms of being affected by tariffs. And not having any U.S. manufacturing presence, and not a sort of clear option to add manufacturing presence, because they don't share any platforms with Volkswagen models that are built here in the U.S. So a lot of sort of inputs here that sort of contribute to them saying, you know what, we need to completely rethink our product portfolio.
We were showing video of the 911, which of course still reigns supreme as like the sports car of choice for those who have money, but the Taycan has been, let's show the electric version. The Taycan has been a huge critical success, and people who actually drive it and charge it, it's a very fast charger, here it is, really love it. It seems like the problem is getting consumers over that hurdle, right? To actually take the plunge. And what Scout has done, which is another Volkswagen brand, Danny and I went down and saw the prototype last week in downtown New York, has been to pivot to offering a small range extender. And now 70% of people who've reserved a Scout have chosen that model. Why doesn't Porsche just do this with like the Taycan and whatever electric SUV they were going to make?
I think we are going to see this brand pivot to hybrids. I think within hybrids, I think we would throw EREV's extended range electric vehicles into that mix. And there is, I think there's got to be a lot of questions internally and externally about, what were they thinking? Should they have gone in this direction from the beginning? I think there was a sort of expectation that and it wasn't necessarily totally unfounded that people with means were going to be more inclined to go electric, given the fact that it still is going to be more expensive than combustion vehicles for some time. There was sort of a thought that we could get the people who have the means to afford that to make the switch before the rest of the market. But we've seen some real pushback with these performance brands, Porsche being right up there in terms of the consumer of Porsche, particularly a 911 buyer. We've heard this brand say straight up, we're just not going to make a fully electric 911. It's just not going to happen.
Meanwhile, BYD, which at least was a leader in China and able to fend off some of the competition issues, down like 30% from its peak 4 months ago, and now Warren Buffett is backing off of his entire holdings in it. Is this a sign that the fortunes have really turned for BYD?
I think it's sort of a little bit of a kick while BYD is down, because we have seen over the last few months real concerns about the Chinese government not being tolerant of the aggressive price moves within the Chinese auto market. BYD perhaps being the biggest and most sort of concerning player from that perspective. So you've already seen this sort of route taking place. You now have a situation where we've seen this sort of slow motion move by Berkshire Hathaway to move out of that holding. We're now seeing it go to zero. I do think we should dwell though on the fact that this was an incredible bet for Berkshire. Even as they're sort of, getting out after a bit of, profit being taken off the table by this, stock move of late, it was a hugely profitable bet for Berkshire, and sort of yet another feather in Buffett's cap.
Greg, great having you here. How long are you here?
Just today and tomorrow.
All right, well, we're going to have you back on. We're going to have you back on tomorrow as well. Craig Trudell is leads our global autos coverage. He's covered, as I always say, cars for us out of Detroit, out of Tokyo, and now out of London, so he has a wealth of experience. By the way, I'm looking at Porsche shares. Since they went public, they're down 42%. And in the same period, Aston Martin is only down 36%. So, I mean, it's pretty shocking because AML stock has traditionally been the biggest dog. And then, of course, you put them up against Ferrari, which is the big winner, gaining 162% in the same time period.
That's massive.
Yeah.
Good for Ferrari.
Ferrari has done very well. And I guess they haven't made this, they weren't early in EVs, right? They haven't got a full EV vehicle yet. So still ahead, we're going to discuss the H-1B visa issue, its $100,000 fee, and the potential impact on earnings, especially across tech, with strategist Seema Shah of Principal Asset Management. This is Bloomberg Open Interest.
from the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Less than 4 minutes ago until the opening bell check on futures this morning. We're down by about 0.2% for both the S&P and NASDAQ. Russell 2000 futures down a third. It has been the Russell 2000 that's been leading us higher after a 27th record high for the S&P 500 on Friday. All right, your market open coming up next.
Break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening.
Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what futures are doing ahead of the bell. Right now, we're looking at a drop of 0.25% on S&P futures, NASDAQ futures down about 0.2, and Russell futures off 0.25% as well. On the New York Stock Exchange, Mike Waltz is ringing the opening bell. He is our representative to the UN, but he kicked off his career as a U.S. Army Special Forces member. The guy has 4 Bronze Stars and initially started out in politics advising Dick Cheney, and he's had a long run, first Army Special Forces member to be elected to Congress out of Florida's 6th Congressional District. There on the NASDAQ is Prince Albert. Not in a can, but he's here for the UN for Climate Week, I should say. He is, of course, the reigning, I guess, monarch of Monaco, right?
Yeah, which is like great to be a citizen of Monaco. You pay no taxes, you get subsidized housing. So if Prince Albert wants to adopt me, I'm very happy.
You have a yacht.
Yeah.
There's a great race every year.
Correct. I could get used to that. All right, Matt, some stocks that we're looking at with the market opening. Metsera shares up a whopping 57%. Pfizer's going to be buying the startup that makes obesity weight loss medication for nearly $5 billion. Now, the key for Metsera, it's developing a weight loss shot. It would be taken less often than the market-leading drugs from Eli Lilly and Novo Nordisk. Of course, we were talking to Madison Muller earlier, who said it's going to take some time to develop this. So by that point, are we all going to be taking obesity pills anyway, and shots become irrelevant?
Yeah, I guess. I feel like at some point a lot of people are going to, but let's see how that shakes out. Oracle will provide security for a new version of TikTok's algorithm to keep the social platform in the U.S. We desperately want to keep this Chinese social media platform alive for the kids. The company also announced the promotion of Clay Magouyrk and Mike Sicilia as co-CEOs while naming outgoing CEO Safra Catz as vice chair, and I feel like that's an even bigger move, right?
Yeah.
But everyone's so obsessed with TikTok that's like more important news than anything else.
Not than Oracle like spending tons of money on AI infrastructure, because that's been moving the stock, not TikTok. But the kids.
TikTok, so important. So important to make sure you get on TikTok and watch as much of it as possible.
Yes, I know, which is exactly how you spend your evenings, Matt. Anyway, elsewhere, for this equity market, we are lower this morning as the session gets underway, but Morgan Stanley's Mike Wilson sees investors shifting focus away from labor market concerns in 2026. Wilson says that the stock market outlook hinges on the pace of Fed rate cuts, with steep interest rate cuts fueling strong revenue and earnings growth. Let's bring in Principal Asset Management Chief Global Strategist Seema Shah. Seema, there is some irony to this, shifting away from labor market concerns. I'm not sure this equity market ever cared about labor market concerns, trading at all-time highs. What exactly is priced in to this U.S. equity market right now?
Hi, Danny. Yeah, I think that the market today, I mean, at the moment, given how well they're doing, what it's focused on is this idea that, yes, the economy is slowing, but it's not heading towards recession. And that weakness in the labor market is just simply given the Fed a green light to further ease financial conditions and give the equity market a little bit of a boost. So all in all, it's quite positive. But I think Mike is right in saying that we have to keep an eye on inflation. You know, we've seen the tariffs have kind of been delayed a little bit. So in terms of the impact of when it's going to hit prices, everything has been pushed for a few months out. I have to say, we're not anticipating a very significant move up in inflation, you know, up to kind of the low 3% level, and then to be quite temporary. But, you know, realistically, nobody really knows how this is going to pan out. So it's going to be incredibly important for investors and, of course, for the Fed to keep an eye on how that's going.
When you're planning investment strategy, when you're putting together models, Seema, when you're trying to figure out what's going on in this market, do you ever consider the fact that the Fed actually would want to push inflation down to 2%? Or is that just something they say? They're fine with 3%?
It's a good question, because obviously, as we've seen from their economic forecast projections, that it's always 2 years out when they're going to hit 2%. So you have to treat it with a pinch of salt, knowing that maybe that they're aiming to push inflation down towards the 2% level. But because they have all of these, the employment mandate as well, that has to take a bit of their focus. I think it is important, if you were to see inflation expectations picking up next year and inflation rising meaningfully, then I do think that it would slow them down in their path towards getting towards neutral. But certainly at this stage, it doesn't seem pertinent enough to stop the Fed from cutting rates.
Well, the rally that we've gotten with the anticipation of rate cuts, and indeed the first one, it hasn't just benefited U.S. stocks, SEMA. Over the past 3 months, it's actually been EM and Russell small cap stocks that have outperformed. It's been so long that if you were trying to bet against anything other than U.S. large cap stocks, you would have gotten smacked. That has changed, but how sustainable is it?
Yeah, and I think this has been a real question for us as well with our research teams of trying to understand, is this small cap rally something which is going to run out of steam very quickly, just as it has in the past, or is it something which can be sustained for a little bit longer? And I'd say that the fundamentals are definitely looking a lot better than I think many would have anticipated. Of course, the interest expense is coming down, but also in terms of profitability, these companies are looking much stronger. So I think this could be sustained, and it's certainly worth, as long as you do believe that the economic outlook isn't very negative, that you can dip your feet in that. And then from an emerging markets perspective, I think everything is lining up to a continuation of this quite positive trend, where you do have Fed rate cuts, you still have global growth quite positive, and then we also have a perspective of a slightly weaker dollar going forward. So those three things should really continue to spell positive news for emerging markets. And then, of course, remember, China's doing pretty well too, so that's going to be adding to that narrative.
When you look at the H-1B issue and you see that companies who pay these visa holders on average, I think around $120,000 a year, they're going to have to pay an extra $100,000 to get them in. So raising that cost substantially. Do you foresee any of that coming down to the bottom line when you look at earnings in 26 or 27?
I mean, it certainly could do. I think just like there has been with all of the policy announcements this year, so much is dependent on those details. Is it, as has been indicated so far, that it's really for new applicants rather than existing applicants? I think the hammer is going to really hit hard on some of these smaller tech companies, the ones that really need to continue along in innovation. But I think from a longer term perspective, assuming that the rules are maintained through the next couple of years, it's a real question on innovation for the US. How far can technology go before you start to see a bit of a catch-up? So I don't think this is necessarily a moment for rethinking the trade, but I think that it could, in the longer term, have some impact on the strength of technology in the US if they're not able to grab some of those most skilled workers from other countries.
Hey, Seema, really great to get your thoughts this morning. Thank you so much for joining us. Principal Asset Management's Seema Shah. All right, let's get a check on the equity market right now. About 7 minutes into your trading day, we are moving lower with 388 stocks on the S&P 500 moving to the downside. On the upside this morning, though, Apple leading the pack in terms of point change. Apparently, the CEO of T-Mobile was on CNBC earlier saying that iPhone 17s were flying off the shelf, so maybe that's helping share prices up 2.2%. Tesla, Meta, some of the other Mag 7s that are higher in this session. To the downside, though, Amazon is the biggest drag. We were talking about H-1B visas. Amazon is one of the big users of this among the big tech companies. Nvidia a little bit weaker this morning, as is Microsoft, as is JP Morgan. Again, JP Morgan, another one of these companies that uses that program. When it comes to the individual sectors that are moving this morning, only tech is higher. Again, it is Apple helping things out here. Infotech up 0.2%. Meanwhile, it is financials with that big decline in JP Morgan, followed by consumer staples in healthcare. So kind of interesting, some of the more safety sectors are down this morning, but overall, we're still weaker by 0.1%, Matt.
All right, so a big skew to the downside for sure. Coming up, Bloomberg Intelligence says the offshore IT model will be upended by the new H-1B visa fee, $100,000. They picked some of the key IT stocks to watch, and we'll show them to you next. This is Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
12 minutes into your trading day, moving lower across all the major indices, down by about 0.2 for the S&P, not by about exactly 0.2%. After hitting a 27th record high on Friday, we pull back ahead of a lot of Fed speak this week. 5 of the voting members of the FOMC will be giving speeches this week. Let's look at some of the top calls, some of the analyst action that we are focusing in on this morning. First up, Steve Madden gets an upgrade at Piper Sandler. Analysts there say the shoemaker took an outsized hit from tariffs and should start seeing recovery ahead of its peers. Those shares up 3.2%. On the other foot, great pun, I see what you did there, producers. Crocs is getting a downgrade grade from the firm because of weakening demand in the U.S. People don't want to wear Crocs anymore, down 4.25%. Next up, Lennar is getting cut to a sell at Raymond James. The analyst, who is the only Wall Street bear on the stock, says that the home builder is facing multiple headwinds. Last week, Lennar reported disappointing fourth quarter forecasts. Finally, Keurig Dr. Pepper, that gets a downgrade at BNP Paribas Exane. The analyst called the company's agreement to merge with JDE Peat, quote, one of the worst received deals we can recall in consumer staples. Those shares down 2%, Matt.
That's harsh.
Very harsh.
One of the worst in consumer staples, and there are a lot of bad deals in consumer staples.
There are a lot of bad deals, so yeah.
All right, let's get back to the H-1B visa story. Bloomberg Intelligence says that the $100,000 application fee could damage the offshore IT services model. And maybe decimate it. BI senior analyst Anurag Rana says to watch companies like Infosys, Cognizant, Tata, as well as others, they'll be forced to redesign their pricing plans. Anurag joins us now. And I mean, what are these companies, Anurag, paying their employees? I think it's around $90,000 or $100,000. This fee like doubles that right off the bat. They just can't do that kind of business here anymore, can they?
No, it's going to be very difficult for them to operate in the current environment. So in the sense that they will not be able to easily move people here. Now, the question is, what are the clients going to do? You know, if you are a large bank, if you are a big retailer, and you really need some project done, do you figure out a way to, you know, get it done yourself? but there's a shortage of IT professionals in the US. So you're going to offshore a lot more work. So I think the filing of H-1Bs from a lot of these large companies will come to a fair, I would say, reduction over the next several years if this 100,000 fee remains.
And Anurag, again, as Matt pointed out, you write how a classic IT or outsourcing model no longer becomes viable, called a pyramid staffing models. What exactly is the model they use that makes H-1B visas so necessary to them?
So think about it this way. We have several kind of different operations in a particular company. Let's say you're looking at tech consulting. In that particular case, you actually need humans to be on site with these executives trying to figure out what their next generation technology infrastructure would be. The second example could be you just have to maintain or see if the office applications are running. You can do that remotely. So it depends on the task. There is a ratio of offshore to onshore. So for every, let's say, one person they bring on board in the US, there may be 4 people somewhere in a low-cost country helping out with that task. So that's the offshore-onshore mix that I'm talking about. Right now, it's going to basically be very difficult to do that. So either you're going to have an offshore model or you're going to have an onshore model.
We had a story, Anurag, I'm sure you saw last summer, about how so many companies, especially these multinational outsourcing companies, were gaming the system. You know, because it was like a lottery system and they were just buying like 50 tickets. Is this going to make the H-1B visa system at least in some ways more fair or easier to understand, even if it makes it more expensive?
I think, you know, the abuse cases will definitely, I mean, I would say could be eradicated in this particular case, definitely. But the big question is going to be what's somebody like a Microsoft or Amazon going to do, because they are hiring those employees to be in the US to do those works. Now, the question is, do they actually develop more R&D centers in near locations such as Latin America, Canada, just for the time zone regions, or they do expand that into their global delivery centers across the board, you know, just in places like India, for example.
Anurag, though, are some of those big tech giants maybe better positioned, obviously still getting hit, but better positioned just because they have the profitability to absorb higher costs and already have large staff bases that, to our understanding, aren't going to face any sort of ex post facto type of higher cost for the H-1B visa?
See, the argument could be, and then, you know, we have heard this argument from the administration also, if the employee is so special, so great, you will pay them an extra $100,000 or spend them, that's not a big deal. Well, I contend that those kinds of visa go in a different category called L1, which is for managers, which is for people with exceptional ability. If you have an H-1B and the average, you know, let's say the compensation is somewhere around 150,000 or maybe even 200,000, you're not just going to go out and raise another 100,000 on top of it. So the economics doesn't work for a large portion of the H-1Bs.
I wonder what you think about Oracle. Obviously, you and Mandeep put on this fantastic AI conference every year, and you have a lot of guests who are from Oracle or working with Oracle. Now they have 2 new CEOs. Was it time for that? And also, in general, as someone who covers companies, Anurag, co-CEOs, is that a good idea?
Well, you know, Oracle has a history of co-CEOs. Safra and Mark Hurd were co-CEOs back then, and, you know, unfortunately, Mark passed away. But Safra has done such a good job of managing this entire transition for Oracle from a legacy company to an AI, you know, infrastructure company. And I'm sure these 2 executives will, you know, accelerate that particular push. In fact, one of them is the head of OCI, or the Oracle Cloud Infrastructure. So I really don't think, I mean, make much out of this particular one. But, you know, co-CEOs not. But always remember, Larry's still running the show.
Yeah, and, you know, now that Safra Katz is out, we can say it takes 2 men to do the job of 1 woman. Anurag, thank you very much. Anurag Rana of Bloomberg Intelligence. I had to get that one in. Okay.
I think it's important.
Coming up, Pfizer enters the obesity drug race. We have the details of this morning's big deal that's coming up next. This is Bloomberg Open Interest.
up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zapasanja in Luanda, Angola, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what stocks are doing 20 minutes into the session. We're looking at red arrows here, but not big drops. 0.1% on the S&P 500 to 66.56 keeps us still pretty darn close to an all-time high. Same is true on the NASDAQ, which is unchanged here at 24,619. Taking a look at what's going on in stocks, as yields aren't moving much at all, and neither is the dollar. You can see NVIDIA is down about 0.5%. That doesn't help. Apple is gaining about 2% as you get really positive, not only reviews. Mark Gurman seemed to love the iPhone 17, but also customers lining up to grab them. Snapchat is gaining right now on maybe the TikTok reorganization. You can see Meta also up about 0.7% after releasing some new glasses. Pfizer right now up 2.5% after it purchases Metacera for $5 billion to get into the obesity pill market. And Metacera, you can see soaring a 61% gain. Danny.
Matt, let's get more on that story on the Pfizer-Metacera deal. We're joined now by Bloomberg Intelligence Director of Research, Sam Fazeli. Sam, how crucial was it that Pfizer got some sort of a foothold in the obesity market with this most recent deal?
Yeah, hi. So this is a deal that I think a lot of people were expecting from Pfizer, given that their own efforts in obesity hit a brick wall with some of the data they were getting. Their products weren't competitive. Crucial, well, look, Pfizer needs drugs to help plug a hole that generics are going to create for it. So they've got drugs like Vyndaqel, drugs like Eliquis that are going off patent. That's a certainty. Here, what they're doing is to going into a space where everybody believes is so large that even if you have, or whatever you want to call them, Me Too assets, you still should be able to get some revenue and therefore help you there. Now, the assets from Metacera we like, but they're early stage, and there's a lot of work and wood to be chopped here. And hopefully in the next 2 or 3 years, well, actually quite soon, we know some phase 2B data coming. But what you hope for Pfizer is that the world doesn't change again over the next 2 or 3 years. You know, I've been calling this like a game of snake and ladders. You seem to be doing really well, and then you have a better data that shows, oh my God, there's too high a vomiting rate or a nausea rate with the drug when they go into later stage trials. So there's a lot to be proven, but it's a step in the right direction.
What's the, by the way, Sam, what's the addressable market? I mean, the United States obviously has the heaviest people in the world, right? We need this. Mm-hmm. And in terms of people taking these pills, what's the success rate or the shots?
Yeah, well, so this has only been through a phase 2 trial, and we got some later stage phase 2 data coming. So, you know, based on a 12-week trial, the efficacy seemed on par with what we're seeing with the incumbent drugs from definitely the better one of the two from Lilly in terms of efficacy. Now, this was a small trial. We need to see how it performs. It's tolerability that's super important here. There's no point helping people lose I don't know, about 15, 20 kilos if you're spending half your day dealing with nausea and vomiting, right? So it's that we need to see. They looked okay, but we need to see better data coming out. I've got some clients who are calling it the vomit drug as opposed to an obesity drug. So let's wait and see what that data comes out. And in terms of addressable market, I think my colleague Michael Shaw has just updated his numbers. He's in the region of $100 billion. I mean, honestly, as you rightly said, it's such a big potential. It's all a matter of whether governments and healthcare systems are prepared to pay for it and how long people stay on the drugs. So lots of algebra here to figure out.
Yeah, God, the vomit drug, that's not a name you want.
That's not very nice, no.
Hey, Sam, less than a minute here, but you talked about the world looking different in 2 years. What is at risk for Pfizer of what the world may look like in 2 years?
The risk is that some of the newer combinations come out with efficacy that's better, or side effect profile that's better, or the combination thereof, and or you end up in a place where your quality of weight loss is better. Or you lose weight, or you don't lose it from muscle. Those are all the areas that people are fighting over. And of course, once a month injection, once every quarter injection, once every 6 months injection. We'd all prefer that sort of thing. So there's a lot to play here.
All right, Sam, thanks very much. Sam Fazeli there of Bloomberg Intelligence talking about the race to give us the best fat pill. Coming up in the next hour, Threadneedles and Barry on the new social media hierarchy with the TikTok deal. Plus, we'll talk consumer sentiment and holiday spending expectations with MasterCard's Michelle Meyer. This is Bloomberg Open Interest.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, the change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The Trump administration is set to make an announcement today, reportedly linking autism to women who take Tylenol while they're pregnant. CBS News medical contributor Dr. Celine Gounder says studies refute that claim.
The most recent BEST study was conducted among 2.5 million kids in Sweden, and the advantage of that particular study was that they looked at siblings, which allowed them to factor out some of the genetic risk factors and so on, and they did not find an association between taking Tylenol in pregnancy and a child having autism.
The Washington Post reports Health Secretary Kennedy hopes to fast-track approval of a form of vitamin B9, a folate, as the first potential autism treatment. FBI and Justice Department officials confirm they've shut down an investigation into border czar Tom Homan after a Post report he was caught on tape accepting a bag filled with $50,000 in cash from an undercover FBI agent at the end of the Biden administration. CBS's Scott McFarland.
The White House called the investigation blatantly political, and they denied the Trump administration leaned on the Justice Department not to charge Homan, while some Democratic lawmakers have called for Homan to be fired immediately.
There's a court hearing today in New Hampshire for a suspect who allegedly shot and killed a man while he was eating dinner with his family at a country club and wounded 2 others. CBS's Lilia Luciano is in Nashua.
The 23-year-old suspect is now facing 1 second-degree murder charge, but more are expected today. Police say that they are looking for a motive, but they confirmed that he used to work at the country club where the shooting happened.
San Franciscans were jolted out of bed early this morning.
The 4.3 magnitude earthquake struck just before 3 a.m. near the UC Berkeley campus. DeAndre Pope was working the graveyard shift at a nearby hospital.
It felt like the elevator just hit the floor. You know, it made a loud banging noise. The glass shook up.
The glass broke at Magnani's Butcher Shop. A large front window cracked down the middle, but owner Trino Cruz was taking it all in stride.
We live in an earthquake zone, so, you know, it's something that we have to deal with. We have to live with it.
Matt Bigler for CBS News, Berkeley, California.
Gabrielle has powered up to a Category 3 hurricane in the Atlantic southeast of Bermuda. CBS meteorologist Grant Gilmore.
Gabrielle is going to remain a good 800 miles off the east coast of the United States, but it will still produce the threat for dangerous surf and rip currents from the Carolina coast to New England.
Dow is down 143 points in early trading. S&P off 3. This is CBS News. Some teams will be working on the kicking game after yesterday's wild action in the NFL.
In Cleveland, the Packers had a chance to go ahead of the Browns with a late field goal.
On the right hash, Daniel Whelan the hold. The kick is blocked. It is blocked.
The Browns went on to win with a field goal as time ran out. In Philadelphia,
Joshua Carty has it blocked again.
A blocked field goal and touchdown iced the Eagles' win over the LA Rams on Fox. And in Tampa, the Jets blocked a Bucs field goal and ran it in for a go-ahead touchdown, but Tampa Bay rallied to win. Steve Kathan, CBS News.
It's hard to make a buck on Broadway these days.
In Cleveland, the...
And good reviews haven't helped. Both Gypsy and Sunset Boulevard failed to recoup producers' investments. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Scarlett Fu, Paul Sweeney live with you. Coming up today, we're going to check in with Matthew Bloxham. He's a Bloomberg Intelligence tech analyst. What does all this tariff, the H-1B visa thing mean for some of these technology companies, and what does it mean for U.S.-India ties? So we're going to break that down. Sylvia Jablonski, CEO and CIO of Defiant ETFs, we'll get her thoughts on these markets. Miles Miller, Bloomberg News senior reporter, he's going to give us a preview of the UN. Hopefully he's nowhere near the UN.
I saw him in the office, so he's clear for now.
Okay, so he's traffic-wise, he's fine. John Tucker, we don't know how John Tucker's going to get home today with the traffic.
I'll be stuck on 3rd Avenue until about midnight.
Until the end of the week.
Yeah, end of the week. Very good. We're also going to have a tech roundtable. Mandeep Singh, Bloomberg Intelligence senior tech analyst, Anurag Rana. We're just going to talk TikTok. Maybe just TikTok, maybe a little Oracle too. So we got a lot coming up here in the next couple of hours. Let's kick it all off with John Tucker and the Bloomberg Business Flash.
All right, guys, this flash brought to you by IBKR. Will December 2025 CME E-mini S&P 500 index futures settle above $6,200 at September 30th, 2025? At IBKR forecast trader, the yes was recently at 80%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is September 30th. Well, after records last week, the major stock averages, they're mixed right now. The NASDAQ composite index 30 points higher. That's good enough for a record. Right now, 9 of the 11 major industry groups in the S&P 500, they're lower. Energy, the biggest drag. Information technology, that group is higher. That is home to Apple. It is up close to 2% within striking distance of record territory. Consumer discretionary, that's another higher group in the S&P 500, and that is home to shares of Tesla. Of course, we'll take a deeper dive into this in just a bit, but the big news of the day, Pfizer paying $4.9 billion for the obesity startup Metsera. They're trying to catch up with rival drug makers. Metsera shares 62% higher right now. Pfizer is also higher. That is up close to 3%. And assets in Argentina surging. This comes after the Treasury Secretary, Scott Bessent, signaled his support for the country's financial position. S&P 500 right now, let's call it unchanged, up fractionally 66.63 on the index. The Dow Jones Industrial Average down 85 points. The NASDAQ right now, that is up 25 points again, up 0.1%. This is interesting. This storm, the other side of the world, Cathay Pacific canceling all Hong Kong flights through from Tuesday 6 p.m. through Thursday morning. Again, a typhoon that lashing the area. Just horrible.
One of my friends on Facebook mentioned that she was on hold with Cathay for about 7 hours trying to get herself rebooked. Can you imagine?
Good Lord.
Typhoons, they are what hurricanes are in this part of the world, right?
Yeah.
That's similar, right? That intensity. Wow. Yeah.
So just look out. Anyway, we check the markets for you and other stuff all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul, it's like been how long since I've last seen you?
Since you last saw me, about a half a week. Since you last saw Paul and Mike me together.
Yes, exactly.
2 weeks.
Exactly. So we've been out and about. All right, JT, thank you very much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Christine Aquino. Christine, before we get to your stocks, what's this Aura thing that John Tucker was just writing about? What does this company do?
It will change your life, Paul. I highly recommend. It is a fitness ring, which I'm wearing right now. Fitness and more, actually. It tracks your wellness. It gives you a readiness score for the day. It tells you how much activity you should do, or maybe you should take it easy. You know, it's a handy little wellness
Remember the mood
buddy.
rings that they used to sell?
Yeah, does it change colors?
It doesn't change colors yet, but who knows? Maybe now that they're an $11 billion company, they might be working on that.
They sold a couple million rings last year.
That's right.
Wait, hold on, Christine. How much did you pay for the ring, and how much do you pay for the service monthly?
Well, okay, so I can't remember. It was a few $100s for the ring, but you can use your health account to pay for it. It's eligible for that, your FSA. And then there's like a $5 monthly fee for it. So
which will soon double to 10, I'm sure.
Exactly. All right, Christine, what do you got for us today?
Let's look at Fox, shall we? So ticker FOX, those shares are up today, 1.9%, and that is because there is some suggestion from President Donald Trump that Fox chairman Lachlan Murdoch and his father Rupert are involved in this TikTok deal. Now, we know from the White House official announcement on Saturday that the U.S. operations of TikTok will be majority owned and controlled by American investors, which includes Oracle. Now, Oracle has seen the benefit of being involved in this TikTok deal last week. I mean, it was doing monster numbers in terms of the stock gains. But now, potentially, if there is some kind of Fox family involvement, then maybe that's a boost to those shares as well. Bloomberg Intelligence weighing in and saying that ownership in TikTok could give Fox a foothold in social media because now linear TV is facing secular challenges. So good time for them.
It's eternally facing secular challenges.
Yes.
Pfizer, of course, on the horizon too, and some M&A news.
Yeah, absolutely, Scarlett. So Pfizer, ticker PFE, those shares are soaring 2.9% at the moment. And, you know, we know that they're going to be paying $4.9 billion for this obesity drug startup Metsera because they do want to catch up to their rivals in that obesity drug game. So here's the kicker for the deal, though. So basically, they're agreeing to buy Metsera for $47.50 in cash per share. And then the deal also includes further payments of up to $22.50 per share if there are specific and regulatory milestones that are met. So potentially that deal could total $7.3 billion. And so Bloomberg Intelligence analysts are saying that this is a good thing for Pfizer. The deal could potentially catapult them up the obesity ladder because it provides them access to injections that are highly competitive in terms of their profile.
All right. We'll have Sam Fazeli from Bloomberg Intelligence on later this hour to break down this deal. One more.
Let's take a look at Kenvue. So ticker KVUE, those shares not doing so hot at the moment, down more than 5% now. And that's because we did get a Washington Post report over the weekend saying that Trump administration officials plan to link the active ingredient in Tylenol, which is made by Kenvue, to autism. So that's expected to come today. The Post reporting this and citing unnamed people familiar with the matter. So, you know, Bloomberg Intelligence saying that if there is any reduced demand for Tylenol as a result of this, then that will make their return to EPS growth this next year more challenging because they're already facing autism-related lawsuits because of this. So this is just another piece of bad news.
Tylenol's the go-to drug for me. It fixes everything. So I can't do anything about that. All right. Christine, thank you so much. We appreciate that. Christine Aquino, Bloomberg News, giving us some of those movers there. For more conversations like this, subscribe to our Stock Movers Reports. Listen 4 or 5 minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Red headline crossing the Bloomberg terminal. New York City Group knocks out final bid for a Manhattan casino. No idea what that means, but I know the casino's licenses are going to be granted at some point soon in the greater New York City area. There's a number of groups that are vying for them.
Yeah, this will definitely get all the anti-gambling groups all heated if they're not already. And of course, we've seen how much business they've done in places where they have been able to operate.
All right. All right, let's get back to one of the key stories of the day. That's the H-1B application fee. The Trump administration planning to raise that fee to $100,000. That's going to be an issue, I think, for some in the tech industry who do rely upon these H-1B visa folks here. Matthew Bloxham joins us. He's a technology analyst for Bloomberg Intelligence in our London studio. Hey, Matt, it seems like any change to the H-1B program will have a profound impact on the tech industry. What do you think is going to happen here?
Yeah, that's right. I mean, I guess for context, Amazon, according to our data, one of the biggest users of staff with H-1B visas, but also names like Microsoft, Meta, Google in there too. But high up the list as well is Tata Consulting Services, which is one of the big India-based IT services companies, does a lot of outsourcing from big US companies. So I think that kind of cross-section of US tech and also India is quite interesting. Again, data from the US government suggests that nearly 300,000 H-1B visas come or have been applied to Indian citizens, and they're the biggest nation with those visas. So I think it's going to be a big conundrum for both the IT services companies. Do they scale back further on the number of people they have with these visas, which they typically use to be on site with their clients. So it may need a bit of a rethink for their business model, and equally for the big tech firms who've, for many years now used these visas as a way to bring in talent at all levels, but particularly at junior levels, as engineers graduate from US universities,
right?
Bring them into their ranks. So it's a lot of challenges for a lot of companies.
Yeah, and it's causing massive confusion as well. Paul, did you see that there's a video that's been going viral about a flight, an Emirates flight from San Francisco to Dubai on Friday, where a lot of passengers began hearing about this decision, and they asked the pilot to delay the flight so they can get off the plane.
Yep.
I mean, it's what does this mean, Matthew, in terms of how companies like Amazon, Microsoft, and Alphabet deal with their employees? I mean, initially they warned people not to travel overseas, and if they were overseas, to get back into the U.S. as soon as possible.
Yeah. That's right, and I think hopefully we've had some clarity about that. I think on Sunday that the government put out some clarity that A, this only applied to new applications, not existing visa holders, and B, that $100,000 fee was a one-off. It wasn't going to be an annual recurring fee that they had to pay. So I think particularly that issue around this is only for new applicants certainly kind of eased some people's concerns about scrambling to get back to the US if they were out of the country.
Matthew, to what extent do tech companies rely upon H-1B workers, and how has that changed over time?
Yeah, I mean, I think it's a big reliance. So I think our data is something like 10,000 employees at Amazon, for example, are on this visa. And as I say, that the big Indian tech outsource firms are very big users of these too. So thousands of employees across these big companies, and really important for their software engineering team. So I think I think the fact that this is only going to start for new applications gives them maybe a 2 or 3 year window to kind of readjust their recruiting policies, but they're certainly going to have to think hard about where do they source developer talent, and they're going to have to look a lot more at US talent to kind of fill that in over the midterm, and maybe that's going to shift their engagement perhaps with US universities and what kind of programs they fund to make sure they're going to be compliant with the way this program is going to work from here.
All right, Matthew, thank you so much. Matthew Bloxham is a Bloomberg Intelligence tech analyst joining us from London. Paul, you look at the numbers, 85,000 H-1B visas issued each year, 20,000 are set aside for advanced degree holders, people with master's or above.
Yep, and from what I've heard from some experts here, it's really, it's a lottery, and it's not particularly a fair lottery. Certain big tech companies have an inside track or know how to play the system a little bit better than others.
They've gamed it well.
Yep.
All right, this is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. Keep it right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. The major stock averages mixed to a little change right now. The S&P 500 is down just a point, 66.63 after last week's records. Dow Jones Industrial Average, that's down 119 points. The NASDAQ Composite Index is higher, 28 points higher. That's up 0.1%. It's Apple and Tesla that are leading the NASDAQ higher right now. Apple, that'll be floating, nearing a record right now, up 2.7%. And some of the big movers, Pfizer agreeing to buy the obesity startup Metsera for an enterprise value of $4.9 billion. They're trying to catch up in the market for obesity drugs. Metsera shares, look at this, 63% higher. And then you have Tylenol maker Kenvue shares, they're lower. This follows the Washington Post report that the Trump administration plans to link the active ingredient in Tylenol to autism. Kenvue shares right now down 5.7%. And BYD shares dropping the most in 3 weeks. You had this report that Warren Buffett's investment firm offloaded its stake in the Chinese electric vehicle maker. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. You know, Oracle has become the stock of the year.
Yeah, it's amazing.
It's got an $890 million market cap. It's near a record high, and I feel like it's having its NVIDIA moment where people are rethinking what it is and what it does. It used to be this legacy enterprise software maker, but it's become so much more. It's become shorthand for AI. So let's bring in Sylvia Jablonski. She is CEO and CIO at Defiance ETFs. And Defiance ETFs has a lot of leveraged and single name thematic ETFs that they issue, and they have seen a lot of activity, Sylvia, in names like Oracle. What kind of interest is there in from retail investors in particular and institutional investors in Oracle-related products?
Yeah, good morning to you both. So Oracle, you described it really well, right? It's like it's a lot of the retail audience has come back to find some of these companies that we haven't talked about in so long, right? IBM, Oracle, you know, they've really linked themselves to the forefront of quantum computing, supercomputing, and AI. And so Oracle, we've just seen a ton of flows in Oracle. You know, that last earnings call was just stellar for them. And we really now see this company that's, you know, not only this classic, you know, tech company that's been around forever, but now they're at the forefront of AI hyperscaling, AI infrastructure, cloud, data center management, quantum computing. You know, they landed multi-million-dollar contracts with various firms and things like this. And so it's just a company that's on the map. And just that theme keeps growing in general.
Another, I guess, offspring of the AI trade is energy. You're going to have to power some of these data centers here. How are you seeing investors kind of position for that?
Right. And so it's interesting because AI, it's always like this, right? You kind of have like this theme that comes out, and then you have to see where the puck is going to go next. And you know, you kind of start thinking like, where else are opportunities? And I think that lies in both energy and infrastructure, right? So in order to power all of these data centers and power blockchain and you know, crypto mining and all of these things, you're going to need nuclear energy, you're going to need different forms of energy, and you're going to need infrastructure and build out. And so a lot of the companies that have been catching tailwinds on that are things like, you know, Oklo and GE Vernova, and, you know, kind of the large semiconductor companies as well that we know, NVIDIA, AMD, and things like this. But, you know, that kind of mix of the energy companies too, in order to power this theme has really started to take off.
I know that we keep talking about energy as like the second derivative of the AI play, but are people picking companies specifically, or are they still betting on the sector at large?
I think they're doing both, right? Like you definitely have these names that are starting to shine, whether it's an AI, like AI has always kind of been NVIDIA, and then maybe it started to trickle down to Oracle and Palantir and Broadcom, you know, but I think that overall, for most investors that don't know the space really well, which is actually most of us, right? Like thinking about the 2,000 companies that participate, we can probably name the top 5. We probably can't name the top 100. A lot of them are looking towards ETFs for that. Like we actually have an AI-powered infrastructure ETF, APO. There's a quantum one out there. Other companies have different types of AI, cloud computing types of companies, robotics companies. And I think that investors tend to be comfortable with picking portfolios of stocks for this, even for the reason that some of the smaller names might have stellar performance, but might also be susceptible to bigger crashes. So you kind of get this ballast of having an index. It's really what ETFs were meant for, and starting to show up in the infancy of AI and all of these big themes.
Sylvia, just broadly, stepping back 30,000-foot level, how are the flows right now in the ETF space that you're seeing? How has that maybe changed throughout the year?
Yeah, I mean, it's been a record year of flows really for ETFs and some types of ETFs in particular, right? So you just see, massive flows into crypto. We've seen a huge growth in single name levered ETFs. You probably had a third of what is here now last year. We've seen a lot of flow into the AI space, into thematics and active ETFs. I read a stat the other day that was put out. It's about 36% of all new ETF flow has gone into active ETFs. And so that's really telling. Investors are more open-minded, I think, now to act. Before it was just give me something that's passive and cheap that I can hold forever, not think about. And now investors are thinking wow, these are, great products that give me access to these themes that I can't trade myself. And that's sort of worth it. And so it makes sense that you've really seen the growth in those areas.
I'm so glad you bring up crypto, because crypto definitely had a moment over the summer with all the digital, the DAT companies, right? But it feels like that momentum is fading a little bit, and gold has picked up a lot of the momentum. You look at spot gold topping $3,500. How are investors differentiating between digital gold, that is Bitcoin and the other cryptocurrencies, and old school gold, the physical gold?
I think there's room for both, right? It's almost, we can make that parallel with AI, right? NVIDIA is always going to be kind of the golden child of AI, but now you have all of these smaller companies that have come into play that, perhaps investors haven't even heard of just yet, right? And I think gold has always been that classic inflation hedge, and for investors that have experienced and have been in the market for multiples of decades, that's probably their go-to for inflation hedging. But perhaps that next generation trader is going to start looking at crypto, right? And I think with crypto, not only do you have the potential of the inflation play, but you also have this growth with the commercialization of it, the growth in ETFs, all these different crypto companies that are coming out, like Circle, Bitmine, emerging companies. There's just been this explosion in that sector and really buy-in into that theme from particularly younger investors.
Sylvia, as the ETF product matures as an asset class there, how have you seen the investor mix change, retail versus institutional? How's that played out from your perspective?
It's really been amazing. When I started my career in ETFs, mutual funds were still the winners, right? And you would have these conversations at whatever company you worked for that mutual funds are the thing, and we really have to compete with them. And now it's kind of it's just switched completely. It's flipped. I think investors are comfortable with the idea that they can trade intraday and get a value for what they trade throughout the day, and not just an end of day NAV strike. The fees are arguably still lower on most ETFs versus mutual funds. I think the kind of the younger generation of retail traders and retail investors, they probably don't even know what what the difference is between a mutual fund and ETF, but they probably only hold the ETF. So I just think that there's just this big shift towards ETFs, and you kind of see that in the conversions that a lot of the larger companies are doing. That being said, no knock on mutual funds, obviously. I just think that it's a different type of flexible product that has just really taken over in terms of interest.
Well, you are, of course, loyal to the ETF world, Sylvia. Sylvia Jablonski joining us. Thank you so much. Sylvia, CEO and CIO of Defiance ETFs. Paul?
All right, it is United Nations week here in New York City.
Feels like a month.
It feels like a month, so we're all ready for it, gearing up for it, because it means just a lot of traffic, a lot of changes in road closures and so on and so forth as the UN gets together. Miles Miller, Bloomberg News, a senior reporter. He's all over this. Miles, thanks for joining us here in our studio. What's the expectations for this year's UN Assembly?
Yeah, you should expect that, you know, a number of nations are coming at a time when there are conflicts around the world, and because of that, there is extra security this year. We went to the United Nations on Thursday of last week, and you saw the preparations they were putting into place. Of course, this United Nations General Assembly comes on the backdrop of the assassination of Charlie Kirk, and so that means extra security, and they're studying that shooting to make sure that if something were to happen in Manhattan, they know how to get these 150 leaders and their spouses to where they need to get to.
One thing that you point out in your reporting is that the security surrounds the United Nations complex right alongside the East River on 42nd Street. And this building is actually really difficult to protect. It's not a fortress. It's, you know, glass, and it's kind of designed to be open, which is at odds with the security required for the event.
Right. When built in the 1950s with the era of transparency, Long Island City wasn't as vibrant as it is today. You know, a big security target, obviously. You know, we went to the top of the Dag Hammarskjöld library. The top 2 floors used to be, I mean, when you go in, it's gorgeous. It's like straight out of the 60s, right? Mid-century modern furniture and all that kind of stuff. But the floor is completely barren because of the security threat that place occupies. You know, it's right by the FDR Drive. You know, if somebody wanted to do something untoward from across on, you know, nearby Sutton Place or, you know, in that area, it'd be very easy. And so, yes, they have the vaporwake dogs that are sniffing for bombs. They've got the sharpshooters who are on the top of the roof. They're marrying UN security with NYPD and Secret Service. And actually, what was really interesting is to learn that the security guards from the United Nations go down to Maryland, train with the Secret Service to figure out how you get people out of a sticky situation if one were to happen.
President Trump will be attending the United Nations. What's on his agenda?
Yeah, I think, you know, one thing we know is he'll be meeting with the heads of some Arab nations while he's here. These are meetings that they call on the sidelines of the summit, so he won't be meeting with them at the UN, but at hotels and that kind of thing, a number of meetings. It comes at a time when the U.S. has gone in this sort of isolationist path, you know, go it alone sort of path. And it also comes at a time, you know, and we were talking about it earlier, where the United States is not paying its debts to the United Nations. And so,
how much do we owe the UN?
Oh, I put it here because I didn't want to make a mistake on that. $3 billion, including 826 million tied to this year's regular budget. The rest is in arrears from past years and unpaid peacekeeping bills. But you saw it when Trump came into office, right? What we saw specifically was a pullback from U.S. aid, a pullback in a lot of funding UNESCO and Human Rights Council and NATO as well. And so these unpaid bills will carry consequences under the UN's charter. Countries that fall 2 years behind their bills lose their vote in the General Assembly. We'll see what happens with that.
What about the Security Council? Because the U.S. is one of the permanent members of the Security Council.
Right. So so you sort of have to figure out what will happen here. Of course, Trump is going to meet with the head of the UN. He's going to try to make the case that, you know, that U.S. is not going to go it alone, but will be working in partnership. That remains to be seen. The Secretary General will be making the case that the U.S. should be paying its bills. But this really goes to the diplomatic approach, right? The U.S. did not have, you know, someone assigned to the United Nations. That just got through, of course, last week.
All right, and President Trump is set to deliver his speech to the United Nations on Tuesday morning. Miles Miller, thank you so much. We appreciate that. Miles Miller, Bloomberg News, a senior reporter, giving us a preview of the United Nations taking place in Midtown Manhattan. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Let's start off with shares of Apple. Right now, they're up 2.8%, turning positive for the year. So they're extending right now, rebound that's put the iPhone maker back within striking distance of record territory. And it's helping boost the major averages. The S&P 500, it has turned positive. So, yeah, that's good for a record. 6670 on the index, up 6 points right now. The NASDAQ 100, 45 points higher. That is up 0.2%. That would be a record if it holds up. The Dow Jones Industrial Average down 40 points. That's a decline of about 0.1%. The big deal news of the day, Pfizer paying about $4.9 billion for the obesity startup Metsera in a bid to catch up to rival drug makers after they failed to compete with its own weight loss medication. And shares right now, Metsera, that is one of the standouts, up 63%. And then you have Pfizer shares that are also higher, up 2.3%. White House officials saying Oracle would recreate and provide security for a new U.S. version of TikTok's algorithm. This is part of a deal taking shape to sell TikTok to a group of American investors. It's pretty much what lawmakers had insisted upon as well. And you have shares of Oracle right now. They are up 3.1%. T-Mobile announcing a CEO transition with the COO taking over as T-Mobile's next CEO effective November 1st of this year. T-Mobile shares up fractionally, up about 0.25%. Once again, the major averages are mixed. S&P 500, 5 points higher right now. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Scarlett, here's a story that just popped up at me. Royal Caribbean going back into the bond market. They just got upgraded by Fitch. They're going to sell more debt. One of my earliest memories of the pandemic, when the news flow was the cruise companies all rushing to the bond market. Those early days, recognizing that, boy, if our ships are going to be stuck at port for a long period of time,
we need money, yeah. And they've done incredibly well since the revenge travel phenomenon began.
Yep, and I'm just seeing Bloomberg's reporting here. $30 billion of investment-grade debt is expected to be priced this week.
That's just a lot of issuance.
All right, let's talk tech. There's a lot going on out there. I want to see. I'm doing this for John Tucker. He's a big TikTok person here, and he's really interested to see what's going to be happening out there.
What's his handle?
What is
Love those 30-second videos about really stupid stuff.
Yeah, exactly.
Cats on Roombas, right?
Oh, yeah.
Cats on, gotta have
Love it.
That's why when we talk about cats on Roombas, we talk to our senior technology analyst at Bloomberg Intelligence, Mandeep Singh, Anurag Rana. Mandeep's here in our studio, Anurag's in our Chicago bureau. Let's just talk, Mandeep, what's the latest on TikTok here? Because I'm seeing some big private equity guys might be involved. Some big tech names may be involved. What's going on here with TikTok?
Yes, I think the White House is definitely keen to get a deal done. And as you said, there are multiple parties involved. Oracle is the publicly traded entity that's front and center in terms of being the lead company that will be owning TikTok along with these other private investors. And look, at the end of the day, it's clear the algorithm would be rewritten or they would be licensing it. That was a sticking point all along. So Oracle already has the data for TikTok in their data centers. So that part is already sorted out, and it looks like there will be a deal done. I mean, the more private investors that are involved, it kind of makes it hard. Who will determine the strategy in this age of AI, given all these companies are focused on AI and LLM? So who would call the shots in terms of what the future TikTok may look like? But at least it will be owned by U.S. entity and private investors based in U.S.
And Oracle is going to play a key role, a big role in operating everything, including retraining a copy of the algorithm that the U.S.-based TikTok would lease from ByteDance. Anurag, I mean, we knew that was kind of in the works from the get-go, but what's surprising me today is some CEO announcements from Oracle. Safra Catz is being succeeded by two co-CEOs. Is this news a surprise?
Well, it's a surprise, yes, but at the same time, I think Oracle's in a very strong position right now. I would say go back several years. I think somewhere around 2014, Larry Ellison had appointed Safra and Mark Hurd as the co-CEOs, but I think Safra's been there for a very long period of time. Now they're basically saying they're going to move on the leadership to much younger people, and one of them actually is the leader who runs OCI, or Oracle Cloud Infrastructure, which is behind the TikTok deal as well as all the other AI deals that we are seeing right now.
Mandy, when you talk to the Googles and the Facebooks of the world and the competitors to TikTok, I mean, this is no foregone conclusion that this thing's going to work, is it? Because I'm a TikTok user. I still got to, I guess, get a new app, port all my stuff, and do it. I mean, we're not sure this is even going to work, is it?
It is, and also a lot of the creators have moved to these alternative platforms. Given this uncertainty has been there for, almost more than a year now.
So who's benefiting?
I mean, your YouTube, Instagram, to an extent, Snapchat, but to my mind, the whole focus has shifted from, who has the best recommendation algorithm to who can have the best AI based on the data they have. So look at, what OpenAI has done is used all the open internet data. What Meta is trying to do with their super intelligence is use their social network data to come up with a better large language model. That's what Gemini is doing, and I think that's where the smaller players have a disadvantage. Or Snapchat, even though it may gain some engagement, it just doesn't have the infrastructure to train their own large language model based on the data they have. That's what you would hope to see with a company like TikTok US, that they focus on training their own large language model based on the video data that they have. But I doubt when you have got so many players involved, that's never good for, a long-term strategy where you focus on building a product first and then monetizing. It would be more about making the company profitable and making sure they have a return on investment for what they're doing.
I mean, this is going to be a complicated transaction because the law mandates this TikTok sale to U.S. owners, but it forbids ByteDance from any operational role, including with software. Meantime, China's law bars the export of sensitive technology like algorithms. So I guess, Anurag, my question to you is it not only technically feasible to fully disentangle TikTok from ByteDance, but will U.S. lawmakers accept whatever convoluted plan has come up here?
I think that has been very clear. I mean, imagine if you go back, back in January, it was supposed to be shut down, but people have been operating it. Oracle has been hosting it. So I think Oracle is going to go out and say, we have control over the data, we have control over the algorithm. And I think that may, let's hope that will pacify all the regulators and the Congress out there.
So Mandeep, do we know who the CEO of TikTok USA is going to be, who the CFO is going to be, what the board...
Oh, good question.
I mean, we don't know any of that stuff.
No. I mean, the transaction isn't even finalized. We're still hearing rumors about who the private investors are going to be, and that list seems to be growing. Beyond the private equity guys, now it's a Rupert Murdoch, and, it was interesting to hear their names.
Okay.
But look, I mean, it will be somebody seasoned. My only hunch here is they may be too focused on, the algorithm, where the bigger opportunity lies in the LLM and, how a video LLM could be a game changer.
AI, everything.
Well, we always have to bring everything back to AI.
Yeah, he knows what gets BI clicks. He knows what's going on. We trained him well. All right, Anurag, what's the 30 seconds left? What's the big thing you're looking at this week?
This week, it's going to be Apple and how the Pro is going to be doing in the market.
Oh, right. I saw people lining up for their Apple devices, and I couldn't figure out
It's doing very well.
It's the iPhone 17.
It's doing well?
It's doing well.
Okay.
Huh.
All right, I'm not...
I mean, a thinner iPhone, I'm not sure that's reason enough to upgrade.
I don't know,
but you and I clearly are not the market.
Yeah, I mean, John Tucker still got the flip phone, so we're doing better than him. Anurag Rana, Mandeep Singh, Senior Tech Analyst. Folks, these are the two folks that run our global technology franchise around the world. We got analysts everywhere, Europe, Asia, all over Asia, Silicon Valley, New York, they're everywhere, and Mandeep and Anurag manage those folks and give you I think, the best tech research coming off of the street. White House says doctors may be exempt from H-1B visas. So that's crossing the Bloomberg terminal right now. So.
Well, yeah, they wouldn't have to pay that $100,000 fee. We'll find out what that means for not just the medical industry, but maybe the healthcare industry at large, the pharma and biotech industry, with Sam Fazeli of Bloomberg Intelligence next. This is Bloomberg Radio with Paul Sweeney and Scarlett Fu.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I swear this whole healthcare discussion used to be more than just obesity drugs.
I know, but it feels like that's the most exciting part of the healthcare world, the pharma world.
Yes, I don't know. I mean, I don't know. Sam Fazeli joins us here. He's a director of research for global industries. He's also like the best healthcare guy over there in Europe. He's based in London, one of the leaders there, and we talk to him all the time. Sam, it looks like, again, Pfizer here, they're spending $4.9 billion for this obesity startup, Metsera. What can you tell us about Metsera?
Yeah, Paul, how are you doing? And Scarlett, nice to have you both again
Happy
talking
Monday.
about this topic. Thank you, topic of obesity. So look, just to answer your opening point, obesity is one of the key causes of a whole variety of diseases: cardiovascular, cancer, mental health. So if we can treat it, if we can prevent it, if we can reduce it, it's brilliant for the entirety of society. Here, there is a deal where Pfizer thinks they've got something that's going to be able to give them a chance at playing in this very important area and very massive market, right? So the drugs are interesting. They're relatively early stage. We're looking to see, with some new data coming up, whether some of the promise that we've seen earlier for these drugs that the company has, which the latest stage one is still in phase 2. They need to start the phase 3 in 2026. Whether they are as competitive as they looked in the earlier trials. There were some questions on efficacy, less so than side effect profiles. So we'll have to wait and see how that pans out.
Sam, could you get into the science a little bit and maybe, keep it basic for folks like Paul and me? Because Metsera is described as the next generation hopeful in obesity. They use these long-acting amylin analogs versus GLP-1. And I'm wondering for people who might be holding out for Metsera's treatment, what that means versus the currently available Zepbound or Wegovy.
Yeah. So the latest stage drug is very similar to Wegovy and similar to tirzepatide or Zepbound. The amylin drug is a little bit earlier stage. There are companies with more advanced drugs in that world, but they all kind of feed into the same pathway, which is the pathway that talks between your food intake and your satiety centers in your brain and your insulin centers in your pancreas. It tries to balance, I've eaten enough, let's stop eating now, and let's release some insulin, make it more sensitive so that we can deal with the onslaught of sugar that comes into our blood. That's where they are. Is that central to that space? There's cells in the gut that release glucagon-like GLP-1s, glucagon-like peptides, the cells in other parts of the body who are responding to it. So that's where these things sit. And amylin is just one of those agents in the middle of it.
Sam, just kind of stepping back on these GLP-1 drugs in general, there's a certain level of efficacy today. There's a certain level of, let's say, side effects, whether it's nausea or something else today. Is there room for improvement on both efficacy and side effects going forward with these drugs?
Yeah, I mean, with it's the balance that's the most important. With efficacy, I think we're pretty much there. I mean, there are folks that we know that go on a drug for a week or two and they lose 4 or 5 kilograms. That's fine. You don't want to lose much faster than that because I don't think it's particularly healthy if you lose weight at a much higher speed. And also, you don't want to get much lighter than a 80 kilo or 90 kilo or 75 kilograms, depending on your size. So the key is, how do you get there? If you get there by having lots of side effects, then your probability of staying on the drug is lower. But we want you to stay on the drug. So it's a very, very tight balance. And then, of course, you have to figure out, well, am I happy taking a weekly injection, which I think a lot of people don't have a problem with it. But what if Metsera is right and push it to once monthly? What if some of the other competitors coming along with once every 3 months? Now, those are things that we have to wait and see how the data shows in terms of that balance I've just referred to.
Sam, we mentioned earlier the headline that the White House now says doctors may be exempt from H-1B visa fees that were just announced of $100,000. Obviously, that has huge ramifications for the medical industry. What does it mean, potentially, the $100,000 fee for H-1B visas for the pharma and the biotech industry in the U.S.?
Yeah, I think that any industry that requires skilled workers, I think the sector that's most exposed is one that you guys probably have already talked about, is the tech industry, right? In terms of pharma biotech, I think the US has pretty good existing talent. The point is, though, that sometimes a particular talent is based somewhere else. You just want that particular person. So why do you have to go through this process if they really are the one person who knows this particular disease area so well? And does really 1 or 2 people at that level make a difference? Especially in a sector where US is already a leader, you're not really bringing in people to compete with the US talent. So that's something that I think is important to remember. Doctors, of course, a country that doesn't, like Europe, many countries in Europe aren't producing enough doctors, right. UK especially. You need to allow that.
Yep. Sam, thanks for joining us. As always, appreciate getting your thoughts. Sam Fazeli, Director of Research for Bloomberg Intelligence, Senior Pharma Analyst. He's on some horse farm somewhere in France.
Is that what he does?
Yeah, that's what he does. It's a total scam, but he's worked it out because he's Sam Fazeli. He can do that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence starts in just moments. S&P 500, it's up 12 points now. How about that? The Dow's up 18 points and the Nasdaq's up 68.
Record highs for the S&P down Nasdaq.
Every day. I mean, what tariffs, I don't know.
What me worry now.
Exactly right. Exactly right. We're going to have more coming up. This is Bloomberg. Good Monday morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check out with Mark Gurr. He's got some news on this Aura ring. Is that the thing?
Yeah, $11 billion valuation here for the company.
That's pretty solid, so we're going to have Mark's reporting there. We're also going to have a simulcast with Bloomberg Radio and Television. T-Mobile outgoing CEO Mike Sievert and incoming CEO Srini Gopalan. They're going to speak with Bloomberg Technology anchors Caroline Hyde and Ed Ludlow. So we will bring that to you. RJ Gallo is going to join us here, Senior Portfolio Manager, Fixed Income at Federated Hermes, give us his thoughts on these markets. John Butler, Bloomberg Intelligence, he's a technology guy there. He's going to follow up on that T-Mobile news and give us his thoughts on the company and the stock as well. Jen Reed, Bloomberg Intelligence Senior Litigation Analyst on Live Nation, hit with an FTC ticket suit amid an antitrust probe. I know a thing or two about that Live Nation company and Ticketmaster getting that deal together back in the day. So we'll see what's happening there. So we got a lot coming up in this hour. Let's kick it all off with Charlie Pellet.
Hi, thank you very much. And here's what's going on. You mentioned Live Nation. The stock currently trading lower by 0.1%. The Dow, the S&P, NASDAQ, all advancing. And this Bloomberg Business Flash is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. Stocks higher, not just higher on this Back to Work Monday. We got the S&P right now trading at the best level of the day. S&P looking at a gain right now of 14.6678, where we stand up by 0.2%. On track for another record close. We've got the Dow up 42 right now, up 0.1. NASDAQ up by 0.3%. The 10-year yield 4.12%, with the 2-year currently yielding 3.58%. Gold is up $40 the ounce. The precious metal up 1.1% today. And West Texas Intermediate crude down 0.3%, 62.41 for a barrel of WTI. So again, recapping here, the Dow, the S&P, NASDAQ, all in the green. S&P up 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet. Let's take a look at some stocks on the move today. I'm Scarlett Fu here with Paul Sweeney, and we're joined by our very own Christine Aquino. And Christine, let's start with some gold miners.
Yeah, let's talk about Newmont, shall we? So Newmont, ticker NEM, those shares up just about 1% at the moment. So increasing some of those earlier gains we saw at the open. And that is because we did get news of its latest steps to exit the Canadian market. So the latest is that Newmont sold a stake of 13.3% in Orla Mining, which is a Canadian mineral exploration company. Last week, we did get the announcement that they're also agreeing to sell its coffee project in the Yukon to Fuerte Metals Corporation for about $150 million. So this is all part and parcel of the company's exit from the Canadian markets. They did say that they're going to take their stock off the Canadian Stock Exchange by the end of a trading day on September 24th, so later this week. And that's because the trading volume is too low, according to Newmont, and they need to reduce costs, and that is the best way that they came up with to do that. But they will still trade on the New York Stock Exchange.
Compass, that's an M&A deal out there? What's going on there?
Absolutely, Paul. And shareholders not liking it. So Compass, ticker COMP, shares are down, extending those declines now more than 9% at the moment.
What's it, a real estate company?
It is a real estate company. And, yeah, there you go. Declines just hit 10%. And that is because we did get an M&A deal out of that space. So Compass agreeing to buy Anywhere Real Estate. So this is a $1.5 billion stock deal. And in theory, it should cement Compass's status as the largest residential brokerage in the U.S., right? Because the purchase of Anywhere gives them access to some markets that they're not necessarily dominating in. So the consolidation is helping with that. The transaction values Anywhere at $13.01 per share, which is 84% more than its closing price on September 19th. This is probably why we're getting shares declining today, because I suspect that people are thinking they probably overvalued the share price for Anywhere, because Anywhere shares are rising at the moment.
All right.
But yeah.
We'll keep an eye on that one. And finally, Coinbase, which is really moving in tandem with the other crypto stocks.
Absolutely, Scarlett. So we are seeing crypto down more than 2%. Bitcoin, which is the lowest in a week and a half. And so ticker Coinbase, C-O-I-N, following suit, and shares down nearly 3% at the moment. So some good news from its cardless partner, raising $600 million in fresh funds, but that's just not doing enough for the crypto decline.
All right, Christina Aquino with our movers. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's go now to Mark Gurman. He's our go-to tech gadget guy for more on Aura, because we're just talking about how Aura's, the company that owns Aura, that wellness ring that Christine has on her finger, is now an $11 billion company with its latest capital raise. Mark, this is a Finnish company, and it needed to raise more money, didn't it?
Definitely. They want to scale production. They want to scale R&D. They want to move into new regions. They want to get into new retail stores. They want to add new software features. So they're looking to grow quickly. This nearly $11 billion valuation, this is a pretty specific hardware company. They really make one thing. And if you look at their market cap now, after that raise, you compare it to other companies that are known for really one type of hardware product, Peloton, iRobot, Sonos, Bose. Aura is now worth more than all of them combined, which is pretty crazy to think about. So, so far, this looks to be a success story. It's not a very old company, but it's a company doing effective things, and they're clearly building a product that people like. They've sold 3 million units in the last 15 months or so. They've sold 5.5 million rings to date. They're due to cross 1 billion in revenue in 25, $1.5 billion in 26. They did 500 million in 24. So they seem to be growing quite nicely.
I don't know, not being into the fit ring business myself.
Fit ring, I like that.
Fit ring. I mean, this seems like something that your friends at Cupertino could come out with tomorrow and copycat. How do you think about the competitive landscape?
Yeah, the competitive landscape is interesting. There's a few smaller players that are also doing smart rings. Samsung rolled out what they call the Galaxy Ring last year. And for Samsung, it's actually been a dud. The functionality is just not on par with Aura. What Aura has is a very strong brand. They have very strong functionality, and they have that big first mover advantage. But you're right. If Apple comes out with a ring, they're going to eat Aura's lunch. Aura's perspective is that they have this gigantic and tried and true in legal proceedings patent portfolio. And so they feel that if Apple were to come out with a ring, or another company were to really hit the nail on the head with a ring, that they would be able to defend their patents, and they've shown to be able to do that. They have some cases in front of the International Trade Commission and other organizations right now for some of the other competitors. So we'll see what happens. I don't anticipate Apple coming out with a ring anytime soon. I will say that this $10 billion valuation is a little bit of a double-edged sword. On one hand, that's amazing for the company. On the other hand, it puts them in territory where they're probably not going to be acquired or bought, and which would spur another company like Apple, if they wanted a ring, to develop one versus buy them. And definitely they're going to have to make a decision in the next couple of years whether they're going to go public via an IPO, via a SPAC, or if they're going to stay private.
Mark Gurman, Bloomberg News managing editor for global consumer tech, on the Aura ring maker to become an $11 billion company with the latest capital raise. Paul, in this story that Mark Gurman co-wrote, I just learned that the U.S. military is Aura's biggest business customer. Really? Tens of thousands of service members use the Ring to track things like fatigue and also just contribute to research overall.
Interesting. Very cool. I mean, I've got the little thing on my iPhone, like the counts the steps.
Yeah, that's not the same thing.
That's basically all I do.
You don't want to wear.
By the way,
you don't want wearables.
No, and I set my all-time record steps when I was in the first day we were in Venice. Had to walk 20,000 steps.
Ooh, good
that?
one.
So how about that? All right, let's shoot over to Bloomberg Television right now. T-Mobile outgoing CEO Mike Sievert and incoming CEO Srini Golapan speak with B-Tech anchors Caroline Hyde and Ed Ludlow. Let's listen in.
Why is now the right time for you?
Ed Ludlow, let's listen in.
Why is now the right time for you to hand over the reins in this way?
Because Srini's ready. You know, T-Mobile does it differently. We believe in thoughtful succession. I recruited Srini to the COO position almost a year ago, and he has killed it. And he has an incredibly inspiring vision for the future. And I also wanted to pick a moment when the company is firing on all cylinders, because I think you should do succession amidst success. And so we picked our moment because Srini's ready. He's the person to lead us into the future, and the company has put wind in his sails so that the team can continue to deliver outsized success going forward.
And Srini, okay, the vision, the exciting vision for the future, how much is that about fiber? How much is that about the real expertise you have in a more mature market, having built that with Deutsche Telekom?
Look, when I look back at my career over the last 30 years, it feels like I've been preparing for this day. Because what I've done over the last 30 years is really develop some real expertise at driving technology-driven transformation, whether that's digital, data, AI, fiber, and networks. And that's really what the next stage of growth at T-Mobile is going to be. It's going to be about bringing together this incredible culture, brand, everything that Mike's built, the great value we stand for, together with amazing technology, making it easy for customers to do stuff, giving them a great experience, and America's best network. So there are no trade-offs. You get all of that together at the same time at T-Mobile.
Srini, I'll start with you, if I may. You know, in any life cycle of a company, there comes a point where it's just more mature, right? There's like this corporate S-curve. And so I think it's a really sensible place to start by asking you what you're going to do differently from Mike, given that the company is in a different stage to what it was over the period that Mike led it.
Look, at T-Mobile, we don't believe in kind of sitting on our hands and kind of waiting to see how the industry evolves. We define the industry. We define how this goes forward. Mike and the team have already been talking a lot about the transformation we want to drive, about bringing America's best network together with great value. Not just that, taking the technology we have available today across AI, across our digital footprint, and building the best experience for T-Mobile customers. So what you should expect is a lot of continuation of changing the industry for the good of the customer. And that means a continual transformation. So this is not a business that likes sort of sitting steady and kind of watching the dividends and growth come in. We're there to change the life of our customers, to change this industry for the better. And you should expect to see a lot more of that.
Mike, when I was reading up on Srini ahead of our conversation at Apple a couple of weeks ago, I didn't know that this was going to happen. But, you know, there's a lot of focuses on his time in Europe. How much was that a big factor for you? Because, again, it's a different market there in Europe to here in the United States.
Well, what was a factor for me was just what kind of an executive he is. Srini is tenacious. He is hard-charging. He is competitive. He's customer-loving, and he attracts talent. And he's got a vision for the future of our company that's exciting. So I've known this for years because we've been friends for a long time. We've been co-workers on the board of directors of T-Mobile. I've seen how he thinks. And so a year ago, I convinced him to give all that Europe stuff up and come to the U.S. as our chief operating officer, very much with this day in mind, because I knew he was the right person to lead the company into the future.
You've been bold. For example, Mike, I think of you being the first one to strike that deal with Starlink, to think about direct-to-device satellite communication going forward. Just how is that partnership given you a competitive edge? How much are you seeing people come on board because of the changes you made?
Well, T-Mobile's an innovator. You know, not just direct-to-cell with Starlink. We created the home broadband 5G category, which millions of people benefit from nationwide. We continue, as Srini was saying, to redefine what it means to compete in this category, and then watch while everybody follows. That's why we're the world's most successful telecommunications company. So look, on the T-Satellite, I mean, it's just been fantastic. Our dream, when I announced that with Elon back in 2022, was to end dead zones, the end of dead zones. And today, T-Mobile customers can connect to 600 satellites, the only one that connects your phone automatically if you fall off a terrestrial network.
But, Srini, for example, first on your to-do list might be that Boost Mobile is going to have potential offering because of the new spectrum that Elon then's got with Starlink. How do you consider the future evolution of direct-to-consumer satellite?
When we started off with this vision of putting an end to dead zones, right, that's what we were going for. We're delighted that Starlink has now acquired more spectrum, makes the service even better. Together, what we want to do is live true to that mission of putting an end to dead zones. As far as the competitive world is concerned, we love competition. We love switching. I mean, we've always said this, the more jump balls, the better, because there's only one place that you can get the best network, best value, and best experience. So we love competition. Anything that stimulates even more switching is a good thing.
Srini, a lot of questions that we get from the audience direct to you are about fiber. And so I would summarize T-Mobile's strategy today, little tiny pieces of M&A. How are you going to approach that going forward? You're just going to build this out yourself?
Look, when we approach a new business, right, we approach it with a mix of conviction and humility. We're convinced that our brand, the distribution we bring, what we stand for, our culture of kind of smashing through customer pain points and really attacking incumbents is equally applicable to fiber as it was to fixed wireless. We're also humble enough to realize that we don't have a set of capabilities like local zoning and permitting, and we partner for that, and that's the logic for the JVs. The vision for fiber is not small. I think we've clearly showed our hand. We like being first to fiber. We like being a pure play fiber player, and we will continue to scale that business. On the acquisition questions, we'll see what's available. We'll take a hard-nosed look, allocate capital well, but we do like a pure play fiber business, and we think there's a lot of scale possible with that.
And Ed, just remember that we're the leading broadband growth company in America, even before the fiber pieces that you're now asking about, because 5G broadband has become a phenomenon, and overall, T-Mobile has led broadband growth in this country for 13 quarters in a row.
Yeah, and in a small matter of a few years, we're now, 3 years, we're now the 5th largest ISP in the country, from a standing start.
Hey, gents, you make a good double act, but we're short on time. So, Mike, I'm going to ask my final question to you. You're still in the role till November 1st, critical period of the year for handset sales. What's the data telling you early about iPhone 17, what it's going to do for T-Mobile, the behaviors of your existing and new customers?
Well, it's only been 3 days, but we're killing it. You know, last year we had an all-time record new iPhone introduction. This year we're beating that by double digits. And not just in terms of activating phones for our customers, but in terms of switchers to T-Mobile who are coming at the moment that they get a new iPhone, also up double digits this weekend. And so, you know, we've had a great launch, and, you know, a new phone is a great time for Americans to ask themselves, do they have the right provider?
Switchers was the call that Srini made when we spoke at Apple a couple of weeks ago. Mike Sievert, T-Mobile's outgoing CEO, Srini Gopalan, incoming CEO. Just terrific conversation. Thank you to you both.
All right, that was Bloomberg's B-Tech anchors Caroline Hyde and Ed Lowe speaking with T-Mobile outgoing CEO Mike Sievert and incoming CEO Srini Gopalan. Looking at T-Mobile stock, pretty much unchanged today. It's up about 8% year to date, and up about 20% over the trailing 12 months in our very tough mobile telephone business. All right, let's get a reset of these markets. We do that with Charlie Pellet.
Here's what's going on. We do have the Dow, the S&P, NASDAQ all pushing higher. In fact, right now, just about the best level of the day, close to the best level on the S&P. And this update brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. So the Dow, the S&P, NASDAQ all advancing right now. We do have the S&P higher. It has notched 27 records this year, potentially could see another record close today. S&P right now up 9, 66.73, up by 0.1%. We have got the Dow Jones Industrial Average up by about 0.1%. NASDAQ Composite Index higher now by 0.2%. And also the 10-year is currently yielding 4.13%. The 2-year 3.58%. Spot gold up $41 the ounce, 37.26. We're looking at a record trading above $30 $3,700 on the precious metal, up 1.1%. West Texas Intermediate crude down 0.5%, $62.39 a barrel. As you just heard here on Bloomberg, T-Mobile is elevating its Chief Operating Officer Srini Gopalan to the CEO spot on November 1st, replacing Mike Sievert. Gopalan was interviewed moments ago here on Bloomberg Intelligence.
Look, when I look back at my career over the last 30 years, it feels like I've been preparing for this day. Because what I've done over the last 30 years is really develop some real expertise at driving technology-driven transformation, whether that's digital, data, AI, fiber, and networks. And that's really what the next stage of growth at T-Mobile is going to be.
The 55-year-old Gopalan was interviewed moments ago here on Bloomberg. By the way, he joined T-Mobile back in March. T-Mobile shares up by 0.1%. Again, recapping, 10-point gain on the S&P, up now by about 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Paul Sweeney and Scarlett Fu here on Bloomberg Intelligence. And Paul, on Friday, Nike is going to finally debut its partnership with Kim Kardashian's Skims label. Yeah, this is happening on Friday. It's called Nike Skims. It's going to launch with 58 styles, including form-fitting bras, leggings, and biker shorts, as well as accessories like gym bags and yoga mats. It was delayed for a while because they had production issues.
Now, is this going to compete with like the Lululemons of the world?
Yes, I mean, that's the idea. Nike needs a win here because it's been trying to figure out its way after it basically cut all its relationships with third-party retailers and decided to go straight direct-to-consumer, and that didn't work out too well.
Interesting. And so this athleisure segment is been a pretty strong segment, particularly like in the pandemic. People were just going nuts. That's the type of clothing they were buying and wearing. Now it's probably on the other side of that a little bit. But even before that, my understanding, listening to like Poonam Goyal, who covers that part of the retail space, it's a growth part of the business.
Yeah, people aren't necessarily buying leggings for yoga anymore. They're now really favoring baggy pants. But at the same time, people are wearing Kim Kardashian's Skims line in general, just as clothing, as tops to go along with whatever, baggy pants they choose these days.
Baggy pants?
Yeah, baggy pants are all the rage. And that's why Lululemon's been struggling a bit too, because, how many more pairs of black leggings do you need?
Exactly. All right. Very good. So be on the lookout for that, Nike and Kim Kardashian. Let's get back to the bond market. Again, looking at the 10-year Treasury yields.
That was a hard transition.
That was a hard transition from leggings to the bond market. RJ Gallo joins us here, Senior Portfolio Manager, Fixed Income for Federated Hermes. He's out there in Pittsburgh here. All right, RJ, we've got the Fed starting to cut rates. How are you guys playing out kind of this scenario here? Maybe the cadence of rate cuts, the pace. How do you guys think that's going to work out?
Well, I need to make sure I got my baggy pants on, make sure I'm comfortable enough.
Very good.
Actually, I'm wearing a suit. We're old-fashioned here. No tie, but I'm wearing a suit. So the bond market has reacted, with a little bit of pause, I think. The bond market sort of front-ran the Fed. If you look at it on a month-to-date basis, the 30-year, 20-year, 10-year Treasuries, they're down 10 to 15 basis points. They got lower, anticipating, I think, a more dovish Fed than we might have actually received. The Fed signals via the dot plot what it expects. I think Atlanta Fed President Bostic's on Newswires this morning talking about, maybe you don't need another cut this year. So, the dots didn't exactly embrace the amount of easing in 26 and into 27 that the market had priced in. So we're in for a little bit of a period now where you have to reconcile a bond market, an interest rate market where more easing's priced in than what the Fed has signaled. So we need more data, really.
We need more data. Sorry to interrupt, RJ. We're going to get more data on Friday. The August core PCE is coming out. And before then, we're going to get some Fed speak, right? Stephen Myron will be speaking today. You have Jay Powell, of course, speaking tomorrow. Do you anticipate either of those Fed commentary to set expectations for the August core PCE?
Well, Stephen Myron is getting a lot of attention, obviously. His appointment to the board has been atypical. He's basically on leave as an unpaid chairman of the Council of Economic Advisors, which is an office within the executive office of the president, the White House, so to speak. He's expected to be pretty dovish. He dissented at the last meeting. I think people were talking about the Myron dot, which was the lowest Fed funds dot for calendar year 2025. I would anticipate what he says isn't going to be very surprising. He's going to argue that rates need to come down. But don't know if that'll be a market mover. I do think the cumulative total of all the Fed speakers, and I think there's a bunch of them scheduled for this week, should be potentially revealing and could help be at least one variable to consider as the market has more eases priced in than the Fed signaled in their dot plot. So there's going to be a lot of eyes and ears on Fed speakers. There always is, but when there's a disconnect between market pricing and the Fed signaling, that's when those speakers potentially have greater market influence. The data on Friday is key. You know, the CPI and the PCE, the market's gotten pretty good at looking at the CPI and coming pretty close to where the PCE is expected to come in. Looking on Bloomberg, you see the PCE price index. It's expected to be on a core basis. Hold on a second. Here we go. Core PCE is expected to be just a 0.2, which is reasonable. The headline number is expected to be 0.3. Numbers like that are not going to surprise. And I think the market's gotten really good at taking CPI, PPI, cobbling together their parts and coming up with PCE. So PCE's become a bit less of a market mover than it was a couple of years ago as a result.
One of my favorite stories on the Bloomberg terminal today, RJ, is Royal Caribbean. They got upgraded by Fitch. They're coming back to the bond market. Why not? And in Bloomberg's reporting, it says approximately $30 billion of fresh debt issuance this week. That's even with the Rosh Hashanah holiday. What's going on with you guys? I mean, you're buying everything hand over fist out there. What do you make of when you see this new issuance market be as robust as it is?
Yeah, well, it's been particularly robust in the corporate space. The bottom line is when the Fed tightened starting in 2022, you drove yields to a much more attractive spot. Corporate yields, treasury yields, all in real terms north of expectations of inflation. Some people might call them yield-oriented buyers. I would just call them fixed income investors. When yield has been restored as a driver of total return in treasuries, in munis, in corporate bonds, and people respond to those higher yields with capital. We've seen the issuers out there, the corporations, the municipalities, certainly the federal government continues to issue, no issues there, right? The issuers are definitely meeting the demand for paper. I think the bigger question going forward is how warmly the treasury auctions continue to unfold. I mean, I don't think we're going to ever have a failed auction in the United States. That's not the point. I think it's going to be interesting to see what the treasury auction sizes are going to be in months and quarters to come. The budget reconciliation bill in the long run is viewed as somewhat restrictive in the sense that you're going to have more tariff revenues than you are going to have deficit increases from the extension of the Trump tax cuts and the new tax cuts. But in the very near term, that act was in fact somewhat stimulative. And we might see some rising treasury issuance challenges, which I think the administration is going to go to the bill market for that. We'll see how that unfolds. I also think it's interesting how the yield forecast, BYFC, if you bring that up on your Bloomberg, all the yield forecasts suggest we might have already seen the lows in the 10-year. Our view is we still think we could break through 4%, maybe end up with a high 3 handle. But it does seem true that the post-pandemic world is going to have a higher yield environment than we had in the pre-pandemic world. More productivity, a lot of federal borrowing. So at this point, yields are apt to stay somewhat elevated, and yield-oriented bond investors are reacting.
All right, fantastic stuff. RJ Gallo, thank you so much. RJ Gallo, Senior Portfolio Manager of Fixed Income at Federated Hermes. Let's go back to a story that we were talking about earlier, which is the CEO change over at T-Mobile. We just spoke earlier with the outgoing CEO and the incoming CEO with our Bloomberg Television colleagues, Caroline Hyde and Ed Ludlow. And so now we want to bring in our Bloomberg intelligence expert, John Butler, the Senior Telecom Analyst, for more on this. John, was this a surprise, this changeover?
Not at all. This was incredibly well broadcast. Srini has been hitting the conference circuit. So at this time of year, all the major investment banks hold these conferences. And he's been at almost every one, sort of out there telling the T-Mobile story. And in my mind, it answers one of two questions, right? With any incoming CEO, you're like, can they manage the company effectively? And can they manage the stock effectively? Can they get that narrative out, spin a good story? And he is really good at that. So he's answered the second question, and I think in some ways he's answered the first as well.
Talk to us about the wireless business these days. It's just a brutally competitive business. Just give us the lay of the land there between AT&T, Verizon, T-Mobile, and I don't know anybody else who might be out there.
I mean, the big three are still dominant, Paul, and T-Mobile has executed beautifully over the past few years. You know, they've done a very good job of sort of securing the lead in terms of subscriber growth by, you know, marketing on this hip counterculture brand image. They continue to be, I think, having an outsized impact on consumers. When you think of wireless, it really is a consumer retail business. They all have thousands of stores. They advertise on the Super Bowl. They have giveaways. And I think T-Mobile, more than most, really does that well. And I think the big three, because of their scale, it sort of sets this sort of wide moat for any newcomers that want to come in. So T-Mobile as number 2 in the industry, I think, is going to remain firmly in that place, if not move into the number 1 position over the next several years.
Who's number 1? Verizon?
Number 1 is Verizon
Okay.
still. So
I'm a Verizon person.
I am too, by the way.
You just went to Italy,
Yes.
and what did you
Fine,
do for your phone
perfect.
needs?
Fine. I have a plan that just ports over to an international.
Okay, because
all of my offspring. That's the only thing that I still pay for.
They're on the payroll in that regard.
Yes.
No one wants to give that up. Why pay for your own cell phone service when Dad will pay for it?
Yes.
I switched over to T-Mobile because
You
of the
did?
giveaways. Yes,
Wow.
because of the free iPhone last cycle, and also because you get free data and free international texting when you're overseas up to 5 gigabytes. So that means I never have to buy an international day pass.
Comparison shopping.
that is
Very
the
cool.
single biggest hook I hear. So when
Really?
people come to me and they're like, I'm a T-Mobile subscriber, they have all these giveaways, and they have international calling.
That makes a big difference
It
because when I was on
does. It
AT&T, I
does.
was paying $10 a day,
Yeah.
and that adds up really quickly.
It does. It really does.
And then only one person in the family can get it because not everyone's going to get it.
Right.
And you have 4 offspring, plus an ex-wife you're still paying for.
Well, there you go, Paul.
Charlie Pellet is on the T-Mobile. He always tries to sell me to go to
Charlie
T-Mobile.
also knows the great deals. That's
Yes.
the secret here at Bloomberg.
Right.
Charlie
and he's
knows
always
all the great
traveling to
deals.
strange parts of the world where he probably needs that kind of stuff. So what's the future of wireless in this country? Is it just ARPU growth, average revenue per user? I mean, is that kind of the story for everybody?
That is the great question. That is what's driving growth now. For a telco, you sort of run out of room for adding new subs, and so you need to drive that average revenue per user, and they're doing it with the giveaways we were just talking about. They actually charge modestly for those in some cases. They're selling you phone insurance. T-Mobile is now pushing into the advertising business. But the real avenue of growth to watch for them going forward is broadband. They are making more and more inroads into that market. And T-Mobile, it's what I'm watching with the new CEO here to see what he does in fiber broadband. Because if T-Mobile has had any sort of a misfire over the past decade, it's not getting into fiber broadband in a bigger way, in the way that AT&T and Verizon both have through sizable and aggressive acquisitions. So it'll be interesting to see what he does there. My call is he's going to start building quickly and aggressively, would be my guess.
Another thing I just thought of that sold me on T-Mobile was they have a really simple bill, right? They don't have the quoted amount and then tax on top of that. Everything's included,
Right.
which makes a big difference.
Right.
It's user-friendly.
They're very good at consumer branding. They really understand the consumer and what they want in wireless and from their carrier. So
And Snoop Dogg.
He's a
spokesperson.
Yeah, I know.
So when it comes to fiber optic, how much more of that rollout is left? I mean, where are they in that not transition, but in that build out? Is it like second inning or is it eighth inning?
So I'm going to call second inning. Here's the really interesting fact I picked up recently. If you look at Canada or even Europe, parts of Europe, fiber broadband is 70% of the total installed base of broadband subscribers. And keep in mind, fiber is far and away the best medium for broadband. It has truly symmetrical speeds, so upload and download, great for Zoom calls, and it's extremely high capacity. So it's sort of future-proof in that sense. The U.S. is only 30% penetrated with fiber, so I think there's lots of room to run there, and that's what AT&T has done so well. They have really leaned hard into a fiber broadband strategy. Verizon has and is continuing to lean in there, and T-Mobile is the laggard. So again, with the new CEO coming in here, I'm looking to see if we'll see any change in that strategy of theirs.
All right, John Butler, thank you so much. We appreciate that. John Butler, he's a senior telecoms analyst for Bloomberg Intelligence. Again, T-Mobile, get some new management coming in, and I'm just looking at that stock. It's up about 8% year to date, so that's a competitive business. Just quickly looking at these markets here, S&P up 11, the Dow up 37, and NASDAQ up 59 points. That's about 0.25%. In the bond market, pretty quiet right here. We got the 2-year Treasury up a couple of basis points, 3.59%. The 10-year up about 1.5 basis points, 4.14%. Tom from the Upper East Side emailing in, he needs his Bitcoin quote. It is down 2 points.
From the Upper East Side.
Exactly. With the beverage of his choice in his hand, it's down 2.5%, $112,000.
He can't stay away.
I know. More coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
On Wall Street, we do check markets all day long here at Bloomberg. Stocks holding close to morning highs. The Dow, the S&P, NASDAQ, they're all in the green. Right now, looking at the S&P 500 index, it is advancing by 9. That is a gain right now of about 0.1%. Could see a record close today. The Dow up 26 now. That is a gain of just under 0.1%, while NASDAQ higher by 56, up by about 0.2%. So far this year, by the way, the S&P 500 index has notched 27 records. We've got the 10-year yielding 4.14% with a 2-year 3.59%. Gold up 1.3%, 37.32 the ounce. And West Texas Intermediate crude a retreat there, down 0.3%, 62.50. Bitcoin selling off, back with a $112,000 handle, down by 2.3%. The Trump administration is planning to raise the H-1B application fee to $100,000, which has caused concern among skilled immigrants to the United States. But what about potential market implications, specifically big tech? Janet Mui is head of market analysis at RBC Brewin Dolphin. She was a guest on Bloomberg Daybreak.
The large technology companies in the U.S. will be able to navigate this. I mean, they have the resources to pay the visa fee or have other arrangements. So I don't really think it will impact the market itself.
Janet Mui of RBC Brewin Dolphin. Speaking of big tech, Oracle shares up another 3.5%. TikTok's algorithm will be secured by Oracle in a Trump-backed deal. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet, Scarlett Fu, and Paul Sweeney here on Bloomberg Intelligence. And there's a lot of news out after the market closed on Friday, including the FTC and 7 states suing Live Nation and its Ticketmaster unit. The problem here is not stemming the use of automated ticking bots in large-scale resale operations. And this is a lawsuit that could punish Ticketmaster and Live Nation for billions of dollars in penalties. So I guess, Paul, it's a victory for Taylor Swift?
I don't. I mean, she always comes out on top.
There you go. There you go. All right, let's bring in Jennifer Rhee. Jennifer Rhee is our senior litigation analyst for Bloomberg Intelligence. Jen, what were your first thoughts here when you saw this news that the FTC in 7 states are suing Live Nation?
Well, I think, first of all, not too much of a surprise because they did recently sue a much smaller entity over the same law, which is called the Better Ticketing Online Sales Act, or the BOTS Act. And Live Nation was mentioned an awful lot in that lawsuit. So it sort of led to the conclusion that there might be another suit brought. And President Trump did order the Federal Trade Commission to better enforce this act back in an executive order in March. And they have a report due to the president on September 27th. So saying, what have they done to better enforce the act? So I think it's not a surprise that a big lawsuit came down before that report is due.
You know, you talk to the Live Nation people, and I've known them for a long time. I think they want to clean this stuff up. They want to take out the middleman, the scalper. They want to simplify the fees because they know the feedback is terrible from their customers. But this is still a thing, isn't it? I mean,
yeah, no, right. Well, first of all, antitrust cases tend to be backward-looking. So what they may be taking efforts today, but we're looking at what they've been doing since 2018, essentially. The other thing is, they do say that, and they have said that to the Department of Justice and to Congress as well. But if you look at what's been alleged in this lawsuit, there are an awful lot of statements and documents cited when there are internal business communications going on that suggest that they've kind of turned a blind eye to the broker activity because they profit from the resale market of those tickets as well.
How do they do that?
Well, because they sell the primary ticket and take fees, and then the brokers buy in bulk, and then they resell it on Ticketmaster's resale arm. Ticketmaster charges just to list it, and then they take another fee when the ticket's actually sold. So they're basically double dipping on the same ticket.
How is this different? I know, that's not good. How is this different from what ticket resellers, Vivid Seats or AXS or any of those other companies that consumers have the option of using, how they operate and how they collect fees?
So this is about whether they knowingly resell these tickets. Now, a reseller could sell a ticket that's been bought improperly by a bot, but not know it. They could implement security measures, not understand the extent to which the bots and the scalpers have been able to technically go around those security measures. and then, in an honest attempt to provide a place to resell the tickets. In this case, what the FTC is saying is that Ticketmaster knowingly did this, and they didn't step in the way. They didn't implement any of the rules that they have internally to stop it. They let it happen. So it remains to be seen whether some of the other resellers have that same kind of evidence internally. It may be that they're doing what they can to prevent the conduct, and in that case, it may not violate the Bots Act.
How about the Department of Justice? What are they doing with this company? I mean, is there talk of breaking up Live Nation from the Ticketmaster?
There is. The Department of Justice has been going after this company for years, ever since Live Nation acquired Ticketmaster, which, yes, Paul, I know you worked on that deal, right? And that was done with a consent order, meaning Live Nation promised to behave a certain way if they were allowed to buy the company. And essentially, it's been alleged and investigated and found twice now that they violated that. So now the Department of Justice has just sued them and said, you're engaging in all kinds of anti-competitive activity by virtue of your strong position kind of in every aspect of the live concert and live event industry. And, the only answer at this point is to force you to sell Ticketmaster, because when we impose behavioral conditions, you just ignore it.
How do you see this resolving? Is this going to be something where they battle it out to the very end and get a verdict, or are they going to try to settle?
Well, I think two different answers depending on the lawsuit. I think on the FTC lawsuit over the Bots Act probably ends in a settlement because the penalties are astronomical. Over $53,000 per violation.
There you go.
And we're talking about probably 5 million violations a year.
And counting.
And counting, right? Starting in 2018. So that probably ends in a settlement for a fraction of what ultimately could be fined. The Department of Justice suit, I suspect Live Nation will fight for many years. That goes to trial in front of a jury in March. So we're actually probably going to have a verdict in the first quarter, unless they manage to finagle a settlement, which I understand they're trying hard right now to settle with the Trump administration. But if they don't, it goes to trial in March. We'll have a jury verdict. I think it'll be hard to find a jury that's not going to be inclined to rule against Live Nation if they've ever tried to buy a ticket for an event.
Absolutely. Like, how can you find someone who's completely objective about this and has no real firsthand experience?
Exactly.
No, I look at, as a whole stock analyst I am, I look at the stock, it's up 26% year to date. Is that the market telling me we've got an administration in office right now that might be open to a deal? Is that kind of what it's saying, do you think?
I think so. I think there are those out there that think Live Nation may be able to get some sort of a deal. We know they're making a lot of efforts to do so, and doing things the way seem to have been successful for others with this administration. And I do think that's the sentiment. And also, it's a long way away from something happening. Even if they lose this jury trial in March, then the judge has to decide on a remedy, then they appeal. That remedy probably gets stayed pending the appeal. So we're really not looking at an impact for a couple more years.
In the meantime, you have artists trying to, limit how they sell their tickets as well, and that just creates confusion for consumers too. They'll release a slate of tickets and then hold off and then release another slate of tickets. And if you want to transfer tickets to someone, it's very difficult on the Ticketmaster app because they want to make sure that you're an actual person, not a bot. I mean, it just gets difficult for people who just want to go see a show.
Right, and that's why this is a politically popular cause. This is the one thing that leads me to think maybe the DOJ won't settle with Live Nation despite the efforts, because this is really, the Taylor Swift fiasco brought it all to the forefront more than ever.
Bruce
Springsteen, right? There have been other issues since then, and it is politically popular. We'll see what happens there.
The only way, musical folks can make money is touring.
Right.
I mean, I don't get anything on record
Spotify doesn't pay you anything.
No, I mean, it's it. Right. That's why you got, I saw Eric Clapton last Friday night at the Garden. The dude's 80.
Was he sitting the entire time?
No.
No, he stood?
Standing most of the time. Sounded great. I don't know. But I mean, they're selling their catalogs.
Right.
For hundreds of millions of dollars. Right. And they're still touring.
And merch. Tons and tons of merch.
And that's the problem with these astronomical ticket prices. That excess doesn't go back to the artist. It's just going to the middleman or going to Live Nation or Ticketmaster, whoever the reseller is.
Yep. So anyway, interesting part of the business. All right, Jen Rhee, thanks so much for joining us. Jen Rhee, she does all the antitrust stuff for Bloomberg Intelligence, looking at Live Nation. Again, Live Nation stock kind of flat today, but up 26% year to date, up 57% on a trailing 12-month basis. So the market doesn't seem to be too concerned about any of these legal headwinds.
But this has been going on for so long now. It's kind of like out of sight, out of mind.
Since the day we put this deal together. All right, we're going to have more coming up. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. So head over there and check us out. I want to check out one of the really cool stories on the Bloomberg, deep reporting, talking about the fertility infertility industry. Jackie Davalos joins us. She's a tech reporter for Bloomberg News, and this is a tech story. And it's also accompanied by a nice podcast. The first episode launched on Friday, and the other two are on Saturday and Sunday. The next two episodes air this upcoming Friday and Saturday. Okay, got that. So, Jackie, thanks so much for joining us here. Talk to us about this company that you guys found, Kindbody. What do they do?
So Kindbody is a venture-backed startup, which is how it came on my radar because I cover VC and startups broadly. And this was really Silicon Valley attempt at disrupting fertility care, IVF. It's extremely expensive. It's typically in very sterile doctors' offices, but they really wanted to become what they called the Starbucks of IVF with spa-like clinics, a really inviting, millennial, Instagram-worthy aesthetic. And I've been looking at them for over 2.5 years, and I uncovered a pretty different story from kind of what you see when you walk into one of these really inviting clinics. I spoke to over 100 current and former employees, over 50 patients, to really piece together what was going on behind the scenes. And it really came down to expanding too quickly and understaffing, these inconsistent lab protocols in the embryology lab, embryologists who were handling too many embryos that they could handle. The volume just kept coming in as they grew. And this came with consequences, as many Silicon Valley stories often do when it comes to rapid growth.
When I just kind of started looking at the story, Theranos kind of came to my mind. I'm not sure if there are parallels here, but what is this? Where is Kindbody now? How's the story developing now? Are they still in business? What are some of the repercussions that you learned?
They're still in business, but some of the consequences that came out of this rapid growth had really devastating results for the people that were going through this treatment. IVF is not only expensive, but it's really heart-wrenching for the families that go through it. I discovered multiple instances of embryos being accidentally destroyed, mislabeled, mixed up. One couple had the wrong embryo thought on their transfer day. Another woman's only embryo was mislabeled and eventually had to be destroyed. Now, I should note that the company has acknowledged some of these incidents and has said that accidents happen across the fertility industry, not just at Kindbody. They've also called my reporting inaccurate, but when pressed on specifics, they haven't mentioned exactly what is inaccurate. But again, I not just pieced together this through interviews, but through a trove of documents, I was able to see just how much money this company was burning and the consequences that had on patient care. Doctors were effectively pressured into raising their egg retrieval quotas to meet financial targets, and eventually patients saw that on the other end.
Who's kind of been investing in this company? Who's been supporting this company, funding this company?
Well, a slew of venture capital backers, including Google Ventures, which is Alphabet's venture capital arm. You also had private equity like Perceptive Advisors, Claritas, and celebrities, frankly. You had Gwyneth Paltrow, Chelsea Clinton, and this was a really buzzy startup when it was first founded. It was in 2018 when it first came on the scene, and you never really had a fertility company looking to kind of be the one-stop shop for fertility care. Women's femtech, quote-unquote, companies were really popular back then, so it garnered a lot of attention, not just from the traditional VC and PE types, but from also celebrities.
What do you think the future of this company is in the marketplace?
It's gone through a lot of ups and downs, but last year I reported that they were struggling to raise another round of capital. They got pretty desperate toward the end. I reported that they were actually shopping themselves around to potential buyers for a sale at a fraction of their $1.8 billion valuation from 2023. And that was a real decline for them. They closed down a lot of clinics. People were laid off. Doctors were leaving. And today it still exists, but it is really kind of a shadow of itself in some ways. I think more patients are starting to ask questions about what's actually going on. If you look at their reviews, they're not great. You should take those with a grain of salt, of course. But certainly they've come down from their heyday in 2018, certainly.
Are there other competitors trying to kind of do what they do, i.e. just make the experience a little bit more positive, a little bit less onerous, a little bit less maybe costly?
Of course, I think that's the biggest goal the fertility industry has, to increase access. The biggest barrier right now is just how expensive it is. And Kindbody had a really good idea, to give them some credit. They wanted to make this more affordable and more accessible for people. But at the end of the day, the industry is also grappling with the fact that it self-polices itself, and regulators have never really looked at it because it's a very politically fraught field, unlike other medical fields that have to report when errors happen in a hospital, for example. Fertility clinics are not required to do that.
Interesting. All right, great story. Jackie Davalos, thank you so much for joining us. Jackie's a tech reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. The new podcast, IVF Disrupted, the Kindbody Story. The first episode launched on Friday. The next two episodes air this upcoming Friday and Saturday. So check out that podcast. Interesting story, to say the least. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just moments. The S&P is up 8 points. The Dow's up 21 points. And the NASDAQ is up 53 points. 10-year Treasury yields hanging right at 4.14%. For Scarlet Fu, I'm Paul Sweeney, and this is Bloomberg Intelligence. Good morning.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. President Trump teases an announcement on autism.
It's going to be one of the most important news conferences I'll ever have.
I'm Stacey Lynn at the White House, where the president is expected to raise concerns about the use of Tylenol by pregnant women, linking it to autism.
I think it's a very big factor.
But CBS medical contributor Dr. Celine Gounder disputed that claim, citing a recent study from Sweden.
They found no increase in risk in autism or other intellectual disabilities.
And she says the big question now,
will women end up taking other medications like aspirin or ibuprofen during pregnancy?
Which she says can be dangerous.
The Washington Post reports the administration will also tout a drug as a possible treatment for autism. President Trump's indicated that billionaires like Rupert Murdoch and Michael Dell could be part of a deal in which the U.S. takes control of TikTok. CBS's Willie James Inman is at the White House.
One of the major things that the president will do in terms of moving this deal forward is sign an executive order later this week saying that this deal meets the terms of the U.S. national security review.
Officials report aftershocks in the San Francisco Bay Area after a magnitude 4.3 earthquake before dawn. Some minor damage reported, no word of any injuries. There are damage reports in the Dallas-Fort Worth area after a storm packing golf ball-sized hail and 65-mile-an-hour winds rolled through. Reporter Aaron Jones of CBS News, Texas.
Denton County Emergency Management tells us multiple RVs were damaged in the winds. One person was actually taken to the hospital, Denton Presbyterian Hospital, in critical condition. We spoke to a resident who described what she saw.
I could see RVs, and then next thing I know, I saw the sky, and then it slammed the RV down, pushed it over about a foot. The whole RV.
Overseas, an analysis of heat deaths in Europe.
Researchers at the Barcelona Institute for Global Health say more than 60,000 Europeans died from heat during last year's record-breaking summer, bringing the total over 3 summers to more than 180,000. Global warming's hitting the continent hard, with Europe heating up twice as fast as the global average. And a separate study found global warming was behind 2 in every 3 heat deaths in Europe during this past scorching summer. Vicki Barker, CBS News, London.
In New York City, there will be no casino in Manhattan. Today, a community board rejected a proposed Mohegan Sun resort near United Nations headquarters. Wall Street, right now the Dow is up 20 points. The S&P is up 9. This is CBS News. a new streaming record for a music star.
Bad Bunny made history at the end of his 31-night residency in San Juan over the weekend. He surprised the audience by bringing fellow Puerto Rican superstar Mark Anthony on stage and broke the record for most watched music live stream on Amazon by a single artist with his concert Una Mas. Bad Bunny's agreed to a multi-year partnership with Amazon to give back to Puerto Rico to help develop education, technology, agricultural support, and economic development on the island. Deborah Rodriguez, CBS News.
An animal handler was killed by a tiger under his care at a preserve for big cats in southeastern Oklahoma over the weekend. Growler Pines Tiger Preserve called it an accident. All tours at that facility have been canceled till further notice. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The TikTok deal begins to unfold, but how long will it take to close? Welcome to the Monday edition of Balance of Power. As we learn, TikTok's secret algorithm will in fact be secured by Oracle. But what role will the government take? Who's going to sit on the board? We've got a lot of questions, and we'll pose them to Bloomberg's Michael Shepard, who's all over the story once again today. Before we bring you an important conversation this hour with the newest member of the Federal Reserve, Fed Governor Stephen Myron, and a fireside chat with Bloomberg's Saleha Mohsen at the Economic Club of New York that's just about to tip off. We're going to spend some time today with Bloomberg's Mario Parker here in Washington, D.C., and it all comes after a look at Wall Street. Charlie Pellet has that for us at World Headquarters in New York. The Monday trade, Charlie, how's it look?
Right now, higher across the board, little changed. We have got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index right now higher by 10. That is a gain of roughly 0.1%. S&P at 6674 could see a record today. By the way, the S&P has notched 27 records this year. We are seeing small gains with the Dow up 10 now, little change there. NASDAQ Composite Index up 66 on NASDAQ, a gain of 0.3%. Our Mag 7 Index pushing higher by 0.6%. The 10-year 4.14%. The 2-year 3.59%. Gold right now is surging $53 the ounce, up 1.4%, $37.38. And West Texas Intermediate crude a retreat there, down 0.3%, $62.50 a barrel. Bitcoin down 2.2%, $112,896 on Bitcoin. Trump administration officials plan to link the active ingredient in Tylenol to autism today. That's according to the Washington Post, citing sources. There is a briefing scheduled for this afternoon. The maker of Tylenol is Kenvue. That stock now down by just about 6.5%. The Trump administration's plan to raise the H-1B application fee to $100,000, causing concern among skilled immigrants in the U.S., including grad students and workers in the tech industry. It's also raising speculation about the potential impact on the American technology landscape. Seema Shah is Chief Global Strategist at Principal Asset Management.
It's a real question on innovation for the US. How far can technology go before you start to see a bit of a catch-up? So I don't think this is necessarily a moment for rethinking the trade, but I think that it could, in the longer term, have some impact on the strength of technology in the US if they're not able to grab some of those most skilled workers from other countries.
Seema Shah of Principal Asset Management interviewed today on Bloomberg Open Interest. We got Apple higher, breaking into positive territory on the year. Apple now up by 4%. Again, recapping the Dow, the S&P, NASDAQ, all higher. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Mario Parker.
All right, Charlie Pellet. Many thanks, Charlie. The whole political world will be looking at New York a couple of hours from now and for the rest of the week with the United Nations General Assembly getting underway. They're all going to see Charlie Pellet, the voice of Wall Street and the New York subway. Charlie, thank you so much. I'm Joe Matthew in Washington. Thank you for being with us on the Monday edition of Balance of Power here on Bloomberg Radio. We're on satellite radio channel 121. On YouTube, watch us as we speak by searching Bloomberg Business News Live, unless you're already watching us on Bloomberg Originals. If you are, welcome. We have a lot to talk about before we send things back to New York. In fact, a conversation later this hour with Stephen Myron that we're going to bring you here. Bloomberg's Saleha Mohsen will be conducting that conversation, a fireside chat live from the Economic Club in New York. But we're talking TikTok today. as we start things off on this Monday, because a lot of news broke from late Friday across the weekend into this Monday as we get a better sense of what this deal might include. And I want to mention as well that it's my honor to introduce to you someone who, of course, requires no introduction. He's been on this program a lot of times. My colleague from Washington here, Bloomberg's Mario Parker, has been spending the week with us here on the early side of Balance of Power. It's great to see you.
Thanks for having me, Joe. Really appreciate it.
We've been talking about TikTok for years. I mean, it was the bipartisan affair to hate TikTok, block the talk. They passed a law. And we've been spending, it seems, every minute since then trying to unwind it.
You know, every time I read a TikTok story, I remember about 2020 when Donald Trump was trying to broker a deal during the first Trump administration. Yeah. And here we are some 5 years later, and the president, who has returned back to office, is now trying to do the same thing. Exactly. So with that, and the details aren't much clearer, right? So over the weekend, the administration continued to clarify its position. Some of the deals that, President Trump said that he had forged with Xi Jinping on Friday, but it's still unclear as to which owner, who will take on the company in its U.S. form. We know that Oracle will be involved. We've long known that Oracle would be involved as well. Yeah. One thing that is interesting in this Trump 2.0 is the president won't get a golden share.
Yeah, how about that? Although apparently a number of board seats. And I want to get to the algorithm. Apparently we're going to be licensing this because none of this was kind of outlined in the law that still needs to be met to some extent unless they undo the law. Michael Shepard's been working overtime on this. Of course, Bloomberg's senior editor for technology and strategic industries. He's with us at the table as well. Mike, great to see you. Maybe you can answer some of the questions we're asking here, because this doesn't sound like a deal that Congress certainly had in mind when it wrote this legislation.
Well, and it's still taking shape, Joe, and as Mario was just pointing out, we're only learning the details as they trickle out from the White House. We still don't know the full composition of the investor consortium on the American side, and the price, too. I mean, in any of these big deals, you want to know, what are they paying for? But one of the key sticking points, Joe, and this is what you just brought up, is the algorithm. Who would control it? One of the big concerns raised by lawmakers over the years, and one embraced by Trump during his first term in office, is that the algorithm could potentially be used to shape public opinion and allow China perhaps to disseminate propaganda to the American audience. And that's one of the reasons why this whole divestiture ban effort began more than 5 years ago and culminated in the law that Joe Biden signed last year. But we are still learning about what will happen to the algorithm. Oracle will have some role in overseeing the retraining of a copy of this algorithm. It'll be licensed from ByteDance. But will that be good enough for John Molinar, who is the head of the House China Committee? Good question.
And Mike, one of the things, how difficult is it to kind of bridge the gap from the U.S. interest, right, about the algorithm, but then also the Chinese laws that forbid the export of this as well?
Well, this is really the dilemma, Mario, and I'm glad you hit on that point, because China also has a lot at stake from its point of view when it comes to its own national security, and it views sensitive technology like the ByteDance algorithm as something that it does not want to see exported, and certainly not exported to a geopolitical adversary like the United States. So it was interesting to see on Friday as the president was touting what he saw as Chinese leader Xi Jinping's approval of the deal. We heard from China's foreign ministry a far more restrained take on whatever had happened during the call between the two leaders earlier that day on Friday when it came to TikTok, because the Chinese version of events was that they wanted to make sure that whatever happens to the company in question, they wanted to ensure that Chinese law would be respected in the process. And that leaves open the question of how much more work may still need to be done there.
So have we heard from China specifically about this, or is it all coming from the White House? And this idea of copying the algorithm, what could go wrong here? We're sure we're going to get the same algorithm that is the secret sauce of TikTok?
Well, on the China side, when it comes to this idea of a copy and licensing it, we still have not gotten a response from them there. It's a lot to digest, and there are legalities and technicalities that need to be cleared, of course, not only on the China side, but on the U.S. side, because then we also see the question, Joe, as you alluded to, how or are we really sure that TikTok in the U.S. can be fully disentangled from ByteDance, as the law would stipulate, and as the president himself would like to see happen, because there is a security question that everybody has acknowledged, and it would really be a technical feat. A lot of that would fall to Oracle, which already provides TikTok in the U.S. with a huge amount of data services and cloud computing, and having more oversight of an algorithm tailored for the U.S. audience would be even more business for them in a way.
Now, Mike, you've covered both tech and a long history with Trump as well. How surprised are you that there won't be a government board seat, at least as of right now?
Well, if you had asked me that maybe last year, I wouldn't have been as surprised. More recently, though, seeing how the president has really taken what we might view as a more interventionist role with various companies. And you think of U.S. Steel with the golden share. When you think of the government taking a 10% stake in Intel, the struggling U.S. chip maker, now it does make me wonder, well, are they not getting a piece of the action here? But clearly, the U.S. is orchestrating this deal. And the president himself has said that the U.S. will be getting what he sees as a fee plus. Who knows what it will bring in, but it won't be an insignificant amount of money when we think about the overall value of the venture.
I love the fee plus conversation. Mario, it's a good thing we've got Shep with us here, because we have a breaking story here. It involves a company you spent a lot of time covering, and that's NVIDIA. Yeah. Remember the freak out, I think it was last week, beginning of last week, the $5 billion investment in Intel? NVIDIA just now announcing a $100 billion investment in OpenAI, a strategic partnership, as they're calling it, enabling OpenAI to build and deploy at least 10 gigawatts of AI data centers with NVIDIA systems, the NVIDIA stack, representing millions of GPUs for OpenAI's infrastructure. This is going to be an enormous bit of business for NVIDIA. What does it mean for the greater AI spend and the AI race?
Well, this really just adds more juice to that. I mean, when you think about where companies, the hyperscalers, not only OpenAI, but Meta and Microsoft and Google, they are all forging ahead at light speed, trying to make sure that they are breaking ground in these data centers so that they can keep up with the processing and computing demand that the uptake in the business sector of artificial intelligence is requiring. And this, just cements, the kind of commitment that we have heard Sam Altman articulate, that, look, we're going to keep spending, we're going to keep building, but when you build, you are going to need part of it, a big part of the investment in any of this on the physical infrastructure side. It's the chips and it's the accelerators, and NVIDIA is one that is making the cutting-edge AI accelerators at all the hyperscalers.
Who needs China when you've got Sam Altman? I mean, look, NVIDIA's back above $180. We obsess over export controls in China. When you've got a pipeline like this, does it matter?
Well, and that is one of the questions, actually, on export controls. One of the concerns has been that, look, and there is a measure floating that might get attached to the defense authorization bill sometime before it gets passed, that would require NVIDIA and other chip makers to give preference to domestic buyers. But NVIDIA has maintained all along that, look, there is no issue with supply and demand. We can satisfy all orders no matter where they are on Earth, and there is no lengthy lead time for buyers on the domestic side, including OpenAI. So whether or not this really raises a question on export controls it's an open one, but NVIDIA has maintained that, look, they're able to serve all their customers.
Wow. And NVIDIA has had a great relationship, it seems like, with the president, right, as well.
Well, they sure have. And we did see Jensen Huang in Trump's orbit most recently, traveling to the UK on the president's state visit to meet with Keir Starmer and announce some AI initiatives in the UK. And it just sort of indicates how much they are working in tandem. Trump is betting a lot on the AI revolution as an accelerator of the economy under his leadership. But in turn, a lot of the tech industry, and especially Jensen Huang and NVIDIA, they're counting on Trump to make sure that happens, because as we see with this OpenAI announcement, they have a lot at stake in that too.
Well, they're also counting, Mike and Mario, on manpower. and sometimes you need to look outside of this country to find high-skilled labor to work at fabs and data centers like this. And the president has a new idea, this H-1B visa story that came right out of our newsroom here in a scoop from Josh Wingrove at the tune of $100,000. This caused a huge panic over the weekend before the administration qualified this as something that would only pertain to cases that had not been already underway. If you have a visa, this doesn't apply to you. But the president was asked about it to further clarify over the weekend. Let's give our audience a sense of what he said.
You're very close to the technology CEOs. Are they concerned about that?
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
Are they very happy about this, Mike? If you're NVIDIA, if you're Larry Ellison, you're trying to pull people into the United States, is that just the cost of doing business now?
We haven't heard too much publicly from the companies, the biggest ones that you just mentioned in particular, about whether or not this is a cause for concern. But when you think about some of the biggest consumers of the H-1B visa program, you're talking about Amazon, you're talking about Meta, you're talking about Microsoft, and at $100,000 a pop, it does add up pretty quickly. Now, there is a whole other industry that provides a lot of that talent via India, and this is Tata Consulting and Infosys that helps with the staffing using the H-1B visa program. And India, of course, has been a huge supplier of people who apply for and obtain these visas. And some in Washington have raised concerns about whether the program has been hit with some abuses as a result of that, with multiple applications on behalf of a single applicant, trying to ensure that they are picked in the process. And it is a lottery. In 2025, there were 470,000 applications for 85,000 slots. And so that gives you an idea of how competitive it is. Now, for one company, I think it was Infosys, they got 2,500 visas in 2024. And if you do the math on it, that's adding a $250 million price tag to it. Now, how does that carry over to companies like Google and Meta? It remains to be seen, but it has to be a cause for concern. And we're still kind of sifting through some of the unintended consequences of this. They're kind of doing this on the fly and really catching a lot of people in tech and elsewhere off guard.
And one of those businesses, those industries, Mike, for example, seems to be hospitals, right? And the concern about rural Americans and the care that they may get.
Well, I'm glad you brought this up, Mario, because a lot of people forget that the tech aspect of the H-1B visa is not the only part of the program that's critical. It also brings in a lot of scientists and also medical professionals, and in particular, bringing in doctors who serve in some of the least served areas of the U.S., and that includes rural regions where it's been hard to find doctors trained in the U.S. who can staff and work at hospitals that really need all the help that they can get. And we've heard over the years just how hard it is to get doctors in those places. And this would jack up the price for hospital networks and even charitable hospitals to bring in that talent that they need to serve patients in those regions.
How much of this story, this greater story, specifically when it comes to AI CapEx, would be happening without the administration? How much of it is because of President Trump? The pairings that we're seeing, the dollar signs that are coming with them. Would this be a story happening no matter who won the election?
It's a great question. I've wondered about this too, Joe. To what degree is Trump really amplifying and accelerating a conversation that might otherwise be taking place? One difference that we see, though, between the prior administration and the current administration is just the outright embrace of a more accelerationist approach when it comes to artificial intelligence. Really the idea that, look, we can't have too many regulations fettering and slowing down our development and advances in this critical technology.
And back with H-1Bs, I mean, one of the things that we saw a 180-degree change from a week ago is this on-again, off-again relationship with Modi. You kind of hinted at India being a supplier or reliance on some of these visas. What does it say about the U.S.'s relationship with this longstanding partner?
Well, it adds a new complication altogether. And you'll remember from Trump's first term, they really enjoyed this buddy-buddy relationship with the big Howdy Modi event that Trump attended in Texas during the first term. But the second term has been quite different. The president has been critical of India for its purchases of Russian oil that he sees as impeding his ability to get the ceasefire and peace deal in Ukraine that he's really been pushing for. And he's also had some misgivings over India refusing to embrace what Trump sees as his central role in brokering some sort of a cessation of hostilities between India and its longtime rival Pakistan. And so those tensions have been flaring up, and the president imposed 50% tariffs on Indian goods into the U.S. We saw perhaps a little bit of a détente with the president making a birthday call last week to Modi, but I don't think, and nobody would really characterize the $100,000 price tag on an H-1B visa as a birthday gift for the Indian leader.
Michael Shepard, covering the waterfront with us here. I'm glad you could do this, Shep. Many thanks. Bloomberg Senior Editor for Technology and Strategic Industries, getting us started on the Monday edition. As promised, an important conversation we want to bring you now to in New York. Bloomberg's Saleha Mohsen sitting down with the newest member of the Fed, Governor Stephen Miron. This is at the Economic Club of New York, a fireside chat live on Bloomberg.
That it wasn't bad. And so my initial thought was that I was going to be asked to run the Bureau of Labor Statistics as a second job. That's what I initially expected when I walked into the Oval Office that day. Yeah, that's not how it turned out.
Yeah, they couldn't find you. Personnel decision could be firing, or would you like to be a Fed governor?
Yes, so that's what it turned out to be, yeah.
Yeah. So you're on leave from working for President Trump, where in your job you provided economic analysis for the White House. Trump says, and the White House says, that the U.S. economy is doing great. They recently put a post up on the website that talks about how Americans are spending like never before, they are earning more, and the industrial renaissance is here. Yet, as a Fed governor last week, you wrote down a forecast for a total of 150 basis point cuts in 3 meetings, which is usually panic territory. How can both points be true at the same time? That the economy is doing great, but a rapid interest rate reduction is necessary?
Yeah, so look, I mean, as I said a few moments ago, I expect the second half of the year and into next year to be better in terms of growth than the first half of this year, in large part because a lot of the effects of the tax bill are going to be kicking in, and trade uncertainty is dissipating. But I view a lot of that as also expanding the supply side at the same time as the demand side. And so, as I said, if actual output and potential output are moving out at the same time, it doesn't imply a necessarily hawkish or much tighter policy, because the output cap isn't expanding if they're both moving out at the same time. Instead, my view is that policy is roughly 2 points too restrictive, which is considerably restrictive. And even though I am expecting growth to be a little bit better in the future, that could get derailed unnecessarily so and create an output gap where one need not exist if we don't get policy closer to neutral. Now, that said, because of the distance to neutral, my view is it's better to move there more quickly than less quickly. It's not a panic, I think a panicky move would be something like 75 basis points or even more. I'm not panicked. I just see that the risks grow the longer you remain significantly above neutral.
You have company among your new colleagues at the Fed in your neutral rate forecast, but nobody wants to move quite as quickly as you do. What is it that concerns you about the labor market?
Well, we learned that the first half of the year was not as strong as we would have liked it to have been. We learned that the labor market continued to lose momentum throughout last year and into the first half of this year. And that, to me, means that even though I think that growth is going to pick up for various reasons, there are concerns that, hey, things had been moving in the wrong direction, and if you keep policy this degree of restrictive for too long, you're not going to allow things to move in the other direction, and so you're going to create a situation in which an output cap expands. And so in my opinion, it's imperative that we get closer to neutral quickly, and so I thought sort of a series of 50s to recalibrate interest rates was the appropriate policy.
And you don't see that as panic?
No, I don't see that as panic. I mean, if I were panicking, I would tell people I were panicking.
All right. A lot of businesses say that you talk in your speech and just now about how rates are too restrictive, but a lot of businesses that I've been hearing from, reading different reports and analyses, show that some of the pullback in investments is not due to the restrictive rate environment, but has to do with policy-related uncertainty. How do you counter that?
Well, I mean, I think that, there's a lot of different interest rates in the economy and a lot of different types of investment. And so, for sure, there are parts of the economy that have been affected by that. And as I said before, I do think that that type of uncertainty is not totally gone, but I think it's certainly less than it was a few months ago. However, if you look at other sectors like housing, I think it's very clear that rates are the primary impediment to investing in housing and building more housing at the moment. I don't think that that's a function of trade policy uncertainty.
You threw a lot of numbers.
I did. I apologize, everyone.
Yes, I'm sure everyone's going to go back and look at the speech and the table. Can you break down just a little bit what your economic growth forecast is for 2026? Where do you see the economy ending the year?
So, conditional upon on getting rates closer to neutral, as I had in the SEP, I think growth is going to be in the sort of in the mid-2 area.
And where do you see the federal funds rate?
Again, in the mid-2 area.
So if your forecasts are right, it might be time for rates to go up at that time.
No, because some of the so there's a difference between in the speech I said 2 to 2.5% was the correct rate, but my dots actually have a slight divergence from that because some of the effects kick in differentially over time, and so there are some effects that I think will be kicking in immediately, but then sort of the rent disinflation accelerates over time, and the output gaps kind of ameliorate over time as actual catches up to potential, and so so it's not the case that you would sort of just collapse down immediately to 2 to 2.5% and then gradually raise back up over time. Because of that, there's actually my view is get relatively close to neutral quickly, and then there's a little bit more cutting next year, and then a little bit more cutting the year after that, and then sort of back up to neutral thereafter. So.
I want to talk to you about a paper that you co-wrote for the Manhattan Institute last year. It came out in March of 2024. You name Lael Brainard specifically, criticizing her for being among those central bank officials who have rotated between the White House and the Federal Reserve. Of course, Fed officials most of them are nominated by the president, and so there's a natural link there. You named that Brainard specifically took one single weekend between a political role at the White House and a role as an independent member of the Federal Reserve. A quote that jumps out from the paper is, to pretend that one can easily shift between highly political and allegedly non-political roles without letting political bias inform policy is at best naive and at worst sinister. Governor Myron, how is your being on leave from working directly from President Trump different?
Yeah. So first, let me go backwards with that, right? So first, the on leave is just because it's just a 4-month job, and if it were a longer than 4-month job, I would of course resign, immediately. If there were some reason that I would think that I would be in this seat past January, I'd resign now. At the moment, I don't have such a reason. I think that there's no question that the Fed had previously gotten over its skis in terms of politics. And I think my analysis is borne out by the history. The Fed decided that it was going to be the organization to take on climate change and to join various international networks for greening the financial system. The Fed decided that it was going to get involved in credit allocation, deciding that this sector of the economy is worthy of credit, and this sector that we don't politically favor is not worthy of credit. The Fed decided that it was going to intervene in heavily political issues of racism and police, and Fed officials started giving speeches about police brutality and arguing that we were over-incarcerated. The Fed decided that it was going to become more and more political along these lines, and I viewed that as a significant problem. That's the context in which I wrote that. The proposals in that paper are a package deal, a system of checks and balances, And everything that I wrote in there requires the entire system of checks and balances to be effective. If you just took one check and you ignored all the others, all you do is empower the one that you're protecting. So it all has to be viewed in the context of a total system as opposed to sort of in isolation. Now, I was asked to take this role by the President of the United States. I took the role. I will do the best at it that I possibly can. That means forming my own views independently based on what I think is appropriate economics, based on what I think is appropriate analysis. And because of exactly the things that you're discussing are why I want to be so transparent and as I possibly can be. I didn't just make the numbers up for the SEP, right? I just read everyone the analysis, and I know I probably bored people to death with this many numbers. But the reason why I did so is that people know these numbers aren't just made up. There's a reason every single line there has a number on it. And every single line has an elasticity, a size of the change, and then the policy outcome, which is basically the two multiplied by each other. And if you're going to disagree with me, I invite you to disagree with me. Tell me, do you think the elasticity is wrong, or do you think that the size of the changing parameter is wrong, the changing variable is wrong, right? Because you may think that that there's other estimates of the effects of immigrants on rental prices, on rents, right? That are higher or lower, and I should be using a higher or lower elasticity, right? Like, please have the conversation, right? But I'm being as transparent as I possibly can, precisely because of the concerns that you just listed, and I invite everyone to do so.
Well, there's nothing boring about what's coming out of the Federal Reserve these days, I assure you. The president, let's talk about the context. You shared the context against which you wrote the March 2024 paper for the Manhattan Institute. The context right now is that the president has said many times that he will have a majority soon at the Fed, more of his appointees than anyone else. A lot of academic studies show that a loss of central bank independence is often associated with higher borrowing costs. Do you think that there is a risk to the president being so directly involved in selecting governors who have a certain view on rates? Let's set aside DEI and climate risks, but we're talking monetary policy, where the rate path should be.
Again, the president is entitled to his views on monetary policy. I think everyone's entitled to their views on monetary policy, and I'm delighted to hear views from all sorts. I think it's very important to avoid groupthink. That means hearing all views from all perspectives, and I'm very happy to hear the president's views. But at the end of the day, I make my analysis based on my own understanding of economics and how the economy works, and I just read it all out loud to everybody. And I would hope that everyone else who is appointed to the Federal Reserve does the same. Presidents have always appointed people to the Federal Reserve who thought about policy in a way that they wanted to appoint people to the Fed.
You did say on Friday on live TV that you had spoken to the president the day that you were confirmed. That was just a congratulatory call, you said?
Yes, he called me to congratulate me after I'd been sworn in.
I'm curious what you would do if in a phone call the president directly asked you to vie for a specific decision at the Fed?
I would respectfully listen to his view and his analysis of why interest rates should be wherever they think that they should be. And he has been very forthright in his view, right? Which is not exactly the same as the numbers that I put out there. There is a difference, right? I would respectfully listen to his view. I would consider his arguments, consider whether they had any merit, and then I would make up my own mind based on my own analysis. And I would do that whether it's the president or anyone or any other political actor.
Would you share publicly if that conversation were to take place?
Well, as you can imagine, I've had a number of conversations with the president about the economy, about economic policy, over the last, 9 months, about the economy, economic policy. A number of those conversations have touched on the Fed also. He's never asked me to set policy in a specific way.
So
He's never asked me. It's never happened.
From my understanding, on the day that you were nominated, you were interviewed, I believe, by Scott Bessent, the Treasury Secretary, Susie Wiles, the White House Chief of Staff, and the President. Did the rate path come up in those conversations?
No, he never asked me. He never asked me to set policy in a specific way. He shared his view about monetary policy. It's the same view he says on TV several times a week. There's nothing about his view about monetary policy that I know that you don't know. But he never asked me to set policy in a specific way. In 9 months.
In 9 months.
Yeah.
So last Monday night, you're confirmed by the Senate. Tuesday morning, you had a phone call from the president, and then you walk into your very first FOMC meeting. Can you share just a little bit about what it is like to walk in? It was a historic meeting. On Monday, we didn't know who was going to be in the room. Would you be confirmed? Would Lisa Cook still be able to participate? What was that like?
It was cordial, it was collegial, it was friendly, it was respectful, and I was very appreciative of that. Everybody was very welcoming, and it was a good discussion. And, the way that it works is the staff make their presentation, participants are allowed to ask the staff questions, participants read their views of the economy and about appropriate monetary policy, and there was a forthright exchange of views and, lots of a diversity of views, and I appreciated that conversation. And everybody was just very kind, and, that meant a lot to me. And, in the press conference, Chairman Powell said something which I think really resonated, which is that the way the FOMC works is by persuasion, right? People go there, they have their view, and they try and convince other people of their view. Now, I don't think that persuasion actually tends to happen at the meeting because, let's face it, with 19 people in just a few hours, you're never going to really reach a consensus on a lot of issues in that short amount of time conversation. It happens in between, right? And that's what I'm trying to do today, right? Is I'm trying to tell people there's a reason why policy rates are too high. It's because there's been substantial changes in immigration. There's been substantial changes in tariff revenue, and these need to be incorporated into our economic models because they're relevant for how monetary policy is set. And that's how I'm going to approach my time at the Federal Reserve, is to lay out my economic arguments as clearly and transparently as I can and hope to persuade people by the force of the economics. I really don't think the idea that population growth affects neutral interest rates is a controversial view. This was a universally held, accepted fact. Sorry, probably nearly, there's always an exception. Probably a nearly universally held, accepted fact 5 or 6 years ago. Almost everybody would have agreed, sure, population growth affects neutral interest rates. Countries with high population growth have high neutral interest rates. Countries with low population growth have low neutral interest rates. Well, we just had a major swing in population growth because of the changes in border policy. And in my mind, it's incumbent upon us as policymakers to think about that when we think about where appropriate monetary policy should be.
Governor Martin, you're talking about your approach while you're at the Fed. You have a few short months, and it seems like a little bit of a caretaker role that should be taken seriously. You've also come out of the gate quite strong. You had your dissent last week. We saw you on the airwaves on Friday, and now you've laid out in detail your views to be transparent, as you said. What should we make of your approach? Are you hoping to spend these few short months persuading on a board that is run by a chair whose ultimate job is to forge consensus?
Yeah, I mean, look, I think at the end of the day, I just try and think things through myself and ask questions to try and figure out where consensus might be complacent and wrong. And I've always done that, and I think you sort of see that on, some of my previous writing on tariffs, for instance, right? The idea that you would be able to implement these things without significant retaliation was once very out of consensus, and now I think a lot of folks are coming along to that to that view. The same is true of this. I will be as independent as I can in thinking through monetary policy. And that means not only in a political sense, but in an intellectual sense as well on the FOMC. And I view my job as trying to provoke an interesting discussion that will help the FOMC arrive at clearer understandings of the way the economy works and where monetary policy should be set. It's a few short months, but I've got I think a lot of content to work through in those months.
You shared that you're using CEA data right now, but you're looking forward to working with Fed staff as well as you move forward. You talked about population growth and other data points that you're looking at. Can you share with us a little bit about your views on the power of a dissent? We saw Governors Mickey Bowman and Chris Waller over the summer dissent against Powell or the board. A few months prior, Governor Waller was on Bloomberg TV actually talking about how he views dissent as you do it once and then you've made your point and maybe you back off and see how the economy develops and how the discussion goes. First, I'm curious your views on that, and then I'm curious about how you're going to view the October meeting.
Yeah, I mean, look, I arrive at a view. I do a lot of careful thinking. I arrive at a view, and then I will sort of continue, until my view changes, I will continue arguing for that view. And if that means continuing to dissent, that means continuing to dissent. I don't view, look, I will always be polite and collegial, but I don't view voting with the consensus for the sake of establishing an appearance of a consensus, even if I disagree with it, to be more important than trying to argue for what I consider to be the correct policy. And if that means that I keep on being, I think, sort of sticking out from the crowd, and sort of being more individual in my views and more idiosyncratic in my views than I think than maybe the rest of the FOMC, then that's the way it's going to be. I'm not going to vote for something I don't believe in just for the sake of creating an illusion of consensus where there is none.
So depending on how the economy unfolds and what data we see between now and the end of October, you are willing to be the lone dissent again in October with 50 basis point dot on the plot, or are you hoping that more people join you?
Yeah, unless something changes that would lead me to change my economic view, right? I mean, something could change that would make me change my economic view. There's any number of things that could lead that. But as long as my current view remains my operative view, I don't see why I would vote for anything that's not my view.
You have a way of getting the attention of the world of finance and economics with the words and phrases that you use. A few months ago, it was the notion of a Mar-a-Lago Accord that had a lot of people buzzing, especially in the Bloomberg world that I live in. And now it's this concept of a third mandate, which is a word or phrase that you did not actually use. Let's talk about this. In your testimony, you brought up a piece of the Fed legislative mandate. You noted the moderate long-term interest rates that comes right after the dual that everyone looks at. Do you see the Fed using securities purchases to reduce long-term rates?
Sure. So let me address the two things you mentioned are related. Right, and so I just have a personality that I like thoroughness, and I like to sort of explore all the angles, and I like to be exhaustive if I can. And when I wrote that paper on trade policy last year, before joining any policy role, I was attempting to be exhaustive and list every policy I could possibly imagine as being able to narrow the national accounts. I never advocated for that Mar-a-Lago Accord. In fact, it wasn't even my idea. I was quoting somebody else's idea and gave him due credit in the citations and in the text as a result of it. And I underlined that it wasn't a policy proposal. It wasn't policy advocacy. But I like to be thorough. And so I included it. And it was, it continued to haunt me for many months after that. Despite that, this third mandate stuff is the same thing, right? I take a job seriously, and if I get asked to go to the Federal Reserve Board, I will look up the statutes and I'm not a lawyer, but I can read, and so I'll look up the statutes that govern the Federal Reserve Board, and I see that the Congress assigned the Fed stable prices, maximum employment, and moderate long-term interest rates. So when I'm testifying in front of the Congress, I will just repeat their own words back to them. There's nothing more to it than that, and I think most people generally leave the third part out because they think that it's implied by the first two, like that if you are going to achieve stable prices and you're going to achieve maximum employment, then moderate long-term interest rates will necessarily fall out of that. I think that's what most people typically do. They leave it unsaid for that reason, but just because I'm a thorough person and because I was in front of the Congress, I wanted to be respectful of their words and not my interpretation of their words.
There's been a lot of talk about the balance sheet. Treasury Secretary Scott Bessent has laid out in detail in a lengthy essay about the Federal Reserve and his views on it. We've heard about it from Kevin Warsh, a former Fed official who is in the running to possibly be nominated as Fed chair. I'm curious what you make of Bessent's criticism of the Fed's large balance sheets and mission creep that he points to.
So, I've also been very critical of mission creep. We talked a little bit about it before in the discussion about Fed independence. The balance sheet, I believe the balance sheet became as big as it is in part because of previous asset purchases that weren't strictly necessary. I think that if you look at, the Fed was still buying mortgage securities when housing prices were up double digits, or 20%, I think 20% year over year in the wake of the pandemic. So I don't think there was a need for the balance sheet to get as large as it has. I think the Fed has been doing a good job of bringing it, of reducing it. In my mind, though, focusing excessively on the size of the balance sheet is more like focusing on the symptom rather than the cause. And like I said a few days ago, my view is that the balance sheet size that you ultimately need ultimately falls out of the regulatory framework. Because if the regulatory framework requires a certain amount of reserves in the system, the Fed needs to provide that size of a balance sheet in order to allow the banking system to have the capital it needs under the regulatory framework. And so my view is that sort of focusing on the balance sheet size is focusing on the wrong thing, and that it's better to focus on to get the regulatory framework that you want correct, and then the right size of the balance sheet will kind of fall out of that.
Do you think that there should be more done to focus on long-term rates the way the president says, using the balance sheet perhaps?
No, I mean, I think that historically the Fed sets short-term interest rates, right? And then that affects a broad array of financial conditions, including long-term interest rates. And as long as you are, sort of not near the zero lower bound, I think that there's no need to sort of move towards trying to capture additional instruments.
So you agree with that the Fed has a dual mandate. There's confusion out there after you listed, like you said, read back the law to Congress, that there's now a third mandate policy, especially with the president talking about lowering long-term interest rates.
Yeah, well, look, Congress gave the Fed those words that I read in front of them and that you quoted before. Now, as I said before, I don't think moderate long-term interest rates are necessarily, an action item at the present, right? Like, I'm focused on bringing inflation down sustainably to 2%. I'm focused on preventing deterioration in the labor market that would expand an output gap. And I think those are the primary focus. The listing the third thing is just an item of completeness, but it's not for me to tell Congress they didn't say something they said. Sorry, they didn't enact something they enacted.
One thing that the president is acutely focused on is housing costs for the average American. Is there anything more that the Fed could do to influence mortgage rates or just alleviate some of that pressure in the economy?
Yeah, so as I said a moment ago, the Fed controls the short-term interest rate, the overnight interest rate in the economy, right? And financial conditions more broadly across a range of items, including longer-term interest rates, credit spreads, the dollar, mortgage rates, right? They all sort of can be responsive to changes in short-term interest rates. And so if the Fed continues to ease policy, presumably that will bring mortgage rates down to an extent, right? Bringing mortgage rates down will help, unlock additional home building, will help unlock additional investment in housing. However, the degree to which mortgage rates come down versus other financial conditions loosening, I don't have a firm sense of exactly which one is being pulled at this given moment.
Talk to us a little bit about the Fed's inflation target. Do you think that the 2% range is the appropriate goal?
Sure. So first, let me reiterate my commitment to bringing inflation sustainably down. Second, let me say that any prospective changes to an inflation target should only ever be entertained after a material period of the Fed achieving its inflation target to avoid any appearance of moving the goalposts. You should never even entertain that idea after being off target for a period of time. That said, my view is that measuring inflation is incredibly difficult, and when you get into the guts of how inflation is measured, there's all sorts of things that are strange, right? So, for instance, probably a lot of people in this room in financial services, right? So when the stock market moves higher, financial managers, advisors, asset managers, they get more income because the base is higher, right? And it's sort of a constant fee times a higher base, right? The way that inflation is calculated then generates inflation in the portfolio management section of the personal consumption expenditures index, right? So the fact that the stock market goes up mechanically leads to higher inflation the way it's measured, right? So obviously, if you'd took that literally, the Fed would hike in response to that, right? So my view is that that's sort of like a weird thing, right? And I just think that inflation is very, very difficult to measure, and so having a very precise inflation target like that can lead to excessive micromanagement. Instead, if you look before 2012, the Fed didn't have a formal target at all. They pursued low and stable prices, right? To me, that's an interesting way of doing things also. The inflation target was really introduced in 2012 as a bulwark against deflationary risk in the wake of the Great Financial Crisis, when the Fed was at the zero lower bound and felt the need to further credibly enforce a commitment to positive inflation. And so, you know, I think there's sort of very interesting questions about how would you actually want to set monetary policy over the longer term. But I do want to emphasize that these questions should only ever be entertained in terms of changing the framework after the Fed has successfully achieved its target for a sustained period of time to make sure that there's no appearance whatsoever of moving goalposts.
Governor Myron, thank you so much for taking my questions.
Great. Thank you all very much. Let's start with a round of applause. Thank you both.
There you have it live from the Economic Club of New York. Stephen Myron, the Fed governor, the newest member of the Fed, sitting down with Bloomberg's Saleha Mohsen for a conversation that you will not hear anywhere else other than here on Bloomberg TV and radio. Really interesting to hear Mr. Myron go through not only his economic philosophies, but also describe what it was like to sit in his first Fed meeting after being sworn in last week. We're going to talk to Michael McKee about this in just a moment at World Headquarters in New York. First, we want to update the markets. It's been a minute. Charlie Pellet has just the latest for us right now on the Monday trade. Charlie, how's it look?
Right now, we are higher across the board with the Dow, the S&P, NASDAQ, all very much in the green. Do want to begin with the 10-year, 4.13%, your 2-year, 3.58%, the 30-year, 4.75%. S&P holding at a record. The Dow, the S&P, NASDAQ all gaining. This amid calls for a breather. S&P up 26 right now, 66.90 where we stand, up by about 0.4%. So far this year, the S&P has notched 27 records. The Dow up 53, up 0.1%. NASDAQ, the composite index, up another 140, up 0.6%. The Mag 7 index right now up 0.8%. Spot gold up $52 the ounce, up 1.4%. West Texas Intermediate crude down 0.3, WTI 62.50 a barrel, and Bitcoin down 2.3%. Bitcoin 112,700 right now. Nvidia is going to be investing as much as $100 billion in open AI to support the building of new data centers. Nvidia shares, they're up now by 4.3%. Balance of Power continues right now. Back we go to Washington once again. Your hosts, Joe Matthew and Mario Parker.
Fantastic. Charlie Pellet, thank you. Remarkable to see NVIDIA notching a new all-time high before our eyes with this important headline, a $100 billion investment. We're going to have more on that with Mike Shepard coming up at the top of the hour, 1 p.m. Eastern Time. Michael McKee joins us now from World Headquarters in New York. Having listened to Stephen Myron, the deep dive with Saleha Mohsen for the better part of a half an hour and generated a lot of headlines on the terminal. Mike, of course, covers the Fed for us, and we can talk about his take on monetary policy all day long here, Michael. I don't know if you heard a lot new from Mr. Myron, but the headline, Myron, Trump has never asked me to pursue a specific policy, jumps off the page, and it runs against all the concerns that we've been hearing about this short-time, part-time Fed governor.
Well, you have to expect that he would say that, and I would more or less expect that if Donald Trump were smart, he'd be hinting at what he wants without actually saying it, so that Myron can say the president's never asked me to do this. Because if Myron had come out and said, yeah, the president wants me to vote a certain way, then the markets are going to take that very, very badly.
Well, absolutely. What did you hear from Stephen Myron you had not heard before, Mike?
Well, really, there wasn't a whole lot. I think perhaps the last question that Saleha asked about the 2% inflation target, and he sort of danced around saying that he would prefer not to have a target and go back to discretionary Fed policy, was something he hasn't really spoken about in the past. That is not going to happen, so it's kind of irrelevant in that sense. But most of what he did today was try to give as much of an empirical underpinning for the policies the president wants as possible. Now, the confusing part of all of it is that he also said in his speech that the models and the calculations of things like the neutral rate are never correct and the models can be way off. But here are some precise numbers on what it is. That didn't quite hang together. But again, you have to get back to the fact that he's one voice out of 19 and one vote out of 12. And if he is only there until the end of January or a little bit after, it isn't going to really matter what he says. And it's probably not going to be easy for him to convince anyone else that's already on the Open Market Committee to go along with his views.
Yeah, he kind of brushed off the question about the Mar-a-Lago Accords when Saleha asked him. Is that to be expected?
That was interesting because he said, I was quoting somebody else. It wasn't my idea, but it is a whole paper basically on that idea that he published. So even if he was quoting somebody else, it does appear to be his work, and it is where this whole thing generated from.
I'm looking at the headlines from the interview on the terminal as I speak to you, Mike. A series of 50 basis point cuts will recalibrate policy. What's a series? 1, 2, 3?
Well, he's looking at 4.5 for between now and the end of the year, or something bigger, because he forecast 125 basis points worth of cuts. So that's a significant amount well, it'd be 2.5 50 basis point moves. And then after that, more next year to get down to 2% or lower. But that's obviously far more aggressive than anyone else.
And he is expecting second half growth in 2025 to be stronger, even as the tariffs take hold. Mike, can you have both?
That's their argument, and that is not really the way that most people on the Fed think about it, but there is a feeling, even at the Fed, that growth could be a little stronger in the first half of next year, because you start to get a little bit of the tax incentives that were built into the one big bill that hit. And the problem is that most of those tax incentives are going to go to people at lower income levels, so they'll spend it, but they won't get as much money as a tax cut that goes to everybody. So in this case, it may boost growth a little bit, but it's generally thought to be short-lived and not really lasting into the second half of next year. But that was a good question from Saleha, because there's been a question about why you think you need to cut rates so much. If you think growth is going to pick up to 4%, those would be sort of opposing values.
Much as you were asking at the last Fed meeting. Mike, lastly, a lot of Fed speak this week today on Bloomberg, not the least of it, of course. Are we learning anything new about the committee's feeling at the moment?
I don't think we're learning anything new. Pretty much everybody except Mr. Myron have said they don't know what they really want to do at the next meeting. Their dot plot dots were kind of placeholders. They want to see what develops in the economy between now and the October meeting, and then between then and the December meeting. We've heard from a couple of the more hawkish members, Alberto Musalem and Beth Hammack today, both of them saying that they don't think the neutral rate has gone down very much, which is the exact opposite of Myron's position. Those two are going to be among those who were at the top of the dot plot, and maybe would vote for one more cut if they felt the labor market was continuing to weaken, but aren't enthusiastic about doing much more than that at this point.
Got it. Michael McKee, always a pleasure. Thank you, Mike, at World Headquarters in New York, following our conversation with Fed Governor Stephen Myron here on Bloomberg TV and radio. I'm Joe Matthew in Washington. We thank you for joining us here on the Monday edition, now that we've welcomed our global television audience to the conversation. We've got a good hour planned for you with a lot of news today coming out of the Capitol, including news on TikTok. We'll be talking with Michael Shepard in just a moment about the makeup of this deal. We're adding a few more elements, a few more details to what has been a pretty confusing piece since it emerged last week. We'll also talk with Bloomberg's Ed Ludlow as NVIDIA announces a $100 billion investment into OpenAI. That just emerged in the last hour. And later on, we're going to talk with Democratic Congressman Emanuel Cleaver of Missouri, the latest state to redraw its congressional maps. It's all ahead here on Balance of Power on Bloomberg TV and radio. Let's get our arms around TikTok right now. The big headlines: no golden share, and an algorithm that will be licensed and operated, protected, if you will, by Oracle. Shep is with us right now with the latest on all of this. Mike, it's good to see you. To what extent should we understand these details as being finalized, or is this a deal in flux?
It's still pretty fluid, Joe, but we are getting at least a clearer picture on some of the finer points that are actually important to lawmakers here in Washington. One of the big concerns about TikTok over the years has been about what happens to all that user data on Americans if the company is owned by China? And then who actually runs and controls this algorithm? Is it subject to somehow being tampered with or used to disseminate propaganda? And that really is what got us where we are. And the idea would be that the new U.S. version of TikTok would copy, in essence, a version of that recommendation software that gets the videos you want to see in your feed, and then it would retrain it. Oracle would be a partner in that retraining.
What does it mean
effort.
when we say that? Retrain
Well,
it for what and for who?
Well, what they would do is they would try to get the algorithm maybe to respond to prompts and, I guess, requisites set more by and for the American audience. And also in a way that would keep it free from the kind of manipulation that U.S. lawmakers have long feared. So we'll be watching for that and exactly how it works and whether or not the new U.S. TikTok can be fully disentangled from ByteDance on a technical basis really remains to be seen. It's a tricky proposition, even copying the algorithm. How do you know there's
I
not
picture some
backdoor
guy in there with a
built in
thumb
there?
drive and he's going to bring the algorithm over. It's a billion lines of code, Mike. This is going to be quite an operation.
It will be quite an operation. And, you know, obviously this is the kind of thing that Oracle does for a living. But even that, it will be a big undertaking. And remember, Oracle already does quite a bit of business with TikTok, providing cloud computing and a lot of other data services for the U.S. operations and then elsewhere in the world as well. So they know the company, they understand it, but whether or not this will also satisfy some of the concerns that China may have on its end also remains an open question because they have their own requirements about allowing a sensitive technology such as the ByteDance own TikTok algorithm to go to a geopolitical rival and adversary like the U.S. is a sensitive issue there too.
I want to ask you about NVIDIA, but quickly, no golden share was a big headline today, and we saw the president, I guess, rebuff a move by All Nippon Steel against the U.S. steel plant based on that golden share. Still, we're going to stack the board here, right? We're hearing names like Murdoch and so forth. This will not look like the board at ByteDance now.
Yeah, that's absolutely right. We are not expecting this to. ByteDance will have a seat on the board, but they will not be part of the security committee for the company. We don't know who the other 6 members of the board, but they will all be U.S. investors, and the White House says they will have cybersecurity and national security vetting and experience. We can look for some big names. We did hear the president float the Murdochs there, but it's unclear whether it would be Lachlan or Rupert or somebody else or just somebody from Fox if that even comes to pass. So again, details remain to be seen on that front.
We've talked about NVIDIA a lot over the past couple of months. Mike, you've spent time with Jensen Huang. You know how close he is to Donald Trump. What was the genesis of this $100 billion investment? That's $95 billion more than they announced they were putting into Intel last week. The money goes to OpenAI. We're talking about the potential of millions of stacks to be put into use here. This is huge business for NVIDIA.
This is a huge business and a huge business move on their part because in a way it really does cement this partnership between a huge potential customer. OpenAI will need all that computing power as it tries to expand its own footprint, build its data centers, and this is a relationship that they will want to build out from the OpenAI end. But of course, for NVIDIA, this really vindicates their efforts to try to expand its own tech stack here in the U.S., but also abroad, because OpenAI is not purely a U.S. venture. They'll have their expansion plans globally as well.
Sent NVIDIA to an all-time high today, just since we've been on the air. It's incredible, Mike. Thank you so much, as always.
Thank you, Joe.
He's got his hands on one of the best beats in Washington, Mike Shepard, live at Bloomberg here in the nation's capital. The House and the Senate are on recess this week. I'm not going to have news for you in the next couple of days on government funding. In fact, we warned you next week. Rosh Hashanah, the Jewish New Year, begins this evening at sundown. Lawmakers are gone. They're not going to come back until we're right up against the deadline. The Senate will have, I think, 2 days, a day and a half to work. The House won't be back until after it's done. So that's why people are talking about so-called jamming the Senate with the CR that was passed largely along party lines. A single Democrat voted for the continuing resolution in the House last week. It then failed in the Senate, as did the Democratic plan. And it's something that we have an opportunity to ask Emmanuel Cleaver about. The Democratic congressman from Missouri is with us on Bloomberg TV and radio. Missouri, of course, the most recent state to try to redraw its congressional maps, which, Congressman, I'm looking forward to asking you about because I know you've been very passionate about this and deeply involved. Just to clear out the business at hand, though, I'm wondering what your expectation is and if the government will shut down on October 1st. A lot of Republicans are already blaming Democrats for what's about to happen.
Well, I think it's important for the people around the nation to understand that what they already know, which is that the Democrats are in the minority. We lose every vote. And if the government is shut down, it can't shut down because of Democrats, because we're in the minority. I don't know how the minority can shut something down. The other thing that I think is important is the President of the United States has not and is suggesting that he will not meet with the Democrats. The people around the country did not elect us to go into our different corners and come out and fight most of the time we're in Washington. But when the president says he's not going to meet with us, what else can we do? And to be sure, our leaders are not wanting to meet with him unless we can get something guaranteed that the money will be spent as we approved it. Remember, last March we approved a spending bill, and the president did a rescission, just took it away, which he is not supposed to be able to do legally, but he did, and he might do it again. So my constituents, I have 800,000 like everybody else, they want me to give them some assurance that the money that I vote on will be spent the way I voted.
Yeah. Well, I saw the Democratic version of the CR that got a vote in the Senate last week, Congressman. If you had assurances or a deal in place to extend Obamacare subsidies and a promise of no more rescissions, would you be on board?
Well, that would be moving in the right direction. You know, it would be hard for me to say yes or no, just simply because, you know, there are little words that you can insert into the language of those bills.
Sure, of course.
That might be interpreted as giving power to somebody else. I mean, we always have those kind of little things going, which is due to the fact that we have two parties in Washington, and tragically and painfully to me, they don't trust each other. And we certainly don't have trust now after the rescissions that took place. I had a huge amount of money coming into the state of Missouri, which would ultimately be spent in my congressional district to do solar panels on hundreds and hundreds of homes. And the president just by himself just woke up one morning and took the money. And that's not the way this government is supposed to work. This is not United States of America, where members of Congress are supposed to have a say. In fact, some might say that our only responsibility is done and handled with the power of the purse. That's what we constitutionally been awarded. But during this last 8 or 9 months, that has not been the case.
So what happens to those solar projects, Congressman? Are they canceled?
Well, we had to cancel them here in my district because, and we'd gone all the way out getting things done, getting the community ready, made announcements that this was going to happen, and the president just took the money, just took it. Wow. You know, the same thing happened with places like a women's shelter, where women are able to go if they are being battered or if they're having some other kinds of problems. The people from that shelter will be in my office sometime this week to tell me that they don't know if they're going to be able to keep the doors open because the president took that money as well. And if you look at it, at the nation, my case is not the only one, but it's certainly one of the ones that's been impacted primarily prior to this rescission, and then to the all of a sudden the complete redistricting of the state of Missouri. You know, I guess only because the president wants some seats that he believes he can win. And if I can tell you, as inflation is rising, the job market is diving, and economic growth is slowing, and as you mentioned earlier, shutdown is a possibility. Why in the world would we want to take time to do redistricting in the middle of a decade where we almost never have redistricting because it's based on the census, and the census is 3 or 4 years out now. So any decision that is made on redistricting cannot possibly be scientifically done because we don't know where the movement of citizens have gone. We don't know anything except that the president said he wanted it redistricted because he needed a seat because his popularity as well as the popularity of his policies are down in the tank. And this is a red state, Missouri.
Yeah, we've talked a lot about this redistricting matter, Congressman. I'm glad you brought it up. It's what I wanted to ask you about, whether it's Texas, California, New York, Indiana, or yes, Missouri. Each seems to have a slightly a different wrinkle here. You were the first black mayor of Kansas City, and you know the importance of Troost Avenue. In our remaining couple of moments together, I'd like you to talk to me about the cultural and political impact of redrawing the congressional district that you now represent with Troost Avenue as a dividing line, which was I think we can say openly, a racial line of segregation in the city for some time. This idea is reopening wounds and reminding us that there are nuances when it comes to redistricting. How important is that for the city and your district?
Yes, Troost is a 10.5 miles running almost all the way to the end of the city going south, coming from north, which is where the airport is. I was born and raised in Texas, moved here after college, and I was told when I got here in the early 1970s that Troost was the line of demarcation, or the Mason-Dixon line, whichever you choose. Yeah. And African Americans had historically not been able to live to the west of Troost. And so Troost became, an ugly street because it went into deep decline. Businesses had shuttered. And so when I was mayor, and before for that matter, business leaders along with civil rights leaders worked tirelessly to try to erase what had been become an embarrassment. And we were slowly getting it done. The school district, for example, moved its headquarters on Troost, and there were businesses that opened up and a big child care center. And so this line runs all the way down Troost, and it is not good for our psychological and racially inclusive city. In fact, it is ugly and nasty reminder of days gone by, at least we thought they were gone by, until we looked at this map and saw that my boundary on one side just went all along Troost, and it causes people to wonder if is there a subliminal message here, and whether or not the state would reconsider this, but I don't think they will. I went down and testified, and I think some of the people were stunned to find this out. But I don't think they want to anger the White House. So right now it's standing, and there've been suits filed, and I think there's also an initiative petition underway.
Well, as this plays out in the courts, we'd love to stay in touch with you, Congressman Emanuel Cleaver from Missouri's 5th. It's great to have you back with us on Bloomberg TV and radio. I'm Joe Matthew in Washington, where we have a lot more to talk about today with developments on a potential TikTok deal and a looming announcement from President Trump. There's a White House press briefing that's underway right now. Caroline Leavitt, the press secretary, telling reporters that President Trump will speak on the childhood autism epidemic, something that he previewed in his speech at the Charlie Kirk Memorial yesterday in Arizona. Leavitt says Trump will give a, quote, major speech tomorrow morning. Unclear then if we're going to have an announcement as expected this afternoon on childhood autism. We'll keep you posted on this. We'll assemble our panel next as well, by the way. Rick Davis and Jeannie Shanzano are with us today, and we'll have a lot more to get into with our panel as well. A conversation with the governor of Pennsylvania, Josh Shapiro. Tyler Kendall will bring that to us, and it's all straight ahead on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ. We're looking at potential record closes today with the S&P right now up 25 at 66.90. That is a gain of 0.4%. The Dow's advancing 0.1%, while the NASDAQ Composite Index up 130 right now, up 0.6%. 10-year 4.13%. Spot gold up 1.5% at a record 37.39 the ounce. And West Texas Intermediate crude flat on the day, 62.70 per barrel of WTI. Bitcoin right now down 2.5%. Pfizer paying $4.9 billion for the obesity startup Metsera. That stock surging 62%. Pfizer up 0.8%. Briefly, Apple positive on the year, up 1.5% year to date. And NVIDIA is going to invest $100 billion in OpenAI for data centers. I'm Charlie Pellet. Balance of Power continues right now. Back, we go to Washington. Once again, your hosts, Joe Matthew and Mario.
Charlie Pellet, many thanks. I'm Joe Matthew in Washington. Thanks for being with us here on Bloomberg TV and radio. Indeed, as we consider the NVIDIA story today, $100 billion investment in OpenAI, and it immediately raises questions about energy, the demand for clean, renewable energy to power so many of these projects and data centers that are sprouting out of the earth like weeds. Energy and securing more of it was a big part of the conversation earlier today with the governor of Pennsylvania. Josh Shapiro, the Democrat, spent some time with Bloomberg's Tyler Kendall as he attended a 13-state summit to discuss the future of the PJM interconnection. This is the biggest power grid operator in the United States, not just in the region, serving over 67 million customers stretching from Chicago to New Jersey. It's a lot of power. It's the first conference here gathering the 13 states, and Tyler started by asking Governor Shapiro about prices and steps that can be taken to lower the cost of energy. Let's listen.
We're here in Philadelphia, which is not only the birthplace of democracy, it was here that PJM started 98 years ago. And I think this conversation that we're having right here at the National Constitution Center is really the first of its kind, opportunity for people from all 13 states, from all the different entities that make up PJM are here to have a conversation on how we can enact real reforms so we can hold down costs and increase power generation and give states, the governors and representatives of our states, more of a say in the process. PJM has kind of been a black box for too many years, and as a result of that, they're too darn slow, and they are raising costs at really an alarming rate. And so I think what you're going to hear from all the different states today, by the way, led by Democrats and Republicans, is a desire to see real reform at PJM. I just kicked off the conference here, and I think folks are ready for a good and honest and spirited discussion about how we fix PJM going forward.
Well, Governor, since you referenced your opening remarks, you said that if PJM refuses to change, we'll be forced to go in a different direction. Do you mean leave PJM?
We're willing to, if PJM is unwilling to enact real reforms, to give governors and our representatives more of a seat at the table and a say in these policies so we can both control costs and increase power generation. Listen, I'm an all-of-the-above energy governor overseeing a state that's the second largest energy producer in this country. We need to produce more energy as a nation to give us more economic opportunity and more freedom. And because of PJM, we've been stymied in our efforts. It has slowed us down. And at the same time it's slowing us down, it's increasing costs. So if PJM is not willing to look in the mirror and really reform itself, then I'm willing to go my own way. And Pennsylvania can stand alone in this effort. We can produce enough energy for us, and we can produce enough energy at a far quicker rate than PJM is able to right now. We recognize that that would have a significant impact on these 13 states that make up PJM, or the 12 other states, I should say, as well as the entire nation, just given the energy dominant position we're standing in. So our first hope is that there'd be real reform. But mark my words, if they're unwilling to do real reform, we're willing to go it alone.
Well, when would you make that decision? Do you have a timeline or a deadline that you're giving PJM to respond to the changes that you want to see?
Well, look, I've already sued PJM successfully when they tried to jack up rates on Pennsylvania consumers and other consumers in the PJM grid area. We won that suit, and we were able to save consumers nearly $20 billion in added costs. Today, we've just embarked on this important reform conversation. I want to see how that goes. I'm not giving them a long leash here, but I want to give them some time to see if they're willing to reform. If they make clear that they're unwilling to reform, they're going to keep doing it their own way, then we're going to have to go our own way.
And Governor, we know part of this conversation has to do with the power consumption related to big tech and artificial intelligence. Your state has secured a $20 billion investment pledge from Amazon for data centers as one example. How much pain do you think U.S. consumers are going to be willing to bear here when it comes to the need to invest in this critical technology?
Well, we have the capacity to be able to do both here in Pennsylvania at affordable rates. You know, we can walk and chew gum here in our Commonwealth. We can allow a consumer in their home to be able to flip the switch on and not see added costs when the lights go on in their home, and to know that the lights are going to go on the hottest days of summer and the coldest days of winter. At the same time, we can be open for business, and land is, as you noted, an initial $20 billion investment from AWS to build out data centers. We've got other major economic development announcements that are on the way, and I think energy is a critically important component to any of these big energy deals. What we're doing here in Pennsylvania is turning on energy sources like we did at the old 3 Mile Island. We're converting old coal-fired power plants into natural gas-run power plants, which are both cleaner and are now able to produce new energy onto the grid. The problem is we're moving quickly in Pennsylvania, but PJM too oftentimes is slowing us up. I no longer want to be constrained by PJM moving not at the speed of business, but too darn slow. If they can't move quickly, if they can't reform themselves, we're going to figure out how to do this on our own. Economic development in the Commonwealth of Pennsylvania is directly tied to energy generation, which is also directly tied to keeping consumer costs down. We need to do all of it. We need to do it quickly.
And Governor, big tech companies say that they want to pay their fair share when it comes to this. What would that look like in practice?
Well, making sure that they invest in creating new energy or paying for the energy they use on the grid, if the grid has capacity for both them and consumers and other businesses. That's certainly the kind of deals that we negotiate here in Pennsylvania.
And Governor, in the final minutes that we have with you, President Trump last month said that his administration will not approve solar or wind power projects. This is part of a bid to tighten the federal permitting process around renewables. Has this changed your strategy in Pennsylvania, which is a top energy producing state?
Well, look, I'm an all-of-the-above energy governor. I wish the president was an all-of-the-above energy president. The president's actions are making it harder for us here in Pennsylvania. In fact, as a result of cutting a bunch of tax credits for clean energy projects, the president is putting 26,000 Pennsylvania jobs, mostly union trade jobs, at risk of being lost when these projects shut down. I mean, I don't know why he's trying to make it harder for us to generate energy. We should generate solar and wind energy, natural gas energy, and other nuclear and other forms of energy. I don't know why he's taking these steps that are making it harder for us in Pennsylvania. I'm a governor that wants to unleash our full potential. We do that by having a full range of energy options available. I think the president's policies are misguided. It's going to put people out of work, and it's going to make it harder for Pennsylvania to compete.
And lastly, Governor, just sticking on the president's policies, because part of the conversation when we are talking about energy production does have to do with the workforce. And we saw over the weekend the administration move to impose a $100,000 fee for H-1B visa applicants. I'm wondering if you see this first impacting any of the sectors that we're talking about here, particularly around tech, as Pennsylvania wants to attract those workers and those investments from these big companies.
I think the president's immigration policies are making it harder for us to compete. And I hear that on our farmlands in the Commonwealth of Pennsylvania, all the way to our universities here in Pennsylvania. When we can't attract great talent to be able to produce our food or to be able to produce the next major invention or innovation, that makes us less competitive as a nation. The president's immigration policies combined with his tariff policies are making it harder for us to compete and driving up the costs of goods in this Commonwealth and across this country. I think what the president's doing is harming America, isolating America, and making it harder for workers here in Pennsylvania from our farmlands to our universities.
Governor Josh Shapiro, the Democrat from Pennsylvania, in conversation with Tyler Kendall today on Bloomberg TV and radio. And it's that very last issue they brought up, the H-1B story that was born here at Bloomberg late last week, a scoop from Bloomberg's Josh Wingrove, who covers the White House for us, that I want to get into with our panel, remembering, of course, that the president was asked about this on Friday in the Oval Office. Let's listen.
You're very close to the technology CEOs. Are they concerned about that?
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
Well, it is going to be a lot of money. We don't know if they're very happy about it. Let's start with our panel now. Bloomberg Politics contributor Rick Davis, partner at Stone Court Capital, our Republican strategist, joined by Bloomberg Politics contributor and Democratic analyst Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center. Great to see you both here. Rick, you're no stranger to the business world. Is this true that companies at $100,000 a pop will be very happy to pay it if it means getting the actual manpower that they need to conduct these projects, whether it's data centers or anything else?
Yeah, the assumption everyone's working from is there's going to be a load of new H-1B visas that are issued for this kind of tariff. And if that's the case, that does satisfy a lot of the concerns that the tech community has had with being able to get qualified workers to come in and work in their systems here in the United States. There have been a lot of limitations put on this program over the years that has stifled the growth of these companies. And I would say I don't think it's ever slowed down the recruitment of domestic tech workers. That's been at a premium for a long time. Universities have had to open up new schools to just supply the amount of capability that these companies need, and they still don't have enough. So when you have an engine that is a major part of global growth and certainly a significant part of the growth in the U.S., you want to feed it. And if it costs you $100,000 to get what you want, my guess is a lot of these companies will take whatever they can get to be able to get new H-1 visas issued.
I had a feeling you might say that, and I don't know, they may not be happy to shell out the money, as the president said, but Jeannie, high tech is one thing. Farming, for instance, might be a different. Healthcare is another. The president says there'll be a carve-out for doctors. Is there some good being done here in that it does unlock additional H-1Bs that would not otherwise be available?
Yeah, I think this is a gray area because we have long known that the visa process is broken. Everybody agrees with that. And the president is right to look at reform. But there's a difference between taking a hammer and taking a scalpel. And what they've done is taking a hammer. And we saw that over the weekend. We had people on planes who were turned around and came back because they were worried about leaving the country and getting in. And then the administration came out and explained this only, applies to new visas. So there's a problem of execution, but there's also long-term impacts on the U.S. And just one, you and Mike Shepard have been talking all day today about TikTok. TikTok has been one of the greatest successes in terms of soft power that we've ever seen, and it is at the hands of China. That power matters to our future economically, militarily, economically. And so if you don't reform the system, if you simply break it and you impact the ability of skilled laborers to get into this country, we are in the danger as a country of losing when it comes to our power base. And so all of these things are critically important. So I think what we have here is important to reform, but that problem of execution is one we've seen over and over again with this administration.
Well, Jeannie went there to TikTok, Rick, so I'm going to ask you about it as somebody who puts deals together every day at Stone Court Capital, what you're thinking about what we're hearing so far. And I realize some of these things could change, and we do not have an actual deal on paper yet. But we're talking about no golden share, yet 6 of 7 board seats, and a plan here to license the algorithm that would be controlled by Oracle. Does this sound like we're getting off to the right start here? And by the way, this has followed a series of delays and a law that we're ignoring at the moment. Rick, does this sound like a good deal in the works for the United States?
Yeah, I think it devil's in the details on this. I mean, everybody knew Oracle would be at the center of it, as mentioned earlier on the program by Mike. It's the cloud computing center. They've offered to host it in the past. You knew that the synergies with them would be significant enough, especially their cybersecurity capability, to try and keep the Chinese out of the back door. I would say, worries about a 7th board member appointed by anybody in China or reporting back to anybody in China. If this was a defense company, they wouldn't allow that to happen. Any other kind of strategic companies can't have that. Why would we let TikTok have it? So I guess there are going to be some things that, we'll have to chop some wood to get to the bottom of. But the fact that it gets it out of the control and the hands of a bunch of people who have been helping to destroy our society with all the malicious activity done through TikTok. I'm not saying it's the only thing that TikTok does, but it has certainly added to the divides within our country. And hopefully that algorithm can be tweaked to take some of the heat off of the propaganda from China into the U.S.
Yeah, boy, it's amazing. Jeannie, remember Block the Talk? This was the most bipartisan affair in Washington. It was hating on this thing. It was a national security concern, and we were going to shut it down. Things have evolved remarkably since then. I guess my question is, what happens to the Republican and, for that matter, Democratic lawmakers who are screaming about national security enough to pass a law, and how long it'll take them to catch up with President Trump on this?
Yeah, how things change when something helps you win an election. And of course, both Trump and Biden used it in 24.
That's right.
I think that we've seen that the Congress has been willing, on the Republican side, to bend to Donald Trump's will. I think we will likely see that again. But I think the devil's really in the details. What does this agreement look like when they see it? Because the national security component is critically important. And, I think it's really critical to say that, again, on this H1, this visa issue, this H1B visa issue, look at China's response to it. China not only sent a fairly cool response to it, and, similar to other countries that use it a lot, like India, but they also have responded with these K visas. Right? So whereas the United States is closing the door on potentially critically important skilled workers, China is opening it. And I think this is what we mean about long-term impact. They now are in a position to sell us potentially this algorithm from TikTok. They are now welcoming young, skilled talent. This has long been where the United States has thrived and excelled. We have been the envy of the world. And that's why, yes, reform the visa system, but do not do it so that you diminish our ability to compete long term. That's the concern on all of these fronts.
Of course, Rick, this deal is still going to require the approval of Beijing. And we haven't heard a lot from China about this TikTok deal. We got a readout on the call the president had with Xi last week. But should we take the White House as the final word on this? Because that's pretty much our only source at the moment.
Yeah, I think that time will tell. The Chinese are not about making snap decisions. Obviously, this thing has been lingering around and starting to stink up the business community a lot. What's going to happen to TikTok? Is it going to get shut down or is it going to get bought out? The Chinese would be smart to get this done quick. If this hangs over U.S.-Chinese relations, it's going to cause a lot of consternation in the Congress, to the point where, as you pointed out, a lot of Republican members really went out of their way to try and shut this down because they saw it as an agent of the Chinese government, of the Communist Party. And if this doesn't get done quickly, it gives them the potential to say, you know what, this doesn't go far enough. We don't have enough guarantees. China will still have a backdoor to this process, and can really start creating some issues. I've seen a lot of polling around TikTok, and if you're on it, you love it. If you're not on it, you hate it. And a lot of parents whose children are on it hate it. So, there is a political dynamic to this going into the 26 elections.
Boy, there's two strikes for me on that one. Not on it. Got a kid who is. Jeannie, how about the students you see every day at Iona, at Harvard? How important is this to them? Because Donald Trump has clearly decided that this is a big deal. When he put the teaser out on social media, remember, he referred to it as a company that young people like a lot. How important is this for the young electorate?
Yeah, I think it's very important, particularly a lot of those people who communicate on it, who make their living on it. We've seen the lobby for it. But the reality is that what incentive does China have here? What is the United States giving up to get this deal? Because the power is unfortunately in China's hands. What are they getting out of this? The reality is they have what we want. Donald Trump is famous for going around the world and sort of slapping other countries, but there's a few he can't slap. China has been one. Russia has been another, right? We're in a multipolar world. Those two in particular, he has a very tough time with. So I think the devil is going to be in what does this deal look like? What did the U.S. give up to get this algorithm? And Donald Trump has been known, by the way, to say he's got an agreement before it's been inked. And so, yeah, I do watch his social media and see that, oh, we've got this deal. Things are looking great. That's not what we hear many times from the Chinese side or the other side of these potential deals. So I think we have a ways to go here until we see what this deal actually looks like. And let's not forget, in the meantime, the Trump administration is in violation of both a law by Congress and a decision by the Supreme Court. And that is something that doesn't get addressed enough because there was legislation signed on this issue, and the Supreme Court did issue a ruling against Trump, and he has so far ignored that with absolutely no repercussions.
They always give us a new way of looking at things. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, thank you both for a great conversation and for going into overtime with us today so we could get a chance to bring you a series of other conversations this hour, including our interview with Governor Josh Shapiro. Rick and Jeannie will be back on the late edition of Balance of Power. I'm Joe Matthew in Washington. Glad you're with us here on the Monday edition. As we turn to Wall Street now, we haven't heard from Charlie Pellet in a bit here. He's got his hands on the markets for us. Live from World Headquarters in New York. Charlie, the Monday trade, how's it look?
Indeed, higher across the board. Not just higher, looking at records. Dow, S&P, NASDAQ, all pushing higher right now, right to the numbers with the S&P up 28. That is a gain there of 0.4%. 27 records this year on the S&P. We're looking at the Dow up 103, up 0.2%. Again, S&P up 0.4. NASDAQ Composite Index up by 0.6%. 10-year, 4.13% with a 2-year currently yielding 3.58%. Spot gold up $60 the ounce. Looking at a record there as well, $37.45, up 1.6%. West Texas Intermediate crude oil up 0.2%, $62.80 a barrel. And Bitcoin now down 2.5%. Bitcoin 112,561. Briefly, we've got NVIDIA shares continuing to advance by another 3.5%. NVIDIA will invest as much as $100 billion in OpenAI to support the building of new data centers. Balance of Power continues right now. Back we go to Washington. Once again, your host, here is Joe Matthew.
All right, Charlie, great to have Charlie Pellet as part of our program every day here on Bloomberg TV and radio, watching the markets from World Headquarters in New York as we talk politics here in Washington. We're going to connect the dots for you right now, as we have been known to do. President Trump, as we told you, has secured a trade deal with the European Union, and he's talked about that as maybe the biggest achievement yet in this attempt to rewrite our trade relationship with dozens of countries. But he's still threatening a probe on the EU, as we've told you, over its fining of Alphabet, the company, of course, that owns Google, over its advertising technology business. A probe, the White House says, could result in new tariffs. This is something that the president was asked about just days ago in the Oval Office when it came to this more than $3 billion fine of Alphabet. Here's what he said.
Did come up, a couple of countries said, companies said that they were taxed by the European Union. It's interesting. They weren't complaining about, in that regard, China. They weren't complaining about other places. It's the European Union. I think we're going to change that around. It's just not fair. We don't want that to happen to our companies. And, you know, if somebody does that, we should be doing it to them. They've got to pay, let them pay us. But you just can't do that to our companies.
Now, we should note that Alphabet, Google, is also proposing some changes in its own response, changes to its advertising technology business by early November, just weeks away, to meet the European Union's deadline. But that is not everything that the EU is asking for, and it's a pleasure to spend some time now with Teresa Ribera, the European Commission Executive VP for Clean, Just, and Competitive Transition. Commissioner, it's great to have you with us on Bloomberg TV and radio. Thank you for your time, joining us from World Headquarters in New York. Knowing that this EU fine is in place, with regard to the ad tech industry, what is the Commission's response to what the President just said, his response to the fine?
First of all, it's a pleasure to be with you, and thanks a lot for your question. In fact, you know that from Monday onwards, a federal court will be also assessing a very similar case, because in fact what we try to do is to defend consumers, industrials against monopolies, against behaviors that accumulate power in a given market. And this behavior was accumulating such a big power in the buy and sell sides, in the matching of the offers, so to provide the publicity in internet, that in fact it was becoming a kind of monopoly that, of course, we needed to face. And our decision is being taken on the basis of the antitrust laws, as it is the very same case in the United States.
Well, I'll tell you, as I mentioned, Bloomberg is reporting that Google is planning to make some changes and have this done in time for early November to its advertising tech business. But that would avoid a complete sale, to be clear, of Google's ad manager, which is the exchange that we're talking about here. Would the changes outlined by Google be enough to satisfy the commission, or do they fall short?
Okay, let's see. We will assess what the proposal may be, and as I say, there is also this very same case taking place at the federal court in Virginia. So I think that it is good for consumers worldwide that the two decisions are consistent, and I think that your judges deserve respect in this point in time, as does your Department of Justice. And the teams will be assessing the proposals being made by Google. It's good that Google works to make proposals to ensure that markets function and ensure a level playing field in this digital market too.
Well, of course, you're here in the U.S. as UNGA Week gets underway in New York, here on the threshold of the General Assembly of the United Nations. I know you've been meeting with some of your U.S. counterparts on this trip, including Gail Slater, and I wonder what your view is on the current antitrust environment here in the U.S. and how much it may have changed since the Biden administration. How would you describe that?
Well, I think that the whole world learned since the end of the 19th century that you Americans understood that competition and antitrust regulation was there to defend the rights of consumers, the rights of democracy, the rights of people against abuses in the market. And I think that this is still the case. And I think that this is our mandate. We are enforcers of the law. And I think that even if it is with different ways to handle this mandate, Gail Slater deserves our respect, and the Americans, of course, deserve our respect. I think this is a very important pillar to build democracy and to ensure, as I say, that citizens, consumers, innovators can count on someone that takes care of this well-functioning market and avoids abuses of dominance in the given markets. And it is not something technical that deals with big companies full stop. It impacts in all of us because of the prices that can evolve, because of the lack of offers if they kill competitors around. So I'm sure that the mandate, the functions, the responsibilities that the antitrust authorities in the U.S. have to defend are very much at the core of the Americans' souls.
Let me ask you about antitrust, if I should even use that term. When it comes to the AI race, there's a big headline today with NVIDIA investing $100 billion into OpenAI, and it's the latest in a series of massive investments that we've been seeing in the U.S. The EU has been informally examining NVIDIA's dominance in the market for graphics processing units, the GPUs that are powering artificial intelligence. What concerns do you have there, and what might this result in?
So allow me to be very cautious in this point in time. You know that as enforcer of the law, I cannot comment on an ongoing case, but it is true that what we see in the digital context is an increasing concentration of power. So we need to pay attention. We need to take care. Normally what we witness is that it is not only European companies complaining because of the impact in the European markets. There are also American companies realizing that this could affect to their capacity to develop their products and their services. For instance, in the case of Google Tech that you were commenting, it's truth that there is a big share of big tech companies coming from the United States that operate in the European market, but it is also truth that the benefits of what we do does have a positive impact in American companies too. So in this case, seeing these corporate operations, we could pay attention. We have a responsibility to stay watching what it is happening and to prevent any type of damage. But I think that for the time being, we need to be cautious and assess what it is happening.
Well, many would suggest that we're in a very different world now when it comes to business in the United States, with the U.S. government's investment now taking a stake in Intel, some of the deal making between U.S. companies that have been encouraged or guided by the Trump administration. Has this changed your calculus when it comes to competition and antitrust?
We've read the news. Of course, in any of our countries, there may be an interest to invest as shareholders in corporates, and then government's public money can be there, but they need to respect the same rules that any private shareholder, any private investor. And as I said, I think that it's good to keep calm, to assess what is going on, and if there is something to be raised, any type of concern that we may identify, we would come up with the companies being involved to clarify whatever may be needed to clarify or to keep on going in an infringement process if this is the case. But this is not the case. There is not something like that I can share with you right now.
Understood. I started our conversation by mentioning the trade deal that the U.S. signed with the EU. I only have about 1 minute left. Based on the elements of this deal, we had a lot of questions about what this meant for you. Did the EU score a good deal here?
We've been working together in the last 80 years. We have been able to shape very good things, the United States and the European project, the European communities, the European Union right now, global governance, technology breakthroughs, trade all over the world, security, and now we realize that maybe the terms that are being transferred or commented by one of the partners have changed. I think that it is important not to escalate any conflict, but at the very same time, it is also important to realize that we need to invest in our own, and that's what we are doing as Europeans, try to define and to do within the single market to build on our strengths. And that also applies to this deal, to this political agreement.
She is Executive VP for Clean, Just, and Competitive Transition at the European Commission. Teresa Ribera, thank you so much for your insights today. I'm Joe Matthew. This is Bloomberg.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms. This is Bloomberg Business Week. Carol Masser, Tim Stenivek, live at Bloomberg headquarters in New York City. And Tim, stocks up off their lows of the session. We got a rally underway. We're talking about records again on Wall Street.
Yeah, S&P 500 right now higher by 0.4%. The NASDAQ composite up 0.6%. The Dow up more than 0.1%. Charlie Pellet is going to have the details on that in just a moment.
He keeps us honest and up to date all the time. We're going to get to him in just a moment, as Tim mentioned. Hey, it's a big week. The UN General Assembly underway, Climate Week. We've got some great macro voices, and we're thinking about kind of the big picture. Having said that, we're also thinking about the Fed. This as Federal Reserve Governor Stephen Miron speaks on President Trump's potential influence and being independent. A conversation with one of Bloomberg's best. We'll get to that in just a moment.
Also, speaking of the president, his move to curtail H-1B visas, the potential economic impact, a huge story that is still unfolding, one that unfolded too over the weekend. Also, a view from the C-suite on them and more. Barbara Humpton is back with us. She's president and CEO of Siemens USA.
Also, another voice from the C-suite, Toby Rice, president and CEO of EQT, on the nat gas play to fend off higher utility prices and more. We're also going to talk a little bit about AI and energy demand, certainly with both of them. First up, though, as we mentioned, Charlie keeping us up to speed on the day's trading session. Let's pass it over to Charlie.
All right, thank you very much. And here's what's going on. We've got the Dow, we got the S&P, we got NASDAQ, all advancing, all trading at records right now, right to the numbers here. We are on track for our 28th record close for the S&P 500 index this year. S&P right now up 26, 66.90. That is a gain of 0.4%. The Dow up 60. That is an advance of 0.1%. NASDAQ Composite Index up 136, up 0.6%. The Mag 7 Index up now by just about 0.7%. 10-year at 4.13%, with a 2-year 3.59%. Gold up $61 the ounce, up 1.7%, a record 37.46. And Bitcoin is retreating by 2.6%, 112,453 on Bitcoin. And to be clear, WTI crude oil flat on the day, 62.68, but gold, no question there, a record up 1.7%. NVIDIA says it plans to progressively invest as much as $100 billion in OpenAI as the company's partner to deploy at least 10 gigawatts of NVIDIA systems for OpenAI's infrastructure. NVIDIA shares are up now by 3.6%, and Apple shares today broke into positive territory for the year. The iPhone maker is up right now. We've got Apple shares advancing, Apple up by 3.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Gotta love it. Stocks up, gold up, crypto not so much today, Tim.
You never know why with crypto.
Yeah, really.
I think it's fair. As somebody who follows it closely, you just don't know.
You never know. All right. Watching the markets. We are also watching some commentary by members of the Fed. His first meeting, in fact, as a voting member of the U.S. Federal Reserve, on leave as President Trump's chief economic advisor. We're talking about Stephen Miron. He has begun to speak out as a Fed member, including his first public speech today in an in-depth fireside chat at the Economic Club of New York with Bloomberg senior Washington correspondent Saleha Mohsin. He stressed having an independent voice. Check it out.
I've had a number of conversations with the president about the economy, about economic policy, over the last 9 months, about the economy, economic policy. A number of those conversations have touched on the Fed also. He's never asked me to set policy in a specific way.
So
He's never asked me. It's never happened. I view my job as trying to provoke an interesting discussion that will help the FOMC arrive at clear understandings of the way the economy works and where monetary policy should be set. It's a few short months, but I've got I think a lot of content to work through in those months.
All right, that, of course, was Fed governor member, if you will, Stephen Miron, joining our Saleha Mohsin, joining them at the Economic Club of New York City. Hey, let's kind of get into it and what he had to say. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee joining us in studio. So I want to address first what we highlighted there, Mike. Does the street believe he will have an independent voice? And on the second part of what he had to say, what is it that he wants to help the FOMC when it comes to clear understandings of the way the economy works and where monetary policy should be set?
Well, let's take those one by one. The first thing is, I don't think the street sees him as an independent voice at all, which was kind of behind some of what he was saying today. And then the second part of that is that the street doesn't care at this point because he's one voice out of 19 on the committee and one vote out of 12. And there's a feeling that he isn't going to make much of a difference with 4.5 months, or not even that, on this term. Now, he could stay a lot longer and continue to be a voice for the president's views. If we want to be charitable, we could say that his views are the same as the president's, and he's not there to do the president's bidding, but he just happens to align with him, which could be true. And so as far as that goes, yeah, he's not, he can say he's not been told by the president what to do, although he certainly knows what, what the president wants. Now, what he wants to do, or what he says he wants to do, is to continue to make the arguments that he made today as an economist and convince other members of the Fed to go along with his viewpoint. You noticed that Jay Powell said at the news conference last week that the real impact that anyone on the open market committee has is in their ability to persuade people to their views. Now, he sort of sounded like nobody was believing in Dr. Myron's views at that meeting, but Myron seems to believe he can bring people along.
What does he view as the role of the Federal Reserve, and how is that different from other members of the Fed? I feel like we got a little bit of that philosophy today.
We did in a sense. I think he is committed to keeping inflation low. It would be hard to be an economist who supported high inflation. And he is certainly committed to keeping the labor market healthy, because much of his talk was about that. A lot of what he disagrees with is in the on the fiscal side, which is not unusual for someone of his political party. And also in the philosophical side, he disagreed with the way the Fed picked up some social topics in recent years, although you could argue about how much they really did. And then the other part of it is that he has put a little bit of emphasis on the so-called third mandate of stable interest rates and stable long rates, and he said that that is something the Fed could do something about, whereas everybody on the Fed now, up to this point, has said that just flows from our other policies.
So can you explain that a little bit? Because for years I've talked about the dual mandate in the context of the Federal Reserve. Have I been getting it wrong by only focusing on stable prices and maximum employment?
No.
So what is with the
this has been, it was put in there in 1977 when they added the dual mandate to the single mandate that they already had. And basically it says that you need to have stable interest rates going forward, long rates going forward. And the issue is the Fed doesn't control long rates. And so what you need is low inflation and a healthy labor market, and then you will get stable and lower long rates. Now, the argument is that they could, if they wanted to, and they have done through QE, tried to influence long rates. And he would seem to think that that is something that could be considered, which other people would disagree with.
Hey, one last thing before you go, H-1B visas. We know one of the big stories, and certainly everybody reading it on the Bloomberg, about the President Trump, his administration planning to raise the application fee for such to $100,000. It's caused some concern among skilled immigrants in the U.S., including graduate students and workers in the tech industry. What's the economic case for having them? What's the economic impact of not having them?
Well, the case for having them is you bring in some of the best and brightest people from around the world who contribute new ideas and also contribute to making U.S. companies more effective and more efficient, more productive. The argument against it is that they can take jobs away from Americans. Now, the tech companies have always argued that there aren't enough Americans to hire doing these jobs. And I'm not an expert on that, but I think I see one sitting across the studio from me you'll be talking to in a minute. From an economic point of view, there isn't really evidence that they take a lot of jobs or that they affect the pay of Americans who are here. But one of the questions that has come up is this another thing that the president isn't legally allowed to do? And is just doing anyway, and nobody is talking about it because Congress has the legal right to change visa costs and not the president, but it's sort of been taken as a given that he could do this. So I'm not sure where this goes from here.
All right, we appreciate your input there. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. All right, now we do want to get to the tech sector where people are definitely talking about those H-1B visas, and we're going to get to that in subsequent hours here on Bloomberg Business Week Daily. But we really want to get to, and actually with some of our later guests, talk about, Tim, what NVIDIA is up to.
Yeah, including one detailing how NVIDIA will invest as much as $100 billion in OpenAI to support the building of new data centers and the infrastructure needed to power AI workloads. The two companies signing a letter of intent for strategic deal just on Monday, they said in a statement. They're coming just days after NVIDIA agreed to invest $5 billion in Intel as the two companies will co-develop chips for PCs and for data centers. We got a great group, Carol.
We do indeed. Let's get right to it. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, right here in studio. He's also the host of the Tech Disruptors podcast, which focuses on disruptive trends in the tech world. NVIDIA certainly has disrupted the world. You can find it on Apple, Spotify, wherever you get your podcasts. And then also with us, the co-host of BTech on BTV and of the BTech podcast, Ed Ludlow, out there in San Francisco. Mandeep, I want to go first to you. Why is NVIDIA doing this investment in OpenAI?
Well, when I look at NVIDIA, clearly, they are at a $200 billion run rate, growing exceptionally well, and they have to keep up the growth rate. So now that they can't really sell to China market, or at least there's uncertainty, they have to find those avenues. And the biggest avenue is OpenAI. I mean, they still believe they need a lot of compute for training. Microsoft, it seems, has really focused on the inferencing part. So this raises up the ante in terms of model training. And just to put it in context, 1 gigawatt can cost up to $25 billion in investment. So if they're partnering with NVIDIA for 10 gigawatts and all that $100 billion investment is not one shot, it's going to happen progressively, we're talking about $250 billion in costs, out of which NVIDIA can spend up to $100 billion. That's just rough math.
Do they have to then, I'm assuming this is a deal where they make this investment of $100 billion and OpenAI uses nothing but NVIDIA chips? Like, I'm trying to understand, is it as simplistic as that?
No, so look, OpenAI has hinted they could be using Broadcom ASICs as well as NVIDIA. But the other player in this is Oracle. Right. So what Oracle said was they have a $300 billion deal with OpenAI, and they guided to that backlog going up, their revenue going up. A lot of that is the amount of compute that OpenAI will consume on Oracle Cloud. So the question is, where do they get the compute and the data center capacity? That's where NVIDIA is coming in and saying, we're going to help you fund that data center build out. Remember, all the other hyperscalers are doing it themselves. Microsoft is doing it, Google is doing it themselves, Meta is doing it themselves. OpenAI doesn't have the balance sheet. So they need the money from somewhere. In this case, NVIDIA is the bridge that's providing them.
Hey, Ed Ludlow, co-host of BTech, come on in here because I'm really interested in what NVIDIA gets out of this from an equity perspective. We know Microsoft is a huge investor in OpenAI, SoftBank as well, not to mention many other venture capital firms. What does NVIDIA get here?
Well, according to Bloomberg sources, NVIDIA literally gets equity in OpenAI. But, you pointed out right at the top of the conversation, Tim, this is a letter of intent for a future strategic agreement. And how it's structured is really important. Mandeep gave us the how the industry works bit. But what we understand with this deal specifically is that the $100 billion is split so that once a gigawatt of capacity is installed, then OpenAI gets access to about $10 billion. But what we don't know is like if this is cash or it's just NVIDIA saying, here are $10 billion worth of GPUs.
Yeah, that's what I'm wondering.
You know,
is this just in kind? That was my first question to Carol when I saw this headline. That's a lot of money. Is this just in kind from NVIDIA? Look, NVIDIA has the money.
NVIDIA doesn't have the cash balance sheet, though, to fund the overall project. And so, like, what's really interesting here is there are lots of companies that use NVIDIA GPUs. If you were to rank them, OpenAI, based on what the reporting and the public disclosures, is probably number 6. Microsoft's probably the most. They probably have 450,000 active hoppers. And then you have Meta and xAI. But each of those has a different business model, right? Largely, OpenAI does not own and operate and control the GPUs itself. As Mandy perfectly points out, they rely on third parties that they basically rent capacity from. And so it's a bit misleading or confusing to talk about the direct relationship with NVIDIA and OpenAI on GPUs. But for NVIDIA, you know, and I go back to the Bloomberg Intelligence React, the guy's so quick, you know, NVIDIA loves big round numbers. So does the President of the United States, the administration. And NVIDIA uses them to the same sort of effect. But the question is only whether NVIDIA makes more money out of this deal than it's putting in. And I think that's the thesis that BI has, and Mandeep can correct me if I'm wrong.
So the one thing I would add here is in the case of Microsoft's partnership, you know, if OpenAI was using Microsoft Compute for training, that would be cost for Microsoft. They can't recognize it as revenue. But if OpenAI is using Oracle's compute for training, that's revenue for Oracle. So that's where, you know, Microsoft is focused on the inferencing part because that's all revenue for them. They don't want more costs. Whereas for Oracle, you know, all the training stuff is revenue. And so it doesn't surprise me that Oracle wants a lot of that training business. And somebody has to finance the chips because it's not Microsoft or Google or Meta buying those GPUs. So in this case, NVIDIA is the one who is financing those chips and taking a stake in OpenAI.
One thing I want to throw into the, you know, Ed, and come on back in, this comes just after that Intel investment, NVIDIA agreeing to invest $5 billion in Intel. Are they connected, these moves? Is there a grand plan here? Is it NVIDIA, I think as Mandeep said earlier, about, you know, kind of building out its business or I guess thinking about what else that they need to be doing?
Yeah, I mean, NVIDIA has some financial clout, largely relating to the appreciation in its market value, but it's not a company that's like absolutely flush with cash on its balance sheet and has an infinite war chest to spend. The main thing, and we wrote about this in the context of Intel, is that NVIDIA is the golden ticket for AI as it stands, right? That it has a literal and technical monopoly in the market for GPUs or AI accelerators in the data center use case. But Mandeep alludes to something that on paper is coming, which is AMD has a product in the market. There's the ASICs or custom silicon solutions that Broadcom offers. Grok with a Q would say that it is more competitive on the inference side than AMD is. By the way, OpenAI also has an exclusive agreement with OpenAI as well, the use of the MI400 series, right? And so this puts NVIDIA in a position where it can guarantee itself some demand out on top of the backlog that's already there in the future and make sure that the future data center that gets built does so with its designs and its accelerated computing systems.
I just love how everybody's working with one another. It's fascinating. Hey, guys, unfortunately, we have to leave it there. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. Check out the Tech Disruptors podcast he does with the BI team. And then, of course, our Ed Ludlow, co-host of Bloomberg Technology. When we come back, North America Gas at an inflection. We'll see what the CEO of Nat Gas producer EQT has to say about that.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We do have stocks pushing higher. The Dow, the S&P, NASDAQ solidly in the green. We have got the S&P on track for its 28th record this year. S&P right now up 26, 66.91. That is a gain of 0.4%. The Dow up 53. That's an advance right now of just about 0.1%. And West Texas Intermediate crude oil is moving lower to the higher today. Little change right now. WTI 62.70 right now for a barrel of WTI. The 10-year 4.13% with the 2-year 3.59%. Spot gold up 1.6%, 37.46 the ounce right now on the precious metal. Nvidia is going to invest as much as $100 billion in OpenAI to support the building of new data centers and the infrastructure needed to power artificial intelligence workloads. Nvidia shares are up now by 3.5%. And Pfizer is paying $4.9 billion for the obesity startup Metsera in a bid to catch up to rival drug makers after failing to compete with its own weight loss medications. Right now, we have got Pfizer shares. They're gaining by just about 0.5%. As for Metsera, it is surging now by 62%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Bloomberg reported over the summer that businesses and households served by the largest U.S. power grid will spend a record $16.1 billion to ensure electricity supplies amid a massive artificial intelligence-driven demand surge. We are talking about this a lot. And having said that, we just talked about what NVIDIA is doing with OpenAI and their spend. That price increase, though, prompted calls from utilities and energy groups to build more generation. So we want to see what our next guest has to say about it. He is in the midst of it. Toby Rice is president and CEO of EQT, the nearly $31 billion market cap vertically integrated energy company, obviously specializing in nat gas. Toby, good to have you here. I want to start big and broad, the macro. How would you describe it right now for you in your business?
Natural gas markets, in one word, I would say it's going to be very volatile in the short term. And one word for the long term, I'd say incredibly exciting. When you look at the three major themes that are hitting energy right now, the desire to continue to evolve our energy systems, replacing coal with natural gas, major theme. AI is what everybody's talking about right now. That's going to be a major source of demand. And then providing energy security to our allies is still a thing, and that's going to be playing on the LNG. You step back and you add it all up, we're talking about a 20 to 40% increase in natural gas demand in this country.
Well, let me just ask you, because before that, let's go back. That's longer term, but I know our BI people have put some research, and they talked about North American gas is at an inflection, and they talked about AI data centers adding to domestic demand near Appalachian supply, while LNG exports sustain global pull. But so tell us about the shorter term. Is there a little bit of an inflection point for you?
Well, I'd say the next 3 to 5 years, data centers and fueling the AI revolution is going to be a very big focus. But keep in mind, we're going to be doubling U.S. LNG exports over the next 5 years. So we're doing both of these at once. And the good news is that we've got the natural resource in this country. It's just going to come down to how fast we can actually get this infrastructure built, focusing specifically on the power demand side of things. When you step back and look at electrify everything, not just AI, we're looking at a 10 to 18 BCF a day natural gas demand to meet that. That's a 10 to 18% increase in demand, and about 40% of that is going to be for data centers. So this is going to be really big. We're seeing these opportunities happen in our backyard. EQT, we signed up over 1.5 BCF a day of natural gas.
Billion cubic feet.
Billion cubic feet,
yeah. Just for those who might not.
And this is a market that's about 100 BCF a day, just to make the numbers ballpark. So 1.5 BCF a day of natural gas supply for these data centers in Pennsylvania. This is going to generate enough power to almost power 2 New York cities. So these are major league infrastructure projects in a grid that desperately needs more power generation.
The tech companies like to talk about nuclear power generation powering their data centers. The president likes to talk about the promise of nuclear power. And I say promise of it because we know how to do it, but it just takes a long time and it's very expensive. How do you view the increased interest in recent years in nuclear power as a threat to your business?
I think that natural gas is the clear winner right now. You know, this has been a big question that people have been asking over the last, call it 18 months. What is going to power this AI revolution? What was originally thought to be renewable is going to pick this up. Then people went to nuclear and realized it's going to take too long to get it done. Comes back to natural gas. Why? Because we have the track record of scale and speed. If you look over the last 10 years, we've seen natural gas power demand increase 14 BCF a day. So think about how much we're planning on doing. We've done that with natural gas. Now, longer term, we think nuclear is going to be a great option, but understand this, natural gas has a vehicle to become zero carbon, and that's why we're spending a little bit of money today on carbon capture that will enable natural gas to be the first reliable, affordable, zero carbon energy solution. The world does not have that today.
You know, just like there's a big spend in AI and data centers, there seems to be a big spend in that energy to support it and what's needed. You have announced multiple long-term sales and purchase agreements, I think just in the last few months. Some are fearing an oversupply, Toby, in 2027, 2029. What are you hearing from LNG buyers about kind of your demand visibility window, and how confident are you? It sounds like you're pretty confident on the longer-term pull for LNG, or U.S. LNG specifically.
Yeah, on the LNG front, we certainly wouldn't disagree. We do see a little bit of an oversupply situation globally for LNG that could lead to softer prices in that 27 to 29 timeframe that you mentioned. And you say, well, Tobe, why did you just go and sign up for a massive amount of LNG? It's because our contracts are going to be starting, we're going to be getting that exposure in 2030. So this oversupply will pass, and then we're back to a tight situation, and that's where LNG is hitting the market. When you want to talk about demand, just step back and look at this world. For a world that's going to continue to care about climate and emissions, replacing the coal in this world is going to require an additional 170 BCF a day of natural gas. If you care about the people living on this planet, it's going to take an additional 120 BCF a day.
How sure are you that people care about that? We are certainly feeling this year a pushback.
Well,
when it comes to concerns about carbon emissions and climate.
Yeah,
not from everyone, and I have to be very careful because there are a lot of folks that are working really hard on this area.
Yeah,
but how confident and comfortable are you?
On the energy transition, there's a ton of people that are passionate about this, and that passion's not going to go away with just one election. But I think what is happening now is people are stepping back and they're looking at the plans they put in place, and they're looking at the results of those plans. And what we're seeing is that Americans' energy bills are up over 35%. Now, renewables is not to blame for all of that. We've had a massive infrastructure cancellation movement that's prevented us from getting energy infrastructure built. That's the root cause of this issue. But when you step back and look at how big of an impact this has had, we spent over $2 trillion on renewables last year. And put that in perspective, we spent over $1.3 billion in oil and gas. The energy solution that provides—
say that again?
$2 trillion in renewables.
What do you mean we spent?
The world.
Okay.
Invested over $2 trillion in renewables.
And build out and—
Yeah, and then for comparison, oil and gas investments that provides over 80% of the world's energy, we invested over $1.3 trillion. So this has been a very big theme, but it's coming.
So this shows to you that people this is the future, is renewables. That's where they're spending money? Is that what you're saying?
If you went by where people were spending money, that does not necessarily mean what's going to be the future. The future of energy is going to be the energy solution that is affordable, reliable, and clean, and has all three of those attributes in check. I think the energy transition maybe has prioritized the clean aspects of energy, but as we're seeing right now, Americans are scratching their heads looking to see the record amounts of energy investments that we're making, and the record amounts of energy production in this country, and their energy bills are up 35%. They're scratching their heads. Why is this happening? It's because the solutions that we're putting on the field need to be the right solutions, and that is natural gas.
But it's also because, as you said, the demand has gone up. For years, it was kind of flat, it was stable, and then we saw this huge increase in demand for power here in the U.S. So demand has a lot to do with it too.
Well, demand hasn't really started to pick up just yet. We're coming out of it. I think we're looking at massive growth prospects. But this really is a repercussion from all of the not underinvestment in reliable infrastructure over the past decade. Now, this country, in America, since 2018, it's become almost impossible to get a pipeline built in this country. We own an asset called Mountain Valley Pipeline. It took an act of Congress to get that pipeline built. So infrastructure has been incredibly challenged, and that has really strained markets and really put some stress on the system.
So let's talk about those challenges. Are you having constructive conversations, or are you having any conversations with the Trump administration, representatives from the Trump administration, to try to ease those regulatory delays?
So this administration truly understands how important affordable and reliable is in the energy equation. Secretary Wright, fabulous, he really understands energy, all forms of energy. So I think we're going to have some practical approach towards energy solutions that we put in place. But that being said, the executive branch is not going to dictate the types of energy that we put in this country, we're going to need Congress to act to pass meaningful permit reform so we can get back to letting the most cost-effective, reliable, cleanest form of energy.
Do you consider wind power a form of energy?
Absolutely.
It doesn't seem like this administration supports that.
Yeah, I mean,
is that a mistake?
Well, I would say it's as a sponsor of a pipeline, Mountain Valley Pipeline that has been subjected to tremendous political force. This is a situation where I think we would be in a much better place if we would let market forces dictate the energy that makes its way to the playing field, let political force take the backseat. Unfortunately, we are going to need some help from our leaders in Washington, D.C. I hope they notice that we've got a massive demand surge coming. We do not have the right infrastructure set up right now. We need to do a massive build out. And just for people to understand the race that we're in right now, this is a national security threat for us. We have got to win the race for AI. And right now, how we're faring in the U.S., where we put in 6 gigawatts of reliable power generation this last year, China put over 60 gigawatts of reliable power gen, most of that coal. So we are not keeping pace. We need to do a lot more.
Just want to go back to cost. Just because it's cheap, and I understand there's other parameters that you're putting in there. I mean, there are nat gas, there are, leaks and so on and so forth that do impact the environment. So it's not the cleanest and purest. There are problems with it. And I just wonder if we're always constantly chasing the cheapest thing out there, that's not necessarily a good thing. And just bring up all the manufacturing that we've put outside the United States just because it was a cheaper good, that we're finding maybe that wasn't such a good strategy. So I just want to bring that back to the energy sector, that maybe sometimes things have to be expensive to get to a really, really smart solution.
I think we need to take a holistic approach when we're looking at energy, and we need to look at the balance between cost, reliability, and the carbon footprint associated with that energy. That's why when we look at those attributes for natural gas, that's why we believe that this is the energy solution of the future. When you look at regions that ignore and just over-prioritize the clean aspects of energy, you have situations like Europe, and we've seen what's happened there. It's been a crisis. Thank goodness for America and the energy that we've been able to provide them to get them through this with our LNG. So it's got to be a balanced approach. It's not all going to be about cost. It's not all going to be about reliability or carbon footprint. It's got to be a healthy balance of three. Right now, we need to get back to the affordable, reliable.
Speaking of balance, and I just want to go to your balance sheet, because there is a spend, right? Everybody's doing it because they are chasing this AI spend and trying to be there in terms of support. You guys have talked about working down to a 2026 year-end debt target of $5 billion. I think that was after the Equitrans deal. Tell us about what you're considering to help prop up your balance sheet. Just got about 30 seconds.
30 seconds? 30 seconds. I'll tell you what our priorities are right now. Ensure the reliable production of energy. Right now, we produce a little bit over a million barrels a day of energy.
So anything that you need to do to meet that, you're not worried about the spend
for maintenance,
or the debt?
For maintenance volumes levels, we're going to be reliably providing the future by signing up these growth contracts, both on LNG and the data set build out. And from a cleanliness perspective, we've already made the investments, and we've already slashed our methane emissions, and we've got one of the best environmental programs going.
So it sounds like the spend and the debt's okay for now.
Yes.
Okay, gonna leave it there. Toby Rice, President and CEO of EQT. When we come back, we get another view from the C-suite. We talk with the President and CEO of Siemens USA. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. Traders defying calls to take a breather after a $15 trillion stock market rally from those April lows. NVIDIA boosting optimism today on artificial intelligence. Right to the numbers with the S&P right now up 30. That is a gain of almost 0.5%. The S&P now at 66.94. The Dow up 71, also at a record, up now by about 0.1%. The NASDAQ Composite Index up 159 for NASDAQ, a record there as well, up 0.7%. 10-year 4.13%. Gold up $60. The ounce up 1.6%. Bitcoin down 2.2%. 112,875 on Bitcoin. NVIDIA is going to invest as much as $100 billion in OpenAI to support the building of new data centers and the infrastructure needed to power AI workloads. Again, NVIDIA shares, they are rallying today. NVIDIA up by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right. Think wind turbines, power generators and transmitters, industrial motors and gears and motion sensors. And based on a conversation we were just having off air, even crypto and blockchain.
They're all related.
They are.
You got to have power.
You do.
To mine that crypto.
To make it all happen. But anyway, bigger picture, you get an idea of what Siemens USA is all about. As the company shared with us, the USA unit employs about 45,000 employees, 50 states and Puerto Rico, and generated $21.1 billion in revenue in fiscal year 2024. Back with us, delighted to have with us, Barbara Humpton. She's president, CEO of Siemens USA. She's here in studio. How are you?
Carol and Tim, I'm thrilled to be here. So thanks so much for the invitation.
Well, it's great to have you here. And there's a lot to get to, so much coming at us. Macro, though, I always like to start your view on the environment right now.
Yeah, right now what I see is a huge emphasis by business in making sure that we are protecting our future. We know that it's in our long-term business best interest to make brilliant use of resources, make sure that we keep the future whole and ready. So this is what Siemens has been working on. Siemens' business strategy is actually built around global megatrends. And so creating technologies...
But there are megatrends that can drive you crazy and you can't take advantage of or not right away. And there are megatrends that are like, whoa, let's do it, let's run.
Or there are mega trends that aren't necessarily aligned with the views of a presidential administration.
Exactly.
And that makes it more challenging.
But it's hard to argue with things that are inexorable forces.
Like,
so we know the climate is changing. We know that people everywhere are aging. We know that everywhere more and more people are living in cities. Siemens brings technologies that transform the everyday, enabling us to really live, manage, and thrive in changing circumstances.
So we're going to continue with energy here, and that's where I want to start. Carol mentioned wind turbines, but here in the United States, the president has made clear his view on wind power. How much of a setback has that been for Siemens USA?
Well, I will clarify that my colleagues at Siemens Energy obviously have taken that on, and you've seen Siemens Energy thriving over the last year. At Siemens AG, the U.S. entity I'm responsible for, once those electrons are generated, we're the ones who are moving them. Medium voltage, low voltage, we're the ones working at the grid edge, which I think is where there's so much fruitful development to be done. So, yes, and I just loved your last interview. We need more power. Everyone understands we do. There's just insatiable demand for electrons. Actually, we're agnostic about how those electrons get generated. What we want to do is move those to where they're used best. Think AI data factories, think the kind of data centers we've been building. Think about manufacturing coming back to the United States. All of those are brilliant uses of the power that we can generate.
What can you tell us about the AI build-out and what you guys are seeing firsthand?
Well, it's massive. It's massive. It is critical for the U.S. to maintain leadership in AI. We also know that one of the most exciting things that will happen is AI at the edge. So you can think about a manufacturing location as a humongous generator of data. Every factory is producing just massive amounts of data, more data than any individual could make sense of. But when you bring tools like our industrial AI Copilot into the manufacturing environment, it allows users to harness that data, make better decisions, really drive their operations. And we're seeing success all over the place.
What does it mean? Give us an example. example. So you bring the Copilot into what factory or whatever, or what plant facility, and it does what?
Well, so the first thing it does is makes it possible for mere mortals like you and me to actually interact with automated machinery. Instead of having to know the programming languages, we can speak in natural language and have the AI translate into the programming language of the manufacturing equipment. That allows us to employ people who maybe previously thought, I could never get a job in manufacturing. I don't know enough. I haven't had enough background in it. But now we can, I'll tell you that we have operations in Fort Worth, Texas, where we're actually building the electrical components that go into data centers. And with that incredible demand,
right?
the switchboards that manage that electricity, we needed to hire 700 people to work in the plant. And the local management said, let's hire retired principals and teachers first. Let's create an on-site training program. And now we have, you know, former pizza delivery guys, former chefs, former checkout clerks are rock stars in the manufacturing environment.
You talked about the tool that your customers use when it comes to AI being a co-pilot. What about internally are you doing since we last spoke when it comes to AI?
Oh, boy, you know, we are in that era when no one knows where this will go. So the encouragement at Siemens is for everyone to lean in, start learning. Get familiar, get comfortable with using AI. And my favorite thing at the end of a business meeting, you know, let's say we call the meeting ends 5 minutes early, I turn to the team and say, what are you doing with AI? And I've heard the most amazing things, like the finance team who said, well, we just generated the balance sheet that we just reviewed with AI.
So it's much more informal than it is formal right now.
It is, and I'll tell you why. It's important that we learn. And some people would say, oh, no, I want to control that. I want to make sure that we're sharing best practices. Yeah, all that's good. But first, let's push the edges and see what we can do.
Do you think AI is going to make us all idiots?
No.
Because I think about what you said about anybody who doesn't even know the coding program can get there and talk and have a conversation. And I have this fear that we're just going to rely on AI to do everything.
Don't be afraid. Here's what this does.
I'm not afraid, and I've played with it, and I'm blown away with it. But I also can see how, as it gets smarter and smarter and smarter and more specific in terms of fields, that it can do a heck of a lot.
It will make you more and more powerful then as you go. So think about AI as that super tool that will take the least among us, those with the least amount of background and expertise, and give us the knowledge and power to perform at a higher level.
Yeah.
This is going to be so exciting to see then, what do experts do with this additional power? How far can they push?
Makes me wonder if we're going to need sophisticated workers from outside the U.S.
Perfect segue to talk about H-1B visas, because that is where we want to end. We're trying to ask everyone we talk to about what's stemming from the confusion Friday and through the weekend. How do you use H-1B visas at Siemens USA?
Yeah, we do. We bring people from all over the world who have special knowledge in things that we're, you know, today I would say less than 5% of our population in Siemens USA is folks on H-1B visas. But that's a number. That's a great number.
Yeah.
And the point is that we're global. What we're working on is making sure we share lessons learned, you know, bringing people to the U.S. for experiences, and then obviously sharing their knowledge.
Is that at risk with a new potential $100,000 fee associated with these visas?
It'll factor into the business case analysis.
Would you
for
still
sure.
have 5% of your workforce have these visas?
We'll
at
have
that
to see.
cost?
We'll have to see. You know, I want to see how this develops, and we are working to make sure, first of all, that our employees are in good shape. You know, that they're able to travel and really accomplish the mission.
Is the reason you have those employees because you cannot find those employees in the U.S.?
In some cases, it is. In some cases, it is that we want to give people the global experience that's going to really make them more effective in understanding, here's what the U.S. can produce as we address markets elsewhere.
You said you're going to do the financial analysis. Could it mean that $100,000 fee, if you guys want those workers, that it's going to feed into costs and higher costs of things? Just quickly.
I think this is going to be part of an ever-changing equation. Our labor costs obviously are a big portion of what we do at Siemens.
Right.
And so this is, I would tell you that our export controls colleagues have been our heroes this year.
I bet they're on speed dial. Barbara, thank you so much. Barbara Humpton, President and CEO of Siemens USA, joining us right here on Bloomberg Business Week Daily. When we come back, quick check on the trade and stocks on the move. This is Bloomberg.